Good morning, Pete Momat. I'm Glenn Freibarger. Welcome back to Tasty Live. We've got Forex Focus for you first up. Tuesday morning. How you feeling, Pete?
Good morning. I am feeling fantastic, Glenn. How about you?
All right.
You look great. You know
Thank
what?
you.
Subtle, wonderful shade of green. Very rich, very bold looking.
Thank
you
you.
look fantastic, my friend.
Thank
Yeah.
you. I am blending a little bit into the background, but yeah, I don't know.
No,
I haven't nailed
imposing.
down.
I got to tell you though, the complexion, the whole cold plunge, red light, whatever, the magic you did over the weekend.
It's the vitamin C shower.
You're all right. I can't. What is that? They give you a chewable and then hit you with a hose.
Yeah, orange flavored.
Yeah.
Yeah. No, they just have a bunch of high C.
It's like
Kid
Choice Awards where it comes down, like on the goop.
So
what is a vitamin
juice.
C shower?
I don't know. It's a regular shower that has like a little extension that with like orange liquid. The water comes out normal, but they say that's where they infuse it. I don't know. I
thought it was the salt scrub thing. It wasn't the salt scrub thing?
There was no salt scrub.
Glenn had a spa day over the weekend, guys. So
I did just a little.
I guess you'd call it. Do they call it a spa or not, or is that like too cliched now?
They call it some sort like a wellness suite or something.
Right.
Something that makes more sense. But yeah, the one thing I haven't nailed down for this morning show is getting rid of the bags under my eyes. Got to figure that one out.
Now, wellness suite, these individual rooms where you went with you and your significant other. Hey, Beth, are you still on? Is Beth there? She's not there. But
and
we'll talk about.
She's there.
We'll talk about this. 20 years ago, they used to have wellness suites that were a little bit different. I forget what they were, but I can't remember what they were called.
Sounds like more fun, less fun.
There was no cold plunge. There were pools, but a guy that we all worked with, one of the pools had a slide, and he broke his arm on the slide.
No way.
So, needless to say, yes, stories for another day. But
do you have a slide?
Well,
you don't have a pool, do you?
No, I'd love a pool, but you know what? I mean, it's a 3-month exercise in Chicago.
Yeah.
I mean, you're lucky. It's April 1st. I just put the garbage out. It's freaking 40 degrees. I don't think a pool's going to work.
Yeah, and it takes like a whole summer, so you can't even like. I'd be impressed if you could stand it up and use it one summer. You know, TJ's got a pool.
Yeah.
Does he have a slide?
TJ's got a beautiful pool.
I'll ask him.
I don't think he's got a slide. But he's got a beautiful pool.
All right.
With kids and everything, yeah, I think it's great. I'd love to have one, but it's just, I don't know. I got to figure out.
If you can, you're in charge. So if you can coordinate a team outing at TJ's pool.
Cut that paste. Let me cut and paste that because I need to deliver that messaging to my family because nobody else ever tells me I'm in charge. So that's good to hear. It's good to hear. Yeah, and you and your guys could. I mean, it would be like open season for you guys.
Oh yeah. Don't let me near TJ's pool.
No, and we put Frank in the jacuzzi because it's only 3 feet deep, so it'd be fine.
Can we still get him the arm floaty stuff?
Oh, the wings? Yeah. Absolutely.
The wings.
Absolutely. Safety first.
And a whole bunch of sunscreen.
Yeah, he just sent me our friend. Mr. Caberna, Frank Caberna in Japan, just sent me some great pictures. Wow.
Oh, really? Yeah, they're on the trail now, right?
Yeah.
Yeah,
so I imagine there's got to be a kimono video coming anytime now.
God, I hope so. I couldn't find. I went senior year of high school with a school related function, and there is a picture of me in a kimono somewhere. I can't find it. I appropriately scrubbed it. But even now, now that I have no shame, trying to find it again, I don't know where it is.
Yeah, but he is doing, I think, the walking trail thing now, where they stop at like I forget the term, but the equivalent of Japanese bed and breakfast, and then start up on this trail. So
exciting
good luck.
stuff.
The pictures look amazing. Every picture looks like a postcard, and friends of mine have gone over there, and it's always the same thing. Every picture looks just. There's not a stone out of place. It just looks beautiful.
Wild.
So,
What are you looking at this morning? What are we getting into?
I don't know. Interesting month end. Interesting in the fact that everything moved but FX.
Yeah.
It was a really quiet. I watched 10 o'clock our time, 10:30, 11. There was nothing. Movement in equities, movements in metals, movements in rates, crude, big up move to crude to almost $72 this morning, but really undersized moves in the dollar. It's probably one of the quieter days we had. Dollar a little bit stronger. We saw some selling in Kiwi, Aussie, and Canada. This morning, Euro giving back some ground. Yen, the only thing performing well, dollar yen being sold a little bit. Everything else pretty quiet. So
yeah, at least you did see some drifting. It wasn't Euro definitely inside day, but this yen had an interesting session just with that reversal in rates. I was just looking at the yield on the 10-year, and that chart matched exactly to this one when I was checking in midday that we had overnight. That got hit hard and then right back. So lining up, but bonds this morning back
higher.
Oh, okay.
Yeah, they're actually staging a little bit of rally. They're at their highs right now, and with that rally in bonds, surprise, surprise, we're seeing selling in dollar yen. So we know it's not perfect, doesn't work one-to-one, doesn't work all the time. But my point being, Euro's plumbing lows right now. Well,
oh wow,
the yen is plumbing highs, or dollar yen is the yen's plumbing highs, dollar yen plumbing lows. So two currencies moving in absolutely the opposite direction. And you would think, okay, maybe buying some dollar yen down here would be interesting because it should probably catch up to where Euro's down, sterling's down, Swiss is relatively flat, but just say Euro and sterling. But the one thing that gives me pause is this is why we talk about connectivity and correlations and put it in its place. Not overwhelming, but in its place. I'm not inclined to buy dollar yen down here if the bonds stay at their highs going into the U.S. session. I think maybe if you want to be the contrarian and buy some dollar yen, you do it at better levels.
Sure.
But I don't think this is disconnected from the other dollar pairs. Yes, interesting in terms of a contrarian scalp of buying the range here, which is that lower end of 148.90. I don't know.
Yeah, is 149 interesting? I saw, I think, a commitment of traders report that yen futures, this was the highest level of speculators long yen futures. Is that, I imagine that's a fairly large group of people, but does that have any sort of sway on anything, or is that just kind of an observation?
It's a great question, and what Glenn is referring to is the CFTC puts together for futures market. They bucket traders as asset managers, large hedge funds, large traders, and then small traders. And it used to be that small traders were the dumb money. If small traders were long, you wanted to be short, and vice versa. That doesn't hold true anymore.
That's good,
and especially
reassuring.
It doesn't. And the other thing is too, if you're a primary market like commitment of traders report looking at the wheat market is valuable because there's no other way to trade wheat except wheat futures. So that really shows you the mixture of hedgers and users and stuff like that. When we look at that commitment of traders in FX,
gotcha.
You don't know what portion of that is people long futures and short spot or hedged without knockout options or whatever. So I think when you look at products like, I know a lot of guys sell studies about ES, commitment of traders reports. Again, SPOO positions are always hedged, not always. Obviously, people use them for directional exposure, but so much of that commitment is a lot of times put off against something else.
Right.
So it's not real true commitment. It shows asset managers with a huge long position in SPOOs. Ooh, the smart money is long. Well, no, they're not because there's short calls everywhere else. So I think you look at it with a grain of salt. It's a good call out, but it's something that, like our client sentiment, it's interesting, part of the decision making.
Yeah. So here, I mean, this is interesting because we still have 54% of IG Group clients short this dollar yen market. But if we look at the recent time periods, we're seeing more buys recently. So maybe this speaks to a lot of position traders in this market, a lot of people holding short positions, perhaps. I mean, good for them if it's from 160. But yeah, just not letting go. Does that make sense that more people would have position trades in this market than try and maybe intraday scalp, or is that the wrong way to read it?
No, I think that's a great way to read it. And I think the consistent long we saw in this with the carry, again, you getting paid to be long dollar yen, is a little less interesting. It's still positive, but not as compelling. And you're getting two-way price action. So no. So in the 54, you just talked about futures being long. Mm-hmm. Futures are quoted as the reciprocal of the way we trade dollar yen.
Right.
They're yen dollar.
Yeah.
So they're both saying the same thing, is that the market itself is wanting to own more yen and wanting to own it for a longer period of time. So I think that is when you look at this, there's a lot of information there. That's a great takeaway from this, Glenn, is you're absolutely right.
Interesting. But would you say because of that carry trade implication, that this market is more susceptible for long-term positions, or do you see people holding euro dollar the same? Excuse me.
No, I think there's a mixture of both. Yen, euro, lower end of its 15-year range, absolutely. Yen, higher end of its 30-year range, by far. So if you're looking for, there's just going to be a general, all this uncertainty with tomorrow's announcement and everything. Dollar's going to lose its status as an interesting place to hold money, and there's more risk. You could see that play through, and again, being short some dollar yen and holding on to that is kind of a strategic hedge. When you talk about, it's not even correlated to the FX pairs. Mm-hmm. It's weaker, much more weaker correlated, completely uncorrelated to the U.S. equities market. If you're looking for uncorrelated exposure and you're looking to diversify a little bit, those dollar yen shorts or yen longs really start to make a little bit of sense from that perspective on a longer term view.
Yeah. And here, just looking at euro dollar sentiment, seeing the same kind of thing where we have the majority of traders short, as we know, a big run up in recent weeks. But looking at even, I don't know if this month means, I'd hope it means 30 days and not, start of April. But all of this recent trading activity kind of trying to pick more of the range bound that we've established here on the lows, whereas we've got a lot of people just in for the long haul for maybe a reversion towards parity.
Absolutely. And a skosh under 108 is, we've just about covered the range. Yeah. So we had the rocket ship from 104 to 108.5, punched through, almost up through 109.5, 109, 10, 20. And now we're back at the lower end of the range. I think this lends itself to, you take the, it's funny, this is some of the time, you take the markets as they are.
You're right.
And right now, this is giving you a different trading. This is giving you a more active, you look at this chart, if you're a contrarian or a range trader, this is giving you a lot of opportunity on both sides. It's giving you the ability to fade extremes, manage them, reestablish shorts if you want to do that and you have a bias, or buy a reasonable pullback, which I think we can argue a 10.5% pullback is a pretty good pullback to buy and get some joy on it. So this is it. As long as this range holds, this is giving you a really nice setup for back and forth, where dollar yen, not so much. And
Yeah.
Kiwi and Aussie, definitely not.
Fair.
But on sale.
Yeah, definitely. But been on sale for a while now.
Yeah.
Let's get over to some slides I pulled
Fantastic.
together. Just thought it would be a fun exercise. Here we've got, it's April now. Happy April. April Fools. April 1st. So I thought we'd recap what the biggest monthly movers were in major FX pairs for the month
This
of
is
March. And we'll see some not surprises. I'm sure you already have some speculation, some hypotheses for what was moving the most. But I think we'll churn through the top 10 of major dollar and non-dollar pairs, and then try and look for some trends. There's some cool takeaways. When you're looking at this intraday, hard to kind of zoom out and see where we're at. So we'll take it from number 10. We've got Australian dollar, New Zealand dollar, popular Australasian cross, with New Zealand dollar coming out on top. Percent change in March, 0.85%. Coming in at number 9, we've got New Zealand dollar, Canadian dollar, up 0.89% in the month of March. So New Zealand dollar again coming out on top. Number 8, going over to Europe.
Yeah.
We've got the euro versus the pound, change in March plus 1.4%. Coming in at 7, we've got Kiwi, New Zealand dollar versus the U.S. dollar, up. New Zealand dollar gaining on the U.S. dollar in the month of March to the tune of plus 1.42%.
Hey, Glenn, is this from high to low or from low to where we settled the month?
This is start to finish. So not incorporating, and we'll come back to this gigantic run up. New Zealand dollar could have been the outperformer.
Could have been
if we took it mid.
That's still
mid-month.
Interesting. We gave back so much ground, but still a big percentage move.
Yeah, absolutely. Coming in at number 6, we have British pound versus the Japanese yen, up on the month 2.02%. Number 5, U.S. dollar, Swiss franc down 2.03%. Another European currency taking it to the U.S. dollar. Number 4, cable. We've got British pound against the U.S. dollar. Change in March, a pretty staggering plus 2.64%. And coming in at number 3, euro yen. Some say the most popular dollar cross, non-dollar pair. Euro against the yen, appreciating 3.42% in March. Number 2, another euro against the Australian dollar, coming in at plus 3.48%. And number 1, I'm sure you would have guessed it, nothing outperforming better than the euro against the U.S. dollar in March, up 4.05%. Just a crazy move, and took it there very early on. I mean, we got to where we finished by the 10th day of March, and did get higher, but still settled at the time I clipped this yesterday above 108 after starting the month around 104. So here we've got the full list. We can go back to any of the charts you want to see, but just a couple takeaways from me, and then we'll look at the actual tape action. U.S. dollar, not its month in March. A lot of currencies able to capitalize against it, and I mean, dollar yen now would be in the mix here. Yesterday, it ticked back higher above 150 at the time I clipped it. So it was at around 1.2%, and then it got erased yesterday to around only 0.6% to the downside. So that did not make this list, but very easily could have now. Euro across the board taking the 1, 2, and the 3 spot. Sometimes you think that this maybe would have been a dollar story, but now in March, definitely a euro-led story. Taking it to U.S. dollar, Australian dollar, and the yen for a lot of percentage gains. New Zealand dollar was a healthy performer, but man, it could have been a lot more, as we saw and as you called out. Could have been to the tune of multiple percentage points against a lot of pairs, but able to not only capitalize against the U.S. dollar, but against the other commodity currencies as well, Canadian dollar and Australian dollar, to lesser effects. And the British pound also hanging in there, but I don't know what it looks like to me is a lot of Euro momentum, a European Union-led story, where, of course, they're going to get some reciprocal love, but not outperforming in the same way at all, as well as, the Swiss franc taking some of that as well. What are you looking at? What do you want to go back to?
I think this is a fantastic walkthrough because it really adds zooming out a little bit to context and what's tradable. And I think when you look back, I mean, tariffs have been on everybody's mind January, February. Well, tomorrow's supposed to be the big day. You would have thought March would have been all about buying dollars because everything's going to be more expensive. This is how the market prices efficiently. Market was having none of it. They were like, yeah, go ahead. You do whatever you want and possibly damage your economy. We're going to look through the lens of that. And I think that what we saw in terms of movement was really fascinating. For me, I think the idea that overwhelming euro strength from the dollar and non-dollar pairs says that we were just talking about a range to trade in euro, and that's an awful lot. That's a dramatically higher range than it was early last year, which we would have said is 102.5 to 105.
Definitely.
We're now saying it's 107.5 to 109. But when you look at the momentum, not only against the dollar but against everything, you accept the range. Yes, I will buy that, which I would have thought 3 months ago was a very high level because it's 170 pips off the highs. That's a tradable range because you're going to where the market is giving you and demonstrating by a tape action strength. The Kiwi story, boy, it's interesting. The fact it couldn't hold on to the bulk of those gains. I mean, that was multi-year lows it plumbed.
Yeah. Really right around the month start. So, yeah. I mean, we got as high as 58. Not sure what the percentage would have been, but I'd guess 3, maybe 4%,
right.
Low to high.
And here's a case structurally. We're back through where it had paused the first time. If you want it, is it cheap? Sure, it's still cheap. Not quite as on fire cheap as it was at the lows, but tape action wise, it's not telling me that there is a lot of interest to, in other words, the construction of what we're seeing in euro, higher highs. When the pullbacks come to the downside, they're higher lows. They're not plumbing down through the range. Here, it's plumbing through the range. I'm not saying that means it's weak enough for me to sell, but I think when you pick, don't try to pick the catch-up. Well, this is given back the most, so it should snap back. Accept what the market's giving you, which is a little bit less productive environment. Now, long-term, if you think the dollar is going to have a hard time this year, this is an interesting pair. Aussie too, even though it hasn't given. But if you're looking for a scalping opportunity, I think you've identified the ones. And things like euro yen, guys, we should all be comfortable that whether it's got a USD in base or quote currency or two others, as long as there's liquidity and tape action, we're good to go with it. It's the whole thing we talk about in the world of tasty options. If the underlying has liquidity, I don't care what symbol it is, as long as I can get in and out and it has volatility. Same thing here. And this is one that is, again, holding an interesting amount of the bounce here and plays a little bit out the same way. And I think it's this has been a pretty big move for a pair that usually doesn't have that same correlate. Even the euro sterling pair, which was really interesting. And was your sterling number 4? This is a big move. This speaks to, okay, what does that tell me? Euro is killing it against the dollar. It's killing it against everything else it trades against. There's a lot of strength out there. Can that revert? Sure. But I am going to So the market demonstrates it. I'm going to lean. If I want to be long, I'm going to lean on the one that's performing on a pullback. If I want to be short, I'm going to pick one of the others.
Yep, you got it. Yeah, a lot of potential opportunity out there, a lot of different pairs moving. That'll do it for our monthly movers of March. New month, same markets, but new stories every day. So thanks for tuning in with us. Up next, we've got Tom, Tony, and Vanetta coming at you for Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Tomas, we are back, my friend. Good morning, you knucklehead. There's no Vanetta. Hell is breaking loose. Look at April Fools.
Oh, April Fools.
Did you forget?
Oh, yeah, I totally forgot.
You totally forgot.
I mean, I totally forgot it's April 1st. Yeah.
Yeah. Rabbit to you.
So does that mean we're not having Lou Malnati's for lunch?
It could be a joke. The only reason I came in today was for Lou Malnati's. You know that.
Sold. Do you even like Lou Malnati's?
I mean...
It's okay.
Of all the chain restaurants, and if you're going
Chicago
chain restaurants, and you're going to send pizza somewhere, they do a good job.
You send it somewhere. Like I have friends in Louisville, San Francisco. My son orders it.
But you can get it almost anywhere now. I mean, a lot of the. Well, I mean, I guess.
No, my son orders it like.
From from that whatever it's called. What's this? What's the
Gold Belly?
What is it?
Gold Belly.
Yes, Gold Belly. There you
Yeah.
go. Gold Belly. Ship it everywhere. Yeah, they got pizza from everywhere too.
I got to tell you, the best Gold Belly thing ever was the pastrami from Katz's. Nothing even ever compared.
Do they still have it?
Yeah, they
do. They
you cook it for you boil it for 3 hours. It's amazing. It really is amazing. It's the best thing I've ever tried. That from you can order. It's the best thing I've ever ordered.
Yeah, it tastes like you're there.
It tastes like you're there.
Mm-hmm. I get it.
I mean, if Scott could learn to send the mustard along with the brisket, we'd be fine.
Though you can't say he's very sensitive. You don't want to start getting on Scott right at 7:00 in the morning. You can't do that. You can't do that. Well, we got no Vanetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. She's actually working.
So if you see her in New York City and you take a picture with her, send it to me. I'll send you some swag. Go ahead.
She should be on Wall Street right about now, so you can get down there.
Okay, beautiful.
But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, very small chance, she gets arrested. Yeah, very small chance.
I mean, she's got to get in the paper. I mean, I see JJ's name in the paper all the time.
No.
Your name in the paper. Might as well get her name in the paper.
Yeah.
Mm-hmm. Be fun.
I mean, I would put the odds. Who's there with her? Bobby and who else?
Garrett. Yep.
I would say the one most likely to get arrested is Bobby. He would be the slowest, and he would be the.
Yeah, it's true. You only have to be only just have to be faster than the slowest person you
First
met.
one to get out of there would be Vanetta. She'd be gone.
Yeah, she's going to be
gone.
she's an introvert. She's not going to want confrontation.
She doesn't want it.
Yeah.
Garrett will stay and film the whole thing, so he'll be good.
Mm-hmm.
And then Bobby's going to go down with take one for the team.
Right. Garrett will just be. That's how he's lasted so long here since the beginning.
He won't
of
even know he's there.
He'll go. I'm not even with these guys.
Yeah.
He only has a camera in his hand. Yeah, I'm not even with these guys. So it'll be good.
Yeah. So we're filming some stuff on Wall Street today for fun.
Mm-hmm.
So we'll see.
Mm-hmm. Well, welcome to the show that never ends, Sosnoff.
Welcome back, my friends, to the show that never ends.
Mm-hmm.
We're so glad you could attend. Step inside. Step inside.
Mm-hmm.
You know, I was mentioning this morning. I'm very excited. I've decided.
You're doing another cool thing. Go ahead.
I decided to take a plunge and go to a concert next week in Chicago.
What time's the concert start? Like at 4 a.m., 4 p.m. I mean.
5:30.
5:30.
No, I don't know. Like not till like
next week. You're doing it because you're going out to dinner tonight. I don't know if you.
in a week from this.
Will you be recouped from tonight's dinner? I mean, dinner is at 6:45. I mean,
tonight's dinner at 6:45.
It's a little late for you. I mean, by 6:45, you should be approaching your home to go to sleep. I mean.
Have you said happy birthday yet?
And you woke up at 3 a.m. Oh, and that's right, Slappy. Should we sing happy birthday?
No.
Only
Please
Slappy
don't.
can be born on April Fool's.
Yeah.
Mm-hmm.
Slappy.
Rabbit, Slappy. Happy birthday to you.
Yeah. So tonight we go out at 6:45, which is absolutely ridiculous, because real people should go out. We should have a 4:45 reservation.
It's going to be hard to get the main dining room for you.
At 6:45. I'm gonna tell you this right now, because I duped the guy last time. Okay. And he stuck us in the back room. That is a complete, that is just wrong on every level. But tonight,
you sat in the back room. Last time I was there, of course, they sat me in the main dining room. I was with my wife, so it was easy. But they sat it was like a whole girls' rugby team or something like that in the back room.
I told him, I said, as soon as he goes, I go, we don't sit in that back room. And he goes, it's the only table I got. And the other guy's like, we're hungry. Like, it better not happen tonight. It's not the same. It's not acceptable.
Well, I'm going to walk in a little bit earlier with balloons and stuff like that, so I'm sure they'll put us right in the main dining room. I'm just kidding you.
Don't do that. But,
I'm just kidding.
I'm absolutely convinced you always get, if you go upstairs, you're in a restaurant, you go upstairs, you don't get the good food. And if you're in a restaurant, you go to the back room, you don't get the good food.
I get it. Yeah, I know. I'm going to see what I can do. I'm going to tell them I'm with the local celebrity, so we'll see what they say.
Yeah. I took care of the guy last time. He should be
You took care of the guy and you got in the back room. What'd you give him, like a fever? He has 5? No. You know, the owner's usually there at the hostess stand.
Is he the little guy, skinny guy?
Yeah, shorter guy, always wears a shirt and a tie.
Yeah.
Yes, that's the owner.
Yeah.
That's the owner. So did you give him the 5?
No.
Okay.
The maitre d' guy.
Okay. All right.
Yeah.
Yeah. As long as you're in the white shirt with the black tie, then you did good.
Yeah. No, I know which guy it is.
Okay.
But yeah. Anyway.
I'm all ready to go to. Am I allowed to say I'm going to London? Am I ready to say? I mean, we already announced it. That
you're allowed to say it.
Okay, I'm ready to go. I got my flight, got my return flight, got my hotel.
Are you rubbing it in my face?
Why? Did you have a problem with your flights?
Not yet. I'll get it all worked out. But
you're not. I mean, you're not flying coach, are you?
No, premium economy.
Premium economy. Sold.
Yeah, if anybody wants.
You waited too long. You got coach.
We announced our Tony and I are going on the road this year. It's the first time we've been on the road together in over 5 years. Atlanta, Denver, Chicago.
Do I still have to cut your food for you?
It'd be nice. Atlanta, Denver, Chicago, San Francisco, New York City, LA, Charlotte, and Austin. Then we'll also be in London and Milan. The first show is in Atlanta. The only one you can sign up for right now in the US is Atlanta. 60 days ahead of time, and we'll open up the signups. So plenty of space available right now in Atlanta, and we'll be at the Buckhead Theater. Show is on a Friday morning. Starts at doors open at 8. Show starts at 9. Every one of these shows start at 9 in the morning on a Friday morning. We're doing a live trading event. It's gonna be really fun. This harkens me back to 2005, 2006. And it's one of the most fun things we do. It's just, do we wing them and how? Just trade live for, an hour and a half. We're going to be in London. Tony's actually going to London, which is amazing because I didn't think you were allowed to leave the country.
I didn't get that special. You told me it's only Europe. Only London needs that special, like $30 extra fee. You got to give me a passport, and you got to take a selfie.
Yeah. London.
Yeah, I'm still in processing. Like, I haven't gotten the pass sign yet.
Really?
I did pay the extra $5 so I could do it again for free. That whole scam that they got going on. Yeah, so I did that. Now, truth be told, my son will tell you this. Many times we get stopped at airports.
Why?
I don't know, but many times we get stopped at airports and get detained. I'm being serious with you.
Why?
I don't know.
Because doesn't look
I don't know.
like you?
Family history. I don't know.
Why would you get stopped at airport?
I don't know. Nick's gotten stopped a few times.
Really?
Yeah.
There must be Batistas out there that are on a watch list.
No fly zone list or something.
I mean, for sure.
Yeah.
Yeah, I mean, it's a common name. Yeah, you probably are.
Is it a common name?
Yeah.
How many other Batistas do you know? And they spell it differently. How many? My neighbor in Florida has the same last name as me, Bautista.
Oh, yeah.
Where is that?
That's a little different.
Yep.
Yeah. So, yeah, Sosnovs never get stopped.
No, of course not. You own the reservoir. Why would you get stopped?
Yeah. Well, listen. So anyway, Tony and I are going to be in London on June 20th. It's for Triple Witching, and should be good. We're still going to do the show from London that week, but
I'm going to see the mothership.
Yeah, but we'll be. I don't know where you're going to be staying. I'm going to be staying with the cool people. You're going to be like whatever you're doing.
Well, my per diem, and I'm not allowed to go over it, even if I put down my own credit card, is a lot different than yours. Because I mean, you're the C-suite kind of guy.
Yeah.
I'm just a founding member. What am I, by the way? I've always just been Tony on an email. What am I?
Well, according to that thing, you're a trading legend. But I would there's a few people that are going to, that beg to differ.
Well, it just says legendary traders. It doesn't say I'm one of them. It says there might be some others there.
Yeah. Okay. Mm-hmm. Anyway, we're going to have a really good time, and we're going to make it so it's a fun show, and we'll probably make 35 to 50 trades in less than an hour, and we'll be all over the place, and we're going to take a lot of risk, and we're going to have some fun.
And we're going to have fun in between those trades too. So it's going to be good.
Yeah. So.
And we'll judge you by your scorecard. We'll see how it goes.
Yeah.
When you say something like if you're, do this, and I do the opposite because I know
Simon Says do this.
That's how it's gonna work better for you. Can I do the opposite?
No, you cannot do the opposite. Were you a good Simon Says player?
I don't know, Saz. It was about 50 years ago, the last time I probably played Simon Says. Right. I mean, I excelled at everything. I was an athlete, so I would imagine I was. Yeah.
Do you think kids today?
No.
Hold on.
Wrong.
Hold on, stop for a second. Laura, how old is Laura?
24.
Laura, you don't have to answer that. We actually have an HR person
Laura,
in here.
How old are you?
She's 24, Tom.
24.
Are you single, Laura?
Laura, do you know
what's your sign?
Do you know what Simon Says is?
Yes, she does.
Really?
Okay. Does she not have a voice?
She has a voice. You got the best.
Okay, that's pretty good. So I was listening to the radio yesterday, and they were interviewing. It was on sports radio in Chicago, and they were interviewing.
See, here's Laura, everybody.
Hi, Laura.
Hey, Laura.
You know Simon Says, huh?
Of course.
All right, that's pretty good. That's pretty good. I don't know if everybody knows Simon Says. So let me ask you one more question, Laura. Do you know? Have you ever heard of? Do you know Red Fox is?
No way.
No.
Yeah.
Have you heard of Stanford and Son?
No way.
I think so.
Oh, you have?
Yeah.
Okay. All right. So anyway,
he's the old man in that.
Yeah. So I'm listening to the radio yesterday, right? And they're interviewing Stacey King because he had the call the other.
Who you love as an announcer? Yeah.
They had the call the other night when Giddy hit the half-court shot and
to win the game.
To win the game
for the Bulls.
And he goes and he gives the whole, "I'm coming, Elizabeth."
Right.
Okay?
Nobody.
He said
80% of the room doesn't know who that is.
He said
anymore.
Even his kids.
Right.
He got home. His kids like, "Dad, what are you talking about?
Right.
Was that a porn movie?" Like they
Right.
know the whole thing. He's like the number of people that came up to me that have no idea where that goes. He goes, "It blew my mind."
Well, so you're going back to the Red Fox, Stanford and Son we just said a minute. Anytime something was happening in the sitcom or the show, he would go like he's having a heart attack, and his wife had passed, and he would say, "I'm coming, Elizabeth," like he was dying to visit her.
Yeah. And he's like,
good old joke.
Yeah, I know, but he's like, I could not believe how many people, including my own kids, had no idea what I was talking about.
Sure, nobody. Yeah,
it was really funny.
Yeah, the majority of people did not know what that was going on.
Yeah, it was really, really funny.
Yep.
So, but I'm surprised the Simon Says thing. So they used to.
No, well, they had the whole the Squid Games wasn't. Oh, that was red light, green light. No, never mind. Right, Beth? I didn't watch the program.
Yes, correct.
Yeah, it was red light, green light. Red light, green light, 1, 2, 3.
Yeah. So the old Simon Says thing was like an upstate New York, like kind of the, at all the.
At the Grossingers.
When Concord.
Right, when you people would go out for an evening, like after you went to dinner at 5 o'clock.
It's what they do. It's what they do in the villages now.
Right. Exactly. Jules is actually a Simon.
Jules is the Simon Says
champion over there at the villages. That's correct.
Simon Says do this. Simon Says do this. Simon Says do this. Do this.
Right. Matter of fact, that's how you get in. Jules was able to get a discount. Yep.
Yeah. If you're a Simon Says champion, you get in the villages right away.
Mm-hmm.
But it went from the upstate New York to upstate New York
to the
down to Florida. That's where it is now. I bet Liz and Jenny. Actually, I think Liz and Jenny are going to be like really good Simon Says players.
Yeah, they will probably be the Simons. They will probably be that person.
I think they'll be good.
Right, and Jenny will be walking through the lines, going, "You're out, you're out." She will.
Who's doing the show with Jenny today? Because I know Liz is away.
Mr. Data.
Oh, Dr. Data.
Dr. Data.
Nothing says.
Is that best available? What happened there?
We're very excited. He's going to talk about all
Nothing
his fun
says
tools.
party time like Dr. Data.
It's going to be wild.
Yeah. That's on at 10 o'clock. Jenny will be with Dr. Data today. They're going to be actually talking about backtesting.
Beautiful. Well, Data knows that. He kind of spearheaded and built that into the platform, which is nice.
Yeah. Anyway, let's think. What else do we got going on today? Because we have kind of a crazy day. So no Vanetta this week.
Nope. We got an option jive at the top of the hour like we usually do.
It's only out tomorrow, and then you're doing a show Thursday, right?
I'm doing the show with Nick on Thursday. You're out Thursday and Friday.
I'm out Thursday and Friday. Mm-hmm. The Golden Prince.
We got a bat takeover on Thursday, and then we got a Youngins takeover on Friday, which will be Nick.
Who's taking over?
Mm-hmm. Very nice. Very nice. We got to Let Me Explain with Chris at 8:40, and then we got a market measure at 9. Usual day.
Oh, Chris's head's going to be exploding today with tariff news tomorrow, and Chris and Victor are probably.
You always go away when the market kind of has a big move. What do you predict its move for Thursday? It's going to be a little bit too early. You want to see what happens on Tuesday and Wednesday?
Nothing's going to happen on Thursday.
Nothing's going to happen on Thursday.
No.
Ladies and gentlemen, button up everything that you have on.
Friday might be interesting, but I will be. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures and.
You get to do all that, Tom.
Things you excel at.
You get to.
I'll take things that Tom excels at for 100, please. So.
Yeah, let's take.
Are you gonna come clean?
Supposed to take.
Are you
pictures and everything? And Corinne's like, yeah, if you want to go play golf or go to the pool, you could go.
Are you wearing the Todd from the Trade Desk inspired cruise wear that we have for the wedding?
We're gonna see how it looks.
It looks great. You look good.
You look great, Tom.
Sure. Thank you.
Thanks.
Appreciate that. I mean, the caftan, you can pull it off. Like that's just something that you have in your repertoire. Not everybody can do that, and that's why you're unique.
I'm thinking just to freak out my son, I'll go to take the family pictures in a bathrobe.
I couldn't pull that off. I would have done that. That's pretty good.
I'm thinking about showing up in a bathrobe. and yeah, it probably wouldn't bother him that much. Maybe
he's like water on a duck's back, right?
Yeah,
I mean, he's
probably
pretty.
About him. I think the other. I think.
I mean, they're in, aren't they?
What?
I mean, she's not. Right? No, nothing like that really is good.
She's not pregnant.
Okay. Just wanted to make sure.
I don't think she wanted to get married when she was pregnant. Yes.
I just want to make sure.
I don't think most women choose to be pregnant when they go.
Oh, let's not go there.
I'm just saying, I don't think most.
Actually, they do. I mean, if they are, that's their choice. So yeah, they do. Yeah, I would say every woman who was married pregnant, that was their choice.
Well, okay.
Like, confirm and send?
Let's solve this problem, Beth. Let's solve this problem.
Mm-hmm. I should have been more clear.
Yes. Yeah, you should have.
Yeah.
So it's okay.
But whatever. It's going to be fun. Yeah, it's going to be fun.
Good.
No,
all right.
I'm actually not going to play golf. I'm not going to do anything. I'm just going to be a good...
attentive husband and father to the groom.
I'm never a good attentive husband. I could be. My main job.
You're an excellent speechwriter too. I mean, you should do the commencement speech or something like that, right? Don't you think?
Yeah, I think. My main goal is to. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing. That's what I saw best. Yes.
I excel at picking up the tab. So my goal is going to be pick up the tab.
Oh, are you hinting about tonight's dinner? That's so kind of you, Tom. Thank you very much, man. That's awesome.
Oh, tonight's dinner, I got invited. I got an invitation.
That's great, man. Thank you so much. That's great. That's great.
I'm only going to have an appetizer.
Heavy apps. We're going to have heavy apps, please. That's it.
I don't know what I want to have tonight. I don't know.
You're going with the pork chop.
You know what? My favorite thing there, it's crazy.
They make a great chicken parm.
I never had it.
Oh my God, it's the size of the plate.
I've never had it.
Well, maybe you try that if you want to try something different. It's excellent. Their red sauce is great.
Really?
Yes.
I think their sausage and peppers are great.
Well, yeah, the sausage and pepper is what they're known for. But I mean, You just talking about the appetizer. I always order that when you're with me. You never get that when you're not with me. I always order
get the sausage on with the chicken and the peppers, or the pork chops with peppers. I love those. But you know what? The chicken parm could be interesting.
It's very good.
I got a veal parm.
Yes, they have a veal parm. Yes,
that's a possibility too.
Yes, pounded thin. It's very nice.
That's a possibility.
Fills up the whole plate. You'll like it. A guy like you was made for that meal. All right, listen, let's take a quick 90-second break.
Look what you did.
I'll take pictures tonight. Don't worry. If you're on Twitter, you can follow me. I'll take pictures tonight. We're going to take a quick 90-second break and come back. We got more Tasty Live right after this with, we'll come back with Confirm and Send. We'll be back in 90 seconds. Tasty Live.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P down 27 handles. I know at 3 a.m. when you woke up, sound off, they were up about 5 or 6 handles. You can see that they're about 7 handles off of their lows. They're about 35 handles off of their highs. Middle to the low end of their range. NASDAQ down 88. Russell down 5. They're all down around the same. Maybe the Russell's a little bit stronger. It was the weakest of the group yesterday. Dow down 250 and change. Volatility up 2%, 43 cents. Decent sized move to the upside on volatility, giving a little bit of legs to the down move in the market here. 43-cent move on volatility side. If you think it's a little bit large for this move that we've had today?
I think so.
I think so too, right? Yeah, probably double
weird.
what I would have expected.
But I don't think vol's coming in today at all.
Tariff talk.
Tomorrow's your what kind of day is it again?
Tariff.
It's
a Wednesday.
No.
Hump day?
No.
Hooters filing for bankruptcy day?
No. Trump named it as some day. I forgot what it was already.
Freedom Day?
No.
Independence Day?
No. It's like some name he tried to. It's like
you're not going to remember. I'm not going to tell you.
It's like Trump Day or something. I don't know.
Okay.
Like he likes to name things like that.
Bonds up 113, sound of 118.22.
Amazing move in the bonds.
Ivy rank of 45 is pretty good. Do you play the opposite side of bonds?
No, I'm not getting short bonds. I bought them big last week on a downtick. I sold out and made them.
Could be like a triple top.
No,
Or is there any such thing as a triple top? I know you can get double tops. Can you get a triple top?
I think the better play. I'm not getting short the bonds here. I think I think being short gold is the way more interesting play, and that's what I have on.
Short gold up 13. Let's just call it $14. We should round up with gold.
So far,
gold just goes up.
No bueno. And here's the crazy thing. So I put an order in on the close yesterday. I got to tell you the story. So I put an order on the close yesterday to sell a bunch of call spreads in gold, in the gold futures.
/GC.
At the expected move.
Okay.
I didn't get filled.
Right. It was a $10 wide, $1.70.
For $1.90.
$1.90. Okay. Remember.
It's a mid price. So I re-entered the order last night. Gold's up $20 at one point. And I wake up in the middle of the night and I'm like, I should be filled. Look at my orders. I'm not filled. I'm like, how could I not be filled? It's up $20.
Right.
And I wasn't filled. I'm like, what the hell? And so I canceled the order and I didn't put it back in yet. And I'm like, I don't understand what's going on in there. Like I'm right at mid price. I should be filled.
That spread right now, markets are a little wide, $1.90 mid price.
That's what it was yesterday, but it was
142.20, so it's a little bit wide.
What is the strikes again?
33.30, 33.40.
33. Yeah,
35% pop.
33.30, 33.40. Exactly.
Yeah,
I could not be filled on this thing.
56 days out. I mean, you're at the expected move. The delta's around 50, 25 delta.
Yeah.
Yeah, 75% pop. Yeah. Yep, $1.90 mid price. I was right.
Nope, nothing done.
So how does that make you feel?
Well, it makes me feel weird because it was $1.90 mid price yesterday, and we were 13 handles lower.
Silver up about 7 cents.
Silver's a pig. Silver was down 50 cents yesterday. The gold silver ratio is.
I wouldn't say it's a pig. I mean, it's just a skosh off of its highs. But
I have the gold silver ratio on.
That is a disaster.
Okay, let's see. Well, I'll tell you how bad a disaster is in 1 second because I need to.
What'd you put on for like 88 or something like that? 80.
No, 89.25. Where is it?
I have to remember his trades, my trades, and I'm off by a penny or so, penny and a quarter.
Where's gold? 31.64.
That is correct. Silver's 34.70.
34.7 equal 91.18.
34.70. Did you say 34.27 just now?
34.70, right?
Yes.
91.18. I'm down 2 full handles on that.
That's big. It's a big move.
I know. That's the highest it's been. I should put it on more, but I'm not because I'm just naked short gold. I don't even want to buy silver here.
Because you're scared. I get it. Euro down small. No real movement there after it had a nice little rally about a month ago. Been going sideways pretty much ever since. Maybe the lower end of its range now.
Yeah. All right. Well,
ready to go. Confirm and send. Let's do it.
Not much I'm seeing pre-market this morning. Apple's lower by about $3. It was up big yesterday. Tesla's up a couple of dollars. Nvidia's up a few pennies. That's about it. Nothing else. I'm Tom Sosnoff. He's Tony Batista. It's Tuesday, April 1st. April Fool's Day. What are we going to pull?
Rabbit.
Let's do a little confirm and send.
I'm ready.
When I sell an option, does the premium I collect immediately get added to my net lick? If not, where is that premium accounted for?
You can see it in your EXT number on the top of your Tasty Trade platform. All things being equal, that EXT number is how much premium you're long or short. If today were expiration, that's what your account would be up or down, depending on if you're long or short premium. We're short premium, so that's what your account would be up. Is it added immediately to your account? Yes and no. Because if you sell something for $2 and it goes to $1.90, that 10 cents, that $10 will be in your account. When you sell something at $2 and it gets marked at $2, it's valued at $2. You don't have that money in the future. If you want to see that future money, all things being equal, you look at that EXT number. Sadnov?
Yeah, when you sell an option, the premium you collect.
It's mark to market.
it gets added to your cash, but not to your net lick. And your cash is a very misleading number because it doesn't mean anything.
I don't even look at my.
Nobody
cash
looks
number.
at their cash. I wish they didn't put it on the platform, but so it does not impact your net lick at all. If it's accounted for in your cash number, but so you can see it there if you want to. It's also accounted for, like Tony said, in your extrinsic premium, but it doesn't impact your net lick. You don't have any more money or any less money. Okay.
Liberation Day, Sadnov, was the day.
Oh, liberation. That's right.
Yes.
I don't know what we're liberating, but something. We're liberating something.
Let my people go.
Yes. Let's go next slide. So this person writes in and says, well, the markets are weak, like we're seeing.
We should call this Liberation Studios, since you've really never named them. That would be.
I have the names. I just don't want to, like, it's just like.
When you let us know, like October or something like that?
I don't know if you guys are strong enough to handle it. When markets are weak, like we're seeing, and volatility is higher, do you begin using more defined risk trades to protect against an outlier move?
I'm going to go with the IV rank. It doesn't matter to me, like volatility being higher does matter to me. The IV rank is going to tell me if I want to be more aggressive or less aggressive with the amount of premium that I'm selling. Now, let's just say, for argument's sakes, that I'm selling premium and volatility continues to go higher, and I'm getting to a point where I have enough of the undefined risk trades. I'll certainly go to a more defined risk trade. Absolutely. And if the market's going lower and I'm trying to get bullish and I've been selling, puts or stuff with more long delta, I would most definitely go to a put spread if I still wanted to continue with the same directional bias that I had. So yeah, absolutely. Depends on how much I have on. But I'm going to look at IV rank.
I mean, when the markets are weak and volatility is higher,
markets were weak yesterday.
We don't necessarily use more defined risk trades. I don't think that would be accurate. I think that
when volatility is lower, we definitely go to more defined risk trades, something like a calendar spread or a diagonal spread.
I think it's actually
you adjust the strategies.
We're going to ratchet up our risk a little bit when volatility is higher because the rewards are greater for taking risk. I don't think our percentages change very much, to be fair with you. If anything, we add more defined risk trades when volatility is lower, not higher. But to be fair, I don't think we think about it that way. I mean, we look at opportunity as being, we're pretty impartial to opportunity, which means that we're going to use the same approach regardless of whether, volatility is higher or lower. I think I know there's way more opportunity when volatility is higher, so I'm inclined to take more risk, not less risk. That's how I would look at this.
But not all stocks, many, the majority, most, but not all stocks are going to reflect the higher implied volatility that you get in FO/VX.
Agreed. Let's go next slide.
So you got to go to IV rank.
So this viewer writes, I struggle making sense of risk reward when comparing owning stocks to selling options. When trading individual stocks, the risk reward can be defined as 2 to 1, 3 to 1, etc. I can risk $50, my stop, to make 100 and so on. When it comes to options, it seems like it's reversed. For example, when entering an option trade, if I want to make $100, my max loss could be 400 if you're selling premium, for sure. I know that I'm missing something when looking at the risk reward of options, but I'm not sure what.
Yeah, you're looking at your probability of success. And as a matter of fact, if you're going to use your stop of, out at $50 and out at a $100 profit, out at a $50 loss, all things being equal, if that stock were to have a 2-point expected move for the day, you've basically got about a 90% chance of getting stopped out for your $50 loss, maybe even more than that, and your $100 profit is probably something more like 65% of making that. So you're missing the probability of success. And I just use those probability numbers, and they're probably fairly accurate in my example, just because your stop loss is half of what your gain is going to be, which means that the chances of it being a $50 loss, all things being equal, is greater than the chance of it being a $100 profit. So you're missing the probability of success. On your example of looks like a vertical spread there, the $100 versus the $400, you probably have an 80+ probability of success on that trade. That's what you're missing: the probability of success and the time value of the option trade.
Yeah, I probably would have explained it a little bit different, but that's generally so. When you're trading individual stocks, the risk reward can be defined as 2-to-1, 3-to-1 because
of where he's putting his stops in. Otherwise, it's really just a 50-50 shot on direction.
I mean,
he's taking a lot of liberty there with that, and I let that go.
Yeah, you're really the risk reward really is 1-to-1.
Right.
But if you put your stop in, you're hoping that you're right, and so it's a little bit different.
Yeah. Now, if the stock has a very tight 10-cent expected move for the day, then those numbers I gave you are gonna be off. But if you're inside a standard deviation with both of those numbers, then I'm
regardless. If you buy a stock, it's really a 50-50 shot. It doesn't matter where you put your stop.
Mm-hmm.
If you put your stop in at some number and you let the profits run, of course you can make more money, but it's still a 50-50 shot.
Mm-hmm.
That's what stocks are. When it comes to options, you have a lot more strategic influence over your decision making. So
you're also using a whole lot more buying power. I mean,
if you want to buy an option, you can risk a little to make a lot. And I think that's the part that you're missing here. If you want to look at the risk reward of options and you just want to buy an option, you want to risk one to make 3, 2, 10, whatever it is.
Sure.
That's a complete shot. You can. It's hard to do, but you can. Well, the way we talk about options is a little different, and we tend to opt for the higher probability of profit. So rather than go for the 2, 3, or 4x payout, we'd rather go for the 60, 70, or 80% probability of profit. It's like the inverse. That's why you risk 400 to make 100. The reason you risk 400 to make 100 is because you have an 80% probability of profit. That's just math. Okay, so if you're risking 400 to make 100, you have an 80% probability of profit. If you're risking 1 to make 1, that's a 50-50 shot. It really just depends. So there's no...
So you could simulate that same strategy in an option strategy you are with the stock you're doing there and have the same probability of success.
You can find an underlying, and you can create whatever potential statistical reward you want. Mm-hmm. That's the beautiful thing about strategic investing when you get comfortable with it. Let's go to the next slide. So I understand with a strangle, if one side is showing 40 deltas and the other side is showing 10, okay, so you're short a call of 40 deltas and a put with 10 deltas. I would roll the untested side from 10 to 20 in order to cut the tested side by half. But how do you do that with an iron condor?
Yeah. Well, first of all, in your first example, you have 30 deltas total. 40 and 10 would leave you with 30 deltas. If you wanted to cut that in half, you'd have to roll up a little bit. 10 deltas is fine, but you probably want to cut that to somewhere like 7. But anyway, that's neither here nor there. In order to cut the tested side by half, you really wouldn't be able to do that in iron condor. You could take, if you don't want to use any more buying power, you could take both the long and short option of the untested side and roll that whole spread up or down to reduce your delta there. But you know what? In an iron condor, it's quite hard to do that because you only collect, especially if it's later in the cycle, maybe with 3 weeks to go or something like that. You only collect, pennies on that roll up. Sometimes it's not necessarily worth it to change your probability of success of the whole trade. I have liked to move just the naked option higher, and it does use more buying power. You roll it up 2 strikes, let's just say it's going to be $10 more, $1,000 per contract in buying power, and then you're able to cut the delta a little bit there, but you do have more risk on that side too. So rolling up both strikes is my answer for an iron condor, unless you want to use more buying power. Hard on an iron condor to do.
Okay, so first of all, with the strangle, you have it exactly correct. If one side's showing 40 deltas and the other side's showing 10, you would roll up the untested side to wherever you want in order to make yourself comfortable. Some people, like on our team here, will say they like to go to half the delta. So you roll from 10 to 20 on the put side. That's a nice credit. Other people, like me, for example, like Tony might say, I would go from 10 to 30.
Yeah.
I might go from 10 to 35.
Sure.
To even tighten it up even more, just leave a little bit of short delta. So it really just depends on wherever your comfort level is. You don't have to go from 10 to 20. You can go from 10 to 40 if you want. You go from 10 to 30, from 10 to 35, but that's rolling up the untested side. We never touch the tested side. We only touch the untested side. With an iron condor, what you do is it's the exact same process. You just take your short You take in this case, your short put spread, or it actually could be a call spread or a put spread, and you roll down the untested side if it's puts. Roll up the untested side if it's puts, you roll down the untested side if it's calls, and you go as far as you want to go to see how much more credit you want to collect. You don't touch the tested side. You just roll down the untested side. You can't invert this trade. So you can go to an iron fly, that's about it. But you just keep rolling down the call side as much as you want. And just know that every time you roll down, you do it as a single trade, you collect a bigger credit. But in the end, you're tightening up your win window. So you're getting very tight on your win window. So you don't want to go too far. But anyway, that's how you do it, the exact same way.
Yep.
There's no miracles to this.
Yep.
So we had a really weird close on Friday. You heard us talk about it on Friday.
Sunday.
No, I know, but I was talking about it on the show on Friday with Vecchio, and then on Sunday night we were talking about it with Pete and with Ilya. We don't really follow S&P premium over cash anymore because it's not. When we were professional traders, that was kind of our business, but now we're retail customers. We don't really have a lot of
we don't have any exposure to that.
We don't have any exposure. We don't have any exercise or dividend risk or assignment risk or that kind of stuff. But we do talk about underwater closes because that usually, to me, means something we're close to a bottom, and that was pretty much the case yesterday. So when an underwater close happens, which means that the S&P futures close under fair value with respect to the cash markets. Is there a
cash markets, all the stocks that closed?
Is there a certain number that catches your attention, like 10 or 15 points? And it's
supposed to be N. Why is an underwater close?
Why is an underwater close considered bullish?
Yeah. Because that's how history has shown it, at least through my experience. That's why an underwater close typically signals a little bit of capitulation. Think about it for a moment. All the stocks are closed, and whoever's trading futures, portfolio managers and retail investors, didn't get an opportunity to flatten out their positions enough with the stocks that are now closed. So they're whacking the futures because the futures are still trading, and they're able to do that basically 24/5. So you get those futures moving much lower. Something has to happen. Either the futures have to go a little bit higher, or those stocks on the opening also have to get hit. Now think about it. Those fund managers have already done their damage to their portfolio or their hedge to their portfolio with the selling of the futures. So that usually leaves the stocks to be a little bit stronger, and that usually leads to a little bit of a relief rally in the market. So that's why I think it is. And is there a specific number? No, there's no specific number. There are websites that will give you fair value on the E-mini S&Ps that you can look at. It's usually wrapped around somewhere between, I don't know, with interest rates now, it might be closer to $10, but that's usually what I look at.
When we like to say when there's an underwater close because it sounds good, and it also is kind of fun because we don't get to say it very often. We also rarely get to say it at the end of a quarter or the end like expiration, and we also rarely get to say it at the end of a really big move or potentially at the end of a big move. And that's why I was a little excited on Sunday night that we had down opening, but it was a tough buy yesterday morning.
Sure was. But, and you had every opportunity too, right? I mean, we're down 50, 60 handles.
Is there a certain number that catches your attention? Well, we were about 15 points underwater on Friday afternoon, and by the time we opened on Monday, we were about 75 handles underwater, which is crazy. And we didn't stay down very long. We kind of rallied all day. But why is an underwater close considered bullish? Because it's when everybody, I guess it's like capitulation. They kind of panic a little bit. Like, you had to bang out your futures on Friday afternoon. You had to get a little bit short for Sunday night.
Everybody's on one side of the boat. It's
considered bullish because everybody's on one side of the boat.
Yeah,
exactly.
Yeah,
and it's a lot of people think of it as a way to measure capitulation. It's just like they're a little too cheap here. So that's what it is.
Not a sure thing, but I like the odds.
Let's take a look at the next slide. So this also happened Friday. What is end of the quarter window dressing? What does that mean?
I don't know. I really don't know. I mean, I know what it's supposed to mean. This is a lot harder to nail down. I'd rather go back to the last email where we have an underwater close than this window dressing. I mean, again, portfolio managers marking the stuff that they're long higher and the stuff that they want to take losses on or redistribute. Like if ABC stock was the best stock of that quarter and I didn't have it in my portfolio, I might want to have it at the end of the quarter just to show my prospectus that I had ABC stock in there on this move, even though I missed the whole move. So it's buying the stocks that have been the better performers and whacking the stocks that have been the underperformers in a portfolio. There's so many portfolios out there that I think it's very hard to. It's an very old saying. I don't think it
is an old saying. And the reason that they use this term window dressing, and I haven't looked this up in a long time, so maybe it's changed a little bit, but you used to get, when you had your money managed by some big firm, whether it was like Merrill Lynch or Morgan Stanley or some money manager, hedge fund manager, whatever it is, you would get quarterly statements. Everything was done, earnings come out quarterly and customers would get quarterly statements. And your quarterly statement, it would show what your portfolio is.
Right.
Okay, because people had no idea what they had.
Right. You could see online now basically everything that every
now you
portfolio
can
manager
watch it
had.
in
That
real
was
time.
completely different.
But back then, you had no idea what some money manager was buying for you, right? You had no idea what was in your portfolio at all. So at the end of the quarter, you'd get a statement in the mail, or you get a statement, and in the statement would show your portfolio, and people would would show all the stocks that you own, and people would always say, like if some stock was hot, you would want to see that in your portfolio. Like if Apple was exploded, Apple had a great quarter, whether or not they were long Apple the whole quarter, they would buy some Apple at the end of the quarter so they could list Apple in the portfolio in your portfolio.
Right.
They call that window dressing.
Yes.
Just to make everything look good. That's what window dressing was. I mean, I don't think that much of that occurs anymore because I don't think people care because they have access to their portfolio all the time. But that's what window dressing was.
Yep. It makes for a good story.
Yeah. Let's see what the next slide is. So earnings season is coming up. And this person writes, I have some positions that I've been fighting on for about a month now. Would you close ahead of earnings? And if not, how would you handle them? This is not easy.
This is a great email because I dropped the ball on some of the positions that I have in April with 16 days to go now. Should have been rolling last week. And now I'm stuck with stocks that I tried to avoid earnings on. See, I put on the positions specifically to avoid earnings. And now I have the quandary of rolling from April into May, which is the mechanical thing to do, or stay in April. Now, some of these positions that I have in April are underwater. I like the positions that I have with the high implied volatility in the front month, so I'm opting to stay in them. Now, I think it's a non-mechanical thing to do, but I want to avoid earnings or at least put on an earnings position that's going to reflect what I think is going to happen for earnings when they get closer to expiration. A great one of those would be like Tesla, which has earnings on April 22nd. And expiration is April 17th. So I would have to roll from April into May into earnings. I'm going to avoid that in Tesla and keep the position that I have.
So, yeah, this is always a tough one. So earnings season's coming up, and I have some positions I've been fighting for about a month as well.
And I'll say the majority of the positions I'm underwater on, so I'm keeping them for that reason too. Go ahead.
The decision to close a position or to recenter the position or to readjust the position for earnings, to me, is 100% about the implied volatility, rank of that, and the expected move and the liquidity of that underlying. So if the underlying is liquid, if the underlying has high implied volatility, and if you like trading the underlying, you will recenter or readjust the strikes based on what you think is going to happen 100% of the time. Okay, so you would not close. If the underlying has had a contraction of volatility and it's less attractive to you this time around, or if the underlying is illiquid, or if for whatever reason you just are stake bit by this particular underlying, then you're going to back off and you don't have to trade it. Or you can reduce your size or just recenter. I would say I am about 75 to 80% of the time, I will stay in the underlying, but I will adjust the strikes. I would say 20% of the time I close, 80% of the time I roll forward and trade the earnings.
Perfect.
Okay.
I typically do the same thing.
Okay. This person writes, we have some extra ones today because Vanetta was out. So we're just having, we're going to do a couple extras. It seems that with the Trump tariffs, we have a new level of chaos and no one really knows what will happen from day to day. You have seen it all. Does it ever make sense to buy the chaos? For example, buy an at-the-money straddle in the indices, or buy at-the-money straddles in the indices, or are things so efficient that the chaos is immediately priced in?
Yeah, with your example, I didn't think you were going to go in this direction about buying an at-the-money straddle. That would be the last thing that I would be looking to do. As a matter of fact, I can't remember the last time I've ever bought an at-the-money straddle because of chaos or anything else like that. Now, you could look at buying, volatility /VX or something like that if you wanted to think there's more volatility coming in the market or something like that. That's a 50-50 shot with futures. I have no problem with that. Or maybe even options on volatility if you want to do some sort of spread in there. Not really naked options, but spread in there. Sure, go right ahead. I mean, for me, this is not something that I would look to do. I will say, with the implied volatility being so higher, that being nimble pays a lot more than it has in past years when volatility was a lot lower. And by being nimble, I mean, you look at a day like yesterday, we opened significantly lower. We went higher. We were up 30, 40 handles at one point yesterday. If you took a little shot on long delta, I wouldn't think in this market that, that was the bottom of the move, even though I thought it was a sustained move lower in the short period of time with the underwater close that we had on Friday. But you have to be nimble. Rinse and repeat, buy and sell, kind of be a little bit more two-sided with your trades than you might have been in the past when you got a dip in the market where you get a V bottom.
Yeah. So this is a very fair question. With all the level of chaos that because of all the news and tariff stuff and all that kind of stuff. Let's put it this way. The market, the last part of your question, are things so efficient that the chaos is priced in? Well, the market prices in the chaos what's known as best it can, and it's right, plus 70% of the time with the level of chaos that it prices in. I mean, it's going to be careful not to overprice chaos. And so sometimes there's a little wiggle room in there, but if you think you have an edge because you sense more chaos than you think the market's pricing in, then sure, go ahead and buy a straddle if you really want to. I mean, from experience, I can tell you that it is very rare that the market misprices something and you price it right. Like, it's so rare that that's going to happen to you. Like a couple of times in your entire
less than the
career.
Probabilities would suggest.
Yes.
I'll put it to you that way.
Yes, it's much harder to do than, especially when volatility is high to start with. It is much harder to do than you think. So if you think the market is mispricing something, then you should try it because I think it's a good learning experience. But I can tell you from my own experience that the markets are really good and really efficient at pricing in what you perceive to be chaos. So, usually they have the implied volatility levels and the pricing levels down to a freaking science. Like, I mean, there could be a little bit off, but man, for you to be right and to outguess the entire flow of money that's out there,
and quick enough to
take advantage of it, ooh boy,
it's a tough one.
Yeah. So, I mean, I think the chaos is priced in, but again, everybody should do whatever whatever you think.
Yep.
Like, nobody should watch this show and not do something because Tony and I don't think that's what we would do. Like, I really mean that. Like,
we've said that from the very beginning.
We have our own opinions on things and we have our own mechanics, but all we do is present what we think are the optimal ways to do things. because everything is so fairly priced nowadays, you can do the exact opposite of what we do. It doesn't matter. It's not, you're not theoretically disadvantaged at all. It's just, I think it's a mechanical disadvantage sometimes, but there's no theoretical disadvantage. You should always experiment and try. You should watch the show. You say, you know what? I don't think those guys are right. And then you should do the opposite. I do it all the time. Sure. Tony says something, Victor said something the other day. I sold some gold. I mean, Tony said something the other day. I bought something else.
I think Victor tweeted that out. You said, I don't want to get into it right now, but I completely disagree with everything you said. Something to that effect.
I told him that yesterday.
Yes.
Yeah. Yes, I'm.
I completely disagree with everything you've said. And we were all dumber for having listened to it.
So, let's go next slide.
Ready.
And the last one. It's 7:57, by the way. We are in Chicago, so this is Central Time. And we're in the West Loop of Chicago. If you've ever been to Chicago, you should, if you haven't been, you should get here because in my opinion, and this is just my opinion, it's the best city in America. So we would love to have you visit our amazing city. And if you're here and you want to stop by Tasty and just kick the tires, we always love that. Do you divvy up your capital in a way that you have a predetermined percentage of capital that you'll use for various strategies? For example, do you, Mr. Batista, do something like use X% for covered calls, Y% for strangles, Z% for ratio spreads? It seems to me that would be a good way of saying strategically diversified.
Yeah, I have no problem with it. I don't do it, but I have no problem with it. And as long as you have a portfolio, I've always said this, that is over a 65% probability of success, and you can get that on the top of the Tasty Trade platform too. I love your position. It doesn't matter to me, bullish, bearish, neutral. If you got an over 65% pop, I love your position. So for me, I would have no problem doing this because you would accomplish that too. So I have no problem with that.
So this is another really good question. We don't do it with predetermined percentages because, again, we've been doing this for a really long time.
And markets move, things change.
And it also is very organic to us. But I'm going to tell you, if this is my first week trading or my first month or my first year trading, I would probably want to make sure that I have that I set aside reasonable amounts of capital for different strategies because I want to be strategically diversified. It's so important to maintaining a lower volatility of your P&L. And strategic diversification and product diversification is critical to keeping your P&L fluctuations down to a minimum. Now, Tony's been doing this since before there were gas cars. Forget electric cars. So before there was electricity almost, when they used to write the quotes on a chalkboard. So I think he can figure it out in his head at this point. Sure. It's almost like a baseball player who's been playing for 20 years. They kind of know all the pitches that a pitcher has, and they know all right, the guy's throwing me 3 fastballs. He's going to throw me a curve. He's only got 3 pitches. Okay. And they know what percentages. It's the same thing here. Organically, he's going to set aside a certain amount. Well, covered calls he probably won't unless he thinks it's oversold. But for strangles, ratio spreads, iron condors, defined risk stuff, yeah, he's going to do it. It's going to be percentages. In most cases for us, it's 70-30, 75-25, 80-20, undefined over defined. But, you'll figure out what works best for you.
Very good, sir. Look at you, right at the top of the hour, Seth. I couldn't get any more perfect, but I expect that from you. We're going to take a quick 90-second break and come back. We got more Tasty Live with an option jive next. Be back in 90 seconds.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I had the what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine.
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense.
It does. Yeah. It really does.
That kind of tracks.
I don't even know what that means. Sure. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you got...
I'm thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh.
What is
I think you nailed it, Vanessa. I don't know.
No. Cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Tomas, we are back, my friend. You know what that means? Time for a little bit more tasty live style. You know what comes up next?
No.
That's right, an option jive. Even the S&P is down 14, my friend.
What do you think here?
Well, even the S&P is down 14. Volatility up by 23 cents. Volatility was up by 40 some odd cents, but the even the S&P is only 10 lower. I mean, I think we go sideways for the day. I think you're going to be on both sides of the markets.
Everybody's going to be playing for what's tomorrow called? Reposition day again? What is it?
I'm not telling you for a second.
I forgot already.
I'm not telling you for a second time.
No, I forgot.
No.
What's tomorrow called again?
No, not telling you. Can't tell you.
Liberation
Day. No. It's a play on words. It is for Libtard Day, but we're calling it Liberation Day, so even the Libtards will say it.
Oh, okay.
Yes. Mm-hmm.
It's the MAGA-tards.
I think that's what they're doing. I think that's what they're doing.
MAGA-tards.
And I want to go on record here completely. I'm not even political. I mean, I am not. You are political. I am not political. I don't have an axe to grind. I just think it's silly. Both sides.
Well, yeah, for you it's silly. For me it's silly. But when you talk about your kids.
You know.
Wait, Nick's going. I mean, you'll.
Sure. I mean, Nixon was going to ruin the world, and
I didn't say Nixon. I said Nick.
I know, but I'm going back to Nixon. I mean, the fear stuff is ridiculous.
It took like 20 years to get over Nixon.
No, it didn't.
Yes, it did. Actually, you remember, but
it took 20 years to get over Lyndon Johnson. That's what it took 20 years to get over.
No,
yeah.
Nixon. But I lived that. I lived that move. Daily P&L swings.
Actually, my mom, I have the worst thing about Nixon. Nixon was the first one to go over the Great China Wall as an American president. I think he was the first president to go to China.
He scaled the wall on a pole vault.
Actually, the guy, the what was it called? The TV guide. The TV guide had a picture of Nixon scaling the wall, and I drew it.
Pole vaulting, yes.
Not pole vaulting. He just was hopping over it because I drew it. I remember like it was yesterday. And it was beautiful. It was my best artwork, which, by the way, Vinny has the same artistic skills.
Set.
What's that?
Skill set.
Skill set, yes. Artistic. He made a beautiful vase or vase, whatever you like to call it. I thought it was an ashtray. He made an ashtray with like 2 bears on it, but it's not an ashtray. He goes, Dad, I'm 15 years old, and it's not 1960 anymore, and you can't make ashtrays in school anymore. It's a ramen bowl. But I'm telling you, it looked just like an ashtray because it had the 2, he goes, that's for your chopsticks, to hold your chopstick. I go, it looks like a cigar holder or something. He goes, Dad, it's not 1960 anymore. But I digress. I copied.
He's actually right. You can't really build ashtrays anymore.
Well, you don't have to build them, but you make them. Yes, it's true. It was clay, Sosnoff. TV guide. Anyway, I freehanded. I drew. It was absolutely beautiful. My mom thought she could improve. My mom was not artistic at all. She thought she could improve like the face or the hands, the way they were. So when I went to bed, she erased it and then did it over again and then butchered it. And I woke up, it had a hole in the paper, in the art that I thought was my finest moment. It was my finest moment. And I remember it to this day. I had to be, 13, 14 years old. So I still remember it 50 years later.
When I was a kid, my mom was an art teacher. She taught art for...
Forever. She still does. You never stop, right?
Never stopped. Mm-hmm. 60 years, whatever.
Mm-hmm.
So... But she only taught girls.
Okay.
So girls only, like high school girls only. And but back when she first started, she took boys too. So she said, I was the one who ruined it. And she's like, you got to take art class. You got to take art.
Your mom taught you in school?
No, not in school.
Oh.
She had a private art school. She had for 50 years, 60 years, who knows? But she only taught girls, high school girls. But but when she first started, she had boys like me and a couple others. And I couldn't do it.
You ruined her. Basically, you're saying you ruined your mom's
ruined it for all the
ability to teach.
I ruined it for all the other guys.
Yeah.
I'm like, Mom, I have practice today. I cannot be here. You're ruining my life.
Uh-huh.
Okay. So, but I did a couple pieces of art.
Your mother didn't want you in her class. I got it.
So I'm like, you're literally ruining my life because.
Well, my mom ruined my life. Okay, with this.
Because I'm missing baseball practice because I have art class. So.
What will the team do without their water? I mean, Mom, there'll be 15, 20 young men that will have heat stroke if I'm not there.
What will they do without their power hitter? Anyway, so
power hitter.
So I made a couple of pieces.
What will Schwartz and Rubenstein do? Candle without their water.
So, so I have a couple of pieces of art that I did pull off before I quit.
You stocked up, so you can get an A on the final.
To this day, she still has them.
Of course she does. Yeah.
They're so bad, and she'll go, look at the talent you wasted.
You had talent here. Look at it. I can see it. It's budding. It's there. If you look real closely. If you close one eye and get real close to it, you can see the talent.
That's right.
Mm-hmm. I love it. Yeah.
So
good stuff.
To this day, they're hanging up somewhere. And yeah.
Beautiful.
Yeah. Anyway. All right. We got a piece for you. The research team put together. A couple of pieces today. We got Vecchio coming on, and then we have 2 research pieces today. The first one is called the daily swings, the daily P&L swings over the life of a trade. Now, you remember I just talked about P&L swings a second ago? Talked about P&L swings as they relate to having a diversified portfolio, having diversified strategies, diversified underlines. Let's take a look at P&L swings over the life of the trade and see where the research team went with this today. It's a good one. So perhaps the most important difference between trading options and traditional equities is the importance of expiration dates. Option positions can be expected to behave differently because their expiration date, differently close to their expiration date than far from it, but how specifically? So today we're going to examine the size of the daily price fluctuations over the life of an option trade to help us not to be caught off guard when things start to accelerate. There's a reason that we managed trades at 21 days, which was last Friday. There's a reason. And the reason is because gamma risk starts to accelerate, the risk of change, as we get closer to expiration. We're in that little stretch right now. And this is the part of the decay curve that scares us a little bit.
Yeah.
So we're going to try to avoid the part that's most risky. Is there a theoretical advantage? No. But is that what we're talking about with mechanical advantage or like optimizing our research? I think so. Let's go to the next slide. So we did 5 years of data. We went back to 2020, and we sold 20 Delta Strangles or Iron Condors with 30 Delta 20 Delta Strangles or Iron Condors with 30 Delta Short Strikes, 10 Delta Longs, 45 days before each monthly expiration. Doing the gains and losses the same. We computed the daily change in P&L at each data expiration, averaging across the entire data set. We examined these changes in both terms of dollar amounts and as a percentage of buying power for the trade. So again, 20 Delta Strangles, 30-10 Iron Condors. And we looked at it every single day and then averaged out the returns.
Okay.
Let's go to the next slide, Beth. All right. So here's kind of this. You can see at the very bottom. This is days remaining in a trade, and on the left is the 20 Delta Strangles. On the right is the 30 to 10 Delta Iron Condors. That means you're short the 30 Delta put and call, and you're long the 10 Delta put and call. Right? It's about a 20 Delta Iron Condor, and the other one's a 20 Delta Strangle. So it's somewhat similar. And we're looking at the daily price fluctuations. These are the mean daily price changes in dollars. The mean daily price changes in dollars. And what's the first thing that jumps off the screen at you?
That they're pretty much symmetrical with each other. I mean, that there's
that they're pretty much symmetrical with each other, so there's not a huge difference.
Right.
But what's the real takeaway from this? Because we're talking about P&L change in dollars.
Well, I mean, that swing is so great when you get into the short period.
When you get inside of 20 days, if you can, I can't hold a cursor to this, unfortunately.
It basically doubles as you get closer.
The risk doubles.
Yeah, basically.
The takeaway here
between friends.
In an Iron Condor, the risk basically doubles, and in a Naked Strangle, the risk basically doubles after you get inside of 20 or 25 days. After 21 days, but it's close enough, and you can see it here visually. Let's go to the next slide. So this is where we look at it as a change to buying power. Now, the reason it's a little bit skewed here because the Condors, the Strangles don't change very much because the buying power pretty much stays the same.
It's set on entry to almost be what the brokerage firm and the industry feels will be the max.
And the Iron Condors, they're capped, but as you get closer to expiration, they use
your profit and your loss is what's showing there. Sure.
So again, the important thing here is that you do something. That's why people let Iron Condors go too long, because if you look at these numbers here, they totally suggest that you should manage your Iron Condors at 21 days.
Yeah.
It totally suggests you should manage your Strangles at 21 days. It's a little less on the buying power side on Strangles. On the Iron Condors, it's both the buying power and mean price. I mean, I don't we made it look a little differently this time, the way we presented the study, because we wanted you to kind of see it visually.
It's really showing you risk here more.
Yeah. It's not. it's not suggesting that you're not going to make money if you hold it or whatever. It just shows you that the daily P&L change per buying power in an iron condor goes up dramatically as you get closer, and the daily P&L change in a strangle goes up. Both buying power and P&L change, the mean P&L change, go up as you get close to expiration, and the swings are greater, more risk, more challenges that you don't really need. I like the visual. Let's go to the next slide. So some of the takeaways: as the days remaining in an option trade tick down, the speed of price changes tends to accelerate. Interestingly, behind the quietude of weekends, I like that word, quietude, the past 5 years have typically saw more action on Friday than the following Monday. In dollar terms, strangles saw slightly larger daily fluctuations than similar constructed iron condors, especially between 45 and 24 days. The buying power efficiency of iron condors, however, made them much more volatile to the same amount of capital devoted to strangles. Whether naked or defined risk, 45 days to 0 day or to 0 DTE. The versatility of options lets you assemble a portfolio that takes exactly the same amount of risk that you want to take. I think it's a good case for strategic investing. It's a good case for managing early, taking the risk off the table, and just moving forward.
Very good, sir. Even the S&P down 13, NASDAQ down 43, Russell down 4. They're all down around the same, with the Dow down 157. Volatility only up by 16 cents now, and bonds up 102. They're about 10 ticks off of their highs. Bitcoin 83,900, up around 1,200 or so. Oil up 14 cents. When I look at the other movers here, net gas down 10 cents, flirting with going under $4. 4.02, right near the lows right now in net gas. Corn, wheat, and soybeans basically unchanged, a little bit to the high side. We'll take a quick 90-second break and come back over all those markets in the opening bell in about 90 seconds. Let's Tasty Live.
Like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I'd started to disrupt my trading career like really early on, probably 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing, and Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse.
When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means? The opening bell is about 6.5 minutes away. Even the S&Ps down 10 handles. NASDAQ down 32. Russell down 4 and Dow down 130. Volatility /VX. Those futures have moved about $300 or so in just a little bit of movement here in the overall market. They're up almost 10 cents, 9 cents. Bonds up 102. Bitcoin up $1,300, and oil up 18 cents to 71.66. Big move in oil yesterday. Really didn't talk about it too much to the upside. Oil flirted with 72 today and last night. Back near its kind of recent highs that we had in February. Ivy rank only 18 in oil, so I wouldn't be looking to sell premium there. Maybe a vertical or something like that, whether it be bullish or bearish, completely up to you. Gold up $11, sound off of its highs by about $15. It's a decent sized move to the downside off its highs, but still, as you can see here, that would be the first downtick that gold's had in some time. Still green on the day.
I have not gotten filled on.
You're not going to get filled now if you didn't get filled earlier when we were looking at it with gold higher.
I know. I'm saying, well, it's down $2. I just don't get filled in there. I mean, I'm still short gold. But
you think it's a conspiracy theory against you?
Conspiracy theory? You mean a conspiracy against me?
Yes.
I do think it's a conspiracy. I think they have my face, account number, everything.
You think they can tell by the size of your order? Is that what it is that they know? Do you put a specific, 67 lot in? We used to have customers like that would
put an emoji on it.
Put an emoji on it? It's a smiley face?
Yes.
A little smiley face, or do you put the eggplant? What do you put on there?
Smiley face.
Smiley face. Got it. Understood.
Yeah.
Let's go to let's take a look at the currency, Sadnov. Anything get you there? I know they're basically unchanged. Euro's basically unchanged, down small. Yen is up, Sadnov, up about what is that? 2/100ths of a penny.
The yen this morning. No, it's 2/100ths of a penny.
Mm-hmm.
It's up 2.7. We call it
200% move, almost 0.5% move.
Yeah, I mean the yen's our biggest winner. The other ones are all basically unchanged. Nothing's happening. Gold's our biggest loser, and everything else looks okay this morning.
Pre-market movers to the upside. Tesla looks like the only one that I see up around $3.50 or $4. Did you see another stock that's bucking the move? That's what I'm looking for.
Tesla is higher. You're right. I think the only stock I see that's higher is Tesla. MSTR is up a little bit.
Nvidia is unchanged. If you want to look at that, but you can see Nvidia, down near its lows, 108 and change.
Yep. And I don't see much else that is really jumping around at all.
And volatility stays bid today with an unchanged market, kind of oscillating around, 25, 30 handles lower, 25, 30 handles higher.
Yeah.
And the call on the day for E-mini S&Ps, just to put that up there for you. Let's take a look. You can see on the right side of the screen here is about 45 handles. So when I say 30 lower, 30 higher, I'm really just kind of mirroring that expected move.
We are going to make a little money this morning in a shot we took yesterday, which was we bought some core weave.
What'd you buy?
Core weave.
Yeah, I had a lot of people saying they were nibbling on there too, and they were really annoyed at you.
They're going to be happy this morning because
that's net gas.
I just rolled it forward. Core weave is trading 38.5, and it was our average price is low 37s.
Mm-hmm.
I didn't buy it.
CRWV.
It's a weird symbol.
It is a weird symbol.
Hard to remember.
38 and change, up around $1 and change or so.
I'm going to sell some if I can at 38, like around 38.60 or something.
Well, it's 38.50 on the offer right now.
I know.
I'm gonna
be.
You bought as low as 36 and change, bought as high as 38 and change.
Yep. Yeah, we're up a little over $1 on it. Little profits. We also bought some NVIDIA yesterday. We're up a couple of bucks on. So I did buy a little bit at the bottom yesterday. We also sold some puts in United Airlines yesterday. We sold some puts in Google. We had a few good
NVIDIA,
trades.
you bought good. You bought at the 105 handle and sold it out at 107.
No, I still got it.
I know you sold out
yeah
2/3 of it at 107 and change. That good $2 scalp. It's 108. Closed at 108 and change. It's 108 and change right now, even with the market a little bit lower.
It traded pre-market this morning, like overnight when the SPUs were up. I saw it like 109.5. I didn't offer any.
It's okay.
I'm gonna put some in right now at let's call it 109-ish.
Mm-hmm.
Yeah, I'll enter it. You know, on Tasty, you can. What did I do wrong here?
What are you looking at?
Cannot. Oh, I put an order in for more shares than I had.
This just in, breaking news, Sosnoff. Vanetta just landed at LaGuardia. Tell Tom the first Concorde flight in 21 years is landing at JFK. Pilot said it's over Portland, Maine, and will be here in 30 minutes.
The first...
She's always working, always working. My co-host, Vanetta Logan, who I've worked with for so many years, and it's been a blessing to my life.
Just text her back, or we're not bailing you out.
Okay.
Not bailing you out.
We're not bailing you out, so don't.
All right, we got 2 minutes to go. What's the call for today?
I just told you. I think they're gonna get the expected move perfectly. It's gonna be 30 handles lower, 30 handles higher. That's it. Day's over.
They've already had 30 handles lower.
I know. The day's over. Take it to the cage, which now means we're gonna have a 100 handle move one way or the other.
Yeah, I mean, if I had to pick a number today, I'd seriously have
45 is the expected move.
I'd seriously have to pick unchanged.
Yeah.
Going into a big,
yeah,
going into a big release tomorrow. We ended up making money yesterday on our.
I know, that's so good.
On our
CRWV has options now, Sosnoff, already, which is pretty good. We'll
2 days.
Yeah, dude. Come on, man. CBOE, everybody getting their act together real good. You got April, May, July, and October. I would be looking at May options. Obviously, there's no bid or ask because they have not traded yet. Obviously, there'll be no.
They used to tell us there was all these reasons why it would take so long. It turns out there was no reason.
It was all bullshit.
Yeah.
Right. It took so long because they didn't do it, is what it comes up to.
Yeah.
Yeah.
Yeah, that's crazy. All right, cool. We got 5 seconds before we open.
Yes, we do. We're open is imminent. There it is, Sosnoff.
I'm ready.
There's the first thing I can see, but I don't hear anything.
It's because
the S&P is down 17, Sosnoff.
Yeah, it's because I didn't get filled.
Let's see what's taking us a little bit lower here. Lilly down 7 or so. Netflix down around 7 or so. Costco, which has giant moves. I know it's almost $1,000 stock, $940, but man, it has what's the expected move? I guess $22 over 3 days. Doesn't seem to reflect it. But anyway, Ivy rank of 47 in Costco, pretty good. Meta down around 3 or 4. Apple down almost 3, $2.80. Goldman Sachs down 3. Amazon down 2 and change. Remember yesterday we talked about NASDAQ stocks never really getting positive. Well, you still got a lot of those stocks a little bit lower right now. On the high side, you got CRWD, CrowdStrike up around 4 and change, Tesla up around 4, MSTR up around 3. With Bitcoin higher, you would expect that. Roblox up 2 and change. No idea why that's higher. PDD. So I don't know if they're coming for your Chinese stocks up 2 and change. BABA up $1.30 and change. That's it.
You know what's funny is you said CRWD, CrowdStrike.
CrowdStrike, yeah.
And CoreWeave is CRWV. They're awfully close to each other.
Yeah, they really are. And right now they both have crappy markets. CRWD markets are almost $2 wide, and CoreWeave are even worse than that at the moment. But they'll tighten up. Hopefully they'll tighten up. I'd like to see it become a stock we trade all the time. It looks like it has good implied volatility. But again, that's going to tighten up as the day goes on. Still got $3-4 wide markets in there. Now I'm talking about CRWV.
I know.
Up 92 cents, 98 cents.
Which one?
CRWV up 97 cents.
Yeah, I'm working orders above the market in there. I'm going to wait it out. I'm going to wait you out.
Okie dokie.
We are very, very non-eventish here on the opening. I'm looking to see if there's anything that's kind of like crazy and
crazy P&L swing one way or the other. Is that really what you're looking at?
That's what I always look at. And
the overall portfolio is green. That's an anomaly. What happened there?
We just sold some NVIDIA, shockingly.
You sold some NVIDIA, 109.03. Which takes you out of your scalp, I believe, correct?
Nope.
Oh, you still got a little bit more? Man.
I do.
So big.
Big. Yeah, it's weird. NVIDIA's strong today.
Yep.
Which is good. So we got a little bit more we'll sell probably. See what happens. And then this is really a mixed bag of tricks.
Yes, it is. Yes, it is.
And some of these stocks look heavy.
They are who we thought they were.
American Airlines looks heavy. United Airlines looks heavy. Some of the airline stocks.
Because I chose to fly Delta on the way home from Europe and
no, you didn't.
Air France or whatever. I think it's partners with.
Yeah, they are.
Delta. Yeah.
To Chicago?
I believe so. Yeah. I hope so. I allowed my secretary to do that. That would be my wife.
Delta doesn't fly to Chicago.
From Paris?
They fly Air France does.
Air France, that's what I said. But I think they partner with Delta.
Right.
Yes.
You can fly Air France from Paris to Chicago. That's
what I said.
You cannot fly Delta. I'm just saying.
Partner. Yes. You know, sometimes you'll go through American Airlines and you'll get an offshoot when you're going to Maine or something like that. But yet it'll still be
Yes,
American.
I understand how it works. I'm just making sure that your wife didn't make you stop in Atlanta.
You're just worried I won't be home for you? Is that what it is? You want me to come home safe and sound and be on the show for you? You don't want to work with those people anymore? Is that what it is?
What I'm trying to do.
They didn't play nice with you, or you didn't play nice with them?
What I'm trying to do is protect your butt and make sure that you don't have to stop in Atlanta.
Oh, I'm not stopping anywhere, son.
God.
I don't play like that. You know that.
Oh, God. I'm not confident in this at all. You're not. You're not a good traveler.
I'm a great traveler. You're not a good traveler, especially when you have to sit and coach.
Do you think... I don't think you're going to do good in Paris.
Really?
Yeah. Have you been there before?
I went to Nice, Cannes, and Saint-Tropez. I may have had an eclair in Paris, but I didn't stay there. Like, I may have flown in and left there. I did not. So I've never been. No, my wife's been a few times, that putana.
Yeah. Yeah, you should. Paris is great, but I just don't think it's for you.
I've never done it. I've never done the Louvre
Don't do the Louvre. You can't handle it.
Oh, I'm going to do it.
You can't handle it.
I want to see that little Mona Lisa.
It is a little Mona Lisa.
I know. I want to see
right
it.
now. There's a lot of things to do in Paris.
I want to do the Eiffel Tower thing, like put my finger on the top. I'm going to do it.
The Eiffel Tower, I think, is good.
I'm going to do it. I've seen the Eiffel Tower in Vegas. I got married there, so. Do I really have to go again? I mean, it's probably the same thing, right?
It's the same thing.
That's what I feel.
The Louvre. Corinne and I did the Louvre in 35 minutes.
And that's a short period of time, I'm assuming?
Yeah, most people do it for like 6 hours.
No way.
Yeah, it's long.
Yeah, I won't be there.
It's huge.
Yeah. Vinny wants to have some culinary experiences. He wants to sniff cologne and buy some niche fragrances.
Oh my God.
He wants to smell like a French hula. I mean, it's his goal.
Better book Libertadine right now. I'm trying to think. I'm trying to think. It's been a while. My favorite story about Paris is we stayed at some hotel, and
yes, it's possible Vanetta's Concorde joke was an April Fool's joke. Yes. Did you really think the Concorde was flying again?
No, but I did read an article about they were testing a supersonic, like some not ready for prime time yet, but they are going to go back to some supersonic flights. I'm not sure between where and where.
Okay.
But supposedly they're going to go back and test the marketplace.
Beautiful.
Oh, so much. I should have sold more NVIDIA. It's down in the day now.
Yeah, even the S&P down 23. NVIDIA is down 83 cents, 107.45 or so. Let's see some of the other movers here to the upside. Costco up 4 and change. PDD up 270 and change. Crowd still up 2.5. Tesla only up $1.80 after being higher to 268. It's trading 260 and change, so it was up about $7 higher than where it is right now. On the downside, what are we looking at? Lilly's still leading the group, down 13. Goldman Sachs down 7 or so. And then you got some of these NASDAQ stocks. Netflix down 5 and change. Coin down 3 and change. Qualcomm down 2. Delta Airlines, as you mentioned, some of the airlines down.
Yeah, the S&Ps
could be those tariff hitting some of these airlines.
I thought the S&Ps would give a little more run for your money.
Volatility back up 43 cents.
Like I said, I thought the S&Ps would give you a little bit more bang for your buck this morning, and they certainly have not.
Be surprised if volatility comes in today, unless you get a.
I took a little bit of a leg to the upside today, just thinking that they might goose them a little bit after yesterday's rally. They rallied them pretty good yesterday. But
I wish you would have told us, so we could have faded you. I mean, this is the type of stuff that people wait for.
Market looks a little heavy.
0-day trade today, Sosnoff, thinking that we're going to stay inside of range here. Volatility upticking a little bit.
You could. SPX.
Yeah, do something with a little bit of defined risk, $20, $30 wide iron condor or something like that. A guy like you, let's put
April 1st. What's the expected move? $44?
Yes, sir.
So let's see, we're at 55.90. So you're going to go to 56. Let's go $50. 56.40. And if you go down, you're going to go to.
You're going to go $20 wide or something like that?
I don't know yet, but let's see. 56.40. That's $50 away. You're going to go 55.40. We'll go 50.
If you go $20 wide, you get around $5.96 on an iron condor.
I'm going to go $10 wide. You get about $3.
Makes sense because it was about $6 for the $20 wide. It's going to be $3.30 is the mid price out. If you're doing 56.40, 50, and the 56.
Well, I'm at 3, and I'm not filled.
You're just doing the wrong strikes then.
Filled 295.
You did the 55.30. Okay, so you went lower.
Yeah.
You went 55.30.20. That's why you got filled at 295. Different strikes than you were talking about.
So the goal for iron condors in the 0 days, based on our research, is 25%. If you sell something for $395, you want to.
$295.
I'm sorry, $295. 25% is basically 75 cents. You want to take this off at, let's say, $225, right? Mm-hmm. So I go to my filled orders.
Create opposite order?
And
when I'm speaking French, I do not throw in the occasional unwarranted R in there like I do for Maria or anything else like that. I speak it fluently and Properly.
You definitely don't speak it fluently or properly.
Just
All
like English.
We got Chris Vecchio waiting in the wings.
We do. Are you excited?
Yes.
I am too. Let's get right to it. Let me explain with Chris. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets is the biggest takeaway. And that's kind of just the overarching principle I follow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Tomas, we are back, my friend. Do you want to give any breaking news before we go to...
She's worse than Tony. She'll be happier than Tony.
Do you want to give any breaking news?
No.
You sure?
Positive.
All right, then we'll go right to the regularly scheduled programming. We got Let Me Explain with Chris Vecchio. How are you, my friend? You were privileged to some inside information there on the Sosnoff lifestyle. So please keep it to yourself right now.
Just the tip. You would be willing to give just the tip of your finger to see Tom fly economy across the world?
I would definitely give the tip of my pinky finger to see, get a picture of Tom doing
Okay, but Tom, he's setting up an exchange rate here, right? So, like, what do we have to do to get a full finger from you, Tony?
He'd have to have a non-reclining seat next to the bathroom. That would be full finger worthy.
I once flew from Chicago to Amsterdam and Amsterdam back to Chicago in the same day in economy.
I believe you not to be a liar, so I say you did it. Was that when you were building Thinkorswim?
No.
Oh, so you were a young kid.
No.
Why would you go for a day? A young kid, yeah, that makes sense.
It was a mistake. Something happened. But
wait a minute. And I'm the guy you teased that goes to Portland, Maine, Portland, Oregon. What difference does it make? I'm the guy, and you went to Amsterdam and back in a day because something happened?
In coach,
something happened? Can you tell us what happened?
No.
It's too embarrassing, isn't it?
No, it's just not appropriate. But I did it.
She said no?
It's just not appropriate, but I did it in one day.
You can't tell us no and then say it's not appropriate. Like,
yeah,
it's more
right. I mean, we live for this.
On a Saturday.
Now I'm even more intrigued.
I did it in one day on a Saturday. I took the same plane back when it turned around.
Not you again, they said. What are you doing here?
Mm-hmm.
All right. Okay. All right. Well, the world will never...
All right, Mr. Vecchio, what do you got?
Well, obviously, we've ended the quarter. We're starting a new month here. I was looking at positioning after the COT report was released, and I couldn't help...
The who report?
But the CFTC COT report, the commitment of traders. It details positioning in the futures market, Tony. And in that report, we see that positioning in VIX futures is at a really interesting level. I'm curious about your guys' take on this. Historically, 98% of the time, any given week you pluck out of the hat, you're going to find that the market has a net short speculative position on in VIX futures. 2 weeks ago, that positioning flipped to net long. That's really rare. We saw that for a few weeks at the end of October 24. Before that, it doesn't happen prior to October 23. The point is, it's usually around market lows before the market explodes to the upside. But I'm curious, do you find that it's an interesting time right now that we'd have traders in the futures market structurally long volatility, because that's not something they should be doing? That seems antithetical to the Tasty way.
I'm a little confused. How are you determining that?
Yeah, because for every buyer there has to be a seller. For every seller there has to be a buyer. So how they?
Sure.
Go ahead.
So for every seller, or rather every buyer of volatility futures among speculators, there would be a seller on the commercial side, right? The bona fide hedgers, if you will. So when you disaggregate the positioning report, we can see people who are simply operating in futures just to make money. They have no economic rationale or reason to be doing so otherwise. They're absorbing the risk, if you will. So the risk takers
aren't I a
in the
speculator?
Market,
would I be considered?
You'd be considered within the bucket if you had enough money, a small speculator, if you will.
You had to say small.
I'm sorry.
Okay, so
the point is that when we look at speculative positioning in the futures market, right, for people that are operating for non-economic reasons, non-hedging reasons, they are now net long volatility, which is something that they are not privy to 99% of the time otherwise.
Yeah, I just how do you determine volatility though? I can
/VX.
So it would just be /VX positions, but you don't know if they have a long equity bias somewhere else and they're thinking about protecting the downside, correct?
But you don't know what the option position is that offsets
or anything
that.
else.
No, here, let me just tell you one thing about the VIX futures, just because I think it's important. I don't think that anybody trades VIX futures that's not hedging an option position.
Like in size, you mean?
If you look at
customers who trade VIX
if you look at the VIX futures contracts, they trade a fraction of what the options trade. They're just a hedge vehicle against the options. So if the offset is in the option side. You're looking at me with those eyes. I'm just.
It's not enough. Do not take your clothes off. Okay. I mean, I know you've gotten that look before, but do not take your clothes off. I'm telling you right now.
I'm going to show you this. /VX has traded 18,000 contracts today. All right. These are just all hedging from whatever is going into the option pit. It's not the lead product. It's the complementary product to hedge the options.
And that's fine. And that's the explanation then, right? Don't read too much into this. It's not something that people should be paying attention to. The nuance doesn't necessarily matter.
Yeah, if you look at the option volume today, they've already traded probably close to 100,000 options in the VIX, and it's the VIX futures are just hedging the VIX option trades. Don't overthink that. Traders now. You could find you might be right that traders are long a little vol here. Some of the high frequency firms. It's entirely possible, but you also have to remember they tend to be long. If you're managing capital for money for like Susquehanna or Citadel or anybody else, you always want to be long vol contracts and short everything else.
What's the incentive there? Can you take that a step further?
Yeah, you can't control. So in the VIX options, you're basically you're the counter to a lot of institutional trades. So you end up with a lot of long premium. You sell it everywhere else. And what it does is it gives you your vol hedge. And so you're right in the sense that VIX traders are usually long, VIX market makers are usually long premium because they're offsetting all their short premium everywhere else. From all the other customer orders, most customers don't trade VIX options. So most of the flow that goes into VIX options is all institutional. So the market makers are always long VIX vol and short vol everywhere else.
You always have to think about what the other side has to do, because remember, they don't want to necessarily have a directional opinion in whatever trade they did. They're trying to capture edge. So it's just like with when we say that the option traders at the CBOE and any other place are the largest stock traders because they're using that as a hedge if no other order comes in, even if it's for a quick period of time against the options that they've traded.
Yeah. So Chris, if you're Citadel, right, you're making markets all over the world on every single equity there is, and you're just taking the other side of every single trade. And most customers are buyers of options. So net on balance, you're going to be short a lot of premium. The easiest way to do that is to buy vol in the VIX, and that's what they do.
But Chris, you had a question because you were saying it was contrary to what Tasty would think. Where were you going with this?
Well, I think it's interesting because when you look at how speculators behave in the futures market, they really embrace the Tasty methodology. For the large part, people are going into VIX futures and selling them. They think that volatility is going to come in. But we're not seeing that right now, right? And that's a change in behavior in what's been a constant data series going back to 2011. You don't necessarily see speculative traders hold a net long position. They're trying to always fade whatever vol spike there is. They're not doing that this time around. So that seems to be like a unique occurrence. It's worth perhaps putting that in context of the current environment that we're in, which of course tomorrow we have this big tariff announcement. I was also looking at some of the seasonality for April because it's the start of the new month. Maybe you guys could help shine a light on this for me. The data for the start of April can be messy depending upon the prior year's returns. In your experience as floor traders, is that first half of April, it can be that it'd be an interesting period of unwind in the market if the preceding year was strong, like people harvesting for taxes?
Tax harvesting sound enough?
I don't see very much tax harvesting. I would say the most challenging part for me, it's always been the most challenging month for the market in the last, X number of years, has been, and for big swings and stuff like that, has always been March. April seems to be much more of market seems to normalize a lot more. I have not witnessed a lot of tax selling. If anything, I would say you probably, on balance, have seen more money flow into IRA accounts and things like that. Based on just kind of the way we see it here at Tasty, we see a lot more money coming in April than going out, generally speaking. So at least over the last, 25 years of running retail brokerage, we've definitely seen April to be one of the busiest months as far as account openings and money flowing in. So that means people are putting money to use. So I would say that March has been, in the last 15 years, been one of the most volatile months as far as reversals and things like that. And this year played out very similar. April, I don't sense the same thing, but I don't know.
Go ahead.
Yeah. I was looking through the data here, and just as a point of like a line in the sand, usually April is a good month for stocks for both the S&P and the NASDAQ. It's been better over the past 20 years than the past 10. But what makes it interesting is that if the preceding year was quite strong, if you look through history going back to 1950, if the prior year produced a 20% gain or more, the first half of April produces a loss of about 0.94% for the S&P 500, and then it all comes back in the second half of the month. The gains are backloaded in the second half of the month. April still ends up positive in those years. But it's an interesting dynamic now because we've had 2 years in a row back to back where we've seen 20% gains. Of course, last April, there was a geopolitical wrapping around why the market may have been declining. Israel and Iran were firing missiles at one another that ultimately culminated in the April 19th market bottom. But I couldn't help but notice this fact, right? April is a good month. There is that quirk, though, in the seasonal data that when the prior year is quite strong, you typically see a drag through the first 2 weeks. And I'm wondering if in your history you've noticed this around tax seasons following very big green years like we had last year.
I don't look at it granular.
Yeah, I don't
get there. I get your play.
Yeah, I get it too. I don't think I can confirm or anything about that.
Can I confirm nor deny that, and I will plead the fifth.
Okay,
I learned that from my dad.
All right. Well, Tom, you and I have been going back and forth the past few weeks because I had the pleasure of sitting in for you, Tony, while you were meeting UFC legend Tito Ortiz last week.
Yes, thank you. And you did an excellent job, by the way. Thank you.
Him and Anderson Silva were like my guys growing up. That's why I took jiu-jitsu.
I wish I was doing the show with you because you could appreciate it. Tom is not manly enough to enjoy that kind of sport. So
I watch
the record show. He didn't have any idea what it was.
I watch a little occasionally, not that much.
Mm-hmm. Yeah, like I said, just he wasn't able to fan out on the guy the way that a real.
I got into it around like UFC 92 and like when you had BJ Penn and those guys.
Yeah,
like,
sure.
Those
BJ,
are my years. Those are my years.
Yeah.
We used to have a woman that worked for us. She was Ukrainian and she dated who was the heavyweight champion?
The Russian guy. He wore a mouthpiece that had fangs.
The guy used to fight the bears in the woods in those videos?
Not Orletsky. It was an A. His first name was an A.
I don't remember his name. I think his last name began with an O.
Yeah. Shoot.
Anyway, she dated this guy. He was a
badass.
He was the heavyweight champion. And
Orlovsky?
Orlovsky. That's it. What was it? Andrei Orlovsky? Was it Andrei? That's that name?
Andrei Orlovsky.
Yeah, that was him. Yep. Yeah. God, I would have loved to have had a drink with him just to share stories. I mean, that would have been great.
Yeah, all the fights.
I'm talking about fighting, Sosnoff. I wasn't in the other place. Okay, I'd never been there. Come on, Sosnoff. What are you thinking about?
I don't know, Tony. I noticed today for the first time there's a sign over your shoulder when you go to the wide view that says no fighting. And I just, I think that's great.
Thank you. Put that up there for you guys.
Works well.
Mm-hmm. Oh?
Did we know where we're going with this anecdote? I have no idea.
I don't know either.
We're at the top of the hour, though. Let's end it there, right?
Yes, correct.
Okay.
Yeah, I don't know where we're. I don't know where we're going. With this
bonds.
market.
Sorry.
Yeah.
May I, if I just quickly, Tom, the past 2 weeks you've been talking about how bonds dip below 116. You wanted to do a little bit of a scoop down there, and we've obviously had a significant rally the past 3 sessions. What's your take on notes and bonds at these levels?
I wouldn't touch them. I mean, we're way past the point of. I mean, at this, they're not interesting to me at all. Like, I'm not interested in getting short bonds here. I don't think. I don't think they're a short unless you're just like scalping them intraday or something. I don't think they're a short at all. And I am, I don't know. I'm just not, I'm definitely not interested in buying them here, and I'm not ready to sell them. I think there are more interesting commodity plays. I mean, I'm really messing around right now.
You've got good volatility to them, 46 and change at the higher end of its range. Actually, a range that it usually falls from on an IV rank standpoint. Not the price, but volatility itself.
Yeah, I mean, I'm much more messing around with gold here than I am with bonds.
If you're getting directional in gold IV rank is also quite elevated at 52, but it's been higher.
I know. We're getting a little bit chopped up in there, but we're definitely more interested in gold. I would say not bonds. If you're talking about commodities right now, there's not that much that I'm interested with. I think gold's the only one. I just did some more gold silver ratios, and I sold some more gold today, but that's about it. I mean, we haven't done much today.
The gold silver ratio, I was told,
it's a new high.
Yeah.
Yep.
I had the date here a moment ago, but I lost it.
I know. Well, we just sold our core weave.
I think about 4 or 5 years.
By the way, we just sold our core weave. It's up to.
You sold what?
We sold our core weave.
Oh, good. Good for you.
It's exploded. It's up 270. It was a good buy yesterday. And then we sold.
Yeah, I sold it up at 88.99.
Yeah, it's good.
Yeah, very nice. Good job out of you.
It's $1 higher now, but sure.
That's what we expect.
There are
What'd you do in Ford?
What?
What'd you do in Ford?
I was just long some stock. I just sold it.
Got it.
Didn't go anywhere. Held it for a couple of days. There are some stocks getting interesting here. Can I bring up a couple of interesting plays? Getting down
can't
to
stop you.
Well, since you're going to be flying a lot, UAL.
And I will not be flying in coach, but you may be. Go ahead.
UAL has basically been cut in half.
UAL was cut in half.
Well, it was up to like 110 or 120, I think. It's 60.
You are correct. 113 and change back
65.
in January. It's 65 right now. Let's look at Love, because my sister's long Love. Oh, good. It's still 32 and a half, although it is off its highs of 35.
Yeah. Well, UAL seems very interesting at current levels here. It's getting down to where I'm not going to say it's cheap. I'm just going to say I like the risk reward here. So I'm getting a little bit long UAL.
Sure. I mean, the lows are around $40. The highs are around $115 at $65. In the middle with the Ivy rank of 87 is great. It does have earnings coming on April 15th, and that's no April Fool's joke.
And if you want a tariff play, which I don't know if you want, but if you want to play something for tomorrow, I kind of like General Motors.
For Liberation Day? General Motors down 35 cents.
And did you hear that beep that ding that just went off? That was
your SPX trade getting filled at 230. Sadnov, good scalpy out of you.
Yeah, we just sold it and just bought it
back. Great idea once again. Man, you're batting 1,000, Bat.
Thank you very much. You don't get paid for ideas, though. You get paid for action. Just remember that. Vecchio, any words of wisdom for tomorrow? What do you think on your...
What do you see in your crystal ball and your futures and your all other crap you got in there?
It's definitely a lot of crap in there right now, Tony. I'll be honest. I mean, I think anyone who tells you what they know what's going to happen, I have a hard time believing that. Half the people I speak to think it's going to be a risk clearing event where we have a North Star and we have a firm direction. We could just operate around it. The other half thinks that it's going to be like that scene in The Big Short when Option 1 CEO Paul D'Antone is insisting that the mortgage market's fine, while Steve Carell's character Mark Baum is berating him in the press conference, and it's going to be an utter disaster. I think the reality of the world right now is that the tails have just become a lot fatter, right? And the probability of a big move on any given day is much larger, and that means you just have to trade small and be nimble. We are we are strong convictions held loosely. I am in the no convictions almost held whatsoever type of camp right now. So playing fast and loose and not getting married to any single idea.
I like it.
Okay, thanks, Chris.
Thank you for your time, Chris. Even the S&P down 22, NASDAQ down 46, Russell down 19, Dow down 340, volatility up 53 cents. We'll be back
Why
in
is the
90
Dow
seconds.
down so weak today?
The Dow and the Russell, the two weakest of the group.
Yeah, but what's big down in the Dow? I'm not seeing it on my screen.
I can do this for you. You know how I do this for you, Sadnov? You have the same capability as I do.
But I like when you do.
I know you just like to piss on my tree. You come right down here until you get to your market. There we go, market indices. You can go right here and look for the Dow Jones Industrial. I have them in order here. I can do it for you from top to bottom, bottom to top. It looks like Goldman Sachs down 10, Johnson & Johnson down 8, and Boeing down 5, which is another tariff place. I don't know if you're looking at that. Boeing 165 and change, Ivy rank is 67.
I don't have any Goldman Sachs, and I don't have any.
IBM down 3 and change. Everything in the Dow is down. You should ask what's up in the Dow, Sadnov. Only Microsoft up 260, and Apple now up 95 cents trying to save the NASDAQ.
Okay. Thank you, sir.
Let's take a quick 90-second break and come back. Good job out of you, Chris. Aren't you glad you get to leave now? I know you are. We'll take a quick 90-second break and come back. We've got more Tasty Live after this. Peace.
Let's get this.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through a scraper. You know, one of those things, a grater.
A grater, cheese grater.
Yeah, cheese grater. And then you put a little butter on the, mix it in with the, when you smash them. It's great.
In with Tony. You mix it in.
This is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with a market measure. Before we do, let's get to the market here, Sadnov. Even the S&P is down 42, trading on their lows. It just made a new low. NASDAQ down 130, the weakest of the group. The Russell and the Dow. Russell down 23, and the Dow down 436, down twice as much on a relative basis versus even the S&Ps and NASDAQ, but they're catching up. Bonds back near their highs, 118.27. Flight to quality, Sadnov, with volatility up 83 cents. That's a 4% move to 21.85, flirting with highs from yesterday. Sadnov, what happened?
It's really interesting. I don't
Apple
know.
now down. It was up before the break.
I know. And I was like 2 minutes ago, I was like, wow, this is, well, we got a little chopped up.
Good cover on your SPX trade you had, which was nice. 0-day trade.
Good cover on my SPX trade. Good sale, I guess, on some stuff, but I didn't get out of enough.
Two-sided action in the market.
I got greedy in NVIDIA this morning.
Mm-hmm.
Sold some at 109 and missed the rest. Sometimes you just gotta take some stuff off.
Yeah. Sadnov, any
truth to what?
Yes, any truth to the rumor that the whole Amsterdam round trip reason was because it was the first and only time that the red light district had turned a customer down and sent you home?
No, I never left the airport. Never left the airport.
Uh-huh.
It happens.
What?
I'll tell you the story someday.
I've heard every story from you. I have never heard this story, and it's not ready for prime time? You can't tell the story?
I cannot tell you.
Really?
I mean, I can tell you, but not on air.
Really?
Yeah.
Will I have to be sworn to secrecy if you do tell me the story? No. Okay.
Yeah, you can't discuss it.
Tell it on the air? I can't tell it on the air? Wow.
Yeah.
Oh, maybe you'll share the story tonight after a couple of beers.
Well, everybody else knows. You're the only person that doesn't. Tell the world. I mean, I already told those guys.
Okay.
Now he's mad.
I am mad. And I will get you on Twitter now. That's it.
Okay. So we have a new show this year. It's called At Work by 11, which means we're going to do a show.
So my Taiwanese sources just told me, and it comes per Barron's. I'll give them the credit for this. Okay. But from my friend Jason.
Yeah.
Monday's reversal higher was the largest intraday reversal since October 2022 bottom, down about 1 5/8% on SPX to up about a third of a percentage point. Largest since October 2022. I find that hard to believe, but I don't.
We were not down 1 5/8.
1.65% would be 1 5/8, isn't that? Even the S&Ps were down about
60, right? It's 1%.
No.
Were they down 100?
I think they were down around 90 and change, I think, at one point.
Were they? I don't remember that down 90 or 100. I thought they were down about 60.
Let's see, even the S&P.
If they were down 90, that's about 1 5/8.
Yeah, I think they were down around 90. The low was 55.33, and the high
was not the low yesterday. 55.33, was it?
Yes, sir.
Oh, okay, then maybe.
Yeah, maybe it was after that. I don't know.
Whatever.
Yeah, I'm looking at ES. I don't know. Maybe I should look at S&P.
Yeah, I mean, it's extremely rare, I guess, obviously, but
SPX low was 54.89, and the high was 56.27. So yeah, because they're quoting SPX here.
Okay.
So that's 100. Yeah, it's right there. Yeah. Mm-hmm.
You know, it's funny. Oh, by the way, what's amazing is that our Guess the Market winner yesterday, if you missed it, Guess the Market winner missed it by 15 cents.
The winner
missed by
got
15
it.
cents.
The person who was the first runner-up, who gets absolutely zero, gets as much as somebody like me.
I think he missed it by 28 cents. But there was 3 people within 40 cents of where we closed, which is 10% lower than where we opened the year. It's absolutely amazing. 3 tasty traders came within 40 cents, not $4, 40 cents. And the winner was 15 cents off.
Unbelievable.
Which was wild. I forgot who won again. I just can't remember the person's name from where.
Beth, who won?
So we could say it on air.
John.
John Sadlov.
From where, Beth?
Let me remember. 1 sec. You can talk.
I know. Okay. Well, anyway, John won. I'll tell you from where. But he was off by 15 cents in a fun little game. All right. Well, when they have a turnaround rally of that magnitude of 1 5/8, it's really rare that they drop right back down. I would think.
I would think so too.
Yeah,
I would think so too.
Especially with bonds up 119 today.
Yeah. Now the lows in SPX were under 55. We're 55.66 in SPX.
Okay. Richmond, Virginia, Tom.
Richmond, Virginia. Oh, that's right. Because I was thinking about some of his winnings to take my daughter out in D.C. right there, but she's married. But take her out. Spend some.
If she's married, why would you want him to take her out?
I mean,
she could do better. Yeah.
I love her husband, Lucas. I just spent the week with him. He's a really, really good kid. But yeah, she could have done a lot better. She could have done a lot better. I mean, I love the kid. I love him. I do.
You too. Stop.
Sadnov, you're going to feel the same way about yours too. You'll see. You'll see. If you don't already, you'll see.
Don't answer that.
I'm not.
Come to me. Come to the dark side. Come. Say the truth. Come on. Come on.
Do you think your dad says that?
Not answering that question. Pleading the
she
fifth.
got a good goy. Her dad probably loves him because he probably does things around the house for him and, work, manual labor, Dookie's not doing.
Yep.
See?
Spot on.
Yeah, I think so. I think so. Yeah. First one was a boy. Yeah. I think.
Namesake.
I think B's got it. I think B's on solid ground.
I've known Dookie.
Lucas worked for the Fed and J.P. Morgan and stuff like that.
Yeah.
She could have done better.
Yeah. I mean,
she had all the equipment
Dookie
to do
since
better.
before she was born. I don't know. He's good.
Well, what do you think about your goy? Does he do stuff for you around the house?
No.
See? Yeah, see? So what are you gonna, why have a goy if you can't have him doing stuff around the house for you?
Pretty worthless.
Yes. There you go.
All things considered, he's pretty worthless.
There you go.
That's on you.
That's on you. It's on you. You didn't give the kid good...
You could train him.
That's right.
Yeah, now that you think about it, he's pretty worthless. I got to ask my daughter what she was thinking.
Yep. See? I knew you'd get to my side. Doesn't take long.
All right. Anyway, so put that slide back up, Beth, for a sec. So yesterday...
Please goes a long way in the world.
Please put that slide back up. At Work by 11, the new show for 2025. There's going to be a lot of shows, actually. Tony and I are doing all these different cities up here: Atlanta, Denver, Chicago, San Francisco, New York City, Los Angeles, Charlotte, Austin, Texas. And we're also doing London and Milan. So we're going to be all over the place. But then Mike, Nick, and Katie, along with Ryan Grace, are going to be out on the road, and so is Dr. Jim. They're going to be doing their own shows, much smaller venues, so a lot more interaction. And we'll be posting their list of where they're going to be in the next couple of days. So Tasty's going back on the road, hitting a lot of cities this year and for live events. But this is the first time Tony and I have been on the road in 5 years together. And I can't tell you when the next time is going to be. So like this.
We ain't getting any younger.
Yeah. So you might want to come to one of these events this year because we're really looking forward, and they're all on Friday morning at 9:00 in the morning, no matter what city we're in. Except for London, that's 6:30 at night. And except for Milan, that's 6:30 at night. So the first one's at Buckhead Theater. It's the only one you can sign up for now in Atlanta. Space is free. It's first come, first serve. And then preference will be given to Tasty Traders, whether you have a funded account or unfunded, preference to Tasty Traders. All right, Mr. Batista, you ready?
I am. Even the S&P is down 50 and volatility up a full point. So enough.
You think that they rallied back today? I don't know.
I do.
You do?
I do. Yeah, I'm going to stick with my original statement. I said they're a little bit lower than what I thought, down around 35.30 and up around 35.30. I'm going with that.
Let's take a look and see what research we got today. And then we got Scott coming in.
Oh, joy.
He's a cleanup hitter. See the catcher on the Cubs hit the cycle last night?
Say again?
Catcher for the Cubs hit for the cycle last night.
Oh, I didn't see that.
Their backup catcher.
Oh, my God, that's awesome. Good for him.
Hit for the cycle.
Home run, single, double, triple?
Yeah.
That's unbelievable.
Backup catcher.
When was the last time somebody's done that? It's got to be a long time.
On the Cubs? A long time.
Probably never on the
Backup
Cubs.
catcher?
Yeah.
Probably never.
Never, right.
Backup catchers are not known for triples.
Yeah, no doubt.
Yeah. Yeah, I don't think he's not young. I don't remember what's his name? Chris something. Anyway. Very
cycles are rare in Major League Baseball and have occurred fewer than 400 times since 1882, the most recent, March 31st.
Yeah.
Carson Kelly of the Chicago Cubs.
He's a backup catcher.
How many catchers have hit for the cycle, Sadnov, of the 400?
Catchers, I would say 10.
14.
Yeah. And backup catchers, 0. Probably.
One of only 20 players have done it two or more times.
2 or more times. I'm going to say Ricky Henderson, Ken Griffey Jr. Those are my 2 guesses. I have no idea.
It doesn't say who they are. Doesn't say who they are. I'm sorry.
Oh, okay. Had to be somebody who's fast. Had to be somebody who can fast and also hit a home run.
Babe Ruth, Lou Gehrig, Ted Williams, Hank Aaron, Willie Mays, and Barry Bonds all failed to do it.
Yeah, that doesn't surprise me.
Doesn't surprise you? The greatest hitters in the
Babe Ruth
to play the game.
Babe Ruth wasn't getting a lot of triples.
Okay, Ted Williams, Lou Gehrig, Hank Aaron, Willie Mays, Barry Bonds. I mean, I would take them versus the field, and I would have been wrong.
Yeah, I mean,
you can admit you made a silly statement.
I think
the S&P down 37. They rallied 10 off of Tom's low.
I think, surprisingly, I never did it either in softball.
Sadlov, I wish I had. I wish there were cell phones that we were capable of taking video.
I ever had a trip.
Back in the day. I mean, that caboose was not moving to third.
I don't think I ever
had without a trot. Okay? You trotted past second and third.
I don't think I ever had a triple. A lot of home runs, no triples.
You were the only person who could stretch a home run into a double, Sosnoff. You were the only person to be able to do that.
Possible. All right, let's do this.
Unbelievable.
Anyway, I thought that was a good statistic. Good. Do you know that was the first game played in that stadium last night? I didn't watch the game because it didn't start.
I didn't know that.
But they're playing in Sacramento. The A's are playing in Sacramento this year. And it's like a minor league stadium. So it's supposed to be really cool to watch the game.
Nice. Well, obviously this guy
This
guy liked it too.
Yeah. Is high implied volatility rank a double-edged sword? Is high implied volatility rank a double-edged sword?
I can see where to answer the question before I see it, I can see where people think it is. Sure. There's a reason why volatility is high. I think that reason is overstated and mean reverting.
Yeah, but when they say is high implied volatility a double-edged sword, what they mean by that is there bad that comes with the good? So in other words, in high implied volatility, are you actually taking more risks that it even offsets the potential rewards?
I don't think so.
What? No?
I don't think so. I mean, if it is,
we generally like to sell implied volatility at higher levels because it has a good chance of contracting, just like Tony just said that, which would provide option sellers with decent profits. However, we've received messages of people experiencing some losses or having problems when trading high implied volatility stocks. Yeah, I did the last 2 days, myself included.
Yep.
This market measure will go over the P&L of different IVR environments, why certain losses may occur, and how to mitigate that risk.
Yep.
I mean, it's easier said than done. To mitigate risk in high implied volatility is way easier said than done. Let's go to the next slide. 16 Delta Strangles, 8 years of research grouped by IVR levels and lots of information. Let's go to the next slide. The graph below shows the direct relationship between implied volatility rank and premium collection. As IVR rises, option premiums increase due to higher market uncertainty, making high IVR environments ideal for maximizing premium intake. No question about it. When IVR goes up, you collect more premium. Period.
Yep.
There's nothing else to it.
Yep.
And you can see the graph there. Let's go next slide. So this graph shows that the win rate tends to remain constant across different IVR levels, despite fluctuations in volatility. We've said this for 11 straight years or 14 straight years. Regardless of the level of volatility, the win rate never changes. Regardless of the IV rank, the win rate never changes. That's why you can get seduced into selling premium in low implied volatility environments because the win rate doesn't go down. And it doesn't get any better in high implied volatility environments. What gets better is the amount of money you can make, not the win rate. Let's go next slide. This graph includes the median return on investment, which better reflects typical returns in skewed data, while the average ROI may be distorted by outliers. Without considering outliers, ROI generally increases as IVR increases. This is a really good way of looking at it. Forget the average. Just look at the median, okay? Because that tells the story. I mean, this is just purely by IVR levels. And when you start to look at low, medium, and high, the median is where even at all levels. But
how do you determine medium volatility? They've done it here into the 21 to 50.
21 to 50. Well, IVR.
I mean, when you
it's
look,
not volatility, it's IVR.
Right. When you look at it, IVR, you get 21 to 50 all the time. I don't want this to be mistaken where volatility is right now at 21 and change /VX. That's not medium implied volatility. That's high implied volatility when you're looking at the futures.
Yep. Let's go to the next slide. The standard deviation of our P&L also increases as IVR increases, which means our portfolio is more volatile. Again, these are the same things, low, medium, and high. 21 to 50, where we spend most of our life in IVR. Just take a look at the standard deviation. That's the amount of volatility of your P&L. How much does your P&L move around?
Yeah, I mean, you would expect with high implied volatility that your P&L
move around more.
Yeah, if everything is priced perfectly, volatility high is going to give you higher swings in your portfolio for sure.
Let's go next slide. So an increase in the standard deviation of a portfolio is a side effect of collecting more premium. This means that in higher IV, the rewards and risks are both higher. However, this does not mean that we shouldn't trade higher IV underlyings. We can mitigate the increased risk by managing our trades early, which is exactly what we do. Let's go to the next slide. So volatility escalates as we near expiration. We talked about this earlier today. This pattern should not surprise anyone familiar with gamma. Exiting our positions at 21 DT before expiration provides a sweet spot. It can reduce volatility and is the best balance between return and P&L volatility. And we graphed it out here for you so you can see it. We're using a lot of new graphs. We built a lot of really cool software for visuals, and you can see the stuff we have here. It's very slick.
Hope you like it.
Yeah, no, I like it a lot. It really shows everything. Let's go to the next slide. So just some of the takeaways. As implied volatility rank increases, we tend to collect more premium. This is why we sell volatility at high IVR. However, nothing is free. So when IVR increases, the standard deviation of our P&L increases. That's the double-edged sword. And that can cause larger losses. But by learning to manage our trades, we can mitigate P&L volatility risk, and take advantage of greater rewards of high volatility.
And this is why we talk about not increasing your position sizing in high implied volatility, but maybe increasing your risk parameters, meaning maybe you go more towards a strangle than you would an iron condor in high implied volatility. Maybe you'd go with less calendar spreads and more iron condors in a high implied volatility than low implied volatility. Change the strategy, not necessarily the size of the trade. Size of the trade should be the last thing that you trade. Should be the last place you look to increase your risk. Let's take a quick 90-second break. Even the S&P down 32, NASDAQ down 80. Leader in the clubhouse at the downside is the Russell down 22 and the Dow down 374. We're going to take a quick 90-second break and come back with my friend and yours, Mr. Scott Sheridan from the Scott Sheridan Studios.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs, Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. The E-mini S&P's rally 10 handles as foretold, but all that means nothing right now, Sadnov, because we have this man. That's right. Was I talking? Tasty Trade World Headquarters, your friend of mine from the aptly named Scott Sheridan Studios, the sponsor of those studios, and my friend, Mr. Scott Sheridan. How are you, kind sir? Rabbit to you.
Excellent, rabbit. And not only is it rabbit, but it's a very special rabbit because it's Mr. Slappy's birthday.
That's right. We wished him a happy birthday early today, but I would like you to do it when he has 3 of his friends on the show.
Yeah, I didn't think you did birthdays.
We don't. Tony does when he has nothing else to talk about.
He's a
little shallow.
We do birthdays.
I only
I'm
do
the Whoopi
birthdays.
Goldberg of Tasty Live
I only
right
do
now.
birthdays if you're 100 years old.
That's it?
Steve's one of the nicest guys we know.
It's rumored.
Rumor? Did you just say rumor?
Rumored.
Unfounded.
Unfounded.
I mean, you got to.
And what Todd did to decorate his desk, see, that's true friendship.
That is a true friendship.
Very nice. And I'm really happy because Steve's like, yeah, whatever. Like, as I said, don't turn into Tom. Yeah, big deal. You're supposed to make it for the next year.
Todd dressing Sosnoff in a cute outfit for his son's wedding goes above and beyond.
By the way, he did send me the link with all the clothes. You're going to look amazing.
He looks.
You are.
My hand to God, we had Sosnoff try him on for us.
And he looked great, didn't he?
He looks great.
Oh, he looked great.
I'm serious.
Didn't even recognize the kid.
You look good. You look good.
Didn't even look the kid. Yeah.
Because you're built like a clothes hanger now. That's why you look so good in it. Because clothes on a rack always look the best. And you're built like that. You got wide shoulders. You got a tight little tuchus. It would fit right in between there. It's perfect size. And you're just the clothes drape on you. You look great, man. You got no chest. You know, you don't have any arms to.
This is how you describe me?
100%. 100%. If you can fit inside here, Sadnov, you're worthy. And you are worthy, my friend. You are worthy. Sponge worthy. You are.
And it's only
I did
Tuesday.
that to my wife.
Oh.
What? I did this to her when we first started dating. I go, got to stay inside here.
Yeah, did she hit you?
No, she was desperate at that time. She was out on the street for like 8 years by then. Oh. So, it fit. She was ready. She was groomed.
I really hope she doesn't. I hope she doesn't watch this show.
Yeah,
she doesn't.
Sometimes she does.
They all wives have turned this show off a long time. I mean, how could they?
You did say 14 years ago when we started this, nothing's off limits. You're going to talk about everything because we want to be real.
I did.
He didn't mean that about you though. You have limits.
No. I've been pretty good about it. We really haven't held much.
Nothing's been.
For the most part, we haven't held much back.
Yeah, embarrassing. I've embarrassed myself a lot.
All right, talk about not holding back. let's talk about dinner because I get excited for you guys.
Oh God!
So let's.
It's
talk
late.
Come
It's
on.
late. It's late. We're gonna have to eat light. We're gonna have to eat light. Sadnov's gonna get just a sausage and pepper appetizer and a chicken parm dinner. You're gonna eat light. You're gonna eat
and
light.
a salad.
And you gotta go. Their salad is so freaking good. Do you like their salad?
Wait,
I love their salad.
Only because I like the dressing.
You don't get a
The
salad.
dressing, I think they add water to the dressing. I think that's the key. I'm serious. Or I asked the guy. He says it's the vinegar. I don't know, man. It's great. Or the oil. I don't know what it is.
What? Don't you get a salad with your entree?
Yeah.
Yes.
I haven't been to EJ's in a long time.
But
yeah, you do, right?
yeah,
It's nothing. It's nothing. It's just like they throw you a bone.
it's just a salad. I mean, it's just a lettuce salad, but it's so good.
Yeah.
It really is
you
so
don't want
good.
to fill up on salad when you have all the other options.
You don't fill up on it. It's something you don't fill
So
up.
are you doing sausage and peppers for the table?
Yeah, that's a bat move. Be honest. I
Yeah,
ordered it
that's
for
the
you
right-
because you never ordered it, and you go, these are the best sausage and peppers I've had. First of all, they cut them up in little chunks for you.
It's really good.
So all your friends can
I
just
like
pick
it, but I like it on my chicken too. So I got to decide what I want to do.
Oh, you do like
Wait,
a chicken Joe with sausage?
Yeah.
What do you
never
got,
ordered
Vaughn?
chicken.
I mean,
Ever.
seriously.
What?
Yeah, ever.
Only there.
You
'cause
never
they do
ordered
the
I like their chicken Joe. It was the first
Their
dish I
chicken
ever had
al
there.
Joe's great.
Yeah.
They do it with the spicy sausage. It's really good.
Yeah, yeah,
Because their peppers
On
are
the
good.
bone,
Whatever
off the
you eat
bone.
there, you have to have peppers.
yeah.
That's the problem
On
with
the,
chicken.
on the bone?
What?
Chicken on the bone or off the bone?
It's on.
Chicken on the bone.
I don't
or off-
order. I never order chicken off the bone. I hate
Come
it.
on, what's our name? The 6? I mean, only the 6 orders like chicken off the bone.
Nobody orders chicken off the bone.
Although you do. Yeah, I could see you
For sure.
ordering it.
Who orders
Sure.
chicken off the bone?
It's disgusting.
Chopped brisket, chicken off the bone, chopped brisket.
Chicken
Dover
off the
sole,
bone
what
you
else
can buy it
going
at
on?
Costco.
Chopped chicken.
Chopped
What do
chicken.
you mean you can buy
Chopped chicken
What do you
should
chopped
be
chicken? You
illegal
buy-
in the U.S.
a chicken breast, a nice sautéed chicken breast?
Should be illegal.
It's dry
butter?
as
Should be illegal.
It's dry
like
as
eating,
Sazonov
it's like eating
jokes.
chalk.
Yeah, I agree with them. Got chicken.
I like it,
Apparently you guys
Scott.
don't know how to. Thanks, Beth. Apparently you guys don't know how to cook.
Nobody
If
ever
you're
made
overcooking the chicken.
Nobody ever made a chicken breast that wasn't like gross.
I agree with you.
Okay.
No matter what,
Now
they're
you got to
gross.
come over for dinner.
Even the S&P down 13. That's foretold.
No matter what,
It's gross.
chicken breast.
It's gross.
What?
It's
Any
gross.
chicken breast off the bone is gross.
Yeah, it is.
Do you eat Chick-fil-A?
Chick-fil-A, yeah.
That's chicken off the bone. It's fried chicken breast off the bone.
Fried.
Fried.
If you fried anything, it tastes
You
good.
fry a piece of dirt, it
Yeah,
tastes
we're not talking about that. We're talking about grilled chicken,
Yeah.
baked chicken. It's got to be on a bone.
Yeah. Do you think I would ever go to?
I mean, I thought I was talking to a fellow,
he's
trader.
Listen. He's one notch above JJ. Like you can't be any worse. Like you got JJ.
Oh, that hurt. Did your family members feel that? Because it hurt me, Scott.
Come on.
Wow.
He's
I
one
don't
notch
think
above
I'm coming
JJ.
on tomorrow. I might not be coming on the rest of the week. I don't need this. This was
What did
not
he do to
part of my
you?
contract.
One notch ahead.
You don't think he's one notch ahead of
this was
JJ?
not
I
part of
100% agree with you, but I would never say it out loud. It's kind of like the Amsterdam story. I would never say it out loud.
No, he's one notch above.
What's the
I don't know. Sadnov flew.
Don't even start.
Wait a minute. Sadnov flew. You can get him back right now. Sadnov flew to and from
True.
Amsterdam in one day. I don't know why. Can you
without
tell
leave.
me?
Oh, I 100% know why.
Yeah, don't say it.
Okay.
Why? He said he
But I'm
can't
not
share it on
saying
the
it.
show. This is what led to our conversation a moment ago.
Cannot
But
share. I would not see. I'm a friend, unlike you two. I'm a friend. I wouldn't do that on air. If it was a story about me, you guys would have spilled it already. Call me after.
No, we
I'll
would.
explain
We
some
protect
rates.
you. We
Yeah.
protect you.
Yeah,
We just
Tony.
saying your food taste is not really,
I don't care about the food taste. It's just one step above a JJ. That's what really hurts. Okay,
that does really
Now,
hurt.
That
does
hurts.
really
Now,
hurt.
Tony, I will share the story with you if you want to know. Call me. Have your people call my people.
Sadnov, you better tell me before I go out here and get the real version, because if you give me a good enough version, I won't go to the true source of the matter.
Oh, I will tell you it 100% the true source. I got it. I will tell you everything you want to know. Sing like a bird.
Okay.
See, that's what happens.
Okay.
People who live in glass
can't
houses.
tell Tony.
right?
Tell
There you
Tony,
go.
tell the world. It's the problem.
Mm-hmm.
Well, Beth, let's just do a three-way because Beth's got to be on because Tony's going to tell Beth anyway because she really wants to know, but she can't ask right now. So, Beth, we can have a three-way call.
Uh-huh.
You got it.
Yeah. See, there we go.
It's a good story.
God, look at you
That's
three.
a long time
They're
ago.
hanging up.
Scott's the best.
That had to
Scott
be
is the best.
Was that like 09?
Something like that.
Oy, I think I know.
Oof.
I'm dying to find out now.
You know the story,
I
but anyway,
remember.
I'll fill you in.
Did you get turned down by a mail order bride? Something like that.
Something. Okay, let's shift topics. Be happy that you couldn't watch the Bulls game last night. Oof, I might be off the Bulls bandwagon already. That was one game on, one game off.
Yeah, but your Cubs were good last night.
Who they play? They're out here somewhere. They play San Diego. They're in California, aren't they?
Yeah, this kid hit for the
Who'd they play?
cycle.
Oh, who did?
Their backup catcher. I said his name. I'm not searching for it again. I can't do it.
Oh, really? Hit for the cycle? That's a big deal. The triple is the hard one.
Yeah, he hit for the cycle.
That's a big one. But you don't know who they played?
They played the A's in Sacramento. They scored 18 runs.
Oh, the A's. 18 runs. How bad are the A's?
They're using that special bat that the Yankees let them use for a day. That's what it was. So after four games,
when did the A's? I thought
after 4
when
games,
the A's
the White
go
Sox
to-
have the best pitching staff in baseball. After 4 games. After 4 games.
What's their record? One and 3.
2-2. They've given up like 2 runs in 4 games. 3 runs.
Wait a minute. I thought the A's were moved to Vegas.
They are. They're 2 years away. It take 2 years to build the stadium, so they're playing in Sacramento for 2 years.
They got thrown out.
What?
They got thrown out of Oakland?
Yeah, their lease was up, so they made a deal. You know, it's going to be sold out for 2 straight years, so it's good.
Nice. Anyway, Bulls were down. I think they were down by 42 at one point. 42 in NBA basketball game.
Yeah, can I say that SGA can play?
He's good.
That kid.
He's good.
That kid is. He is. Really
I didn't know Jokic because it's 1-2. I think SGA right now is the lead for MVP. Jokic, I guess the other night, had a game of 30 assists.
Yeah,
That's
he's
crazy.
good too.
He's good too.
He's all right. He's all right.
Yeah, he's good too. And the crazy thing is the way he plays the game. He looks like you, like moving down the court, can barely move. He just has his vision, unbelievable. That guy's unbelievable. And the fact that
Did you just say he can move down the court like Sosnov? He's a little slower than me.
He's a little slow. He can't jump. He's got the same vertical as you do, about 2 inches.
He's big.
He can play. He's big and he's really, really good. All right. Should we get to some business?
Sure.
That was pretty good.
Thank you.
You're welcome.
Yeah.
Top 15 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Time for you, number 15, UAL, and then 87. Oh, I got to tell you a bad story. I'm talking about UAL. Lost my status on American, but it's a funny story.
What?
Number 1. Yeah, this is hysterical, actually. This is great customer service. Number 1 for you. Number 1, Tesla to 71, NVIDIA 27, Apple at a 65, TQQQ at a 67, Amazon at a 75, Walmart at a 58, Meta at a 62, PLTR at a 72, TLT at a 45, GLD at a 53, MSTR at a 27, Google with an L at a 73, Microsoft at a 70, AMD at a 42, and number 15 for Tom, UAL at an 87. Rounding out the next 10, Netflix at a 93, Costco at a 48, IBIT at a 30, Boeing at a 62, TSLL at a 73, J&J at a 61, AAL at a 97, and MU at a 33. Yeah. So we're coming back from Tokyo. We're in LA. Trying to go into the club, like we're waiting to go through. Like, yeah, you don't have any status. Like, you can't get in. I'm like, what do you mean I don't have status? I'm Emerald and whatever, Executive Platinum. No, you don't. Anyway, have to call them. Long and short of it is, somebody applied for a new number for me and was migrating my miles.
They stole your identity?
So listen,
Just his status they stole, not his identity.
So I'm on the phone with support in the LA airport. I'm on the phone with them for an hour. Guy's like, yeah, you called in
and you asked us to merge your two accounts. I said, no, I did not. They said, oh, your assistant must have done it. And I started laughing. I said, well, that's good, but I don't have an assistant. So no, they didn't either. So I said, it sounds like somebody's trying to steal my miles. So they said, well, nothing's come out. And the merger. Then after about a half hour talking to their IT department, they realized they made a mistake and were just merging my account with something else. And I said, okay, so I have to use the new number. And I said, no, I want my old number back. I've had it for like 40 years. And they said, or 50 years. So they said, well, we'll see what we can do. So I still don't know yet. But they said, I really thought somebody was trying to steal my mouse, which is crazy. So
of all the things to steal from you, the miles would be my last
That's
my last
your
thing.
story.
That's what you came with on April Fool's? Is this an April
That's
Fool's
your April
joke?
Fool's story, and then so they didn't let you into the club, so you couldn't get the blocks of cheese?
No. It's great because we got into the 6 has like gold or something, which I think you get gold just for signing up. Okay. And they said you can go in with her. I'm like, okay, thanks, I appreciate it. So anyway, got to straighten that out.
That's it.
That's all I got. That's it. And by the way, I was thinking about it. It was very insensitive of Tori to order. You're having Lumalnati's today?
Yeah.
Yeah.
You're very insensitive because Steve is keto. Can't eat that. What, are you kidding me?
Oh, that's right. That's right.
poor
That's
bastard.
right. He's in training. In training to get himself one of these. That's what he's trying to do. I forgot. He's still in training. The guy's doing it with the lights on over there. That's my boy Steve.
You think you could throw the guy a bone and give him something he can eat. Some
That's
good
true.
protein.
There's there's salads too. There's like sweet greens, I think.
Yeah,
too.
you can have a salad.
Yeah. I'll take the croutons out for him because it's his birthday. I'll slip those croutons across the room for him. Bing, 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 bing. Hit Todd in the face with one. Ping. Be good.
You could just eat the cheese.
Just eat the cheese. A real friend would walk across the small Cheval, get him a nice burger, bring it back.
It's got bread on it too. What do I got to do? Make him deconstruct a burger? What kind of animal are you? Might as well deconstruct a pizza, like you just said.
I'm no man's ever going to go in there and order a lettuce wrap burger. I'm not doing that.
Did you ever try to eat one of those?
Thank
It's
you.
disgusting.
It's gross.
I agree.
I did want to try though. I really want to go to In-N-Out and try they make it with onions on both sides, and I kind of like grilled onion. You know what I mean? Onions on both sides.
Yeah, but I don't think it's going to be grilled
What do you
onions on
mean,
both sides, Sal, because you can't. Grilled onions aren't going to hold together. Seriously,
That's how they make it.
They don't make it with grilled onions on both sides.
No, they do. It's called the Flying Dutchman.
Yeah.
Yeah.
Beth, can you bring up a picture first? Because the little Italian kid just.
How do you
hold
pick it up with grilled onions?
Yeah, how do you hold it with grilled onions?
They wrap it up and you hold it with grilled onions.
In lettuce.
I've seen pictures of it. It looks great.
I'm going to find a picture right now. They're going to put it up there.
Beth,
okay. They hardly grill the onion here. They keep it all whole. So when I think of a grilled onion,
It's a grilled onion.
It's
Beth,
a charred onion. Put it
picture.
up.
Yes.
It's a charred onion. Go to images, Beth. Go to images for crying out loud. Where is John when you need him? There it is on the right-hand side there. Homemade Flying Dutchman. You can just use that one. Yeah.
That girl's got it right there. That looks good.
Yeah. I mean, do you grill your onions like that? When you make grilled onions, do your grilled onions look like that?
I don't have a griddle like they do. I mean, that I use every time. But
Yes, you do.
I
But
know.
do your grilled onions look? I answered the question. Do your grilled onions look like that when they're grilled? You are such a liar. You are such a liar.
And that's how you do
Give me
it.
the S&Ps unchanged, Sod, as foretold.
40-point rally.
Why would you not want a bun?
I'm not saying I want to try that grilled onion. I like grilled onions.
Why don't you try the
So
grilled
I
onions
can
with the
get
bun?
that with the bun.
Because I don't know that they sell that. I've never seen it. They sell it with.
You don't think they?
Do you want
So
me-
you mean to
do you
tell
want
me?
me to go do-
Is this like
do
the
you
grilled cheese story? No, sorry, we don't make toast. Do you make grilled cheese? Take the cheese off and just give me the toast. I mean, is that what we're doing here? If they have a burger,
Are you talking about Jack Nicholson? And
yes. If they have
chicken salad.
whatever. If they have whatever. If they have a burger and they have grilled onions, you don't think they'll put the bread on top of the grilled onions for you?
I don't know.
We're going to take a quick 90-second
What I do know
break.
is that they have the Flying Dutchman, which I want to try. There they go. That girl.
4x4.
Seriously, what kind of TikTok girl are you?
That's the kind of TikTok.
Have you ever had an In-N-Out burger with grilled onions?
You want me to go? Do you want me to go do some recon for you?
I've only had In-N-Out 2 or 3 times ever.
Okay, the problem with In-N-Out, their fries are not edible.
How can they not be
the
edible?
Burger's fine. They're not edible. They taste like cardboard. they're absolutely, Tony would say, horrible. It's an okay burger. But if you want me to go, I'll do some recon. I'll check it out for you.
Well, I think that, listen, it's your call, but
That would be great, Scott. Thank you.
Thanks. You're welcome, Beth. Thanks. See,
It's not like we really
what's
trust
wrong
your.
with you?
It's not like we really trust your opinion. Is what he wanted to say. I think that's what he was going to say.
Should I just go ask JJ what he thinks of the In-N-Out burger with grilled onions instead of the bun?
We could ask him.
You two are absolutely horrible.
Oh my God.
Are you gonna get Steve a piece of birthday cake at least?
Oh, I can't believe all the pressure that's on me to have to deal with that kid. Okay,
Yeah, because you know what? That's what friends do. Okay.
Right. I go in
would do it
enough.
for
I'm
you.
going
Why
out to
can't
a
you do
late
it for-
dinner. I'm spending the whole night out with him. What else do you want?
I know. A piece of cake with a candle in it. That's what I want.
Fine, we'll get him a piece of cake. I don't think they have cake. They have
Fine.
tiramisu.
They have good cakes.
Whatever.
Cheesecake. What do they have?
They have a bunch of stuff there.
Fine, we'll get him whatever he
Get a
wants.
candle.
Yeah.
Just tell me you need a candle. All right, whatever it is. Just come on, throw the guy a bonus, you'd say.
You want me to get one of those phallic candles for him or something like that, or you just want a regular candle?
I gotta tell you, I don't know what happened to you on vacation. Okay, you've been raw.
Action.
You've come
Action.
back.
ACTION. Action.
Oof, there's Action Bronson. There's Action Bat.
Oy.
You ready to take a quick 90-second break?
Oy.
I think the viewers are.
We got option trades today, every Tuesday and Thursday. Lucky for you, today is a Tuesday. Wherever you get your podcast, you'll get those trades. Did you get the close on AFRM? Did you get the close on Costco? Sad enough, I know you didn't follow those trades, but those were 2 winners. We're going to try to get a couple more. Please don't talk about my Apple trade. That's a loser. We'll be back in 90 seconds with Tasty Live. Thank you, Scott.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
My name is Mike Reckentine, also known as Dr. Data, and I am Managing Director and Head of Research and Development at tastylive. I work a lot within the background of the content that goes out. I've built hundreds of programs that the research team uses. It's nice to have the freedom to work on a lot of different projects and a lot of really cool things. I really like writing for Luckbox as a contributing editor. The utilities are one of my favorite sectors. This kind of goes back to my history as a market maker, floor trader at the Chicago Stock Exchange. It's an area I'm quite confident in. It's an area that I understand how interest rates have an impact on that market. They also are one of the best performing sectors over the past 20-something years. So utilities, boring, but they do have a lot of advantages. Advice to new traders would be the same thing that I learned when I was young, which is just do something very simple. Buy something. It gets you interested in the markets because you got some money in the game.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives.
For the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
everybody, and welcome to the Jenny and Data Show. Hey. Data, thank you so much for joining me. I'm so happy to see your smiling face. We missed you last week every day. I would say, "Where's Data? Where's Data?"
I was in Tucson, Arizona.
Oh, usually you're in Kansas or
Kansas City or someplace else, but yes, I was in Tucson, Arizona.
And what did you think of it?
I thought Tucson's beautiful in its own way, right? Like there's no water. It's the desert, so it's very dry, but it's a nice looking area.
So that's where you took the kids for spring break. And do you have any in-laws there? Or
my in-laws live there. So they live in a place called Green Valley, which is a retirement community, 55 plus community, and but it's nice. It was a nice area, very nice area. It's like basically in the middle of nowhere. There's a bunch of golf courses and there's a swimming pool and stuff, and kids love it. We get to drive around on go-karts.
Oh, nice.
Golf carts.
Yeah, the golf carts.
Golf carts. Yeah, it was nice.
Oh, that's fun. Now, being in the 55 plus community, are they okay with kids coming in over spring break?
Oh yeah. I mean, there's a lot of kids.
Okay. Oh, that's good.
And there's very much times for the kids to swim.
Oh,
they don't disrupt everything.
Okay.
And so 11 to 1 and then 4 to 6.
Oh, that works because we used to visit my in-laws and they were in a building in Hillsborough Beach in Florida, and they didn't the kids weren't that welcome when they would come on vacation over winter break or Christmas break. My mother-in-law would say like, "You could go in the pool, but don't really move around. Like, don't splash."
don't splash anybody. Yes, my son got told to slow down a few times when he was walking kind of fast.
Oh, okay.
But around the pool because it can be very dangerous, and so he got no to here a couple times. But I mean, he's 8 years old, so.
Well, it's fun. That was probably a fun spring break for them.
Oh, yeah.
And he got out of the cold weather. You missed the bad weather. Well,
I didn't miss it at all.
Right. I know. I'm sure. So happy to have you.
Thank you.
Today is our backtesting special, which I get so many requests on. Can you backtest this? Can you backtest that? And I thought, well, we'll save it for today. Cool. But before we get into that, people are all talking about the market, and I just heard you in the hall as I was walking by the kitchen talking to someone about how much the S&P is down.
S&P 500 is down about 9%.
9%.
Right now. 9% from its peak.
Mm-hmm.
I actually wrote down a few things here. So we had a peak of 612, and this was the end of last year. We're at approximately 557, something like that.
Right, yeah.
I'm talking about SPY now.
Sure.
And so we're down about 9%.
9%. It feels.
In the Russell, we're down 18%. And we
interesting.
We still are on lows, aren't we?
Interesting. We can pop in the platform so people can take a look at this. So 18% in the Russell, that's huge. That's huge. And I think there was
13%, the NASDAQ.
I think there was a study while you were gone last week saying, once you hit that 10%, chances of going down another 10% are slim, or you've got, you can expect X amount of days, maybe 3 weeks of a rocky cycle, or historically, like we tend to, things settle down after maybe 3 weeks or so. So with the Russell being down 18%, can you pretty much say that it's highly unlikely that we would go down another 10% from here, and maybe that's a safer place to be selling puts or selling premium?
I mean, it's a completely different index, right? Like if you look at the Russell is small cap stocks, whereas the S&P 500 mega cap stocks. The Russell is going to be, anytime you have some type of economic calamity, you're going to have more of a risk in these smaller caps. Smaller caps get hit worse when rates move around, when the market's having problems. These billion-dollar stocks, which the Russell is 2,000 stocks, most of them are under $1 billion or under $2 billion. Whereas if you look at the S&P 500, those are well over $100 billion stocks within that. So, of course, the Russell is going to have more of a risk, but it's 18% is quite a bit.
It's quite a bit, and so let's say it's trading about close to 200. Another 10% down would take us down to 180.
Yep.
Those 180 puts are $1.37. You're not getting that much, but it's not terrible. It's only using $2,000.
What are you looking at?
I was just looking at the 180 puts in May, thinking that's another 10% down. if already down 18%, what's the chance of being down another 10%? It just seems like.
Yeah, I like that. I like that. I like that that bet. I also like the Nasdaq. Right?
Do you?
So if you
and
look
that's
at
down
the Qs
13%.
Yes, I mean the Nasdaq, of course, it's a very much of a weighted index. So here's the kind of the comparison between the two, right? Is if you look at the Russell, of course, 2,000 stocks. It's got a lot of stocks that are roughly about the same size. You don't really have one or two that make up a huge percentage. Most of them are just making up less than a fraction of a percent. Whereas you look at the Nasdaq, and the Nasdaq, of course, is heavily weighted in NVIDIA and Microsoft, and some of these stocks have gotten hit really, really bad.
Right.
So it's, there's that risk associated when you're trading the Nasdaq that you're not having that sort of risk within the Russell, but larger company stocks do tend to weather storms a little bit better than small caps.
Okay.
Yeah, I like both of them actually.
Now, has your trading changed? Because I don't know how everyone's doing, but it's been a little painful. Liz and I have taken some pain for sure. Has your trading style changed? Are you looking at anything differently? Are you going into the market a little more cautious now, or what are you?
Well, I think it's less individual names for me right now.
Okay.
Seeing how bad some of these stocks have gotten hit, and this is something that we've done with the research is you just tend to stick with the big ETFs. So if you're worried about risk, you stick with some of the bigger names.
Okay.
Some bigger sectors. Consumer staples, has done pretty well. Emerging markets have done actually pretty well here recently. One of the first times ever. You just stick with the bigger name ETFs.
And now, Tom and Tony had this question this morning. Someone asked, in this market, the way we've been moving, is it okay, or are people doing more defined risk, or because of the way the market's moving? And Tom and Tony kind of said, well, with the heightened implied volatility, we're actually doing more undefined risk, and in a low implied volatility, we do more defined risk. Although I find myself, if I'm selling puts in something, especially these individual, bigger tech stocks, I'm tending to define my risk, even if I'm making the spread very wide, just in case we continue this movement down.
I tend not to do too many defined risk trades. But so I can understand why. Let's say, for example, you're doing
look at Tesla or something.
Okay, yeah. No, that's an individual name.
Well, that's what I mean. With the individual products.
Individual names, I do tend to do.
So I have been, even if, let's say I'm going to May, and in Tesla, I'll sell the 30 Delta.
Too is it is a close to $300 stock, right? And that does require quite a bit of capital in order to do it. Let's say you're trying to sell it to. Let's say just the 200 put.
Okay.
You can still get money for that, even it's 45 days out.
Right. Yeah. Look, that's $5. It's $5.
Gosh, that's a lot.
And it's $4,000 in buying power, but
it's not that bad considering it's a close to $500 credit received.
Right.
It's ridiculous.
And if
the stock's up 5% today.
If you make it $30 wide, then you're collecting $300 or $280 instead of $480. You're giving up $2, but. I don't. It's tricky, and maybe at these levels. You know how I was talking to you before you left about going way out in time and selling those December puts because you could go down so far. They didn't take too much pain on the first fall. The first drop, it's interesting because the market started falling, and I started selling those December puts because you can go so far down.
That's right.
Then when we continued to fall and premium was just really high everywhere, I took those off for small losses. They weren't that bad. I took them off for maybe $200 loss here or there, and then switched now to May with this heightened implied volatility. But I was surprised that the vol there didn't blow up as much as I was afraid it could have.
No, even if you look at the VIX, if you pull up the VIX right now, and you look at just the options here on the VIX, you can see that the further you go out, the volatility is less. And that's just the representation of the curve, right near the forward curve on these.
So if I go way out,
be moving a little bit less.
If I go way out to December and look for where the at the monies are the same, yeah, you're getting. I mean, it's right around. It's right around here, but we never got a huge explosion in the VIX. Even with this down move, and you said S&P's down 9%, Russell's down 18%, NASDAQ down 13%. The VIX never got into the 30 handle, never. So back in the day, we would have, and you could maybe talk about this with the research team and see if there's anything they want to do, but back in the day where we would get those down moves.
Close to 25.
And we'd get those huge spikes in the VIX. Like we've seen huge spikes in the VIX up to 40, 50. We've seen that happen. And we've had such a down move in a short period of time, and we have not had that happen. And my thought is this because we have those zero DTEs and people are hedging their positions with zero DTEs instead of longer dated puts and SPY and Qs.
That's a good thought.
That's my thinking of why we haven't had a bigger move in VIX.
There's a lot of different ways of managing your risk now.
Right.
Right? As opposed to just a few. So the VIX is, what they're doing though is they're taking everything from, well, the VIX is not going to take into consideration zero DTE.
No, right. So
They're going out from 23 days all the way to 37 days.
Yeah, so anything short term, they're not taking those into account.
But it's kind of like the Fed. So the Fed, they manage the overnight, T-bills or the overnight money, but they're not. They don't have. They influence though by the overnights, the longer terms, right?
Mm-hmm.
Longer maturities. I guess it's the same thing with the zero DTEs, right? Even though it's not in the calculation of the VIX, the zero DTEs are going to influence the longer term,
right.
options out there, right? So even though it's not in the formula, it will be impacting, just like the Fed impacts the longer term maturities out there.
Yeah, because you go back in time, and I don't know if you could see. Well, you've got your platform pulled up, and you don't even have to go to this. But I go back to previous market moves, and we had in 2022, VIX up to 38, VIX up to all in the 30s, and during COVID certainly much higher, and then stayed in the 30s. So I thought odd that with the down move we've had, we've never seen it even touch that 30 handle.
Yep.
Things are just seemed a little too orderly.
Yeah, things are quite orderly right now, but that's a good thing, right?
Sure,
that's a good thing.
I guess, although we've still been feeling quite a bit of pain.
Of course. Well, I mean, that's going to happen when the market declines, like it has. A 10% move tends to create some fear within the market.
All right, so let's get into backtesting.
Sure, let's do it.
Can we pull up? Oh, here, John's going to your screen now.
Okay.
Some viewers want to backtest, and they're they feel like they don't know how or where to start or what to do. So here, the screen you're on, how did you get to that?
Okay, so I am on the web version, my.tastytrade.com.
Oh, you need the my?
Yeah, my.tastytrade.com.
Really?
That's the web version.
I guess that's why I can never find it.
Well,
I'm not joking.
Yeah,
seriously.
You can use the other version, the desktop version, and I'll oftentimes use that. But here it's just a little bit easier for me to use
my.tastytrade.com.
Yes.
How would people know that?
Jenny, how long have you been working here?
How long has it been my.tastytrade.com?
Yeah, good point. Well, maybe that's why.
And honestly, so if I do the backtesting, I just click on the.
Yes, it looks basically the same whether or not you're using the web version or the web version is what it was originally integrated within, and so the desktop version, it will work within the desktop version, and it looks exactly the same, but it's going to have a little bit different on the left. You're going to have a little bit different of a menu system here, but you can just look down and you can see this backtesting component here.
I'm going to say that I'm not the only one who didn't know that. So my.tastytrade.com. If you want a little more, a little bit better of a version.
No, it's not better. It's just. It just works a little bit better for me in here in my browser. It will.
Okay.
On this computer.
Okay, so
what you're going to see, the first thing that you do when you get up, you'll probably will have some type of if you've never gone to it before, welcome, and you'll see this a box that will pop up and it will say some legal language around it. A backtest is just that. It's a backtest, a historical representation of the market. Nothing is perfect. and just making sure that you click through and you understand things. Then you go over here and you click your risk, or you click your symbol that you want to take a look at. And we have roughly
futures
100.
on here?
No, we do not have futures.
We don't have futures.
We do not have futures. Yep.
Okay.
I have some videos here that we've created, and you can just click on the video and it will kind of walk you through the step. And on this version here that I'm using, it's actually, you're using the desktop version on this. So you can see how we kind of walk through as far as opening it up, clicking on the backtesting here. So you can see it's slightly different here on this particular version. So here I'm going to close it. And then we have 3 videos: setting up your first backtest, modifying your entry and exit conditions, and then evaluating your results. So if you want to go back and you want to take a look at those, you can. But let's
Okay.
let's backtest something.
So I've had requests to backtest. We have this viewer who, he came on, he was a rising star.
Yep.
And he was doing very short-term CL strangles, like on, Monday he'd sell Wednesday, and then close Wednesday, and then sell Friday, and then close Friday and sell Monday. And he was doing it in CL, and he did it for a year, was a successful trade over his year of doing it. And I had gotten requests to take a look at gold. How would that work in gold short term? So I know we don't have GC, but we have GLD.
We do have GLD in here.
And
let's see.
So basically, right now I'm looking at, that's my question with this backtesting. If like today I want to look at selling the 3-day 20 delta strangle.
Okay, so there's a few
every
things.
day, you're just so many days out. It's short term. They're short term.
Of course, yeah. So this backtesting here does not use intraday data. It uses end of day data.
Okay.
Which is roughly the time, we're talking about central times here, 2:45.
Okay.
So it's 15 minutes before the markets close.
Okay.
And the 2:45 period is a really good time to look at the market as far as backtesting, because the market is very liquid at that time, and we're looking at the midpoints, right?
Okay.
Sometimes on the close, you can get kind of funky closes, or you can get a last sale
that makes sense.
maybe happened.
Sure.
Especially if you're looking at like strikes that are really far out of the money. Sometimes your last sale hadn't happened for days before.
So this is 2:45.
The midpoint between the bid and offer.
Right, like 15 minutes before the close.
15 minutes before the close.
Okay, that makes sense.
So let's test something here. Let's look at back 12 months. Okay. Well, no, let's do like 2 years.
Okay.
We're going to look at 2 years, and then what do you want to do?
Sell the 20 delta strangle.
You want to do a strangle here? Okay.
Sure.
So let's say I'm going to click here. Choose
The
a
wings
strategy.
are so cheap, and Jacob does studies for us every Wednesday. We bring them into the SPX pit, and SPX is a 0-day study. And he always says, if you're buying the wings, adjust, reduce your P&L by X amount. And so here I'm looking at GLD. If I'm selling a 20 delta strangle, you can
20
go,
deltas, okay. So 20 delta on the strike, on the put, and 20 deltas on the call. And
Okay,
here,
so sell put, 20 delta,
you can-
sell call, 20
you can
delta.
do a buy or you can do a sell, right? And we usually short strangles, right? The expiration. So what are we going to do?
So right now I'm looking at 3 days out, but if it
Okay.
were a 245, when
So
we have
what-
these weeklies, we have Monday, Wednesday, Friday. So I don't know if we should test these shorter term or test.
Let's just do it. Let's do it 3 days.
Okay.
Right. So what we do here is, now there's different conditions that we can do. Okay. And let me explain what these are. So when you're choosing, you want to set what conditions you're putting on this trade. Okay. So one thing that oftentimes people like to do is, okay, let's go. I'm going to go back to the platform here real quick, and I'm going to type in GLD, and I'm going to kind of explain it here. So if we were to do it today, we're looking at the April 4th, okay? But tomorrow, April 2nd, we'll have the April 4th, which will be 2 days away, and then we'll have the April 7th, which will be 5 days away.
Right.
Okay? So does a trade occur? Well, yes, it would. It would take the one that's closest, which will be the 2 days away.
We take the 2 days. So I wonder
This
if we
tomorrow.
should make our parameter 5 days so we at least get,
Here's the thing.
We can try it both
We can
ways, right?
say we only want to match it when it's exactly at 3 days away.
Okay.
Okay, so we can say exact match 3 days away.
So
Okay,
where's
so it's only
exact
going to do it, see, exact match 3 days away.
Because I don't know if we'd want to do it just 1 day away or two, right?
Yeah,
You might
yeah.
not get enough.
But let's say you want to just be precise. Now, if you want as many observations as possible, right? you would just say every day, right? So every day you just find the one that's closest to 3 days away.
Okay.
Here we're saying, no,
Oh, and we can
I
run this
like
back
precision. I want it 3 days away, dang it.
But we could run this test both ways and see what, what
Yeah.
has better results.
And then we can also say here, now this is one of the most widely requested features, which people said, I want to see, I want to limit it to the number of trades.
Oh,
right?
that's good.
So
because
here
we
you
don't
say-
want it on every 10 minutes.
Well, every day, right? Like you wouldn't want to include, like people have limited amounts of capital.
Sure.
Right? So with 3 days for expiration, you would only have a total of 3 on, right? You'd
So
put
that's
on
not
one today, tomorrow, the next day. And you maybe at any particular time you'd have 3. But here, let's just say I only want to put on 1 trade per day, 1 trade on at any given time. So I'm not going to incorporate another trade until this
comes off.
one has
Got
come
it.
off. Okay.
Got it.
So here, and then don't enter a new trade. Okay, so I'm going to have 1, don't enter a new trade. And then you can also say VIX. Okay, so we want to only
Oh, I
include it when
see.
the VIX is at a certain time or below. I don't want to do that.
For gold, let's not worry about that.
And let's not do any type of profit taking. Let's just keep it how it is.
Or do you want to say maybe we should take?
Let's just see how it works without.
Okay. And then that's how we'll adjust. Like then we'll see, is it better if we manage at 50%?
So here we go. Okay, so what is the return on capital here? And what you can see right here is, well, okay, this strategy didn't work as well considering, gold at the end of the period went from 180 to 280 over the past 3 years, right? Or close to 300. So that's kind of hard to outperform just a buy and hold strategy. A return on used capital was 56% if you just had that buy and hold. If you just bought $5,600 worth of gold and then you held it all that time, that outperformed just a simple strategy of just selling basically a 20 delta strangle.
Sure, but here we're not looking at. I'm not trying to compare it to buying and holding gold. And I know we all know it's had a crazy run. We all
It's
know
had a crazy one, yeah.
run. And you see how the profits were so much better the year before, where the gold wasn't having this crazy run. But it's just since the viewer came on and said he's doing this with the weeklies, like 3 days out, 3 days out, 3 days out with CL and having success with that. Someone asked, how would this perform in gold?
Well, what's nice about this, right, is look at how it's got a 77% profit rate, and you can go to details and you can see this, 76% profit rate. The largest individual profit was $160. Very few losses on this particular trade here. And then this is kind of interesting. The premium capture rate was 20%. So if you put on something, here's kind of a good way to think about this, right? You put on something for $100, you tend to capture at the very end, over on average, about 20%.
About 20%. So
Right.
right now, the 3-day gold strangle
So you keep about $20
is
for that.
$1.44, so $144.
Yeah. So that'd be about
like $30
$27. Yeah.
Yeah. That's not managing at all. Now, what if we? So overall, it's not bad.
Yeah, that's not bad.
People want.
We can make modifications. So let's modify it.
Okay, so let's try to maybe always have one on.
Okay.
And not have the exact 3-day.
Okay.
But then
let's do it every
we'll get
day.
in a situation where we're collecting too little, probably. If you're only like 1 day out or 2 days out, you're probably collecting too little.
Well, it could be. It could be. But let's just kind of see, and let's also take a profit at considering that you're holding them for. So here's the dilemma, right? Is like when you're putting on something that is so small, such as with 3 days away, days till expiration away, and you tend to keep around 20% on average is what it shows. The profit at the very end. But with strangles, you tend to, especially for something because you got your gamma risk that explodes, but your theta decay starts to happen really quickly, closer to expiration. You tend to have to hold it on to very close to expiration. Let's just keep it at 50%, and we can make modifications
We can
to see how well it works.
And then
right?
we could maybe adjust the day to 5 days. So then you're going to have those 5 days on,
Okay.
3 days on. They'll still be shorter term.
Before we change that, let's just see how
Run
it
this one and
changes.
see how it does.
Right? These are just things that I kind of like to look at. So actually, that didn't work
The
as well.
50, managing
When you
at 50%,
managed it,
or having
that
them on
quick.
constantly because maybe you weren't collecting enough to.
Could be.
So
Could be.
take off the manage at 50% and see what the everyday did.
So okay.
So
We'll
just
do
take
that.
that off and leave everyday and see if.
Did you know that we've had 1 million backtests run on this thing?
Oh, fun!
Mhm.
Good for you.
Yep.
I mean, you worked hard building this system. Good job. People love it.
Yeah. Julian and Tim and we worked a lot of time on this. So
Okay. So not as good when you're having.
yeah, not as good. Not as good, which is generally against kind of some of the stuff that we say. You know, you do like to manage your trades. Your profit rate is about the same, percentage of time that you're making money on it, but your average profit was less on this.
Mm-hmm.
So, you can try some different scenarios here. So let's say you put on, maybe 3 at a time. Let's put on 5. Let's do every
But I think we're seeing the
until you
3-day
get
mark
5.
worked. The 3-day worked.
3-day
How
worked
about
looked
just
pretty good.
3 days, not every day, just 3 days?
Okay.
So exact DTE and then manage at 50%.
Exact, okay. And then we're going to manage at
50%.
50%.
So we leave everything else the same. So just similar
Okay.
to the first one and managing instead of not managing.
Yeah. Okay. Well, that looks like it did pretty well. We had about a 15% return on capital. What a lot of people want is they don't necessarily want the most amount of money, right? Well, of course, everybody wants the most amount of money, but they don't necessarily care about the return on capital. They just want consistency, right?
And with
it
these-
depends on where you are at life,
With
right?
these shorter term options, people want to get in and out, in and out, in and out. I feel like a lot of trading's changing with these short term
It
options.
is, yeah.
So people like the
Over 50% of volumes are in this short day.
yes. Oh my gosh. The people like the getting in and out in a day or in a couple days.
It's attractive, isn't it?
What's not attractive right now is we've got all this action in the market. There's so much going on, and
Yeah.
let me put a trade on in May, and I have to sit on it for 45 days, especially if the market. And I know those are our mechanics, and that's the right thing to do. But I think a lot of people are trading much more of these shorter term trades because
Mhm.
they like the instant gratification.
That's right. That's right. There's a lot of things that we can do to manage risk, and the zero DT options and the weekly options provide us a lot of capabilities for doing that.
And so it's $145 or 100 and something. What was our return in gold? What was the return? 15% or something?
Yeah, it was like 15%, 60%.
And GLD is a much smaller product than GC. So
Yeah.
the viewer had asked, let's try this in GC. It would be similar results, just
It's
on a
going to be
larger
similar
scale.
results than this. I mean, GC, of course, that has some different. One, it's much bigger. It's a
Right.
huge product. And I forgot what it is offhand, but it's about $1,000 a point, I believe.
Oh,
And I'd have to look it up, but it's a very large product.
it's a very large product. Like if I go to the 3-day and sell 20 delta, 20 delta, 20 delta, 20 delta, I'm collecting $1,600 and it's using $15,000 in buying power.
Yeah, this is going to be what's the size of the spec of this? 100 troy ounces. Oof. Okay, that's a big product. Yes, so $100 per ounce. Yeah.
It's big. It's big, but
Or $100 per point. Your
and
minimum
I think
price fluctuation.
if you're trading this, you have to well, not everyone, but I would define my risk. And just like in CL, our viewer was selling the strangles undefined, but Liz and I were putting those on and defining our risk.
Mhm.
Because when the one thing I like about the short-term options is that it's very inexpensive to define your risk.
Yes, these options are very widely traded too. Yeah, see, these are big. These are very big products. Yeah, that's a $300,000 product.
Mhm.
If you think of 100 times 3,000, you add the 2 zeros to it, you move that over. That's $315,000 product.
But they're just something. They're another trade to
Which is too
have-
big for many people, but yet the amount of money that it takes in order to trade this product is not a tremendous amount, considering it's a $16,000 to basically do a. Let's look at a strangle here. Yeah, it's about $15,000 to do a strangle.
And I wouldn't be selling naked options in gold because it
No.
has had such a move. But this was a request from a reviewer wanted us to backtest this.
Yep.
Using these short-term options. Okay, let's move on to another.
You know, the thing is that like just don't be afraid to just click around, and you know you're not going to send a trade by accident when you're doing the back testing. You're just examining how well something works. I think it's one of the best ways that you can kind of onboard yourself and see how well things work. It's like paper trading, but yet it's instantaneous gratification.
Right, you see the results.
Right,
So
which is why 1 million backtests have been run. Right.
I like it. I like it. Now we have a viewer who has been. Well, let me get to another.
Okay.
People wanted to test the spiked lizard, and I don't know if you're familiar with the spiked lizard.
You got to remember what it is.
But I can give you the strikes.
Okay.
And I don't know. Should we test SPY? Should we just use SPY?
Sure.
For it.
Okay.
So in May, the big lizard it's a little bit tricky. Because sometimes it's usually, we put it on credit based, but when we're looking at this, we need to use delta.
You need to do it in deltas.
So
now we are going to be adding some parameters so that you can do it based on credit, and you could do something like your spiked lizard.
Okay.
So a spiked lizard is basically like isn't it where you're selling two close to the money and then further away? You're buying one?
So it's basically like you buy a very big, wide at-the-money butterfly, and then you pay for that butterfly by selling two puts.
Okay.
So if I put on a big, wide butterfly right now in SPY, I will. Let's say here you can buy. How many legs can we put on? How many legs can we do?
Let's pull up your platform then. For this
Okay.
one.
Oh, okay, yeah. So I'll walk people through the spike lizard. People like this trade.
Okay.
Here, a typical big lizard is selling the at-the-money straddle and buying a call as far as you can and having no upside risk. So I'm just going to keep moving my call until that green bar stops. Okay. So here I have the 560 straddle I'm selling, and I bought that 585 call. I'll show you what the big lizard looks on the analysis page. This is just the big lizard, and then the spike lizard is changing it slightly. Let me make sure.
You're buying that call.
So it's just selling the straddle, and then you buy a call, so you have no risk to the upside. This is a big lizard. So you have a lot of decay. Look at that theta, $21
Okay, so what
a day
is
in
the?
beta.
Show me what that long call is. Which one is that?
So
What deltas is that?
So I'm going to do something here. In order to get all the legs on that we need, I'm going to keep this same trade, but I'm going to shift it a little bit. I'm going to take this long call. I'm going to move the long call to the puts, and I'm going to move this to the puts as well. So it's basically a ratio spread here. You see, but it's a 1/2 ratio spread. But I have, if I go to the analysis page, it's the same, it should be the same trade. There we go. Hold on once. It's like a ratio spread instead of
Okay, so you're doing two. So this is you're butterflying this thing. So you're doing two of the 560s.
Right, sell
puts.
two 560 puts.
And then you're buying.
So that's a 50 delta. Just say sell two 50 delta puts.
Okay. And then you're buying one.
And then let me go back to the table page. You buy one, and this is, where is it? Where did it go?
I think you can just move that little triangle.
Oh, by 180 delta. But so with vol right now so high, it's getting me further. I would say typically, let's say 75. It's further now because vol is higher, but let's say typically 75. So I'm going to move this. I'm going to shift this. So buy 175 delta put.
Okay.
Sell 250 delta puts.
Okay, let's do that.
And so we have, this is $20 wide. that's just the big lizard, but we're gonna change this. And I'm turning it into the spiked lizard. So basically, then I turn this into a butterfly. So it's 75 delta, 50 delta, and to complete the butterfly, I'm buying a 30 delta. So there's the wide butterfly. 75 delta put, buying 175 delta put, selling 2 50 delta puts, buying 1 30 delta put. Okay. Do you have that in so far?
Yep.
And there's one more leg. Can we add one more leg? Of
course.
Okay, so then the next leg.
No, actually, you already have 4, right?
No, just 3. Just 3.
Oh,
Let's
okay.
see. Here, pop in your back testing. Let's take a look.
Okay, here we go.
We'll go back and forth. So sell
You're selling 2 of
50
these
deltas,
puts.
Yes.
Yep.
Buying 175 delta put, buying 130 delta put. So that's a butterfly.
Yeah.
And then we're going to add one more thing to it, one more leg to it. This is the big lizard. That's the
Oh, that's the big lizard.
Yeah. So we're going to add one more. We're adding one more leg to this.
No, you can't because this is only
Oh yeah, it let me.
maximum. I don't think it will let you do
Maximum
it.
4. That's all I need is 4.
Yeah, but you got this is actually counting it as 2. It's counting these because you got the quantity here.
Oh, so it
It's having
counts
a hard
it
time
as
with
2.
that one. Mm-hmm.
So I couldn't add another one.
No, not right now.
But when you have 4 things,
We can
you
make
have 4
modifications to it, and we can
But you
add
have a-
that. Well, it's counting. It's counting these as 2 separate ones. So it's 1, 2.
But can you
3,
delete
4,
that
5.
bottom? Because now it has. So now if you hit add another leg, and just can you change that?
Oh, we can try.
So that bottom one, then sell, put, and change that 30 delta to basically what we're trying to do is finance the butterfly.
Okay.
So I'm
What is
trying to
that right now?
finance the butterfly. So I would have to sell, let's see, like 2 10 delta puts.
2 10 delta puts.
Yes.
Oops.
So sell 2 10 delta puts. Okay, so here's the spiked lizard. So you're basically
okay.
financing that butterfly
See.
with 2 10 delta puts. Now let's run it.
Okay.
Oh, but we only want to have it on
Do I have all the legs here correctly that you're looking at here?
sell 2 50 delta puts, buy 1 75 delta put, buy 1 30 delta put, and sell 2 10 delta. Let's see, yeah, that's right.
See if this works. A big loss here.
What was that?
What was this?
8/15, August 15th, when the market just dropped, but then.
Yeah, that was what was that instance?
Or was it like
Well, was that when we were having the problems with the currency issue?
Let me look at what happened on August 15th.
Well, here we can look, and we can see, this trade here. We had a big loss here on this particular day. The max drawdown was 10% on this.
Just on that one day.
Yeah. Well, the profit rate was quite good.
So here's the spike lizard.
Average
We have some
profit,
viewers who
80
say
$80.
they do this trade all the time.
Okay. Return on used capital, 7%. It looks like it's a pretty good looking strategy here historically. Here's one thing that I do like to look at pretty often is you can go here and you can look at your logs. And if you're a nerd and you want to kind of nerd out, geek out with this stuff, you can go to these. You can go to the log and you can see all the trades that happen. And we do take into consideration the fees.
Oh, okay, good.
Because the fees on
That's good
something
to
like
know.
this is,
So
fees
when
are going to
you
be
run
kind of.
this, it takes into account the fees.
Yeah.
So you don't have to run this and then add the fees on
No.
after the fact.
No. We're doing it as best as we can. We are
Okay.
figuring that out, and we believe we're pretty much on point when it comes to the fees. You can look at the individual order, right? So on this particular day, okay, this is kind of a good example right here. On this particular day, is this about what you'd expect, right? So you put it on here, and you did it 45 days till expiration. You did it for about $1.32 debit.
See, no, when we
No.
set it up, we put it on for even. We try to put it on for a zero,
Yeah.
like for close to zero. And you can see you've got a mix here, right?
Yeah, you
Debit,
got a mix.
credit,
You got some
debit,
credits,
credit,
yeah.
debit. And we try to put it on for nothing, and it depends on the vol,
Yeah,
right?
that's the whole thing, right?
And so that, but you're getting enough of
Lately.
the mix here where you have debit and credit.
Doing
It's,
$1, yeah. And here you're not doing it for much.
so because we're in this high vol situation right now, it's maybe my strikes today are slightly different than what they would typically be.
So here, just as an example, and this is one of the reasons why I like the orders tab, because it gives you like a real life explanation of what's going on here, right? So for this one right here, on this particular day, you're doing it at 411 on 4/4/2023. You're selling 2 of the 411 puts. You're buying one of the 426 puts. You're buying 1 of the 397 puts, and then you're selling 2 of the 367 puts.
Mm-hmm. And so
that one's much further right. And then here you can look at the transactions here. Okay, you're selling, you're buying, so, and this is all on the same day here, right there. And then it looks like one day later, then you're closing that trade out. No, you're putting another one on here. You're selling to open.
And this was no management.
No, there is no management here on this one.
So I'm curious, because usually we manage these at 20%, like 15 to 20%.
Oh, actually there was. There was profit targeting on this.
So the profit target here is 50%. And what were the results? What was the
7% return.
7% return.
$5,000. L1, 6,000.
And this is managing at 50%.
But you're also putting on 3 at a time. So here you can take that off, and you can just see, if you just want to see how the trade looks without in consideration of how much money it's putting up or anything like that, you just take off the limit number of active trades, and let's just say we just want to see how well it worked over time. The total profit and loss, So you can make modifications to this to
Sure. Can you
edit.
say it's manage at 20%? Because usually this trade, we don't wait for 50%. I'm curious to see if this makes
just
it.
put on 1 at a time. And then, so this is only putting on 1 at a time.
1 at a time and managing at 20%.
Yeah, and it looks pretty consistent as far as it's.
Now the average profit's lower because we're taking profits quicker, but the
it's making money 95% of the time.
Mm-hmm.
95% of the time, it works every time.
I'll tell Liz that when she comes back. 95% of the time it works every time.
And then the total profit, $2,400 when you're doing this one. You've had 2 losses. Now there's not a ton of trades that this one did. There was 44 trades. 2 of them were losses on this. It looked like it was a pretty good strategy here.
So, if we can go back.
Let me show you a few more things.
I just wanted, I just wanted to show people what this trade looks like, so they can have an idea. Like, okay, this is what the trade looks like that we're taking a look at. But I don't know if you could see this, Dr. Data. Can you see the live show?
Yeah, I can see it. Yeah.
So the trade is, here's that butterfly where you see the arrow here in the middle where the stock's trading. We've got that short straddle, this wide butterfly here. And then we're covering the cost of that with selling these 2 puts. And I think the reason this trade has such a high pop, and you can see pop 95%, so your backtesting is right in line with this. This works 95% of the time.
Yeah.
Or 95% of the time you're going to make money on this trade because
unless the stock goes down 10%. That's a huge, more than 10%.
More than 10%. So
11, 12%.
So we've got the 500 put. So you've got this whole range here of not losing any money, your bigger win range here in that center, but you've got quite a bit of room before this trade starts to lose. But the key with this is we try to not pay for it. Because if you pay for it, like here I'm getting in 5-cent credit, but watch my pop when I pay a debit for it.
Yeah,
it goes
I see
from
that.
95 to 36.
Yeah, there's going to be a lot more loss. You're still going to have that at the very bottom where it loses the most amount of money, but you're going to have less of a little green area up there.
Right. So
less opportunity to make money.
So that's what is a little tricky with the back test, because depending on the volatility, this trade is changing. And so I guess on the back test, we could say only when VIX is over 20.
You can do that, yeah. Yeah, there's a lot of, my big takeaway for using backtesting here is just to, I know it's kind of scary sometimes to push the button and click, especially if it's your first time trading, but this is almost like instantaneous results, right? You want to see how well it works. You don't necessarily want to do it.
And we can go back, John. We can pop back into the backtesting page.
You don't necessarily want to do it yet. You just want to see how well it would have worked. This is one way that you could do it. You can just see how well it would have worked. And you can also look at different intervals, right? We have some different intervals here, such as like, okay, let's say you did it in some of the worst time, right? Which is the bear market from in 2022, right? So you click, and this is what I oftentimes like to do too when it comes to things, which is let's look to see, I'm going to just let's sell a put, right? And doing 45 days, let's do something like 30 days. Let's do something like a 50. And then you want to see how well it worked during a bad market. So a bad market, and let's not take any profits on this. Just see how well it works. Right? And you could see, okay, well, the loss on this particular strategy, and then how can you minimize it, type of things, right? So you get your instantaneous results. You can go back and you can look, okay, what happened here? Here we got exercised because we had no management techniques. We held it until the very end. Is that something that you can withstand? What are some of the problems associated with this? And you can make modifications and see what would happen if you were to maybe buy a put just to try to minimize some of the make it more of a vertical, right? And so there's a lot of different things that you can do and which is why it's been so successful and why we've had over 1 million backtests run.
Now, is it through all of your backtesting that our research team has come up with the mechanics of place your trades around 45 days.
Oh, yeah.
Roll at 21 days.
Yeah, that's all historically done.
This is all just from you've gotten all these results from backtest.
Yeah, all the results of doing backtest and looking at what our customers are calling in and writing us about at research@tastylive.com. You can contact me at Dr. Data at drdata@tastylive.com. You can just send emails and
be careful.
Yeah.
And we happily take your email.
Yeah.
Sometimes if you advertise it on the show, you'll end up with a lot of emails rolling in.
Well, that's okay. But just mess around with things. Don't be afraid of it. It's a synthetic environment.
Like you said, this is not pushing out any trades. This is just backtesting.
No, just backtesting.
People can do whatever they want on here. They're not pushing a trade out into their account.
You have to have an account with us, and you have to open up an account with us. But
to run it, to use it.
To run it, But it's, love hearing people open up accounts because of the backtesting functionality.
Oh, nice.
And we've seen some big spikes in that with people opening accounts for that.
It's amazing. It's amazing, and it's a lot of fun, and it's a good way to. People are trying to. We're going to go over. We have a viewer who asked a question about if he has $500,000 and wants to make X percent. A year on that $500,000, and tomorrow I'm going to talk about it with Tony from Mexico. Different ideas of how to do what he's looking for. I'm going to also talk about with TP, see what different trades and trading strategies they come up with, and then
that's a little bit different of a scenario too, right? Because it's not a small account, which is not exactly the kind of a typical account, but it's a larger account, so you can do more non-defined risks. Strategies in it. You can sell puts. You have a lot of flexibility in an account that says.
I think what I want to do, though, when Tony from Mexico gives me his ideas and then TP gives me his ideas, then I think I'll run back tests on them and see how those all performed.
Absolutely. Yeah, I think that's a good idea. Not everybody wants the same. Not everybody's looking for the same thing, right? Like, of course, everybody wants the most amount within your account over a long period of time, but as far as getting to that point, they don't always want to take the same amount of risk.
Well, and this is the case. He doesn't want to take a lot of risk. He doesn't want to take much risk.
Yeah, and it depends on where you are at life, right? If you're 30, if you're 47, or if you're 67. Right? I mean, your risk tolerances are maybe different.
So.
And even then, it depends on not just the age, but it also depends on how much money you have. Right.
And you talk about big risk tolerance. We have a viewer, Jack Tucker. He's become famous in our Twitter community. He every day is putting on 10, 20, 30, 40 spreads 0 DT iron condors.
Yeah.
I don't know if you follow him or you see him on
no.
Twitter.
I've seen him on Twitter, yeah.
But he's doing the 0 DTEs. And I don't know if he's managing these at a certain percentage, or how he's managing them. But he is selling many tranches, 10 contracts at minutes apart. And they're $25 wide in the 0 DTEs, and he's collecting SPX.
Okay, yeah.
And he's collecting, depends on the day, but I would say somewhere between $5 and $7 on each iron condor.
Okay. That's not bad. As they say, it works until it doesn't.
He's been having success with them, but we have had some wild days. Like yesterday was a wild day. Spoo's down 80 and then Spoo's up at the end of the day.
Yeah. I just did we got cherry picks coming out here, which I'm going to give some stats on this in a little while.
Let's talk about that. We only have a few minutes left, but tell this is data pushes out the cherry picks.
Yeah.
They're great.
Thank you.
That's today.
Yeah, that's today. It's info.tastylive.com/newsletters is where you can get that. We're talking about the gold-silver ratio. Gold-silver ratio is at its kind of a local peak. It's about 92 silver per 1 ounce of gold
Can we
at
go
the
to the
moment.
platform and I'll pull that up? Can I pull that up in the pairs trader?
Yes, you can.
So I'm going to go here and go to pairs. And can I do it baby with like SLV GLD, or do I need to use?
Yeah, you could. Yeah, you
So
could.
we'd be-
I mean, it's not. Here's the problem though when you're doing a strategy like that with gold and silver, with those is that we do it like 1-to-1, right? Like we use
here you have to
the
go
baby.
notional to notional.
Yeah, and it's not going to be very capital efficient, and most people wouldn't do it with the.
So what do I
GLD
need? If
and
silver's $30.
most of the time, people are using the small and the SIL. The SIL is a small one.
Oh,
and,
the like micro.
and MGC. So it's MGC and you generally we use like one
Okay.
MGC to one SIL.
So SIL is the micro silver.
/SIL. Yeah.
So I've got that here. Can you see this on the?
Yeah.
Okay, and then what's the goal?
MGC.
MGC.
Yeah.
And
so
the micro gold.
Yeah.
And so as far as ratio to this, would it be
It's usually 1-to-1.
1-to-1 with this?
Mm-hmm.
Okay, so here I pulled up the chart. You can see what Dr. Data is talking about.
Mhm.
It's at the bottom of its range, this pair.
Yeah. So, two different ways of thinking about it, right? If you're thinking that it's going to be a continuation of the existing strategy, right? Then you would buy gold because you think that gold is going to continue to go up, and silver's just going to underperform, right? But if you think and you want to take kind of like a contrarian view on things, and you think, oh man, it's too high, and my bet is for gold to not perform as well as silver, which is where I would take more of my belief system, I guess, is more
that's
contrarian.
what I pulled up here, buying the SIL, selling the MGC.
Yes, and that's what that strategy would be, which is you'd be buying silver, selling gold, and you think, in other words, you think it's too high. You think the ratio is at 92, and you think it's maybe going to come down to like 85.
So if you can you see this chart here where it says here, like here's the price, 29.10, trigger with the price right here, 29.10. That's the price of the pair.
Yeah.
By buying silver and selling gold, we think that it's going to come back up.
Yeah.
Come back up. Now, when you say it's 92, what did you say? It's 90.
92.
92.
About 92, right?
Like, where are you getting that number?
Well, that's just looking at the price of gold, about $3,000, and the price of silver, about $30.
Okay.
And so you put 30 into 3,000 about 192
Okay.
times.
Got it.
Math is a little off right here, but that's where the ratio would be.
Okay, so if I do this with the micros, buy an SIL, sell an MGC, it's SILK and MGCM, does that matter?
You're looking at different months here.
Right.
Generally,
Does
you would
that
get.
matter?
Well, I mean, yeah, you are looking at different months.
Because usually you pull it up, and it will pull up.
Here's another way of doing this when you're thinking about it, right? Is if you look at GLD, if you wanted to do this completely with options, right? You know, you could do the math and you say, okay, GLD is a $300 product and SLV is about a $30 product. right? So you need 10 times as many SLV to equal 1 GLD. If that's the case, what you would do is you would sell 10 kind of closer to the money puts, and then you'd sell 1 call. GLD.
I know, but after all the pairs trading that we've done over our career, I find that you have to do future to future, stock to stock.
Yeah.
Because if you sell options and you sell options, it doesn't work like
It gets very confusing, doesn't it?
Well, and you could lose a lot more on your short puts in one of them than you make on your short puts in the other.
Exactly, which is why people oftentimes do it with just the futures themselves. And futures are going to be much more capital efficient. And it's one way for people to kind of keep track of what they're doing.
So MGC, I'm going to pull this up here. It's 11, we're out of time. I wanted to try to put this pair on. To put the pair on is, almost $5,000 for the SIL MGC.
Yeah.
Almost
kind of
$5,000.
Yeah,
but what TP has talked about this before on our show, you can buy, you can use GLD or SLV, and instead of selling puts and selling calls, you can buy in the money puts to replicate short stock and buy in the money calls to replicate long stock, and use buy.
That's right.
And then that would work the same as a pair.
Yeah, like in the monies and stuff like
Right.
that. So you're paying very little extrinsic value, mostly intrinsic on the.
And then that would work, rather than if you just sell options, you could lose way more on the one short option than you would ever make on the other, because
Of
your
course.
credit is capped.
Yeah, it's a trade.
But
It's
I
a
like
trade.
it. So that's in the cherry picks today.
That's going to be in the cherry picks today.
I'm going to put it on. Today.
Thanks.
I'll keep our viewers updated. Thank you so much
Thank
for
you.
joining me,
It was fun.
and we'll have a lot more people backtesting now.
Awesome.
Thank you, everyone, for tuning in. Remember to trade small, trade often, laugh with us, learn with us, and watch the Liz and Jenny show. I will see you tomorrow with Tony from Mexico.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I had what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine.
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh,
I know.
for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
Thank you.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense.
It does.
actually,
It
yeah.
really does.
That kind of tracks.
I don't even know what that means. Sure. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you got.
I'm thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh,
What is
I think you nailed it. I don't know.
No,
What is-
cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler with me as always, and this isn't an April Fool's jokes, but we don't have Thomas today for our Thomas Tuesday, so it's just us. But if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddy, Mikey Butler. How are you, sir?
I'm doing good.
Yeah.
This is the second day where we've had a sell-off to start the morning and the market has reversed.
Yes.
I kind of like what we're seeing here.
Yes, and that is actually a very astute observation by you, which I will add to because we're going to be talking about it a little bit in the cherry picks today. But the scalping range for the last, I forget the exact time frame we're looking, I think 2 weeks or 3 weeks, something like that. The actual range of realized volatility has been in the top 2.5% historically in terms of range, high to low, like percentage wise, has been very, very big. So we've had these huge ranges going back to like COVID. COVID was the last time where we had this big of a range and realized volatility across the market. So
like it.
Your thoughts that, it's felt like a volatile market? It certainly has been. We certainly have been getting realized volatility.
Yeah. Love to see the two-sided action with the big ranges.
Yes.
Lots of opportunity there. I'd also like to announce that Chicago baseball is back.
Ooh, yes.
Apparently, Sox destroyed Minnesota yesterday. They pinched the starters by the fourth inning. And the Cubs won like 18-3 last night, and one of the guys had a cycle. First cycle for almost
a backup catcher.
Almost 100 years.
Amazing.
If I'm not mistaken, which is actually insane.
Yeah. Crazy. It's all those torpedo bats.
Yeah. Sweeping the nation.
Yes, no doubt.
Yeah, market's up healthily here. Bitcoin up 3K. Good for these positions, especially IBIT. Seeing some gains in IBIT.
Yes. Yeah. I mean, it looked like death yesterday, and then you had the nice rally into the close. Felt like, there's all sorts of stuff. You had quarterly rebalancing. You had obviously the tariff news that's coming tomorrow after the close. I think they have right at 3 p.m. is when the news conference starts. So that should be an interesting, fun little section there. You had the whole J.P. Morgan collar trade roll that, everybody loves to talk about. But there has been, this morning it looked like it was going to be, kind of a washout, and then here we are, up 35, basically the high of the session here.
Yeah, let's see if it can sustain and potentially go even higher. That'd be nice.
I hope so.
Congrats to the winner for the Q1.
Did you see how close they were?
Yeah. It was
15 cents.
Yeah. What was it? 20 or
26, 11, 58, I think
85,
it was.
85.
85.
Yeah.
85, yes.
So yeah, there was someone that had the integer below and the integer above, and they just because it was 85 cents, that person won.
We had a 6110 or a 6111 and a 6112.
Yeah.
Which is incredible. I mean, I feel bad for the person that, lost
6111
lost by 35 cents on a 10% downside move. You figure that you're probably close to half the money there.
But good stuff.
Yes.
Tom bucks are the best kind of bucks.
Yes, we will be paying that out shortly. As I said, cherry picks coming later today, so if you are not signed up, please sign up for that. Job security, we had a great event over the weekend, the digital collectible. It's another piece of job security for me. So if you like me, if you like Mike, sign up for those things.
Yeah.
Support us.
Yeah. I have a link to the cherry picks in the top of the YouTube chat, so if you want to join us there, we're streaming live on the Tasty Live YouTube channel.
Beautiful.
But yeah, exciting stuff. Just cranking out content.
Always.
And
forever.
Always and forever.
Oh.
Yes, that is true.
Quick little market update.
Yeah.
E-minis are at the high of the session here, up 36 and change. We got the low of the day was 5,600, basically on the dot. 5,625 was the 5,625 was the low of the session. We are at the highs. NASDAQ up 170. You got the Dow up 100 and the Russell up 14. The Russell was actually the weakest of the group earlier in the session. It's now up with everything else, but it was one of the stronger of the four, with the NASDAQ being the leader in the clubhouse here. You've oil futures down about 10 ticks here. They've had some volatility. Volatility futures down 32 ticks. Volatility coming in, it did spike a little bit this morning. We got to 22.05 was the high of the session, and the VIX itself got to almost 24, 23.52. We were in just about 25 yesterday, so seeing a little bit of vol come out here. Bonds up over a full point. Been a big rally in bonds over the last three sessions. Gold and silver actually both lower here. Gold's down $10, silver down 33 cents. We're actually going to look at that ratio as well in the cherry picks. It's at 92-ish, or was at 92 when we were looking at it earlier this morning, meaning 92 ounces of silver to 1 ounce of gold. One of the highest we've seen in the last couple years, even higher than when we looked at it just about a week or two ago, one of our other cherry picks. As Mikey said, Bitcoin also moving with the risk-on sentiment here, up 2,800 on the futures spot, up 2,200. Underneath the surface, some big moves. You got Tesla up 17 and change, a nice bounce back from the last 2 days of selling. NVIDIA was in the green. That seems to be a hard thing to come by recently. Apple has been kind of the strongest of the bunch over the last week or two. You had Amazon catching a little bit of a bid. Even Google was participating after looking like it was just left for dead. So it's definitely been a strong move today and, into the second half of yesterday. Been a risk-on move, it seems.
Yep. And I just checked the volatility curve. This is definitely the most flat I've ever seen it in my life. There's a 30-cent range between the bottom and the top for the rest of the year.
Basically
everything is at 20 and change, every single contract. So that's really interesting to see.
Yeah, it's interesting. I was chatting with Chris Vecchio before this, and we were talking about this tariff news event is probably the most uncertain event since COVID.
Yeah.
I mean, and prior to that, those sort of events didn't exist in our trading career.
Yeah.
None of the FOMC things mattered. None of the employment reports really mattered in 2016 and 17 and 18. None of that stuff was even I don't even think we talked about them really. The interest rates were zero the whole time, basically. There was no change in rates, so it wasn't, a thing. Inflation wasn't a thing. Now you get this, uncertain event where, the perception, at least from when we were chatting, was that the tails are fat, it seems like, or at least people are believing or at least think that the tails are fat, meaning anybody you talk to thinks it's a huge face ripper to the upside or a huge crash to the downside. There's like very little in between sentiment. At least that's what it feels like in my circle. Do you feel the same?
Yeah, it reminds me of the CPI and PPI report heydays, where everyone was looking at the markets and you'd get a number print and then all of a sudden the market would just rip up or down 100 points. Like that's what it feels like. Like the 60-point expected move in SPX for tomorrow feels light.
Yeah.
I really think that we will see a move outside of that. That's my hot take. I think we'll see a 100-point move tomorrow after the news is released.
Well, that's the thing, is that you can see even in the implied volatilities, you see the April 3rd volatility is much higher than tomorrow's volatility.
Yeah.
And that's really because of the event being after the close.
Yeah.
And this is, significant. You're talking about a 100-point range through Thursday and only 63 through tomorrow. That's a big deviation there.
Yep. So we'll see.
Yes.
But markets are going to be flying around. They're already flying around.
Or it could be a nothing burger.
Could be
like I said, everybody, I feel like I got people. I mean, I told you the text I got yesterday of like, Tesla's going way lower and now we're up like $30 from yesterday's bottom tick. I had specifically 2 people text me about Tesla.
Yeah.
Specifically going lower. And so I knew the fix was in.
Yeah.
Knew that
that's a bottom signal for sure.
Yes.
I mean, I think it's interesting because the market is pricing in a lot of implied volatility, but I think the narrative is pretty clear. The narrative is either tariffs are going to be hot and the market reacts in a not great way, which also just creates more volatility going forward, or the tariffs are going to be much more mild than expected, and I think that could easily be a bullish thing for the market,
especially where we are right now. I mean,
given that we've already seen a big sell-off, we're seeing some extremes in the gold-silver ratio.
Yeah.
You're seeing extremes in institutional investment in the market at lows, which is all historically signals for bottom could be near. But like you said yesterday, you just never know.
You never know. It could be the market. The beauty of markets is like, when you have these kind of events and you have the perception of these huge fat tails, the most painful thing would be for nothing to happen.
Yeah.
Like that's sometimes how it ends up, where everybody's positioned. I know Chris was talking about this morning about like the VIX and volatility positioning right now being, very long vol overall. You get if you're long vol and short equities and you get a nothing move, that's a tough position to have. So who knows? I mean, obviously, if I knew, we'd be in different places.
Yeah.
Yeah. So if you got questions, jump in the chat. All right. I've got the mobile app here on the right side. So if you got questions specific to that, we can jump around to that as well. But we're open for business.
Yeah. Earnings are not really existent this week. You've got Delta Airlines on the 9th before the market opens. But next week, the 11th, kicks off the banks, which is always a sign that earnings season is kicking back up. So JP Morgan, Wells Fargo, those are both before the market on the 11th, which is Friday. So the week following that, that's when you'll see a ton of the earnings announcements start to come back into play.
Yes. The weird Netflix earnings, we will definitely remind everybody again.
Oh, yeah, after the close.
After the close on Friday.
Never seen that.
Of expiration.
Yeah.
Of a monthly expiration. That is, I don't think I've ever seen that.
Feels like it should be illegal. It feels like it should be like the XYZ ticker symbol. Like it just can't be done.
Totally.
But, yeah.
So I've done a couple things this morning, just managing a couple positions. I sold a call against my Palantir long call that I had as part of a crab trade. Volatility has picked up there. You were seeing a little bit of a bounce from the lows today. It's up 57 cents, 58 cents here. So turn that into a calendar spread. I managed a couple positions here, selling a call spread in AVGO against the at-the-money put spread. I put on 2 new trades, a short put in UAL. I don't know if you have a position in UAL or Delta, but those have continued lower. I sold that put this morning. I put that in, or it will be in the cherry picks, as well as a crab trade in SPY, kind of playing into the upside, as well as a potential vol crush, which I think is certainly on the table here. Robinhood, I bought in the risk on my Robinhood position. I've done this a couple times actually. In iBit, in Uber a little while ago, but I had the short put call ratio spread, which is synthetically a naked position, naked a strangle really, with a little bit of a bounce here, which I was getting tested on the put side. With a little bit of a bounce, I went and bought the 30 strike put and the 65 call. I did this at like $1.20-ish. Let me see, just to give you the number. $1.27. Bought in this risk really on this position to reduce the capital requirement. So I was using about $2,000 to be naked here. I needed a bounce because I was net long Delta. Buying in this position doesn't take all the risk off the table. You can see I have a 5 by 15 wide call ratio spread, and then a 10-point wide put spread. So there's $10 of risk here. There's $10 of risk on the upside. Buying the wings for $127 reduces my capital requirement down to $1,000. My overall position is still a net credit with this. So I have this whole thing on for a $2.86 credit. It's currently marked at $2.68. So I'm up, 10, 20 cents, not a big winning trade, but this was just one of the things where if you're looking to reduce buying power and massage some of those positions that are kind of going in your favor, this sort of adjustment to naked positions might be advantageous for you.
Yeah, I have a UAL straddle at 90. So
you're stuck. Gotta do something.
It's funny. It's like the one I rarely do strangles and straddles. I'm much more defined risk, but the one time I got pulled into it, it's dropped down 30%. But that's the market. And that's why you only do one contract, because I can just roll this forever. It stinks, but if we get it moved back up to 90, it'll be totally fine. But yeah, I'm already in UAL, leaning long, and there's nothing to really do there. The short call is trading for 60 cents. Technically, I could go inverted here, move the 90 to the 80, but I'd rather do that after we see some life here. If I can do that into a rally, I can pick up more than $1.50.
Do I take my $80 profit in my UAL put already?
Yes.
You think so?
I think so.
All right.
Yeah, because I have $1,100 in premium on this straddle, so I could move the 90 to the 80 for $1.30 in May and reduce some delta, have $12 and change on a 10-point wide inversion. But again, I would rather do that into a rally because I can pick up more premium. So I'm going to wait on that.
Very nice. I took $83 out of that put about an hour.
Might as well.
Why not?
Anything can happen.
Yeah, if it sells, if UAL sells off a little bit from here, I did this when the stock was trading, give you the market snapshots, at 919, right at 65, it's now at 67 and a half.
You're the Oculus.
Neo. Thank you.
Yeah, I haven't made any adjustments yet today, but again, the IBIT position looking really good. I've got the 50, 55, 60 butterfly, and then that's in April, and then I have the 50, 55 call ratio with an extra short put in May. So I have $1,000 in premium. Break evens are significantly higher, and the downside break even is right around where we're trading, a little bit lower, but anything up to any kind of move up to 55 is going to be stellar for this position.
Huge. Mega.
mega. 6J, Japanese yen. I've got the call diagonal spread there. That is picking up some premium today, but still need a little bit more. The gold broken wing butterfly we placed yesterday. Seeing a nice sell-off in gold, but we need a little bit more there. I could technically fly off the risk. Fry off the risk is what I almost just said. Fly off the risk there, but it would only be like a 20-cent net credit. So I'm just going to hold on to that because we still have some more room to the upside before we're tested.
You have the put diagonal spread, right? Didn't I put you in that?
In gold?
GLD.
Yeah, GLD. Yeah.
Is that closer to a scratch now, maybe?
No. I have the 280, 275. So I need to move to 280 or lower.
Yeah.
But
all right.
Still not terrible. It's a small little trade anyways.
Yeah, I have my crab trade that's basically a scratch right now, but a 285 would be very nice for the next 2 weeks. A little bit of a sell-off in gold, which you would think isn't too much to ask with it just going to high. So I wonder where my...
I think you could see some big moves in gold this week.
52 IV rank telling you certainly potential.
Yeah. Especially if the market rips higher, like 100 points on Thursday, I think you could see gold come down quite a bit. But we'll see. We will see. A lot of people calling for like 3,500 in gold this year, which would be wild.
Yeah, I know Vecchio's in that same camp.
Yeah. People love their gold. But yeah, just keeping my eye on some stuff. And I will likely be holding on to positions, not adding too much more, and looking for a rally into this information we're getting this week.
Beautiful.
All right, let's pop over to the YouTube chat now. If you want to join us there again, we're streaming on Tastylive. Pop in your trade ideas questions along the right-hand side chat. We'll kick it off with John. When I double my spread from $5 to $10 wide, my premium collected doesn't double. So why shouldn't I simply do 2 contracts at $5 for a higher premium collected on the same risk? The risk is not the same. Even if you're not collecting exactly double, your max loss point is now 5 points lower. So if it's an SPX, I don't really care either way what you're doing.
Yeah.
If you're in a $100 product though, moving another $5 out of the money is significant. That's another 5% that the stock has to move against you for you to realize max loss.
Yeah.
So I think it's more applicable to mid-price, smaller price products. But if it's in like a $6,000 product and you're comparing $5 to $10 wide, I think it's less apparent.
Yeah.
But if you're doing a specific trade thousands of times, 2 contracts versus 1 will add up in commissions at the end of the day. So it's another consideration.
Yeah, I mean, it's all about where risk is.
Yeah.
Where your risk is. So, when you're doing something like, I have a SPY position already. Let's look at Qs. I was using Qualcomm, but just looking at the Qs. I mean, if you're doing SPX, the $5 and $10 wide spreads are basically the same thing. There's really not much of a difference there. The difference in the credit is going to be marginally different, and that's just because of the distribution. Like the options don't decrease in the same amount as you go further out of the money. Like if an option, it's not like every option decreases 10 cents as you go further out of the money. There's a distribution. I mean, that's just how it is. And that's based on the normal distribution as well as volatility and tail risk and skew and all that. So all those things go into it. The point being is that where you have risk relative to where the stock is trading is the big point here. So if you look at the Qs and you're looking at this sort of, and of course you're going to give up a little bit of this credit, but if you understand where the same amount of risk is, it's a big difference. So if you have a $5 wide spread here and you do this, let's say 10 times, so you have, or let's say 2 times or 4 times to make it $2,000 in total risk. Do this 4 times. You lose $2,000 or roughly that minus whatever the credit is, $1,900 at 445. So the probability of that happening is about 25%. For where if you were to do this a 20-point wide and do this one time, you would need the stock to go to 430 or below, and the probability of that happening is about 10 or 15%. So you go from something that's a 30% probability of losing the 1900 to a 10 or 15% probability of losing that 1900. And at that same point, like if the stock goes to 445, you would basically lose nothing on this one spread, whereas you would lose that full 1900 on your 4 lot.
Yep.
And so, and if the stock goes to 440, you're losing $500 on this spread versus 1900 on the other position. So yes, you give up a little bit of credit. This is $1 cheaper or 60 cents cheaper than what you would get with your 4 contract $5 wide spread, but you're also going to have a lot more risk in terms of like probability of realizing that risk.
Yeah. Where the same exercise in SPX, your probabilities are not improving that much because 5 points in SPX is literally nothing. It doesn't really matter. It's just like those types of trades, like a $5 wide or $10 wide in SPX, completely Greekless. It's just, is this out of the money long enough for this to decay? It's really just like you're visually looking at it and you just need SPX to be above a certain level or below a certain level. Where this is much more dynamic if you're doing it in a smaller price product, because now the difference in value between your short and long option is much more substantial.
Yeah, it comes down to, I think an easy way to understand this and look at this is the delta of the long option. So if you're a long option, just to give, and I don't have any like specific math on this, but this is anecdotal and just my opinion. If your long option is more than a 1 standard deviation delta, like if you are looking at Apple here, if you're looking at the at the money spread, it makes sense to widen the spreads. When you are looking at a tail option, like this option, this 180 put is really just a buying power thing. You're not playing for Apple to be 180. I guess, it gives you that, protection, but that's not really what you're playing for here. You're reducing your risk. You're reducing how much capital you're using here. From here, it doesn't make sense to move to a 175 or a 170 or 150 if you want to do multiple contracts. From here, I would say up the contracts rather than widening the spreads because you're at a tail long option. If you're inside the 1 standard deviation, it probably makes sense to just widen the spread.
Yeah.
It was long-winded, but
it's good stuff.
Good to say.
Trading Tom, NVO, 60.85 strangle in May. Excellent return on capital.
60.85?
60.85.
Yeah.
Yeah, I mean, yeah.
Earnings coming up May 1st.
Yeah. That's my only issue with this is like, I would rather just move from the 60 to the 65 and get rid of the call, or do the opposite if you're bearish. Get rid of the put, sell the call, because these strangles where you have a significant increase in implied volatility because you're selling premium in the earnings cycle, you have risk on both sides, which means you will not get paid on directional moves unless you're skewing it, and you're going to have to wait until earnings for this thing to come into play if you're trying to get 50% profit. Like, you're not going to get 50% profit before earnings on this trade if I were to bet. So for a $2.74 credit, I kind of like just getting rid of the call, moving the 60 to the 65 for $3
and just leaning
long. Or if you want to lean short, get rid of the put and move the 85 to the 80 or the 75 and lean short, because then at least if you get a directional move, the earnings propping up implied volatility and premium is not going to matter because the delta will get you paid if you're directionally right.
Mm-hmm. Yeah, this is an interesting one. I mean, the stock has been in free fall. So I don't hate this. I mean, even selling the put. Use the 65 strike. Use about $1,000 in buying power. Volatility is high. I mean, your 52-week low is 66.88, so you'd be making new lows. About like a Jade Lizard, maybe. Using a little bit more capital. I'll do it. I'll bite. MVO, the 65 strike put.
There you go. Oh man, the elephant in the room, Newsmax. These products are insane.
This is a new IPO.
Yeah, I'm sure they'll have options relatively soon, but these ones I would not touch with Nick's money, because if you're playing for the downfall, it's just really tough because you can't buy out of the money puts. If you buy out of the money puts at a 200% implied volatility, which is what I assume it's going to open at.
Probably more.
Even if you get the sell-off, the notional value of the stock is going down, which will decrease the at-the-money options, even if your option goes at the money. And if that's paired with a 100% implied volatility decrease, you can lose money on that trade. This reminds me very much of the AMC and GME days where people were like, okay, this stock is not going to stay elevated. It's going to come down. Let's buy some out of the money puts. And they lost money on the down move because the volatility contraction was so aggressive into the down move that it killed the premium on that trade. So you really have to play this in like a intrinsic value way, which would mean buying a put at 150 at a 200% IV, which is going to be
expensive.
$7,000.
It's going to be very expensive.
Maybe more.
I would imagine options are coming.
Yeah.
Usually it takes like a day or two. So I would think this week, if not very early next week, Monday or Tuesday, they'll have options available. I know that the borrow rate is very high here. I don't even know if you can short it on the platform right now. I know it was like a hard to locate stock. So I would say, and I know it's a low float stock too. Like this was not a full IPO launch. I know there's all sorts of funkiness here. So I would say just wait till options come and then you can take a look at that point.
Yeah.
No hero crap, you know.
Yeah.
You don't need to be shorting Newsmax into, events.
10x in 2 days.
Yeah.
Yeah. Tough.
Yeah, it's a tough one.
Do we know why NVDL is not moving 2 times as much as NVIDIA? Is it because of expense or any other reason? I mean, the 2x long daily ETF, these leverage products are going to underperform in the long term. Because they have to rebalance and, they're using options to get that exposure.
Yeah.
So it's a tough one. But if NVIDIA has like a 10-point rally today, you'll see NVIDIA rally aggressively.
Yeah,
it's just the day-to-day grind is not good for NVDL.
Yeah, the other thought I would have would be maybe the move after market yesterday, because we had like a little bit of a rally into the close, maybe it marked it higher. I don't know. I don't know the makeup of this product either. So
yeah, I mean yesterday the low was 33 and now it's trading at 37, so it's called 10%.
Yeah.
Yesterday NVIDIA was a low of 109. And it's trading at 103, and it's trading at 108. So it's
that's a 5.
Yeah, there you go.
So it's 10 per. Yeah.
Yeah. So there you go.
It's all based on like all these products that track something. You have to account for moves in like when you're looking at volatility products like UVXY or VXX. The overnight session is going to get priced into that move. That's why when we were looking at like SPX gaps, that's just based on the E-minis moving. Same with SPY.
Yep. I'm long MSauce, short put at the 4 strike for April. How do I manage this position? Simple rolling won't help. I was thinking of going inverted, selling a 2.5 call. What are your thoughts? These stocks are just like once you get to this level.
Yeah.
When you're looking from rolling to April to May and you see that there's zero extrinsic value benefit to doing that, you're better off just having the shares. Because if something crazy happens and it rallies from 250 to 5, you will make $100 more on your long shares, and you're not getting paid anything to have the short put because the short put doesn't have any extrinsic value. So I also don't really like selling the 2.5 because you're just selling it for 20 cents. You just kill your upside.
Yeah.
Might as well close the position if you're doing that. But I don't mind taking the shares if you're comfortable just holding the shares and waiting around, see if you get a rally.
Yeah, and I would do that. I would do that rather than rolling the put. The put is not going to give you anything, and if there is some sort of event or squeeze or whatever, you'll miss, the upside above 4. So I would just buy back the put, buy back the 4-strike put, and then just buy stock, and it'll trade right at $4. I mean, that's you taking assignment essentially. That's what I would do. Close the put, buy the stock.
Yeah.
And then you're just
call it a day.
Yeah, and call it a day. And if you get a $2 or $3 rally, you pat yourself on the back.
Yeah. Anyone trying to get long Johnson & Johnson here? Too close to earnings for me.
I saw it getting whacked. The Dow has been the weakest of the group today.
Down $9.
Yeah, we can look at the
April 15th earnings.
Yep. J&J, Merck is in there too.
Yeah.
Disney, gross, Boeing.
Yeah, this is one where if you want to get long, I don't actually mind it. I mean, I would look no further than a diagonal spread here with 20% implied volatility on a stock that's getting hammered today.
Mm-hmm.
Like the fact that you can buy a June option for $3 right at the money is kind of silly. But
it's still only 20% implied volatility.
yeah, I mean you can't really even get paid anything for selling anything against it. I guess you could. You could do like a 155 June, 160 short April for 479.
Yeah.
That's probably where I'd land, unless you're just doing like a calendar spread straight up. But
yeah,
I would go to June instead of May, personally.
You wanted to get real small, you could do like the 155 in June and then sell the 160 in May.
Yeah.
Or the 165 if you want to be a little bit more directional. The 165 gives you the bigger upside.
Yeah. Yeah, you can get into a 5 or 10 point wide diagonal here for $4 to $5. So that's where we would go. Because selling undefined risk here, even in the earnings cycle, is just not enough premium for the risk.
Mm-hmm.
Given the fact that it's down $10 today and you're only picking up $2 for an at-the-money option.
Yeah.
It's just not enough.
160, 165 is a cheapie too in June, May.
Yeah.
Now you pick up almost 20 deltas, $2. Do I do that?
Sure.
Little Johnny.
Little Johnny and Johnson?
Yeah. This sort of thing, like
it doesn't matter. It's just you're playing for reversal.
Yeah, if you get a move, I want to get $50.
Yeah.
Like that would be a home run. And it's just another one that I'll just have in my portfolio. And, if the market goes up, you expect this to kind of, catch some sort of bid. So, I don't know. Small little thing.
Meta going to 600. What's funny about that is I thought you were saying it's going down to 600, but it's actually below 600.
Yeah.
Which is insane. Given the fact that it's sold off from 750 to 550 in 3 weeks.
I had the 25 straight up days or whatever, the number 29, 27, something crazy.
Yeah.
This stretch was all up days.
I kind of like it's just so expensive, but like a calendar spread here feels fun.
No.
Because you could buy May and sell April, and then if you need
What strike you thinking? It's like
650, 650-ish. Maybe even inside that. But the nice thing about this kind of trade is you can sell April monthly and buy May, for example. And then if you need to, you can roll from the April monthly into the April 25th cycle, which is where earnings are projected to be. And you can see the difference in premium between the 16-day and the 24-day is $1.80 versus $5. So you can reduce basis. You could turn this into a diagonal spread. There's a lot of things you can do with this type of trade, but it's still expensive. It's $1,100.
Yeah.
But that's how I would play something like this, just straddling the earnings event and then rolling into it to pick up a lot more premium and reduce basis if you don't get the move. Did I talk myself into it?
Do it. Or do that like an out of the money put spread.
sure.
I mean, like that's on the table too. I mean, you sell the, you know, the 550, 540 at $3. I mean, it gives yourself $30 to the downside.
Yeah.
You know, 550 is kind of a low where it's been trading going back to September of last year.
Mm-hmm.
What say you?
I don't know. I'm stun locked.
Paralyzed.
I'm stun locked. I do like that setup, the 650 calendar. Because at the very least, you can roll into the earnings cycle and pick up another $3 or $4.
All right.
And it's trading for 11.11. Lucky number.
All right.
I'll let it sit there at 11.11. See if we get filled. Filled at 11.11. There you go. Short the 540 put in the queues with 121 days to go. I have extrinsic value in my position, but with it so far out of the money, and sometimes extrinsic value jumps a lot. Yep.
540?
540.
Okay.
Any other ways to calculate extrinsic value in terms of what it has? Yeah, it's just the difference between the in-the-money option and the in-the-money intrinsic value and what it's trading for. But if you have a Tasty Trade account, you can just flip the column to extrinsic and you'll see it.
You could also just look at the in-the-money or the out-of-the-money call. Trading at 270-ish. So that's how much extrinsic value you have. I mean, this is basically a stock position. I mean, you're getting a little bit of leverage here because, you know, if you're, I have this whole mangled position. 540, it's going to use about $9,000 in buying power. If you were just to buy the stock, it's going to use $23,000 in buying power. So you have a covered call that's more capital efficient than stock, but this is a stock position from a risk perspective. You don't have, there's no positive decay here. You're getting like $2 of decay on a $10,000 position. You consider that nothing.
Yeah.
You know, you're just long the NASDAQ.
But yeah, you're not really at assignment risk here.
Yeah.
If you get assigned, you pocket $250. You could resell the 540 put if you wanted to. But yeah, it's just see if we get the rally that you're looking for.
Yeah.
Hoping that you do, because that would benefit us as well, for sure.
For sure.
Is there an XSP play for tomorrow?
XSP. What's the thought? What do we think?
Well, this used to be a double calendar situation.
No.
But I don't know. I really don't.
I think we go higher.
Yeah. I feel like we have to, right? That's the age-old question. When moon? Yeah, I mean, if you're trying to play a short-term situation in XSP or SPX, I would be probably selling a 3-day or 2-day option and then buying something for next week. Just diagonalizing it. Like selling the 3-day, buying the 7-day, something like that, or the 8-day.
Yeah, I was trying to set something up for like basically zero is what I was trying to do. Maybe like $100 or something.
Yeah. I mean, a 560, 570, 7-day, 3-day diagonal is trading for $590, $6. So that could be a $500 winner easily if you get a 40-point rally into the end of the week. But outside of that, I don't know, it's tough.
Yeah.
Otherwise, you could do an iron condor or something like that. I would probably go to SPX instead of XSP for an iron condor, but 3-day iron condor, what can you get here? 550, 575 for $1.50. Something like that. 250 point range. If you think we'll just have a nothing burger.
Mm-hmm.
It's tough.
I'm debating. I'm thinking like the two. It's funky because these, I guess with SPX settlement, the runoff won't be an issue. Tomorrow, I was just thinking in my head of like, oh, if something like gets announced right at the close, you have some settlement risk just because the market can move. SPX doesn't settle until like 5 or 7 minutes after the close. But I don't think that's the case here. What about like the 265 call in the 2-day, which is next day, after the press conference, and then selling the 568, 572 2x1 for like a crab trade setup. You're basically flat delta. You have 5 deltas. You're selling like $1.70, which we'll call it half of what you're paying to buy the 265.
Click it. Click the button. What are you
trying to do it
gonna
at like
do?
$2. You're using a little extra buying power because you have a little bit more. You have an extra dollar on the upside here.
Yeah.
And this is just like a $200 shot.
Yeah. I think the 5. I might do the iron condor here.
There you go.
Kinda
Wait for the nothing burger.
Yeah, I mean, even if it's a rally, I mean, you still have the 575 upside is 100 points to the upside in 3 days. Certainly possible.
All right, 207.
But this could actually come in a little bit if we just chop around today and tomorrow.
Mm-hmm.
But I kind of like the value here. $1.50 on a 5-point wide, so you're 1/3 the width. You're right outside the expected move on both sides. 550 short, 575 short, so basically 100 points to the upside, 170 points to the downside. Yeah.
Like.
Yeah. I think I'm going to do that.
Do it.
A little iron condor, just a little Johnny Condor. I'm going to let it sit for 155. It filled at 155.
Beautiful.
Ryan's got an arm short put at 145. Bless you.
Thank you.
Arm 145 short put in May. 950 in credit. Wondering, instead of rolling this more, should I buy it back, buy 100 shares, and sell a 135 call for more delta and more premium if it sits at this level?
In May?
In May.
Yeah, it's basically, I mean...
You basically have the shares.
Yeah, I think it goes to the same sort of thing as the QQQ position. You're basically long the stock here just for a little bit less capital than you would pay to just be long the stock. So
yeah,
I think you sell the call. I mean, you sell the 125 call or the 130 call, even the 120.
What you're saying?
Yeah, I mean, I don't know. You can just take the shares for another $100 or another $1,000 in buying power. Be long the shares if that doesn't matter. If the extra $1,000 doesn't matter is what I mean.
Yeah.
Just buy the share. Close out of the put, buy back the put, buy the shares, sell the 125 call or the 130 call, and if you get a move back there, you're basically a scratch.
Yep.
It's a 30 delta, so it's not. It's a 50-50 probability of touch.
Lisa confuses how to manage an original naked put trade that I added a naked call for management. Not sure how to manage that. Manage it as 2 different trades versus managing one. Yeah, if you started with a short put and you added a short call, you now have a straddle or a strangle. So the way to look at it is just you now have a straddle or strangle, and you just look at your total credit against those new strikes. So depending on the situation, you could roll it out as a straddle or strangle, adjust the strikes. As long as we're picking up a small credit or paying a small debit is okay, just not a huge debit. But yeah, there's also situations where, like, I had a short put, I threw on a short call, it kept dropping. I let the short call expire, I rolled the short put. Like, you don't have to stay with the straddle strangle setup.
Yeah, you can take directional leans
Yeah.
in either direction, but I think it's important to understand both positions. It's not, that goes back to kind of like some of the questions we get of like, this option is winning, this option is losing. You can't look at it like that. It's the position as a whole, but it's okay to be directional at a point. Like if the stock continues to drop and you want to lean long, closing the call certainly fits that narrative that you're building.
Once an iron condor is established, at what delta do you begin to adjust if the trade starts losing money? I don't really look at delta that much with iron condors because, like we talked about earlier, with a narrow SPX position, you don't have a lot of Greek exposure because your short and long options are right next to each other with a very similar value and a very similar delta. So defined risk credit spreads, if you're trying to defend a defined risk credit spread, you have to just roll it out in time before it goes in the money, because that's the only situation where you can collect a credit. You're not going to be able to collect a credit if it goes in the money to roll that out. So then you have to ask yourself, do I still want to have the untested side on? If you're tested to the downside, you could close the call side, roll the put side out for a small credit, and just lean long. Same thing with the reverse. If your call side's tested, you could close the put side, roll the call side out, and lean short. But if it's wide enough and you're getting enough value to just roll the whole iron condor out, I think that's fine too. It's just a slight matter of personal preference there. But generally speaking, if I'm placing an iron condor, I am rolling the test side out, closing the untested side for a couple pennies because it's probably lost a lot of value. And if it hasn't, then I just leave it. Like my SPX iron condor, I haven't done anything with. And I have the 5,700, 5,690 put spread and the 6,250, 6,260 call spread. I'm just letting it go because if we rally up above 5,700 with 16 days left, it will be a profitable trade. I can just close the whole thing.
Yeah. And I think it just goes back to the fact that with spreads, you really don't have a lot of Greek exposure. I mean, even looking at this SPX spread, which is 20 points wide, put spreads right at the money. I have a call spread that's, outside the expected move. The net delta on this position is 1. It's 3 SPY beta weighted deltas, and it's a 20-point wide spread in SPX. I was looking at AVGO right before this too. My AVGO position, which I added a call spread to, this position is a net 5 deltas. Like it's very, very small directional lean here, even though I'm right at the money, and that's because you have spreads, which will dull all your Greek exposure. So, agreed with everything you said, Mike. One more quick? Are we done?
I think we're done. I mean, I'm pulling up the ranch question, FCX, rolling a 30-40 put spread, 16 days to go, that's slightly in the money, to a 35-45 completely in the money put spread, brings in $4 in credit. Is that 423 just money in the bank if I roll? No, it's not, because you're rolling a slightly in the money spread to a completely in the money spread. You're just selling intrinsic value.
Yeah.
And the only way you keep that is if FCX rallies above 45.
Yeah. It's the same thing as buying an out of the money call spread.
Yeah.
So, you buy the 40-43 here, it's 74 cent debit, that's your risk. If you sell the 43.40, it's the 75 cents in risk as well if it stays out of the money.
Yeah.
The credit you're getting is not a credit because you're selling $3 of intrinsic value.
Yeah. Technically it's a credit, but it's paired with you need the stock to go above 45 now for you to keep that. Because if it stays right here at 37, for you to close the 45 short, you're buying it back for $7 and change, versus your current position, you're buying back for $2.50 and change.
Yes.
All right, that's it. That was a great session.
No such thing as money in the bank.
Yeah.
Let me tell you.
Money in the bank if it's a profitable trade and the position's gone.
Yeah,
That's
and you
it.
close it, you open the trade, you close it, that's money in the bank.
Yeah.
No free money in the bank.
No free cheddar.
No free
cheddar.
lunch, except at Tasty.
That's right.
Pizza today.
Yeah, it's going to be beautiful.
Yes.
Thanks for tuning in, everyone. If you have any questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Click that link at the top of the YouTube chat. Get your cherry picks today. We'll see what happens the rest of the week. It's going to be a fun two-sided action week, hopefully. But yeah, enjoy the rest of your trading day. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We are back. It is still Tuesday, April 1st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, I missed you last week.
Hey, I missed you last week too, but it's good to see you again, man. It's been a minute. I was out. I had about a solid 10 days of, I guess you can call it vacation. I was in Vegas for a couple of days. First couple of days of the games. I've been doing it for a few years now with some buddies. I got to tell you, It didn't seem like Vegas was super packed. I don't know if that has to do with costs catching up, all these different things that we see, right? Consumer credit and all that. But, hey, it is what it is. Then also went to sort of Branson, Missouri area, sort of let's just be honest, it's sort of like a hillbilly spring break. It was fun, though. I mean, I loved it, man. It was great. It was fun time.
Vegas of the Midwest, as they call Branson, Missouri.
Yeah, exactly. So it was good times, man. Before we go any further, too, I got to say happy birthday to two people. One is my wife, Christy. Happy birthday. Yeah, no joke. April Fool's Day. And two, Steve Rashis, which I just realized it's his birthday today. So happy birthday to those two people.
And you listed them in the correct order, for what it's worth. So you will not be in trouble later today.
I am smarter than I look, Chris. Come on.
He's not your average bear, folks. Well, what do we say about today's action? Are any of us bulls or bears in this market? I find myself lacking any conviction whatsoever, Mr. Chandler.
I tell you, man, again, I was gone for a solid 10 days of trading, and I was hoping that, I really was hoping that I could come back to the show, you could sort of tell me what I missed, and we could sort of go about it that way, but I don't feel like I've missed a whole lot. It seems like everything is essentially still the same. It seems like markets are struggling for direction. It seems like gold is still up. It seems like vol is still up. I mean, you name it, which is really interesting to me. I would say probably the biggest change is there seems to be a little bit more movement in bonds. And then again, not to spoil the show, but I mean, honestly, I thought things were going to be markedly different after a solid week and change, and here they are, fairly the same. I left most things in the same place.
Well, it's a real foolish start to this month of April. We have the tariffs coming tomorrow, 4 p.m. Eastern now, pushed back from 3 p.m. Eastern. Very nice of them to do that when the market closes. We saw this with the auto tariffs when they were announced. What was it, a week ago? It was expected to be a 4 p.m. announcement, and it really didn't come out closer until 5, so we don't know if they're going to be there right at 4. But I think the key point is what the press secretary just told us in her daily conference, that the tariffs will go into effect immediately. This is not like the signing of an executive order that says tariffs will arise in 30 days unless certain conditions are met. This is tariffs probably of the 20% across the board nature, which is the nightmare scenario for markets. That looks like that may be coming into focus. And you talk about Vegas being empty. There are macro practitioners out there who track things like hotel rates. And you could see that in touristy areas around the country, your New York, your Las Vegas. I wouldn't ever include a place like Atlantic City on that list, so we're not going to. But at least in New York and Las Vegas, big tourist destination centers, you've seen a fall off here. You've seen warnings from airline companies about how bookings and travel to the U.S. have dropped. From Canada, inbound flights to the U.S. this year are down by about 70% by some metrics. There was a European company, travel agency, that was just giving a report on Bloomberg Radio earlier today saying how the flights that they booked to the U.S. are down about 25% year over year compared to where at this time for the summer months. And so spending is slowing down from outside the country, perhaps from even inside the country, Jamal. You talk about Vegas being slow. Hotel rates are coming in. I suppose you have to pick your fighter. This is, you talk about fat tails and big outcomes and having very little conviction right now. If you look at the New York Fed nowcast, you think the economy is just peachy keen, 2.86%. Hi-ho, that's great. That's exactly what we want to see in real terms. The Atlanta Fed update today, however, is apocalyptic. Minus 3.7% for the first quarter. Even if we strip out all of those nasty gold imports, we're still looking at a minus 1.4% contraction for Q1 GDP. If we want to split the baby here, we can still say that it's probably close to unchanged, but minus 3.7% plus 2.86% now gives you a median point that's going to be in negative territory. Jamal, where's the silver lining throughout all this if we're expecting a sharp contraction in economic activity in the first quarter?
I mean, the only silver lining is clearly I would say nobody knows exactly what's going to happen, right? I mean, we've seen over the last couple of years, let's go back to 2022 when we had no idea how things were going to be affected by the rising rates, cycle. We had no clue. And even as we started to come out of it in the end of 2023, we had no idea. So, I mean, this is obviously trying to factor in what they figure tariffs are going to do to our economy and to unemployment, et cetera. But I mean, honestly, we just really have no clue, and I think that the uncertainty that's the biggest word we've been using on the show for the better part of a month. The uncertainty. I mean, you can see it in markets, you can see it in a lot of different other asset classes. So, honestly, that's the only silver lining I could see. We just have no idea what's going to really happen.
As traders, we say strong convictions held loosely. A divergence like this between the two GDP trackers that I follow that typically move at least in the same cadence. They don't have to be at the same level, but they typically follow the same cadence. I have no conviction in any call right now, and I actually think that's an important point here. Between, maybe a disclaimer for myself personally, between now and the end of the day tomorrow, I will say that I feel like I have absolutely zero edge.
Yeah.
And that scares me a little bit. That scares me a little bit because usually I have something where I could point to and go, yeah, I could rationalize why I'm placing this trade for a number of reasons. It could be a long-term fundamental view. It could be something like, the VIX 1 month, 3 month spread blows out to 1.15 as typically occurs at a bottom, right? You see some type of multi-year high in volumes near a significant low or an IVR spike into the 50s or 60s. I don't know what any of this means. So I feel like today is a good day that ahead of what is probably going to be a significant event risk period, neutralizing what's on the table might not be the worst thing to do in the world. Because even if you think that you're very fearful and stocks are going to get slugged tomorrow, does that definitely mean that the bonds are going to be a place to hide? What if it gets so bad that it's a correlation 1 event, Jamal, and everyone says, you know what, I just need to raise capital, and even something like gold you can't find refuge in? There's also a spectrum where stocks don't sell off and gold just gets whacked and bonds get whacked because the growth scare is over and it becomes a risk clearing event. I feel very uncertain right now. And I think as traders, one of the most important things that you can do is just recognize when you don't feel like you have an edge and perhaps you need to take your foot off the pedal. I find myself in that headspace today, and I don't know that's a good thing. Anyway, so now you're back 10 days later. You're looking for clarity. I have none to offer you, sir. But I think that means we just need to rest on our mechanics. You have to just trust the systems that you're operating within and not let the noise or emotion get to you.
You do. Hover over 318 because this is exactly what I'm talking about. You can see what's the close for that day on 318. Just read that off for me.
56.69 and a quarter.
Yeah, well, look where we are now. You see what I mean? That's exactly where I left the market, and this is exactly where we are now. It's the craziest thing. I agree with you. I don't really feel like I have any edge right now either, in any one way, shape, or form. And there's been plenty of times I've wrestled with, should I just take everything off, right, and just sort of sit on the sidelines and watch what's going on here? Because it's been a real tough market. This is one of those times where I think you can pat yourself on the back as you're going through this. This is a real tough market, and the fact that you're going to make it through it one way or the other is going to be a learning experience. But when I look at this chart right now, it seems as though, I mean, there's, you guys zoomed in more, of course, but I mean, it seems to me there's clearly a solid, 10 to 20 trading days before we even potentially break out of this, which is a lot of chop and, again, a lot of uncertainty in the meantime. So this is definitely one of the tougher markets that we've had to deal with for a while. And it's fair to start bringing up echoes of 2022 because that was a similarly tough market.
Yesterday on Futures Power Hour, Ilya and I were looking at this bullish engulfing bar key reversal on the 4-hour time frame, noting how it could mark a temporary low. I would point out that we just had another one of these, not key reversal because it's not at the exact higher low, but in this case, it's still engulfing, move below the prior candle low, close above the prior candle high. So it does show that there is some positive technical, building blocks starting to come together right now off of the yearly low. We did overshoot a little bit. It would favor that there's potential for more squeeze opportunity to the upside, dare I say. But again, like looking at some of the smartest people that I follow in terms of market research, the the median point, and everyone was like, I guess we'll see what happens. Everyone's pretty dour and down. The vibes aren't great. And yet that also begs the question, if this is already priced in, what do we have to lose? So ES right now, 41.3 IVR. We've seen VIX, spot VIX jump up today a little bit. They were actually higher over the course of the session. They've come in as the day has gone on. We've seen this equity market rally continue through, but it's a 21.96 Jamal. What do you make of vol at these levels, which, it's basically where it was when you left last time?
Again, worries about how the tariffs are going to affect the economy, worried about how tariffs are going to affect unemployment. Speaking of, jobs report later this week. Again, it's still early on that one. It's not like that jobs report should reflect anything that's going on. Maybe it reflects some of the losses in the government, the job losses in the government. But again, I mean, VIX is just hanging around up here, and the slightest new bit of uncertainty could drive this thing upwards of 25 to 30, right? So, I mean, and I think that's pretty much the take-home message here. As of right now, we're just waiting for more clarity. There's really not much else we can do other than be hostage to clarity, really.
Hostage to clarity. That's not great. There is good risk-taking across the board here today, though. I mean, even Bitcoin and Ethereum are trading to the upside. I think that says, enough about people's willingness to try to potentially jump in on things. In terms of the sector performance here for the S&P 500, again, small silver linings on this bounce. Consumer discretionary up 1.38%, retail up 1.28%, tech 0.38%. So you're seeing some of the names that you'd want to see at the top of the pile. And on the flip side, I mean, healthcare is underperforming. Metals and mining are underperforming, which gold has effectively been an inverse trade to the stock market over the past few weeks. So if metals and mining are down, gold's off today, that's probably good news for equities. People, they're betting on innovation, not just a shiny rock that hasn't changed in thousands of years, Mr. Chandler. We're back. We did the normative determinism thing here in the Russell once more, though. We hit 2K earlier this week. Do you see any rhyme, reason, rationale to look to the Russell right now as opposed to the S&P or the NASDAQ?
Yeah, no, I mean, if you're scared to trade the NASDAQ and the S&P, you're certainly not trading the Russell right now, right? I mean, honestly, the ones that you should be looking at mostly are Dow and S&P and then probably NASDAQ next, and probably in that order too, just because of the volatility of the environment that we're in. You mentioned GDP and where that is. I guess the next thing to think about too is earnings, right? We got earnings in less than 2 weeks here. I mean, how are those going to be affected? I'm hearing people are already sort of slashing, earnings expectations as they even come up. And again, we haven't even dealt with tariffs yet. We haven't even seen a full tilt or even a full cycle where tariffs have affected our economy. So that's kind of the mode we're in. There's just seemingly a lot of fear. You're seeing a lot of consumer sentiment stuff, down, which typically, right, we often say in markets that you want to be buying when people are scared, and that's exactly where we are right now. I would say, again, it just really boils down to looking longer term, right? You got to look longer term in this situation. There's plenty of charts that'll tell you further 1 year out, this will all pass, right? That's kind of the idea. But for the near term, it's just too scary right now to sort of entertain the idea of getting long anything when you just don't know how markets are going to react. Again, I've gone on record and saying is I felt like a lot of this over the last month and a half, this reaction that we've gotten on the idea of tariffs seems like an overreaction. But whether or not I think that or not, you got to trade what's in front of you. And as of right now, I would say it's just easier to go further out. So if you're looking at, I don't know how you can, again, I'm not a scalper, so I can't really speak to scalping intraday basis as far as Russell or any of these other ones. But when you go further out, I think that's probably the best and more ideal thing to do. Because right now, volatility is telling you that we're whipping around quite a bit. And if you're not prepared to deal with that, then you just don't want to trade near term.
You mentioned that, we have earnings around the corner. This week, not so much. It's really next week. We begin to get the banks next Friday. So non-farm payrolls and then go back into earnings season mode. It doesn't look like it's going to be a good quarter. According to the latest reporting on earnings from FactSet that I have in front of me here, The estimated year-over-year earnings growth rate for the S&P 500 in Q1 is 7.3%. And while that is the seventh straight quarter of earnings growth, it is a significant step down from the 11.7% earnings growth rate that we saw for the same time in Q1. Okay, for Q1, we've seen that 68 companies have issued negative guidance versus 39 that have issued positive guidance. That may not seem like a lot, but given the ratio there, that's 64% of companies are issuing negative guidance so far. That's above the 5-year average of 57%. So you could see as we're getting ready for earnings seasons, the bar's being lowered. And you're starting to see some companies warn investors that this may not have been a good quarter, folks. Obviously, if that's going to be the case, you have to envision a market where, with a PE ratio still above its 5 and 10-year averages, there could be more valuation compression ahead. It's that golden goose, Jamal. Growing economy, expanding corporate earnings, stocks love it. If the economy's shrinking like the Atlanta Fed GDP now suggests it may be doing, and earnings growth is slowing, stocks don't do well with that kind of policy mix, even if the Federal Reserve comes in with lower rates.
Yeah, man, I don't know what to make of it all. Like you said, I've had, like you were talking about earlier, as far as not having any edge, I've had a couple of times over the last few weeks, like, am I off here? Should I just call it quits and take things off? Again, I mean, I've mostly had shorts put spreads that I've been rolling more recently further out. Some of them have even, been assigned on the short side and just had to close out the rest. And that's just kind of been most of the trade more recently. But it's like we said, at some point or another, this will all figure itself out. The hardest part about this is there really hasn't been any hard deadline that hasn't been met, right? So if there's any one thing I'm looking forward to, it's over these next 2 days to have this deadline. Let's see what happens, and let's begin to move forward off of this tariff thing. But something tells me it's not going to happen anytime soon.
You mentioned the close from when you were here last, 56.69 being that close. It's funny how we bumped into that area yesterday, right? There's a little band down here if we want to be. We can actually draw this a little bit fatter. But if we think about where you were last and you say the market really hasn't done much of anything in recent sessions, this feels like this is a place where it would get stuck. And if we can't clear this out, you begin to see how we're setting a series of lower highs and lower lows, and we're no longer exhibiting that bullish behavior. The one characteristic, or rather the two characteristics that define the downtrend in February into the first half of March, were the fact that you had no closes above the 1-week moving average, and you had no closes above the prior day high. Over the past week, we've started to see that play out again. 26th, we see it here on the 27th. We have it on the 28th. There it is on the 31st. New closing levels to the downside. When we rally back, we're not closing above the prior day high. We're not getting back above the 1-week moving average. Down here today, we are rejected near that 56.69 level when we last saw you. We're rejected at that 1-week moving average, which comes in at 56.82. And are we going to close above the prior day's high? That's 56.72.75. Maybe not. So there are you could see the contours of that more bearish momentum profile forming even in the midst of these rebounds that have generally had bearish flavors to them, very defensive flavoring to them when you looked at the sector performance. Today's improvement notwithstanding, got to be very cautious out there. This feels bear trappy, or rather bull trappy to a certain extent, like it's sucking people in before it takes another dunk.
Yeah, no, definitely. It does kind of have that feel. I mean, again, you can look at it and see some of the long wicks on these trading days, right? I mean, that tells you a lot in the ranges that we've had. I mean, today we already had a 94.5 handle range. Yesterday, 139 handles. Day before, 145. So big ranges here. And again, referring back to that volatility, you're saying that's in the 20-plus range. I mean, at the very least, we know it's between 1 and 1.5% in either direction in the S&P from day to day. So big swings, man, that we've been seeing. And again, that just tells me that the market is really nervous about what these tariffs are going to do to our economy, to unemployment, GDP, et cetera.
Jamal, we haven't talked much about the NASDAQ here today, but it's been really a game of the Mag 7. We're going to step off futures for just a quick second here and take a look at the absolute devastation that's occurred. We're talking about drawdowns of about 25%. We are off the lows here after gap opening lower to start the week. It's an area where we found support in March, though. And so now as we make our way into April, just because of how these names are so heavy in the top line index, unless the Mag 7 really stage a comeback, it's going to be incredibly difficult for the NASDAQ to even consider moving back towards its highs anytime soon. What is your take on the overall Mag 7 complex right now, given the fact that we're basically where we were when, prior to vacation?
Yeah, I asked Josh a similar question yesterday about the idea of, do we need those names to sort of bounce back for the market to at least just regain its health? I mean, we're not even talking about a new high, just to regain its health. And I mean, obviously, just from a percentage standpoint, yeah, we do. I mean, obviously, they comprise a good bit of not only the NASDAQ, but of course, the S&P 500, and in some cases, a couple of them within the Dow, right? But when I look at them now, I really kind of start looking ahead at, and I was just looking on the platform here at some of them and when they have earnings, because I really think that's going to be a very tough week. I mean, when you're looking at the 22nd, the 23rd, 24th, whether it's Microsoft or Apple or, Amazon, 29th for Amazon, 24th for Google, like that's going to be a really big week once again, sure. Right? Typically in the past, though, we've been like, is this going to be the week where the market hits new highs because they're pushing new highs, and are they going to do enough? Now it's a question of how much are they going to talk about tariffs and how much it's affecting their business, right? And so I think that's the real next big catalyst when it comes to these names. And will they just help us get back to even? Will they, or will they create new lows because of how bad things are or forecasted to be? So that's what I think about when I look at them. I mean, we got a few weeks here before we have to really analyze that, but it's something we need to think about for sure.
5663.75. It's a 0.18% bounce in the S&P. The Nasdaq's up by about 0.5%. Dow Jones down about 0.16, and the Russell off by 0.11. Jamal, the far more interesting action from my point of view, because I still have a short put spread on here in ES. It's just like meandering basically where it was when I put it on. There has been some theta decay. There has been some volatility, pullback. So I think, I've made a few bucks on it right now. I'm not super comfortable within it, but it's small, it's tight, it's risk defined. So I'm holding it on for dear life right now. Fortunately, what's helped me out the last few days here is stocks in 2025, spending most of our time playing in bonds and precious metals. Because again, if recession is coming, what's done best? Bonds and gold. So bonds here, they're off the highs again today as stocks have bounced back, but you're continuing to see this push to the upside right now. Now at the top side of our recent trading range over the past, we'll call it 6 weeks, and potentially putting in a high close of the year in both ZN and ZB. What's your take on the rates space as we eye Liberation Day?
I think we finally got it right, Chris. I think we finally got something that we can. This is probably one of the few things that we can feel good about. Now, it's certainly not giving us the same feeling. Well, I shouldn't say us because I don't have a gold position anymore. And the same feeling as gold day in and day out. But this is, this at least kind of starts to make sense when you look at not only what the metals are doing, but when you look at what bonds are doing right now, given the sort of situation in equities right now and how much they've been struggling. This at least starts to make a little bit more sense. And we haven't had bonds and equities make sense like this for a consistent period in well over 2 years, maybe a little longer even. So I still have my long calls in ZN and ZB. I'm certainly cheerleading over here. I want to see more, honestly. But at the same time, I am a little worried that this whole thing could reverse itself, right? I mean, again, there's the uncertainty. I mean, are we really going to have that much, are we really going to have that much issues with tariffs? Are they really going to be as inflationary as we think? Or is, all this going to die down? The markets are going to resume, the equity markets are going to resume their move higher, and bonds are going to fade, and then we're going to just be left holding the bag with these calls here in ZN and ZB. So I still do wonder what's going to happen, but for the meantime, when I look and see, it looks like they're about to break higher, which obviously is going to be as a result of fear in equity markets. That's what it seems like to me as of now.
It seems like it's the opposite side of the coin. in the short term, right? Bonds are going up when stocks are struggling. Gold's going up as stocks are struggling. Today, you see gold come back in. You see bonds come off their highs as what? Stocks rebound back. It makes sense. I mean, if you're an investor and you're allocating an incremental dollar to, this is like from a long time ago, Bloomberg's Joe Weisenthal used to go on about this, but like if you're investing $1 into gold as opposed to the NASDAQ, you're betting against the future effectively, because you're saying that the use of capital to innovate that potential outcome is actually a smaller probability than just holding on to a rock that we dug out of the ground. And that's crude. It's a very simple way of putting it, but it also makes a very good point, which like if you're holding treasuries over stocks, you're not exactly betting on growth in the economy, right? Because you want to have exposure to the convexity of the growth in the economy if you think the economy is going to grow. I look at ZN right now, and it's telling us if it's the inflation pass-through, it's a one-off price hike. Powell's been making this comment a lot recently. Inflation rate, you get a one-off move from the tariff, you keep going along the same path. So the Fed's more concerned with the more significant decline in real economic output and the labor market. And so the tariffs go into play. The Fed says, yeah, you're going to see inflation in 2025 as we price adjust, but we're really concerned about the 26, 27, 28 decline in growth that's going to result because we're going to have a weaker labor market, because we're going to have structurally higher inflation. Real output will be lower. In that world, left shoulder, head, right shoulder. As we break the downtrend from the September and the March highs, we're poking our way through a potential neckline here. A measured move brings you right up towards about 115.5 in ZN. Jamal, so I am very comfortable sticking to my macro framework. Lower growth is good for bonds. I trust Chair Powell when he says the Fed will react to lower real output and not the inflation, because that's what their literature tells them to do. And so if rate cuts are coming, the Fed is signaling that they're coming for bad reasons. Bonds love rate cuts for bad reasons.
This is true. We've seen that in the past, and you're right. I don't necessarily think that's what we want overall. Sure, that works well for our bond position, but I mean, I think overall, if we get that situation, equities are really going to struggle a lot much more. So it
becomes problematic.
Yeah, it definitely.
The world that we're painting here in bonds is a dark place.
Let's make no mistake.
For the stock market.
Make no mistake. And honestly, I mean, I don't really see much other way happening, honestly. I mean, I don't really see a healthy situation besides that. So I guess this is pretty much what we have to brace for at this point.
Volatility is shot up here too, for what it's worth. ZB, it is a bigger product, twice the size of ZN, and people may find a little bit more comfort in trading the long end of the curve through a product like TLT. Granted, though, if you go over to TLT, because it's, we're talking about ETF based on the long end of the curve, you're going to find that same 46.4 IVR, right, Jamal? So this is not a market that people should look away from. I know stocks have a good deal of volatility right now. We're near the top side of ranges. But we have vol, and that ultimately is a tasty methodology. If this is a breakout, if we're moving to the upside here, we can see that our moving averages now have positive tilt. In fact, with today's move, we get a MACD buy signal for the first time since February 21st, since March 7th, between March 7th and today, which granted, that was a pretty choppy few weeks. It was in a sell signal mode in terms of momentum. Today, we finally clear those closing highs that we had back then, and now it looks like it's in bullish breakout posture once more. We're back in an uptrend, so operating around recent swing levels that we have here, 115. I still think there are good opportunities to look to sell put spreads. And at 24 days to expiration, Jamal, this is really what I need to be thinking about here, rolling this forward, right? I like the trade still. The 114, 116 short put spread, is there much more juice to squeeze out of this? No, I could probably pull those strikes forward now when I go into 52 days later on. We can operate probably a little bit closer now. So we'll go 117, 115 here, right? We'll go 117, 115.
In my mind, because I was actually going to ask you about rolling further up in my situation. I mean, I feel like everything that we're talking about, right? You're looking at GDP, we're looking at where markets are and how much more they need to carve out. Any possible chance of moving to the upside, but it doesn't seem that way. But when we look at these bonds, it looks like they could break higher. I mean, is this one, should we be extending duration on these, right? I mean, it's a logical question because I think this is going to take some time to really work through, right? So I'm in May right now with my calls. I'm thinking about going out to June. I'm not even sure if I'm going to stay at the same strike or go further up. That's the part where I haven't decided yet.
Interesting. Going out to June. What does the 117, 115 short put spread look like here in this month? There's not much.
Well, I was just saying for me. I mean, I'm in May already. You're in. I didn't realize you're in April.
Let me go out to here. That was the wrong DTE. Dang, Jamal, we can do the 115 short put spread, 115, 117 short put spread, 80 DTE, 71% probability of profit where we're risking less than 2 to make 1. That's a pretty dang good risk to reward, given the context of the situation. I think we're just going to roll this today. Let's just take the time now. Let's just take this now. There's no reason to. Yeah. Let's do that. We have this. Let's just close you and let's go into the other guy. All right, so we're making some adjustments here.
I just don't see this thing resolving, itself anytime soon. I mean, how long we've already been talking about tariffs since what? December, November. I mean, let's be honest. It hasn't just been for the last
young
month
man back then. Yeah, right. Jamal. Okay, so here's the thing, though. Why is it today a good day to make adjustments? This is 24 days to expiration. If tomorrow is a seismic event and the market says this is not going to impact growth because of whatever the details of the announcement say, bonds get crushed.
For sure.
And then you find yourself at the end of this week looking at 21 DTE where the market's moved against you, and you may be ultimately right. There's no reason to give up, hold out for those 3 days. I'm making the adjustments here now. I would like to get this off the board. I'd like to move the 114, 116 short put spread up to 115, 117. I'd like to do it at 80 days. There's a good deal of vol to harvest in here. ZN, I already have some chips on the table in the 111, 113 long call spread. That's 24 days to expiration. Likewise, at 80 days as well, along the 115, 117, playing on that inverse head and shoulders pattern, expecting to move up into the mid 115. So I'd like to see this go above my long strike. I'm very comfortable holding long bond positions in this environment right now. We'll have to reassess everything else, but duration really is what you want on your side, because tomorrow and then ultimately going into Thursday, you're then looking at the end of your trade window when you have to roll and expand. If you have profits, just buy yourself the duration so you're not so concerned with, theta moving against you and you're going to just get hit. The convexity goes up as we get closer to expiration. So take your profits now, get your duration, sleep easier.
100%. I mean, it makes total sense. You don't want to be in, again, it's the same thing we were talking about with equities. Near term is just too volatile. There's so much going on, and give yourself a little bit more duration in this environment because things just seem to change so much day to day. Sentiments, that is.
Hi. All right. Well, it looks like that just went through. So yeah, we had ZB M5 filled. We have ZBU5 working. We shall revisit shortly. It's a nice day for bonds, though. And with this big, this has been a sizable rally. We're up 3 points over the last few sessions. If you had short put spreads on and we're still holding out like I was, today seems like a very reasonable time as we get to the top side of recent trading ranges to make adjustments and not get caught.
But what do you make of
Liberation Day?
Big move in bonds, particularly in the 10-year today? I mean, is it really just more of like where the fear is already coming and why they're going ahead to buy, bonds? The fear is already happening, but yet it just, for whatever reason, to start the new month, equities are up. I mean, slightly up, if you will. I mean, it's kind of strange a little bit, don't you think?
Strange. It also makes a good deal of sense. If the tariffs are really coming in the manner with which they've been proposed at 20% across the board with really no outs for anyone. Tariffs, once they're on, they're difficult to take off. Just because businesses adjust, companies adjust. We saw this after the first Trump term. Did Biden remove any of the tariffs on China? No. I mean, businesses were like, hey, we're dealing with the COVID supply chain issues here. Adding another variable to this by changing our trade rules is going to just, please leave them on. So we did, right? You just keep them going. Businesses get comfortable, they adjust, they get used to the environment. I mean, the problem still is now we don't know what the environment is. So maybe that's the risk clearing event. But if the tariffs are in place, maybe the volatility calms down for stocks, but then do you worry about pricing in lower corporate earnings permanently moving forward? Do you price in permanently weaker U.S. economic growth moving forward? Because the tariffs are in place, and have we had any of the other fiscal policy changes that the Trump administration is talking about with deregulation or the tax cuts? We haven't yet, right? They just did a continuing resolution based on the Biden budget from last year, in large part. So right now, it seems like this is a window with which growth could actually suffer, and the Atlanta Fed GDP growth tracker continues to point in that direction.
Yeah, never did I think that my bond position would be my biggest hope for things going well in my portfolio. I mean, I really didn't. But this is the kind of environment we find ourselves in. And again, bonds have been a 3-year drawdown. So at some point or another, you figure they're due. And if there's any other time, why not now?
Why not now? Jamal, speaking of why not now, there's a little bit of profit taking in precious metals. Why not now? Gold hit a new all-time high today. We're worried about what may happen tomorrow. Not a bad day to raise a little bit of capital, take off some of the winners, deploy them into some of the losers. Gold obviously had its best quarter since 1983, best start to the year ever. So this is something where people may say, yeah, I can take some gold off and go bottom fishing in those 25% cheaper Mag 7 names. It's a 50.3 IVR, so volatility has bounced back here, which is really nice. You want to see that during a breakout. We continue to make progress towards the 32.25 target. I'm getting into the teeth of my roll window, and I haven't yet to be filled on swapping my contract out to a longer duration. So that is still very much a priority for me. But the metals exposure, I'm a broken record on this. Technically, it's positive. Quantitatively, you're getting the vol expansion alongside the price rise. And then fundamentally, the world is going through a regime change right now. And, regime change in the current context, people think of, troops overtaking some presidential palace and replacing the duly elected democratic leader with a military junta. The term regime change is actually rooted in economic history. And in economic history, you think about regime changes from classical liberalism into Keynesianism, or Keynesianism into, you could call it Reaganism or Thatcherism. This may be one of those significant regime changes now where, the ideas and relationships that we thought underpinned the world for the past 20, 30, 40 years are about to be turned on their head. And in that kind of environment where, again, we really don't know how things are going to play out, do you trust fiat currencies or do you trust the hard rock that's been around forever? It's a store of value. So I like the story here. I fully well aware this could get smacked down tomorrow. Everything could get smacked around tomorrow and on Thursday. So I'm just gonna get myself more time here. In an ideal world, Jamal, I'm sitting at 23 DTE. We got to take care of that. I want to go out to 85 and then just long the 3200, short the 3250 here. No reason to overthink this. It's a 43% probability of profit. It's a little less than 2-to-1. I'm happy to continue to roll gold calls and use the profits to fund further out of the money positions as long as this uptrend is in place. It has served us well.
You talk about ideal world. I mean, this is the ideal situation for gold, right? This is the time where you expect gold to be making this type of move when there's so much uncertainty and in equity markets, there's so much uncertainty across the globe, and central banks are buying gold right now. At least that's the word on the street, and it would seem that's the case right now when you look at the way that gold's been moving more recently. So, like I said, when I got out of the position, it was more of just because I thought there was a better opportunity in equities. While it seemed like a pretty good opportunity, it's yet to materialize itself, right? But gold has been, strong throughout. And again, a lot of it has to do with this uncertainty around tariffs. And I think as long as we continue to have uncertainty and worry about what's more inflationary, then gold is going to continue to do well.
It's fascinating because gold not doing so hot today, off by 0.15%, although it did touch a new all-time high. Something to keep in mind here. We saw this back on March 20th, where that session we popped up to a new all-time high, but then couldn't close there. And that ultimately represented a small pullback window to the 1 week moving average where we got pinned. You could almost see that playing out here, where tomorrow then you get another down day and then pinned at that 1 week moving average again for a few sessions before you continue to advance. This is
it's sorry not to cut you off, but that's funny you say that, because that's kind of what I'm waiting for to do a short put spread in gold.
Right. Yeah, get a little bit of a pullback so you can get better pricing as opposed to having to ride out a drawdown. That makes sense to me. This is a chart that's going parabolic, though. And I think that's something we all need to be aware of on a longer term time horizon. If we look at a weekly chart right now and you scroll back, this thing, I don't even think a weekly is going to do it, maybe even monthly. But this thing is really going parabolic right now. It's, I don't want to call it a bubble because it's gold, but it's an environment where when you start to get a pullback, you could really see something nasty occur. So I'm playing it the way I'm playing it because I don't want to be short a put spread if this thing falls apart. I'd rather just put chips on the table and have them taken away from me, as opposed to needing to, like, okay, I'm losing more money every day. My risk is completely defined moving higher. But the technicals haven't led us wrong or astray thus far, and they still point to the upside, so it may be a parabolic chart. Got to stay with my winners, man. You don't walk away from the table when you're on a heater.
Yeah, that's the way it's supposed to be. And again, when you see a day like today, it actually should give you a little bit of comfort. Like you said, it is parabolic, but again, the fact that it's pulling back today is actually a good sign. If it was continuing to go further, day in, 5-10 days out, which again, we saw that before, and that was a little bit of somewhat of a red flag in a way. I think when you see healthy action like this, you can rest comfortably knowing that, there's some pullbacks here and there, but that just leads to higher prices eventually.
Hey. Higher prices eventually. Silver. This is off a little bit more today. It's had 3 days in a row after popping up to a yearly high where it's pulled back in. We used that opportunity last week, Jamal, to move out of the short-dated long silver exposure and buy ourselves some more time. So I'm out of SI K5 and we're operating an SI N5 right now. I'm still playing the long 36, long 37 call spread. Happy to hold on to it. 56 days to expiration. I may buy myself a little bit more time here, but then again, gold and silver would have staggered, contract expirations for the two trades, the long call spreads. And that gives me, again, small layer of diversification between the long metals exposure. Silver's obviously not having a great time of things here, but the breakout conditions remain in place. I just got to stick with what works. Happy to get off of it when I'm proven wrong, but haven't been proven wrong in 2025 thus far, and it's an uptrend. So I ride uptrends.
So it's interesting to me that I'm seeing silver, a couple of days down in a row, and obviously silver is a little bit more volatile than gold. The one thing I think people should pay attention to, I've seen people talk a little bit more, and I'm going to mention this today actually on Engineering Trade. I've seen people talk a little bit more about the gold-silver ratio. I think the interesting thing about the gold-silver ratio is when you look at it across history, anytime it touches 100, I think things are really interesting. Those are really fascinating times in our economy or a global economy, honestly. Obviously, it touched over 100 in 2020. If you look back, you see 1991 was a time where it touched. So obviously when gold is outpacing silver by that serious amount, I think that's when you see the real fear set in and gold's really moving much higher than silver. So I think if you're going to look at that ratio, 100 is a level that you really need to pay attention to because it's usually real serious global strife, right? Like again, the COVID time, or I know another time was 1991 during the Gulf War, things like that.
Gulf War recession, yeah.
If we get, if there's more, if this fear eventually ratchets up even more around tariffs, I could see this thing really, that ratio end up really going 100 and a little bit higher. So I think that's something to pay attention to.
Yes, we talk about policy uncertainty being a driving factor, feature, whatever of this market. There are various ways to look at this. I'm just going to pull this up right now. This is from Fred. The St. Louis Economic Database. And we see here that our economic policy uncertainty index for the U.S. is sitting at its highest levels that we've seen since COVID, and prior to that.
On the screen right now.
Oh, it's not on the screen right now. Oh, well, that's a bummer. Well, it should be on the screen right now. It shows that it's sharing on my screen right now, on my end. Well, that's, deeply unfortunate. Either way, Jamal, take me at my word. People should look up Economic Policy Uncertainty Index for the United States at the Fed, St. Louis Economic, their database there. And you'll see that, again, it's at the highest levels, though, since COVID, since the global financial crisis. But we're not in a liquidation type of environment right now. So gold and silver can hold out. If this uncertainty translates and spills over into a correlation one type event, gold and silver are going to get beat up because they typically do not do well at the start of any financial crises, if you will. Jamal, let's turn our attention to what's happening in energy. I know that you and I had some vested interest in natural gas a little while ago. I was short of put spread and got knocked out because it fell below my key levels. It then ultimately rebounded and is trading in a place where had I held on to it, it would be making money, but I'm not. So I'm not chasing here. As we turn our attention back to the chart, can you tell me what you're doing with natural gas? Because likewise, it feels like this hasn't really done much of anything.
I am out, my friend. I am out. I held that position for quite some time. If you remember, it started off as a short call spread, the 390, 410 call spread, and then eventually, after a few weeks, I did put on a put spread, the 350, 370. So yeah, it would have been awesome just holding on to it to watch it go below 390. As we sit here now, it's sitting 396. But I literally just closed it yesterday, and it looks like it's a little bit lower than what I closed it, but not that much lower. It was just time for it to go. I was able to salvage some of it, but for the most part, it definitely just broke my spirit. There's no other way to put it. But that's what happens when you play with nat gas every now and again. You're going to get burned a little bit. So yeah, I'm out of the position altogether now and just looking for the next thing.
Natural gas is really interesting because while it's not necessarily part of the conversation, one could imagine that, foreign countries just turn around and say like, okay, you're putting these tariffs against us. We're putting tariffs against you. We're not going to buy your energy products either, right, as part of the reciprocal efforts. And that would lead in the short term, just given how much we produce, right, this would lead in the short term then to a domestic market being oversupplied. This is an example that we brought up last week in talking about the impact of tariffs on, say, copper versus wheat. Why were the tariff announcements driving copper higher and the same exact announcements or correlated announcements driving wheat to the downside? And it's a form and function of the supply-demand imbalance that we have here stateside. Copper, for example, we have to import more than we produce because we produce about 1.1 million tons a year and we consume about 1.9 million. So we have to make that up by bringing it in. If we're going to raise tariffs on the things that we're bringing in, what does that mean for the domestic supply that it's currently undersupplied? It's going to go up in value. There's a bottleneck there that already exists, and now it's inflamed. Wheat's the exact opposite. Like we import 70 million bushels of wheat every year, but we export like 750 million bushels of wheat every single year. So it's a 10-to-1 type of outcome where if you close off our export channels, we just have all this wheat sitting within the country now. Natural gas is the same way. We're the world's largest producer in LNG, bigger than Qatar, bigger than Australia. If we want to put up trade barriers that make it more difficult for people to buy our natural gas, it means more of it circulates internally. That could potentially be an inflation offset. Let's be clear, right? If we're going to have more domestic energy supply circulating in our borders in the short term, it could bring down prices. But if prices go too far, Jamal, producers aren't incentivized to do anything. And that Dallas Fed Manufacturing Energy survey that we saw last week, they told us that if oil prices go further down from here, they're just not going to be profitable and it's not going to be economically feasible for them to produce anything whatsoever. Employment within the industry will fall itself. I see a potential, I say all of that. We have a potential tariff trade here. Left shoulder, head with that big blow off top, maybe a right shoulder coming together. You have a neckline near 380 in natural gas. You have decent volatility. Maybe we're looking at a top. Maybe we're looking at a tariff-induced top. The obvious caveat, Jamal, that natural gas really doesn't march to anyone's beat but its own. So a head and shoulders pattern here probably taken with a grain of salt. But it doesn't look healthy, and it looks like it may be topping out.
Yeah, I mean, I could see that happening. It could easily be topping out at some point in time. But again, like you said, it really doesn't march to the beat of anybody's drum but its own. And it definitely has been doing that for the last couple of weeks. I mean, we saw those big moves at the beginning of the month, of last month, I should say, which, seemingly came out of nowhere. But again, it was definitely tariff induced. So this one is one to watch going forward. I mean, it seems like out of most of the commodities, that's been the thing. That's really been the story with this tariffs, right? It's been the commodities. When you look at gold, you look at silver, you look at copper, you look at nat gas here, and you look at oil. Like the moves that they've made have been sometimes confusing and yet sometimes completely make sense. That's exactly the kind of market we're in right now. When you're seeing commodities move as wild as they have because of this possible talk on tariff news, I mean, that's the kind of market we're currently find ourselves in.
Oil prices, 13.3 IVR. That's bad. Here's the good news. We're at the midpoint of the 52-week trading range, just a few ticks away from it, in fact. That comes closer to $71 a barrel. We're at $71.30. Momentum is clearly higher. Yesterday was a big squeeze to the upside.
Yeah, what was with yesterday, by the way? I really don't know.
I think it's geopolitics between, Trump said that he was pissed at Putin and was going to slap sanctions on secondary sanctions. So like if China's trying to circumvent or India's trying to circumvent the primary level ones, then the US is going to go after China and India, for example, to disincentivize them from buying Russian oil. And then he's out saying that he's going to, he is going to bomb Iran unless they come together for a nuclear deal. So it seems like geopolitics is coming back into the fold for oil. Here's the thing, that's just a theory. If it was, wouldn't we see an IVR higher than 13.1? So I talk about having no convictions held whatsoever right now, or want to be a strong convictions held loosely. I have not had any conviction on oil since the fall. I've avoided it. I was hoping to see some vol as a result of the headlines this weekend. There's still nothing here. So I'm lost in the sauce for CL still. It's a difficult market for me right now.
Same.
I'm not going to trade something I struggle with.
Yeah, same. I mean, I don't necessarily see any, reason price-wise or vol-wise to really trade it, so I've stayed away. I'm just keeping an eye on it, keeping an eye on prices. It was probably one of the first things I noticed when I came back. I was like, wow, I left this thing at 60 and something and change, and now it's at 71. What just happened? But outside of that, yeah, I'm in the same boat. No real interest in trading it. I really haven't had much interest in trading oil for most of this year, actually, which is unusual.
No, and then there's, of course, the other side of it, which is if we had just been doing the short iron condor trades wrapped around the 6-month or 12-month high-low range, would they have been successful? Yeah, basically every time. If we sold puts near support, would have worked? Yes. Why didn't we? We had a low print of a 1 IVR when oil was trading below, right? So it's just kind of falling like a knife through butter, and there's no volatility involved. What's the incentive to try to sell the puts? This thing could get a lot worse. Again, difficult market. There's been better opportunities in bonds, precious metals, heck, natural gas at points this year. As we wrap this up, let's take a quick, brief trip over to the world of currencies, where we find the dollar having now turned lower versus most of the majors over the course of the session.
Yeah, but are you surprised the dollar isn't moving more?
Yes, I am very surprised that the dollar is not benefiting more from the tariff talk. I think a lot of people from Trump 1.0 assumed that the tariff talk would be just that. And ultimately, tariffs were raised and levied, but it wasn't done in such an arbitrary and capricious manner. Whereas this time, given how Trump is going after allies and then the juxtaposition of, I see a lot of spending occurring in the Western world now to make up for the deficit that will occur from the U.S. pulling back. There are other alternatives right now for investing. Right? You don't need to just invest in U.S. mega cap tech. And if you don't need to invest in just U.S. mega cap tech, those incremental dollars that have been coming abroad from overseas in recent years, they're no longer coming to our borders. And so if you're a foreign investor and you want to sell your Meta or your Amazon or your Tesla because you want to buy a German concrete maker, because you want to bet on the German infrastructure spending bill, that also means that you're selling out of a dollar-denominated asset, and you have to convert those dollars back into euros. So I, unfortunately, am beginning to come around to the very strong opinion that the currency market is reinforcing the flows that we're seeing in equities, if only as stocks are going down, the dollar's getting hit because people are pulling capital from the United States.
I mean, that's what it seems like to me. I mean, it's just kind of weird that we haven't seen sort of bigger moves in the dollar for exactly the reasons you talked about as far as Trump 1.0 earlier. So this has been one of the more, this has been one of the more the harder things for me to really wrap my head around more recently. I still have the yen call spread that we put on, a couple of weeks ago, and still trying to get an idea of eventually if that gets bid or sooner or later. And again, maybe this is one of those where over the course of the next couple of days we see a move, but I'm just surprised by the muted moves in the dollar.
Currency like the yen, big car exporter, that could have an impact here. We also see that Japan, South Korea, and China come to some sort of arrangement to work more closely together to head off the U.S. tariffs. So maybe Japan's looking for a new market for their vehicles, and China certainly buys more vehicles than the U.S. does in any given year. What's next on the calendar? I mentioned the reciprocal tariff plan announcement. It's moved now. It's no longer 3 p.m. It is now 4 p.m. Eastern time. That's probably the most important event on the day. Of course, it's coming right as cash equity markets close. Auto tariffs last week, they said it was a 4 p.m. announcement. It really didn't come out until like 5:20 p.m. Eastern or so. I don't know if we want to say that's definitely going to happen here with it being delayed, but it's probably going to be after the cash market closes. So if you have position adjustments to make, get them done today and tomorrow. We wind down the show, brief bit of education. Most people know the market sectors. There are 6 of them. Head over to tastylive.com, top banner, learn beginner futures to learn more, or click the link here at the bottom of the slide. But we are done, Jamal, because we're running long, and we want to be courteous to our friend and colleague, Mr. Doctor, that's
Mr.
okay.
Doctor, yeah.
to Dr. J. So we're going to make room here. You and I will be back later today. You have engineering the trade. I'll be back for overtime. So we will see everyone soon. Good luck trading. Until then, after a brief break, Dr. Jim Schultz with From Theory to Practice.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all 3 guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday Tariff Eve edition of what it is that we are trying to do, man. Thank you guys so much for being here and being a part of what it is that we are trying to do. We're not going to figure out what that is today, but it'll be just like every other day. We couldn't do what we do without you guys, so thank you guys so much for being a part of the network and being a part of my show and all the other amazing shows that we have here on the network. Thank you guys so much, so very much. If you're watching over on the Tasty Live Network, then hour to actually bounce on over to YouTube, because you can join the conversation, you can join the discussion, and you can communicate with your brethren that were also watching the show. Man, you can celebrate if you're a bull or a bear. You can commiserate if you're a bull or a bear. There's a little something for everybody on a day like today. And oh, by the way, happy month anniversary to you all out there. So, John, bring us into the market, man. How are we doing? How are we looking? Man, I don't know. You mean the S&P is down 10 on the day. It's been a pretty crazy day. I mean, they were significantly stronger just a little while ago, and I think the morning was kind of weak, if I'm not mistaken. Got the risk-free instrument, also known as the Nasdaq futures, extremely high-risk product, up 18. You've got the boomers down 187. You've got the Russell 2000 futures down 10 on the day, and then look at gold getting smashed down $1.70. I told you guys it was coming. Like I told you guys, this thing was going to get smashed to smithereens, and so I will now take that long-awaited and hardly earned. Hardly is probably right. I was going to say hard-earned, but hardly earned might be more correct. Victory lap with gold now down 2 points on the day. And so if you look at volatility, you got volatility futures up 20 cents. You've got the VIX, the old VIX. Spot volatility, the cash volatility for all my volatility bros that might be watching the show, up 24 cents on the old VIX. And yeah, I mean, it's all going to happen tomorrow, man. Like, it's all going to happen tomorrow. Like, apparently now, there's more tariffs, I guess, as of last night. Like, now it's not going to be just some countries. Like, it's going to be all countries. Like, everybody gets a tariff. Like, you get a tariff, I get a tariff. Like, it's hitting everybody now. The Carolinas done. The Dakotas done. Like, Iowa hit. Everybody's gotten absolutely, going to get absolutely blasted by the old tariff day tomorrow. But we'll have to wait and see what actually ends up happening. So, all right, what I want to do though, let's go through. We got a couple of plays for tomorrow. So I actually think that what began to happen today, like what was kind of a bit of a prelude, if you will, into what might happen tomorrow and for the rest of the week. So I think that, obviously short equities and long metals has been the play for the last, let's say, 10 or 14 days. I think it's going to start to become time to reverse that play. I think that long equities and short metals is going to be the move for the coming days, maybe even coming weeks. And I think it could begin as early as tomorrow. And then, of course, on Friday, we've got NFP. Right, Friday, we've got NFP. And then we also, if I'm not mistaken, we've got Uncle Jay on Friday. Right? Jerome Powell is going to speak to the world on Friday at like noon or 11:30 or noon 30 or something like that. And I'm going to tell you guys something. If he goes purple tie again, like, I don't know what to believe, man. If it goes to like 19 in a row, there should be 19 appearances, 19 public appearances with some gradient, like some hue of purple that he has shown up with. Man, it's really, man, it's going to be something. But we've got that coming on down the chutes. I think we're going to play the market to the upside, and we're going to play the metals market to the downside to see. Let's just kind of see what happens. Just a little something. But I see you guys in the chat, man. I'm going to get to as many of you guys as I can. Wow, you guys are already in the house, man. Look at you guys. I see Harold's in the house. I see 40% is in the house. Lucky's in the house. Paul Heyman's in the house. Junior Mack in the house. Sam L in the house. David Gallimore in the house. Amelia H in the house. Ranch is in the house. Catch That Voltage is, I think, in the house. And so, man, look at you guys. Look at you guys. I appreciate you guys so much. All right, so market's selling off now, though, apparently. So maybe we got a little jump the gun on the old tariff action. All right, let's go in here, though. There's actually not that much that we need to do in terms of the current positions. And so it's, I don't really, MES and MNQ, I mean, these are two strangles. They're both fine. We let them cook right now. We just kind of let them simmer on the back burner there and then just kind of see where the wind blows us from there. But then, we've got Apple. Obviously, this is our straddle that we're going to hang on to. We got the stock essentially where we want it to be, but we're not quite to even a scratch on the position. So I'm going to sit tight for now and let that guy kind of cook. Look at Best Buy, though, man. Look at Best Buy, our long stock synthetic. You've got Best Buy up 24 cents on the day. So that is looking pretty good. It's looking pretty good indeed. And then the rest of the positions we could go ahead and, belabor the point. We could go ahead and, uncover and unearth some commentary. That wouldn't be that difficult to do. But I don't know that it's going to be much. I don't know that it's going to be valuable to us to do that, because I'm not really going to end up doing anything in any of these positions, because I like where everything is, essentially. I mean, Chipotle is at 51. You got the strikes at 50 and 56. That's a do-nothing situation. You've got Nike, right? This is our trading, our trade type covered call. So not like an investment style covered call. So we're looking to get out of this guy, fairly quickly if we can. And so Nike up today is obviously good. And now I'm obviously kicking myself for selling that 67.5 call when I was like, we should have sat tight and done nothing and just, played the long shares to the upside. But again, it's always easy after the fact. Everything looks obvious in the rearview mirror. So you got to give yourself a little bit of slack when you're doing all these things, kind of in the moment. And then, we've got Reddit. Reddit's finally looking okay. Starbucks, Shopify, Spotify, whatever it is, and then Walmart. Yeah, we're gonna sit tight. All right, let's get into let's get down to business. Let's do SPX. So I think it's time, guys. It's been at least 18, 24 hours since we've done an expected move butterfly. So I think it's time. Like it's been a minute since we've done this type of trade. I think let's play the market to the upside. We're gonna go through the tariff day tomorrow. We're going to go through NFP on Friday. So I'm going to go through both of these guys. I normally would play like an overnight move, which is kind of what I intended to do. But I don't love the fact that, Wednesdays, I'm not with you all. Like Wednesdays, I get to obviously be with Arrow for today's assignment, which is amazing in its own right. But it kind of breaks up the momentum of what we do Monday and Tuesday. And so I would really like you guys to be able to see whatever we do on this trade, so this way we'll kick it out to Thursday, Friday. So that way you guys can kind of see, even if I close the trade like early in the day, you guys will see it later that day. Like if I do an SPX butterfly for tomorrow and I close it in the morning because it works, and I close it in the afternoon because it works, we're not going to talk about it until Thursday afternoon during the show. And so that's a pretty significant time lag. And so I'm like, now let's do a Friday expiration. It'll give us more chances to be profitable on the trade. It will, of course, kind of reduce the likelihood that we're able to hit a home run. But man, can we hit a single? I mean, not if we're Rafael Devers, but if we're any other major league player, sure. Can we hit the baseball? Not if we're Rafael Devers. But if we're any other major league player, yes. And so that's what I'm going to try to do for the next couple of days here with SPX. So let's go in here. We'll go to Friday, April 4th, 3 days away. And this is going to be wow, look at that expected move, man. That is something. Wow, 126 points expected for the remainder of the week. That's a pretty beefy move if I've ever seen one. And so that's got a little something behind it for sure. And so 126 points, we're going to play the expected move butterfly in SPX. And look at this. You've got the index at just under 5,600. The top side of the expected move, of course, is going to take you up to 5,720 based on obviously the expected move of being, plus or minus 125. So that's pretty crazy stuff, man. That is some pretty crazy stuff indeed. And so let's go ahead and let's see here. If I delete that and I go into, can I do like a 40 pointer? It might be a little bit too expensive, but let's try a 5680, 5720, 5760 butterfly. I think this is going to be like $11 or something crazy. It's $4. Wow. Man, they're just giving these things away. Wow, they're just handing these things out on the street corner. Man, look at this. We can pin the short strike to the top side of the expected move. We can go 5680, 5720, 5760 for $4. That's pretty amazing. I think what surprised me here is I am more comfortable and more familiar with playing expected move butterflies in like the overnight cycle. And the thing about butterflies is, the more time you give them, the cheaper they are. And the reason why that is the case is simply because, the more time you give a butterfly, the lower the likelihood that you're going to catch it within the net that you want to catch it within. And so when you do like an overnight deal, especially around the expected move, it's like, well, that's the expected move. Like the stock is expected to go there. Like the index is kind of expected to go there. So you have to pay for that. That's going to cost you more. But here, by adding a couple of days, I'm actually just curious. So this is a 40-point expected move butterfly that's anchored on the top side of the expected move. It's only a $4. It's only a $4 trade. Now it's a low probability trade. I mean, it's, that's what you get with a butterfly. I mean, you're not going to get it. I mean, look at this. We're risking 4 to make 36. That's not going to come with a 50-50 proposition. That's not going to come with, kind of a high probability, tag on it. You have to be willing to pay the piper. You've got to be willing to, absorb a gimme if you're going for, absorb a gotcha if you're going for a gimme that is, high profitability. So I want to look, though. Let's look at a 40-pointer in the overnight cycle. It's going to be significantly more expensive than this one. I'll come back to this one. But if I were to play this thing in the overnight cycle, which would just be 1 day away, so April 2nd. I'm going to do the same thing. The strikes are going to be different, of course, because the expected move is very different. You can see it's only plus or minus 60 for, the 1 day overnight cycle. But let me do the same thing. Let me anchor my short strike at, it looks like it's right between 56.55 and 56.60. Let's go with, we'll go with 56.60 just because it's a bit more feng shui. But if I do $40 wide, this has to be more than $10. It has to be. There's no way this is going to be like $5.25. There's just no way, right? Okay, so it's $6.50. Wow, that's crazy. So it's not $5.25, but it's still a lot less than I thought it would be. That's really nuts. Man, so I like going out to Friday because it's even cheaper. And for all the reasons I talked about before, being able to talk about it on the show and have you guys follow along and stuff like that. But man, I got to be honest, guys. This one's kind of, I got a strong hankering for this one too. I don't really want to do an expected move butterfly for Friday and then hedge it with an expected move butterfly for tomorrow. That may not be a hedge at all, actually. And so we're not going to do this. I'm going to delete that. But man, I really like this trade. Just for the record, I really like this trade a lot. And if this were like a Monday going into Tuesday or a Thursday going into Friday where we didn't kind of have that today's assignment in the middle of the week, this is the trade that I would be doing because I would prefer to do the 1 day cycle because I think it's easier to make money if you get the move that you want. Tomorrow it's like, we're going to do this Friday butterfly, which is still fine. I mean, it's still totally fine because it is cheaper. And so if we do miss the mark, then we lose less, which is nice because we've been known to miss the mark from time to time. But it's going to be harder to make money. Like if we get a move to the upside, it's not necessarily going to just pay a bunch of dividends, pun intended. One thing we could consider though, let's think about this. So maybe, what if we widen this guy out? So what if we go 50 points wide, 55 points wide? Because $4 is pretty cheap. That's just over 1% of the account. I'd be okay going up to 6, even 650 like we saw in the overnight cycle. What if I push this out to 50 points wide? So I move my 57.60 to 57.70. So let's do that. And then I move the 56.80 to 56.70. Okay, so that's 615, 635 or thereabouts. I'm going to go with this trade. So it's a little bit more expensive than what we just saw, of course. And so if we miss the mark and the market just craters and, nobody likes the tariffs and nobody likes the this or the that or the whatever, then it's obviously it's going to sting a little bit more. But we now have a wider butterfly, which not only gives us more profit potential, which you can see right here by the max profit, but you can also see that the probability ticked up a little bit. Now, again, we're not talking about a high probability trade. This is not selling vertical spreads. This is not selling puts or selling strangles. This is taking a shot, right? This is taking a shot directionally on one side of the market or the other. So make sure you understand what it is that you're signing up for. We're not signing up for a high probability play. I'm not signing up for something that's, very likely to be profitable for me. This is more of a taking a shot type of deal. And so the probability is low, but it has ticked up a little bit. Part of the reason why it has ticked up is because by widening out the strikes, we are now casting a wider net into the sea. So we have a greater likelihood of coming back with, a little grouper, coming back with a little amberjack. Like, sure, there may be some pufferfish thrown in there too, but we may catch a little 8, 10, 12 pound tuna. Like that could happen too because we have a wider net. And so let's go ahead and, let's push this guy out. I like this a lot. So let's go, let's see. We'll go 625 because I got another one I want to do too, especially now that gold has caught a little bit of a bid in the last little bit here. Like again, it was down to 31.30 this morning, I think. And I was like, ooh, yeah, it's coming. But apparently not just yet. Not if your Chris Vecchios of the world have something to say about it. And so, yeah, the low on the day was, 31.30. And so we've caught a little bit of a rebound. Why don't we go in here? Again, nothing crazy. We're going to go to the Friday cycle too. But again, I know that the futures options and the metals expire at like 12 or 12:30 or 1 o'clock in the middle of the day. So you can expect this trade to be managed unless it doesn't work. If it doesn't work, then we just let it go and it's done. It's whatever. But if this is working, you can expect this to be managed at some point between now and Friday before the show. Because I think we tried to hold one of these like to Friday at the show, and my inexperience and lack of intimate knowledge of the futures options expiration cycles came to the forefront, and it popped out of the woodwork, and I was like, oh no, I can't trade this option anymore because it's expired. And so I don't really want that to happen again if I can avoid it. So I'm thinking, again, we got to play it to the downside. Got to be short metals here. I mean, I've been saying this since 3,000. Why would I stop saying it now? But if we go ahead and let's see, what if I do, man, can I get away with a 40-pointer in gold? I think it's going to be too expensive, but let's try. Let's try. So the last time we did this, we did a little SPX gold trade recently, and within the last 3 weeks or 3 or 4 weeks, I think, and it worked out. I think maybe we did it for FOMC or something, and I want to say that the SPX trade was a huge winner, and then the gold trade looked like it was going to be a loser. It was also to the downside. It looked like it was going to be a loser, but at the last second, like the last morning or whatever, it actually snuck over the finish line, and I think we made a couple of bucks. Maybe we'll take a look at the activity tab to get some clarification on that. But if memory serves me correctly, and I'm like 3 or 4 days in a row with my blueberry intake now, so I'm pretty sure that's right. But 3140, 3100, 3060, I think this is going to be too expensive, but we'll give it a shot. Yeah, $7. That's a little bit. Man, it's still only just over 2% of the account. Man, I don't know. Should we tighten it up a little bit? Yeah, what if I go 35 points wide? I'm going to tighten it up just a hair. Okay, perfect. All right, so this is what we're going to do. 3135, 3100, 3065. It's 35 points wide. We're in the gold futures options. We're paying $5.40 for it. And so the max loss is only, $5.40. The max profit is $2,900. And so I like the fact that you can size this a little bit bigger, a little bit more easily than you could with GLD. Now, obviously, some of you are like, hey, with GLD, just do multiple lots, do multiple contracts. You can size it that way. Yes, you could. But the futures options also kind of do the trick for you. And so if we go in here and we push this guy out, then let's see here. Let's go in here and I like it. I like the trade. The commissions and the fees are a little bit higher than what I would see with GLD. So that's definitely something to factor in. I'm still going to stick with GC. But, for those of you that might be wanting to trade a smaller version of this, it might even be more cost effective to do GLD. But I'm going to stick with GC because we've already done all the work to kind of size this up. And at the end of the day, we're only talking about, a few dollars either way. Not that it's insignificant, but for 1 or 2 trades, it's not going to be that big of a difference either way. So let's go ahead and let's send this guy out. Send it out to the powers that be and see if we can get a little fill here. Let's try, it jumped up to 550. Okay, let's try it. See if we can get filled. All right, no takers on GC. Is there a liquidity issue with the gold futures options? Doesn't look like there is. I mean, I'm looking at the markets here. They're only, 40, 50 cents wide. That's not too bad for, a $3,000 product. That's pretty solid. Is it the greatest ever? No, but it's, we're not talking about, MNQ is atrocious. Right, so it could be much, much worse. But 560, I think I'll probably get filled at 560. No takers at 560. Okay, all right. Let's see. Oh, got a taker at 560. There you go. All right, so we're in our gold butterfly to the downside. So we did SPX butterfly to the upside. These are both Friday expirations, but they're essentially for tomorrow. I have a feeling that when tomorrow comes and goes, we're going to have an opportunity to manage this guy for a winner. Now, again, if tomorrow does come and go and we do manage it for a winner, then we won't be able to talk about it until Thursday on the show. So there's a good chance I'm still holding on to these trades on Thursday. But we'll give it a shot. We'll just take the old college try and just see what happens. All right, let me go ahead. Let's see here. Here we go. So I'm going to surprise and delight someone. Again, in the middle of the chat, this is super fun for me. I'm just picking someone at random, and it has nothing to do with, your question or your comment necessarily, other than the fact that I just see something that catches my eye. It might be a question, it could be a comment, it could be a story, it could be a joke. And so they're all fair game when it comes to this. But I see, Steve-O says, oh, this is good. This is in response to somebody else. This is important because I have so many people that email me that are completely confused. Steve-O says, Dr. Jim is usually a bit sarcastic. That's correct. But when he says NQ is an extremely high-risk instrument, he's telling the 100% truth. That's correct, right? So I am telling the truth when I tell you it is an extremely high-risk product. I am also telling the truth when I tell you it is a risk-free instrument. So you need to do with that information what you will. Right? Do with that information what you think seems best. Right? Theoretically, it's extremely high risk, but practically, we all know, we're talking about T-bills at this point. Right? Like, yeah, sure, it's down 37 today, but don't worry about it, man. Enough of you do a computer reboot, and we're going to be right back to green. Tariffs can't even stop it. Tariffs can't even stop it. If enough of you do, the Control-Alt-Delete will be unst, will be green, and everybody's going to be happy. So thank you there, Steve-O. I appreciate you, my friend. Right there in the middle of the chat. Good stuff. All right, so let's go to the top. Let's see where you guys are at. Gold is now down 250, and so the crash, it's imminent, guys. It's imminent. And you can't stop it now. The floodgates are about to be open. So Samuel says, Doc, check out Newsmax stock. NMAX up 1,000% in 2 days. What are we even doing here, man? I have no idea. I did not know that they were a public company. Is this a new $176? Oh, yeah, okay, that makes sense since they doubled today. And so have they been public for long? Wow, how about that? Look at that. Do they have options? Okay, so they don't even have options. So I'm assuming this just recently IPO'd or something because they don't even have options. There are no options available for Newsmax. And so as derivatives traders, like, we're just waiting. As derivatives traders, like, we're just sitting on the swing, just watching the clouds pass by until we can do a little something in here. Now, of course, you could mix it up and do a little something with some stock or whatever, but we just got to be a wee little bit patient. If we're patient, not only are we going to get options, but, man, give it 3 months and you're going to have Newsmax levered funds at your fingertips. Like, if Tesla can do it, Newsmax can do it. If NVIDIA can do it, Newsmax can do it. So just sit tight and you're going to be 3x bull, 3x bear. Don't even worry about it. Like, sure, the fees are crazy and it gets chewed to pieces by the daily reset, but it's going to be fun. Like, it's going to be super fun while you get to, get in there and, lose all your funds. And so Newsmax, I didn't even know it was a public company. I know it's a broadcast station or whatever, kind of like I guess you would call it like an alternative form of media, which that's kind of the media now. Like, I don't know about you all, but do you actually get your news from like regular news sources, like your Foxes and your CNNs and your NBCs and ABCs and whatever's? Like, are you actually consuming news from those sources? I think a lot of people are going to say no these days. Like, you're getting your news like straight from the horse's mouth in some ways. And I'm not even talking about a Newsmax. It's kind of the same as those other ones, although it's a little bit off the beaten path. Like, you're getting your news from like X. Like, you're getting your news like straight from like Instagram. Right? I mean, that's how I get my news, and that's how I know it's reliable. Like, I know that when I read something on X or Instagram, like if I see something in Johnny Pool's 47 Instagram story, like I know that that is lock, stock, and barrel 100% true. And I can just take that forward as the truth. And that gives me a lot of comfort knowing that. Whereas I don't feel that way about, mainstream media. But yeah, Samuel, that's some crazy stuff. I didn't even know that Newsmax was a public company. And so David Gallimore, here we go. David Gallimore says, Dr. Jim, why are you the only show host that goes solo, never a co-host? Tim Knight, I think, is a separate business that I think sells his 15 minutes to Tasty. Yeah, I don't know if that's true or not. That is funny, though. That's kind of like selling options for income. Very similar. And so this is a very good question. So when I was hired back in the fall of 2015, you have to keep in mind, I was used to, I came from the academic world. I came from academia. I was teaching undergraduate classes. I was teaching MBA classes. And so like the instructional part of it was something that I was kind of familiar with, but I had never been on air before. I'd never been on camera before, at least not regularly, like little things here and there, whatever, of course, but I had never been on air before. So I had to learn that skill. Well, Tom asked me, he said, hey, do you want to do the show by yourself or do you want to have a co-host? And I said, I think I would prefer to try it by myself. Like, let me try it by myself just because that's what I'm used to. Like, I'm not used to being on air. I have no idea how that's going to go. And by the way, if you want to laugh this weekend or this week, like while you're trying to sift through some Trump tariffs and some NFPs and whatever, then I would strongly encourage you to go into the Tasty archives and watch the 2016 editions of From Theory to Practice. They are awful. They are I mean, I'm standing up. Right, I've got 9 bottles of hair wax in my hair. Right, I'm shouting at you, which I'm still shouting at you now, so that's no different. But it's I mean, B minus. No, man, we barely got out of the D plus range. And so go back to 2016. The show was 15 minutes long. 15 minutes long. And I know I've said this before on the show, but just in case you didn't hear it the first 7 times I brought this up, or you're brand new to the show, this is gonna make you laugh. So I had a 15-minute show. I told Tom that I wanted to do it myself. I started to develop a bit of a rhythm. I kind of had a vision for the show. I was like, I'm just going to stick with it by myself. And then the rest is history. So that's basically the backstory. But even funnier, and I know I brought this up before on the show, but it's still no less funny. When I first started at Tasty, I told my wife, I was so nervous. I was so nervous. I still get nervous before each show because it's fun. It's exciting, right? It's very, very exciting. I told my wife, I said, hey, I've got this 15-minute slot. It's just me. I don't have a co-host. I don't have whatever. I'm like, what am I going to say for 15 minutes? Like, I'm going to run out of things to say. And my wife looked at me straight into the eyes and she said, listen, she said, I don't know how this show is going to go. Like, you might be great. You might be the antonym to great. I have no idea. Like, I believe in you. Like, I think it's going to be awesome. I can't wait. But I can tell you one thing that I know will never happen, not a single time, that Jim Schultz runs out of things to say. She said, now, they may not be good. They may not be quality, but, man, they're going to keep coming out. I can assure you of that. And I said, I hope so. And, man, here we are 10 years later, and we're up to 45 minutes. And each time they've increased the time allotment for my show, I've gone to my wife and I said, listen, this is serious. Like, now I'm from, I went 15 to 20, 20 to 30, 30 to 45. Each time I'm like, Autumn, I don't know what I'm going to say. She's like, are we really going to have this conversation again? Because I can assure you that you will just keep hitting them. You're just going to keep hitting them one way or another. And I said, yeah, I guess so. And so listen to your wife out there for all the husbands that might be watching the show today. And if you're for all the wives that are watching the show, if your husband is not listening to you, send him to me and I'll set him straight. And so there you go, David Galmore. Great question. Catch that voltage in the house. Says, hey, Dr. J. If you had $10,000 in initial capital and you could sell strangles in some of the major names for $3 or $4 credit, but you could sell an iron condor using the same initial capital for higher credit, what would you do? It's a great question. So I'll give you a couple things to think about. So number one, if you only have $10,000 in your account, that's a Tasty Bite-sized account. You're obviously going to be very limited in terms of, the natural capital limitations that you're going to face. That is just the cost of doing business. That's the nature of the beast that you are up against. The reality is you can't do a lot of strangles. You can't do a lot of strangles with only $10,000 because if you're going to size it correctly and keep it to less than 10% of your account, that puts you at $1,000 buying power cap. I mean, you're selling strangles in Bank of America at that point. That's pretty much all you can do. Like you're selling Snapchat strangles. That's all you can do, which is fine. Like there's nothing wrong with that. But it's like you're not selling Apple strangles. You're not selling Tesla strangles. You can't get there yet because you don't have enough capital. So when you're just starting out, you're going to have to start with a lot of defined risk strategies, not only iron condors, but vertical spreads and diagonal spreads and calendar spreads and whatever else. You're going to have to start with mostly those type of strategies. But I would still encourage you from time to time to begin to dip your toe in the water with undefined risk strategies in a Bank of America, in a Snapchat, in a low price stock so that you can start to get familiar and comfortable with not having a safety net in place. Because I still feel like, where you want to get to with what you're trying to do in your portfolio, achieve a certain level of returns, minimize your risk, smooth out the results, some predictability in terms of, your outcomes over time, things like that. All of those things begin to get unlocked when you lean more into undefined risk strategies and less on defined risk strategies. But with only $10,000, there's only so much you can do. And so I didn't exactly answer your question, like perfectly catch that voltage in terms of what I would specifically do. But I kind of gave you the flashlight with, some brand new batteries. And now it's up to you to go through the forest and kind of figure it out. Right? You're going to have to lean on mostly defined risk. So for that reason, I would lean mostly on iron condors. But I would want to move to strangles as quickly as I can. And as you begin to add capital and things like that. Hopefully that helps. Scramble Everything says, hey, Dr. Jim, I appreciate all that you do, man. I appreciate you appreciating me. So very much, my friend. Thank you very much. How about Avgo, spiked lizard? Oh, here we go, man. I haven't done a spiked lizard. It's been a while. Sell 2x the one. Thank you for spelling it out for me. Sell 2 of the 165 puts and a 135 put, and then buy a 185 and a 150 put. All right, so let's look at this. Man, I haven't done this in a long time. Avgo. Is this? I have to look at that. It looks like it's going to be undefined risk, right? Because if I'm selling a couple of 165s, I'm assuming you're in May with 45 days to go. So I sell the 165 and the 135, and then you buy a 185 and a 150 put? Huh, interesting. Let's see. If I buy a 185, I might not be setting this up right, and I haven't done a spiked lizard in a while, so it's very difficult for me to kind of piece it together from memory because the memory is not even there. But if I go to 185, I buy a 185 put, I buy a 150 put. I double up on the 165s. Yeah, something about this doesn't feel right. I think I might be misreading your suggestion today. If I go to the analysis tab, yeah, because I want to say with a spiked lizard, kind of similar to a jade lizard, you're cutting risk off on one side of the market. Like, this is what I would expect to see in the middle, like this, this kind of this TP, kind of version of, the P&L. And I don't mean Tom Preston, I mean Native American, right? Like if you look at like this P&L graph, you kind of see a nice little triangle in the center there. But then I've got risk on both sides of the market. And so I feel like I'm not setting something up perfectly right here. And so I'm going to pass on this. There's scramble everything, but I appreciate you. I appreciate you so much. I mean, I think we even said all that in the intro to your question. But thank you there, Scramble Everything. I appreciate you very much. Amelia H in the house. Hello, Dr. Jim. What's going on there, Amelia H? I appreciate you very much. Every time I see your name in the chat, of course, it makes me smile simply because, my youngest daughter is named Amelia. She's also our trading assistant for the show. She is the intern. She's the one that brought you the SPX trade. She's the one that did all the analysis for the GC trade. So if it doesn't work, it's not even my fault, man. It's her fault, right? So you can take it up with her. And so, Amelia H., thank you for being here. Appreciate you. Sam L. says, why stress over our risk-free instrument? Well, we could just buy cable and broadcast channels. Yes, apparently Newsmax. No options on it yet, though. Well, not for us. Only for the Batistas. Oh, you can bet your bottom dollar and bet your bottom biscuit that the Batistas are trading these Newsmax options on the black market. Like these guys are up there trading, block shares of Newsmax. Like they're selling options back and forth, selling jeans out of his trunk to, make ends meet back in the 80s. Like these are all the things that all the Batistas have done for many generations. I mean, that's what Vinny has to look forward to. Right. And so, hopefully the rest of us peasants and plebes can have access to these Newsmax options here somewhat soon. But yes, Sam L., it is, we have to wait and see. Sergio's in the house. Good evening, Dr. Jim. What's going on there, Sergio? Appreciate you, my friend. Thank you for being here. Thank you very much for being here. Paul Heyman says, what were the results of your daughter selling those 10 items on Friday? Oh, yeah. Maybe reduce her weekly allowance because of her extra income. Yes. Oh, my gosh. Thank you for asking me, Paul. And great memory, by the way. I really appreciate the fact that you care. So Penelope, they had Enterprise Day at their little co-op, whatever. She knitted together these little baby chicks. I told you guys about this, right? I'm like, she knows her audience. Like every kid under the age of 12 and under, like they see a stuffy, they have to have it. Like they see a cute stuffy, they have to have it. It's amazing. So she made a little inventory of 10. She sold out within minutes. Within minutes, she was the first one to sell out her table, and she got back order of 8 orders. And so she came home. She was so excited. Like she was so like blown away at the prospect of like, the entrepreneurial spirit of like creating something of value and having someone else also look at your thing, see the value and give you hard-earned money for it. And by hard-earned, I mean, of course, their parents gave it to them and then they gave that to Penelope. But hey, it's okay. Like you got to start somewhere, man. And so she's very excited, very pumped about like just the whole idea of kind of what happened. And so it was really cool from a business standpoint to kind of have her experience that. And then she actually asked me, she's like, well, Daddy, she's like, what do you make for work? I'm like, well, not really much. And she's like, I just made a bunch of baby chicks and people paid me for it. She's like, well, you get paid? I'm like, yeah, I do. She's like, well, what do you actually create? Like, what value do you create? I'm like, that's a complicated question. That's a very complicated question. I'll have to get back to you on that one. So you guys will have to fill me in on how I should answer that question because I don't exactly know. But Paul, I appreciate you, my friend. So Junior Mac says, good morning from Australia. My last week before the daylight savings ends. Oh, man, you're way behind the 8 ball on that. We did that like a few weeks ago. And so, man, I hope you're able to get through to the other side. And you don't have small children, because if you have small children, you know, the daylight savings and the daylight costings, they both cost you. You pay for it on both sides of that equation. Brad Glazier's in the house. Greetings, Professor. What's going on, my friend? Thank you for being here, Brad Glazier. Thank you very much. YouTube Jim in the house. Hello to all. Very much enjoy all your thoughts and humor. Question mark. Yes, that does need a question mark. Dr. Jim, I appreciate you, my friend. Thank you, YouTube Jim, for being here and being a part of what we do. Steve-O in the house. I already grabbed you a question from later there. Steve-O. And so you said the man of the hour. Man, I appreciate you. Thank you so much. And great question later, or comment later in the stream about the NQ and the risk-free nature. It's all in good fun. It's all in good fun. It's meant to be sarcastic. It's meant to be humor. It's meant to be a joke. But we all know that it's true. I mean, we all know that on the streets, like, we know the truth, right? But again, legally, I have to tell you that that's not the case. So Emmett says, hey there, Dr. Jim, a question about unused buying power in my account. Can I put it in SGov and T-bill and still trade against it? Great question, and the answer is yes, you can. So you can buy SGov or BIL. I think it's not T-BIL. I think it's just BIL. You can buy BIL and SGov, and then it frees up like 90+% of your buying power to then use for different trades and different whatevers. Be careful, though. If you want to be aware of your cash balance. And so I'm not a pro at this. I don't have all the ins and outs. I don't have all the bells and whistles, and I can't get you all the way to the end of this journey, but I can make you aware of some of the pitfalls and the obstacles that you might face. Be aware of your cash balance in your account, because when you buy BIL and you buy SGov, it's still going to require some of your cash balance, and it may not leave you with very much. If you are doing like premium and selling options and things like that, then that may be less of an issue, especially when you like sell premium, like you bring in a credit, like your cash balance like literally goes up. You have to set aside buying power, of course, because the brokerage firm makes you do that to, you know, account for the risk of the position and whatever, but your cash balance may actually increase, so that won't be a problem. But if you're also doing futures, Emmett, which I can't remember if you are or not, those are going to eat up your cash, like I think like almost dollar for dollar with the buying power. So just be aware of that you could easily slip into a negative cash balance, which that's not a bad thing per se, but it does mean that you are on margin, like literally on margin. You're borrowing money like straight out of Sazov's wallet. Like you're borrowing money straight out of the Batista estate. And so they're going to charge you, and they're going to charge you a lot. Like y'all have seen like the payday loans and loan sharks, and like, you know, you've seen like American Greed, like late at night on CNBC, like it's that type of deal. Like they're going to get you for 30-40%, you know, maybe a week. You know, I don't know. I think it's only 7% a year, 7 or 8% a year. But just be careful. Be careful with the negative cash balances because, it may lead to some undesirable outcomes. So just understand that. But again, yes, you can. You can do BIL and SGov and then trade against it, especially selling premium. I think that's a good place to start. And so let's see. Harold's in the house. What's going on there, Harold? Harold says, only here to shout out my Yankees and try to learn how to trade options. Is that what I was trying to do? It might be, my friend. And if it is, then you are in a good spot. You are in the right place. Not for Yankee stuff, because y'all got the red wiffle ball bats, and these games are not going to count. Like, once they run this thing up the flagpole to the Supreme Court, like, they're going to go back, and these games are not going to count. And so you're going to have to deal with that later in the season. But in the interim, can you please send my Red Sox some of those wiffle ball bats? Because we need something. At least Devers. Send them something, because it's bad. It's real bad. And so Robert is in the house, home from the dog park, just in time for the best hour of the day. Man, I appreciate you. Man, look at you guys. Market can't catch a bid, but you guys, man, you guys are all the bids we need. Man, look at you guys. You got market down, ES down 21, right? NASDAQ down 24. You got gold now down 30, and so it's basically, 3,000 is going to be your next tick. And so, pretty crazy stuff. So 40% says, Dr. Jim, are these tariffs legal and constitutional? Doesn't Congress tax? Man, I don't know the answer to that. I mean, I would assume they are, just because you would think that Trump and his advisors would have thought through that and would have thought, all right, if this is going to be a big problem, like we can't go forward with this. But so I would assume they are, but I joke about it and we have some fun with it, but I'm not a tariff expert. Like, you have, the tariff experts and the tariff bros, like they say it's a terrible idea for all these reasons, XYZ. It's a great idea for all these reasons, ABC. I don't have that knowledge and I don't have that skill set. And so I actually can't answer your question. I don't know. But I mean, I'm sure that, the other side of the aisle, if it's either of those things, either illegal or unconstitutional, then they're going to be filing all kinds of suits. And then that is going to go up to the Supreme Court. Obviously, it's behind the Yankees torpedo bat case, but they'll probably get to it at some point. And so I would ask them, or just wait and see what happens. And so Lucky says, wow, we're done with the show? This is crazy. We got about 90 seconds to go, so let's try to get to at least half a question. Lucky says, when you look at the loss, are you looking after when you look at loss, are you looking after it crosses a strike or a daily P&L vol expansion, or both? Let me see. I'm not exactly sure what the question is here, Lucky. So when you look at a loss, are you looking after it crosses a strike or a daily P&L, or both? So I personally look at both of those things. I'm looking at daily P&Ls. I'm looking at position P&Ls. I'm looking at when strikes get hit. And so when it comes to like an actual loss, like to me, like when I look at a position, like here, I'll just bring one up really quick. Like I'm not going to use GC or SPX because we just did that trade. Let me see here. Let me bring up like here, let's do, well, Chipotle is actually a winning trade. Let me try to find a losing trade really quick. Okay, Walmart. This is a perfect example. Lucky. So look at Walmart. You've got the stock at 88 and some change. And I have a strangle that's 80, 92.5. So 80 put, 92.5 call. Right now, it's down money. It is a losing trade. It is a loss, as you kind of highlighted in your question. I'm down like 50 cents on the trade. How do I view this position? Right now, and this may sound kind of crazy, but this is actually how I do it. In my head, this trade is working. In my head, this trade, it's not a winner yet, but it's working. I like to think of it as working because I think about this. I'm like, all right, where is this headed if nothing else changes? Where is this headed if I don't get tested on either side? It's going to be a winning trade. It's not a winner yet because of maybe volatility expansion, as you alluded to, because of maybe some delta changes, right? The theta is obviously going to be working in my favor, so that's actually helping to offset the losses I've experienced thus far. But volatility expansion, some delta movement inside the position, that's causing it to be a temporary loss. But right now, I'm like, all right, this trade is working. It's inside of my strikes. They're still out of the money. If nothing else changes and just time goes by, then eventually the extrinsic value is going to come out and it's going to be a profitable trade. So that's how I look at positions like this. I simply look at, are they working or not? Now, what would be a case of it not working? That's when the strike gets tested. So as you also alluded to, your strike gets hit. Now we're starting to make some adjustments. Now we're starting to do some different things from a management standpoint. Some traders like to trade and adjust earlier than the strike getting hit. That's of course perfectly fine. I'm a bit more patient. There's just a couple different ways that you can slice it up. But I gotta go. I gotta run, man. We're out of time. I gotta get you guys to Jamal. But man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay grateful. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, We'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Hey, what's going on, everybody? We got to take a look at this news, Max. What a crazy IPO this thing has been. Stock's been all over the place, so we'll talk about that. Johnson & Johnson is dealing with a little bit of something right now. Stock's been down today, and it seems as though they just can't get over this situation with the talcum powder case, so we'll talk about what's going on there. And then finally, I don't pay much attention to PMIs. I got to tell you, I really don't. They just typically don't move the market, but one might have moved the market just a little bit today when you saw what happened with the U.S. manufacturing PMI. Went into contraction territory. Things might be heading in that direction, and markets don't seem to like it. So we'll talk about those three things and more. We'll take a look around. I got a bunch of charts to show you guys because I've been out for a little bit, and I find things a little bit more interesting now that I've been away from markets, and we'll take a look at all of those. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. I'm back. I was out for a little bit. It's always good to get away for a little bit and just sort of have a different perspective on markets. Now, I was expecting things to be a whole lot different after I was gone, and yet and behold, markets are pretty much in the same area where I left them. Although, I mean, we had some moves. Like I saw markets sort of got through their 200-day moving average and stayed up there for, I don't know, about 24 hours, maybe 48. Didn't last long. I took a week. It was spring break for our youngest kid, and I mean, that's basically the only kid we have left in the house. So we hung out with some other families, actually, who had kids in the same grade, and it was really fun. Never done I shouldn't say that. We've done this type of big trip before with other families. This time we had another family. It was like 5 of us. Good times, man. You know, taking the kids to do different events. We went to this sort of amusement park one day. Me and the guys went golfing. One of the hardest courses I've ever been. Branson Hills Golf Course. I think it was like one of the top 50 hardest courses in America. I feel like it was number 39, actually. Crazy, man. I mean, some of the holes are just wild. And I'm really not good. Like, I shoot like 100. So that doesn't go well when you're talking about going to a course like that, dude. I'm telling you, it was tough. It was tough, but it was fun though. It was good to be out there. It was actually a beautiful day to golf, and again, I'm talking about golf again. I've really gotten to like it. I'm starting to go with more friends. You know, before, the few times that I would go before was usually like sort of a corporate event or something, which, you know, again, you don't feel comfortable or you don't even necessarily know the people that you're golfing with. But when you go with good friends, total different experience. Before we get into markets, what else? Obviously been watching sports, watching March Madness. So I did the Calcutta pool for those of you who had heard about it. I mean, I did some regular pools too. We got a work pool here, which is, always fun to just talk smack for work pool. But if your bracket's not doing well, you can't say anything. Mine is not doing well in the work pool. I had St. John's. So to say the least, things are not going well. Who picks all 4 number ones to go to the Final Four? Not me. I don't know. But some people did, and those people are doing well. I like the Calcutta bracket better because in a Calcutta, you basically pick your teams and you ride with those teams pretty much the whole way. And so the teams that actually this past weekend sucked because a couple of my teams got knocked off. Michigan State was one of them. Alabama was another, and 3 of them. Tennessee was the other. Those didn't make it to the Final Four. That would have been fun. I still have Florida, though. And Florida just so happens to be the team that I paid the most for. So that's who I'm rooting on pretty much for the rest of this time in the tournament. We'll see how that goes. Watched the lady games last night. Connecticut, man, they put it on USC. I didn't think they were going to beat them by that much, but they did. They did, and they're moving on. And so I think that whole thing is set, right? Like it's Texas, Texas, UCLA, South Carolina, and Connecticut for the women. So that's what it is. And it should be interesting stuff going forward. Let's pull up some slides and let's talk about what we're seeing today in these equity markets. This Newsmax, I noticed it yesterday, IPO'd yesterday, and it just keeps on going, man. If you don't know about Newsmax, it's a conservative-leaning media company whose stock is just completely taken off. I think it opened at $14. You got to stop there. $14 opened at yesterday. NMAX is the ticker. You can take a look for yourself and see where it's trading right now if you haven't looked at this thing or heard about it. It's wild, man. This thing has been... And you know what's funny? It's not even crazy amount of volume, only 8.83 million shares. What this tells you is that the float is really low and that it's controlled by singularly like one person or probably something like that. I don't know. But it's just wild, man. The people are buying this thing up the way that they have. No options yet. And it's not the only... CRWV is another IPO. That IPO'd late last week. Am I right on that? Last Friday. Nowhere near the same type of move, but I'm bringing it up because you can see this has a lot more shares to it. And it already has options, which tells you it's a lot more mature. So keep that in mind. When you're looking at new issues, I always like to trade new issues. I was always interested in them, especially the options, because a lot of times people don't know how to price them. And that happens a lot in new IPOs, but you can see this Newsmax. It does not have options yet. I think it has a very low float, and it doesn't have a whole ton of volume. And forget whatever's going on with the company. Like I don't pay attention to that. I know they had a lawsuit a couple of years ago behind the leg out. Whatever. I don't care about that. I'm just looking at the stock right now. Stock went from 14 to 206 in 2 days. That's crazy. And they don't have options yet, so this is a wild card, folks. Like keep that in mind. Be careful out there trading this thing, for real. Seriously. Johnson & Johnson, they had that talcum settlement a couple of years ago, and it would seem as though the bankruptcy court denied their settlement plan. So this is something that they've been dealing with for the better part of a couple of years now. And J&J is usually a very calm company. It usually does not have these type of moves that you're seeing on a day-to-day basis like this. So that is one to keep in mind. It's probably a decent time to sell some vol in here, I'll be honest with you. And I was looking at it for that particular reason today. I typically don't sell anything in here because it's really hard to get like good pricing. But I don't know. We'll have to take a look at it when we get to the platform. Maybe I can find something that I can do. Might have to go further out, like to June, just to get a decent level to sell because you just can't always get a good level to sell in here. I might do that. Remind me when we get to the platform, those in the chat. Finally, we had a manufacturing PMI today. U.S. manufacturing PMI came in at 49, I think it was, 49.8. Wait, let me see the exact number because I don't want to tell a falsity. It was, where is this thing? It was 49. It was 49.8. Now, just so you know, anytime you see these PMI numbers, anything under 50 is contraction, right? And that means sort of like contraction, economy contracting a little bit. That's something that we don't want to see, especially ahead of tariffs, right? That's something that I think is a little bit concerning right now and something that should be paying attention to. This is how this goes. We mostly don't pay attention to a lot of economic data until it really starts to matter. That's what it was with CPI, with inflation reports, right? Nobody ever really paid much attention to inflation reports until, well, it became an inflationary period, and then we needed to know if it's going down and when, right? Like, has it gone down yet? 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 That's basically what we were doing with the CPI reports every single month from like June 2022 onward, right? So I think manufacturing PMIs and ISM manufacturing PMI is going to be a thing we're going to start to watch because we want to know if growth activity is really being affected by these tariffs going forward. I wouldn't be surprised, so keep an eye out for that. Leftovers. Will the Switch become Nintendo's greatest hit? Let's move to the next slide. Sergio, what's up, man? Thanks, man. I had a great week off. It was awesome. Kimberly, how you doing? Donald, what's up, my guy? Good to see you up in the chat, man. Grumpy Mike, how you doing? What's up? Yeah, it's been, Lefty F3 knows about my Canes. That's right. You know I'm a Canes fan, man. Hey, look, these Canes look good, man. I mean, the Canes look good, and we're going to be getting a first-round draft pick with the Canes. Of course, a early first-round draft pick with our quarterback going probably maybe first overall. I don't know if he doesn't go first overall. He could go second, either the Titans or to Cleveland. So we'll see. Actually, that was one of the things I did notice. I didn't watch a whole lot of TV while I was gone. Like, I watched some games, but I did notice the Miami Pro Day, and I did notice how they were kind of, he was throwing to Restrepo. You know, Restrepo's a really good receiver. I saw something that says, look him up, Xavier Restrepo. He's a receiver with the Miami Hurricanes last year. He definitely is a Wes Welker type. He ran a 4.7 or 4.8 combine. Doesn't matter. You draft that guy anyway because he's the all-time leading receiver in Miami history. That's saying a lot when you think about some of the receivers that's gone through Miami. Leftovers. These are the lifetime unit sales of Nintendo's video game consoles. And I got to tell you, this is really interesting when you look at it. I forgot to quantify this. There's something that I forgot about this. I'm trying to remember what the colors are. I think the colors are, there's like home systems, and then there's, let me remember. Home, handheld, and hybrid. Okay, right. So the red, of course, I mean, if you know anything about these gaming systems, you know this already. All the ones in the red are home systems, right? Like the NES was a home system. You couldn't take it with you. The blue, obviously, are handhelds, and then Nintendo Switch is the hybrid, and I think that's what makes it interesting. I bring this up because Nintendo Switch 2 is supposed to be coming out sometime really soon. They're doing a launch event tomorrow morning, actually. So in case you don't know, for those who are video game people like myself, I personally, I don't have any, actually, I shouldn't say that. We have a Nintendo Wii. I know my youngest was interested in the Switch. We never got it for him. He talked about it, but he's kind of like whatever about it. Mostly because, I mean, we have a PS5 in the house, which is what I've been on more recently. I play MLB, the show. I love that. And I play, like, you know, with just like one player going through his season. So, like, you know, God, what is it called? I forget the level. I mean, I forget the mode. But, you know, when you basically have one player that you play with, I don't play with the whole entire team. I just play with my guy. I mean, first of all, it's markedly faster. I mean, you can play a game within inside of 10 minutes, right? And then you can play like a bunch of games. So you can play like 5 games within an hour. I mean, I like doing that. And when you think about it, there's a lot of MLB games. And yes, in case you were wondering, I do have a guy that pitches and hits. That's right. I'm doing it Ohtani style. Lifetime unit sales for Nintendo's game consoles. NES came out in 1983, 61.9 million lifetime. I would love to get an NES system again and get games again. I've said this a lot of times. I still, you know, like on the Wii, which we'll get to in a little bit, has that. You can play old NES games. I still like doing that at times. Mike Tyson's Punch-Out, you know, if you know, you know. The Game Boy, 118.7 million, came out in 1989. Super NES, 49.1 million, 1990. Nintendo 64, 32.9 million. That's very average, you know, like the GameCube too. I mean, those were very average. They were not that good. Did not play either one of those really. I mean, I remember like for me and my age, like definitely played NES a lot, definitely played Game Boy a lot. Super NES, to some degree, but not really. Didn't play Nintendo 64. By that time, I was on to Sega. Sega was the bomb for me, and that's what me and a lot of and PlayStations. Me and a lot of my friends using in college. Basically, that was my college time period. GameCube, wasn't playing any of that. Wasn't interested. And I was actually pretty tied up at that point. I was in graduate school. I was busy, you know. Game Boy Advance, didn't play it, but 81.5 million. I mean, that's, I don't know, that's like 5th on the list, it looks like here. Nintendo DS, never touched it, but I mean, that is clearly the most sold video game console for Nintendo. And then they, of course, you know, if some is good, more is better. They went with the 2DS and the 3DS. Sold half of what that did. But the Wii obviously was huge, 101.6 million. That's 4th on the list here. I guess that makes, Game Boy Advance 5th. Weird. And then the Wii U, it just didn't go over well, right? It just didn't do it. But the Nintendo Switch has been really popular when you look at it, and it eventually probably will pass that Nintendo DS. And I saw this article the other day on Bloomberg, like if the Switch 2 fails for Nintendo, well, they have no plan B and they might be in trouble. Why? Well, when I saw that article, I was like, why would the Switch 2 fail when the Switch has been so successful? But this is interesting. When you look across all of these time periods, things on some being good doesn't necessarily equate to more being better. The Nintendo 2DS and 3DS did not go well compared to the DS, right? Super NES wasn't as successful as the NES. Game Boy Advance wasn't successful as the Game Boy. So who knows how the Switch 2 is going to play out? I mean, it seems like it should be, a lock, but could be a gamble. Could be a gamble. Let's move to the next slide. Hurry up and run through these. I want to get you guys to the platform. This is the quarterly performance so far for things this year. When you look at gold, it is leading the way, almost up 20%. Bonds are trying, man. ZB up nearly 5% and continuing to try to climb. Big moves today in the bonds, 10 and 30 years. Dow Jones, it's basically negative. Oil, negative. S&P, negative. NASDAQ, down 10%. Russell, down 15. Russell. NASDAQ down almost 8%. Russell down almost 10%. And then you got Bitcoin, which was down 15, bounced a little bit today. But, yeah, when you figure Dow, NASDAQ, S&P, small caps being down, along with oil and Bitcoin, not good so far in this quarter that just passed. Let's move to the next slide. This is the forward curve. Not much to say beyond that. A little bit elevated in the front. Looks like June, as of right now, is not even as high as July. I don't necessarily know what that means. This is a funky little curve when you look at it because, again, you see, of course, a little backwardation in the front 2 months, but June is a lot lower than a lot of the other months. I'm not exactly sure what that's telling you. I don't know if that's – I really don't know. But this tells you something. Anytime you see a curve like this, sometimes people brush it off. I don't, and I've learned that from a good friend of mine, very astute in the vol space. Russell Rhodes is a good friend of mine who always looks at vol curves and vol spaces. Give him a Twitter follow if you don't know him, but he knows a lot about vol, and a lot of times, I remember years past I saw a curve like this, and I was like, oh, whatever. And like 3 months out, it's not in backwardation. That means something. Something's going on in June as of right now. What the market is trying to tell us. We'll see what it is. We'll see if this changes much more. Let's move to the next slide. I always like to look at volatility in a bunch of different ways. And so, as you know, I look at the volatility risk premium quite a bit. Now, while this is showing you that, again, this is the difference of forward vol versus backward-looking vol. Historical vol is backward-looking vol. It's a little bit, there's a little bit of premium to VIX to backward-looking vol. But honestly, you can see that things have moved around a lot, and that's why historical vol has climbed. When the market is moving around a whole lot, it's hard to make money selling vol, right? It's hard to harvest the volatility risk premium. It's really hard to because things are moving around too much. We need things to slow down so that some of those options can, come in some and we can make some money. That's what we need. Let's move to the next slide. Another way to look at it, VVIX to VIX. Again, another thing I love looking at. The average on this thing is 5.8. Anytime it's below that 5.8, that means we're in a higher vol environment. If it's above, that means we're in a lower vol environment. And right now, it's about 4.5, which, again, we haven't seen. You have to go back to early 2023 was the last time we saw it at these levels. So what this is telling you is that, yes, vol is high, but like I said on the previous slide, things are moving around so much, it's been hard to harvest it as of now. Let's move to the next slide. So I mentioned this on Futures Power Hour today, and I wanted to mention again. You see the little circle towards the front there. That's where the gold to silver ratio is right now. I think that ratio is exactly, I think it's, let's see, gold. I think the number is, oh gosh, I think it's around 92, I want to say. 92, exactly, 92.4. That's elevated, but I think the areas where you really want to get worried, if you get worried, again, this is just talking, for equity people. Like if you're long gold, you're not going to be worried that this ratio is high. You're actually happy. You're cheering. But anytime this ratio is over 100, those are areas of real strife. Those are areas of global worries, global fears. Again, you can see 2020 was well over 100. This chart doesn't go back far enough, but in 1991, it was over 100, which was during the Gulf War. Again, war times, and other times across history, it's either been war or global strife. So if this thing reaches over 100, that means obviously silver has pulled back and gold has kept on going. And I bet you equity markets are going to be freaked the hell out. So hopefully we don't get there, but that's something to know about the gold to silver ratio. Let's move to the next slide. Just want to put this up here before we leave. I want you to remind you, corrections are often followed by strong rebounds. Now further out, right? Like a year and change. I showed this chart a couple weeks ago, but I wanted to show it again because we did hit correction territory on March 13, 2025. We were down over 10%. And when you look at other times where we touched a correction, like, correction territory was hit May 20th of 2010. A year later, we were up 24%. Correction territory hit on August 4th, 2011. A year later, we were up 16%, so on and so forth. So just keep that in mind. Use your duration correctly right about now. You need to be probably going a little bit further out because there's a lot happening in equity markets. There's a lot of uncertainty where we just haven't been able to figure out yet. If you're doing some options, it's safe to say right now, like I'm trying to push things out. Well, May is 45 days at this point. I'm pushing a few things out to June because a lot of May is going to be earnings. June is probably the safer place to be. Look, I know vol. Truth is like vol is high right now. I'm not going to lie to you. So going out for the months and buying anything is a bit of a stretch. But I wouldn't necessarily be afraid to go out and buy leaps. I'm telling you, like just how I feel. If you're really that committed to a stock, that is. Any real leap trader would tell you that doesn't make sense. But again, when I'm talking a leap trader, I'm talking about somebody who trades thousands or even millions of dollars worth of Vega every single day, which I have a good friend who does that. They're looking to sell vol right now in some cases. But we're not talking about vol. We're talking about like a leap call, right? Like that's what retail traders do. Looking at a leap call right now, going out further in duration is probably the best trade that you could do. One of the best trades you could do right now. And a name that has been beat up. Something to keep in mind. Let's move to the last slide. So for earnings, these are wrong. I forgot what earnings are. Actually, I forgot to change that part. What does have earnings today? Doesn't matter. I'll talk about it in a second. But of course, Liberation Day, as they've been calling it, NC, no real earnings. BlackBerry, there's really no earnings at all. Doesn't really matter. Yeah, they're ugly. Matter of fact, I will change this right here and here. We'll just say none available. That's what we'll say. Yeah. Liberation Day, of course, is what they've been calling it for the enacting of tariffs. That's supposed to go tomorrow. I think at around later in the day, after the market closes, is when it's supposed to go into effect. I think 3 p.m. Central Time, 4 p.m. Eastern. We'll see how it plays out. March non-farm payroll, of course, is on Friday in the jobs report. I do believe that this jobs report should have some of the numbers that involved some of the government workers that were laid off. Powell speaks on Friday as well, not too long after the jobs report. I'm not sure what that's about. Number of S&P 500 stocks above the 50-day moving average is 202, only changed by 6 from yesterday. Let's move to the platform quickly before we go. So I have I had to clean up a few things in the portfolio right now. Again, like I said, I've been assigned on some of my put spreads recently, some of the short legs of my put spreads. The only one that I still have in the near term is Microsoft. I'm not going to re-up on it. I'm trying to decide if I was going to roll it out, but I think I'm just going to keep it. Right now, it's at the 400, 410 put spread. $20 away. Could happen. Who knows? This is one trade that I'm in on with Chris Vecchio on. If things are really going to get crazy in equity markets overall, or I should say global markets, we might see a bounce in the yen. And so I have this further out call spread. But I just, it's a trade. It's a little bit departure from some of the other things that I've been doing, which is short put spreads and equities. If those continue to not work, eventually you would think that, things like the yen, things like bonds, things like gold. Yeah, speaking of bonds, I actually rolled my bond positions out to June. So I'm just long calls. I rolled up and out a little bit. You can see that on the trader page, I'm sure, today. But still long bonds. If this is a bizarre world that we're living in, then being long bonds makes a lot of sense right now. And again, the bond drawdown has been, over 2.5 years. At some point or another, you wonder if this is going to be the type of environment where long bonds eventually becomes a good thing. Again, long treasuries, not the yields. Other than that, most of the equity positions, I still have short put spreads. I did offset some of them with some short call spreads today just to sort of get some short delta and sort of collect some, because some of these are a little bit deep in the money. So I figured, why not? Outside of that, no real new trades for me. Let's look at some of this SPX moves expected here. For tomorrow, well, forget tomorrow. We'll look at tomorrow, but it would seem as though the 55, wait a minute, is that right? God, I could have sworn yesterday was way higher. 55 points expected for tomorrow. For Thursday, 97 points. So that's a big jump, a difference of 40 points. And I think that was the difference. Like yesterday, you looked at April 2nd, and you could see, I could have sworn yesterday this was about 90-something points, and now it's gone down, even though I know a day has gone by. But now the bigger move is expected to be, the bigger move is expected to be on the day after, which is Thursday, April 3rd. And then, of course, Friday, when we got the non-farm payroll. And again, this is 120 points. So there's a lot of premium being priced in for a lot of these different moves, even a day apart. Before we used to see, 50 points for one day, and then maybe 65 points for the next, and then maybe 70. But now we're seeing a solid 20 to 30 points of premium priced in for each day that goes by. And when you look at the VIX and the S&P 500 and the moves that we've been having on the range intraday, nearly 100 plus points on every given day that we've had. So things are volatile. Be safe out there, folks. That's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hello, everybody. Tim Knight here, and it is time for the wonderful world of charting. And we've got a kind of a blasé day. The ES is down 0.04%. I guess everyone's waiting for Liberation Day tomorrow. The three big events going on for the balance this week. One is going on today, which is a trio of special elections in the U.S., which I guess are sort of perceived as a mandate or a referendum on presidential power and popularity. So that's sort of soft data point. Then tomorrow, evidently at 3 p.m. EST, is the big announcement slash, I don't know if it'll be a press conference, but a talk about the tariffs. I'm not sure if there are new details forthcoming. There's any tension about that. It seems, I guess in the background, there's this idea of like, well, will he backpedal again or call them all off, etc.? Not so far. And the third one, which is the most discrete data point, is Friday, an hour before the opening bell, we get our monthly jobs report. And the general feeling is that if it comes in wheat, like 100,000 new jobs or something, that would be very bad for the market because it would sort of confirm that things are kind of going south in the economy. So in recent weeks / past few months, weeks tend to be kind of a hump in terms of strength. They tend to be stronger toward the middle of the week and weaker at the ends. So as it is now, it's been really a do-nothing day. We fell nicely in the morning. We rallied mightily and gave that up. And as I said, we're just kind of barely changing. Now the incur is up a little bitty bit. The ES and the RTY are down a little bit. So kind of a big old meh. But I've got some cool charts for you, so let's jump in and check those out. Here's the spider. And we are smack dab in the middle of this range here. Like so, resistance, and like so, support. And which support we actually got beneath yesterday. It was so weak at one point. But we have been, this was the steady slide, all the way down. And since then, has been a lot of uncertainty because we went blasting higher and blasting lower. And now we're in the middle of this range that we have, on the whole, been in for the past couple of weeks. I guess 2 or 3 of those aforementioned events this week is what the market's waiting for before it makes its next move. Here's the XLI, which is still in a very pretty little topping pattern there. And a tiny minority, but smaller than zero, is beginning to see that the peaks are behind us, the highs are behind us, and it's just a matter of like managing the grind lower. And I certainly am of that mind that we're in for a long slog down in this fourth turning of ours. And so you make the most of it. Here's IWM, which is relatively weak. IWM's down about 0.4%. We had our lovely, almost perfect head and shoulders top here. Here's the neckline. This is the retrace to the neckline, the resumed plunge. And as I said yesterday, crazy as it sounds, this is actually the target. Way down there. At which time they'll announce some new multi-trillion-dollar stock buyback from the U.S. government or something insane like that. So be interesting to see what they cook up this time. Here's the cubes. And they, as with the rest, obviously, terribly weak here, a bounce back, and a rather feeble one, and then a resumption of the down. Just kind of hanging out here near these lows. Within that, the semiconductors is weaker, down about 0.75%, like so. And I would also mention, specifically within that, the big one is NVIDIA, which is down just a touch, and it's grinding around again near support here. So back in the day, back here, like so, NVIDIA, like ARC back in 2021, was everybody's favorite. It did nothing but go up. And so NVIDIA went from like about a $10 stock in October 2022 to about 1,200% higher than that by June of last year. So it was the stock everybody wanted to have, and nobody knew Jensen Huang here, and everybody knew Jensen Huang here, and everybody wanted a piece of NVIDIA. And since then, it has shed some of its value, and the ultimate peak was this year. Hard to believe, but it was. But 153, and we have lost about a third of that. And this line here used to represent resistance, 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 and we poked through it. And since then, these plunges have treated it as support, like so. So we're definitely more prone to bouncing higher than cracking lower at this point, as far as NVIDIA goes. Relatedly, Oklo, which is Sam Altman's nuclear company, had an explosive move higher. It moved from about $5 to about 60. So another 1,000% rise. That has somewhat withered away. I mean, if you got it at 5 and it's at 20 now, you're not unhappy, but it's been a pretty dramatic fall as the whole AI/energy mania has abated. EFA, which is the ETF for stocks outside North America. Canada and US used to be kind of considered so friendly that they were just kind of one and the same. So outside North America, this is EFA. And this wedge here, I would say, is very, very similar to what we experienced here. Eerily so, because we had this nice round at top, the big plunge, hammered out a wedge, broke the wedge, and fell quite a lot lower. Same idea here, except for the fact that the top was quite a bit lower than the wedge proceeded to go. But I'm using this as kind of an analog. And so as far as a you are here kind of moment, it's sort of like here, round about, August 2011. And so as we zoom in, we have, we cracked this, managed to clamber up above it for a little while. We're back below it again. And more specifically, we've got a nice gap there. So today, I went ahead and shorted a bunch of this at pretty good prices as we got close to that gap. I think I mentioned yesterday, if we got close to that gap, it'd be an interesting trade. And we'll see. Got to stop just above that. So we will see about that one. But it seems like a pretty nice little setup. More specifically, FXI China continues to sell off little by little. Nothing calamitous, just kind of leaks out about 0.5% every day. Now, earlier today, gold was at another lifetime high. And we can see here, it had gotten up to within spitting distance of 3,200. But as I keep sort of marveling, this thing doesn't seem to take a breather, but maybe a breather is coming because we're actually red a little bit on gold. The front month's down a little over $1, just a tiny bit. But it's been lurching higher, $20, $30, $40 a day. So it's not surprising we're getting some selling. Of more interest to me, though, is silver because of its relative poor performance versus gold. So as we look at GLD, we can see here that, it's down a little bit, a little more than 0.25%. It was at a lifetime high earlier today. But you can see with GLD that especially since, well, really for the entire year, for the entirety of 2025, it was just like it ripped higher, took a few days of a breather, another rip higher, but very strong and at levels vastly higher than ever seen before. Where silver, it's okay, past couple of years, but it's not even in the same zip code as its own lifetime highs. Plus, unlike gold, it peaked here in October and fell. And even with all the power we've seen with gold this year, it didn't even manage to match where it was last year. So very, very poor performer. And so as at this very moment, gold, the front month is down 0.02%, basically unchanged, where silver's down 0.8%. So not surprising. So if gold, for example, was down 1%, I wouldn't be surprised to see silver down 3 or 4%. Also entered a short on, I think, the biggest miner, Newmont, with a nice clean stop right there. 49.52 is where that horizontal is set. As long as we're talking about commodities, oil is down a bit, about 1/3%. I'm going to give COP another try. This has been disappointing, the COP and ZOP stuff, XOP, but we're going to give it another shot. And XOP in particular here, this one is up just a little bit, but as I said yesterday, super tight stop on this one. If and when this does start to weaken at all, I think it'll be very, very swift, because when XOP does sell off, as you can see here, for example, and here it can do so very, very rapidly. It has been excruciatingly robust lately. Another kind of chart tidbit to mention, we talked about brokers yesterday having sealed this gap almost perfectly. The gap itself was at 156.59. Yesterday's low, 157.21. So just a few dimes away. So that gap was almost perfectly sealed. Nice reversal yesterday and a continuation of that today. So just a good example of how gaps can be so useful. Looking at a few, catching up on some other bearish odds and ends. CC, an old friend we've talked about for months, literally continues to leak lower. I'm sure when this is a $2 stock, I'll just be beating myself up, because we first talked about it when it was way up, when it was completing this rounded top. But it's a slow mover, but boy, is it getting there. So CC continuing to do well. Corning down about 1%. It's within this channel. Plenty more to go in that one. Home Depot. I entered the day with puts on this already. It was stronger earlier today, and I bought more. And it's actually down now a little bit, about 0.5%. And I really, really like the look of this, so long as we don't exceed, let's call it 370. 370 seems like a pretty decent stop loss point on Home Depot. Here's Merck, MRK, which is having a nice tumble, I think probably because of tariffs. We had slipped hard here, started to push higher. That peaked yesterday. That's all been given up. So we just blew away the healing, so to speak, that took place over the past 5 days very quickly. So Merck's doing well. And I'm not in this one. I wish I was, but Netflix scares me a little bit too much. We continue to have a very powerful relationship with this midline of the channel. And sorry to be so repetitious about this, but historically, these tops haven't yielded anything. It really looked like we're getting ready for disappointment number 4 here. No, it actually plunged beneath that midline again. This one might actually take, but I ain't going near it. How's the time? Got half a minute left. Perfect. Just a couple more symbols. Just stumbled upon Japan, the Nikkei 225 futures. On the one hand, it looks exceptionally toppy. On the other, it doesn't seem to matter, because long term, you can see these rounded tops, with the exception of COVID, didn't really do anything. But this is a really big top. Were it not for all this crummy history, it would look really compelling. And a little closer to home, the Russell, the RTY futures. Once again, if we do start falling nicely, 1900 seems like a good target for this move. And that is it from me. Tomorrow, I guess we'll have those election results from Wisconsin and Florida and whatever the third one is. And of course, when I see you next, if all goes to schedule, they'll be in the middle of the Liberation Day chit-chat. So good. All right. See you Wednesday, everybody. Thanks for coming by.
If you missed the live show, here's our cherry on top weekly recap.
I had what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense.
It does.
Yeah.
It really does.
They kind of sure.
I don't even know what that means. Sure. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my.
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you got.
I'm thinking of getting rid of it.
New look?
I'm thinking of the new look.
You should do a faux hawk.
Oh,
What is
I think you nailed it. No, I don't know.
No, cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for the last call here on Terrific Tuesday, Sadnov. As foretold, E-mini S&Ps are up about 3 handles, meandering around $30 lower, $30 higher. A1 for the bat. NASDAQ up 75. Russell and the Dow continue to be the weakest of the group for the day. Russell down 4, Dow down 104. Volatility in by 7 cents and bonds up 105. Sadnov, if you go down here, you're really looking at Bitcoin and Bitcoin-like products being the biggest movers on a percentage basis until you get down to nat gas, which is doing the opposite of what Bitcoin's doing. Bitcoin's up 3.25%. Nat gas is down almost 4%, Sadnov, under $4 to $3.95 and change. Otherwise, Sadnov, all quiet on the Western Front today. Even gold is unchanged, and that's never unchanged.
It was down almost $10 at one point.
Oh, shut your mouth. How dare you say that?
It was, but not anymore.
Well, that was then. This is now.
Yeah. No,
Hey, did you see my friend Frankie in the chat went to your In-N-Out Burger today and got your Flying Dutchman, or as we like to call it, the Amsterdam Burger.
How was it?
He said it was the messiest burger he's ever had from In-N-Out Burger. Yeah.
It fell apart.
Fell apart. As
it looks
foretold,
good,
by the way.
As foretold, sure.
Yeah.
Yeah, it looks good, but I can see it being a little sloppy.
Mm-hmm. And I got foretold from my friend Aaron. I said it was John yesterday. I lied. I made a mistake. Aaron wrote me and said, "Hey, foretold was mine, not John's." So, remember we were doing the guess the market? Anyway.
Hey, Ron. Sure. Yeah, the guess the market winner was contacted today. He was very happy.
Oh, did he finally contact you? That's awesome.
No, not me. Nikki got it. Hold on.
Oh, good. That's cool.
Yeah.
That's
Yes,
great.
very
That's
happy.
great.
So first and second place contacted me. They were very close, but unfortunately, you don't get much in second place. You get a good job, buddy.
You were so close. You had $1,000 right in your hands, and you messed it up.
Yeah. You just get a attaboy. But anyway, let's think about what else. What else today? I mean, okay, so I'll give you my kind of perspective for today. I traded a lot less because today I was like, you know what? They are going to go up. They're going to go down. I made this decision early today. I'm going to get frustrated by how much they're down at some point. I'm going to get frustrated by how much they're up. I'm going to chase these things all over the place. So I'm not going to adjust one thing today. And it was the right call.
Yeah, anything you adjusted, it didn't work out.
Anything you adjusted, you got double
you had
whammy.
you had a chance to get right back in the other direction. If it was higher, it went lower. If it was lower, it went higher. I mean, today we really did say we were going to chop around, and we really did chop around. Maybe went a little bit too extreme on the downside pretty early, but I didn't get flustered. You seemed like you were ready to cry a little bit, but I didn't get flustered.
Oh my God.
Sadnov, I got to give you some props, though. My man, you are back on the scalping fool that you are, that CRWV, man, up $11, Sadnov. You called it yesterday. You were buying this thing, around, I don't know, 37 or something like that? Beautiful
36,
call from you.
36, 37. I sold it this morning at 38, 39. I mean, honestly, this morning, I was happy to make $2 on it.
What did you expect to make on it? I mean, like that would have. That's what you figure. It's wrapped around $40. It's going to be $40 again. Maybe it's going to trade a little bit weak because it went down. Nobody supported it. I agree with you 100%.
Yeah, I mean, I was long some other AI stuff, so I was like happy that it had a rally, but I had no clue that you would have anything close to that kind of a rally today. And I mean, nobody did. It's impossible.
Right.
So,
right.
But anyway, listen, the one thing, I mean, you got to get over early in this business is you're going to have plenty of trades where you're going to look at them later in the day and go, I can't believe I got out here. But you're also going to forget all the times that you got out of something and then it crashed afterwards. And so, because you're totally never going to look at them again. So I don't look at that stuff. I swear.
Well, I'm going to give you something to look at here in a minute, Sadnov, because it has crash mode up on me, and it's up almost 200% today. Are you ready for this?
Sure.
NMAX, Sosnoff, the conservative new NMAX.
NMAX. I don't know what that is.
NMAX. It's
Newsmax.
Yeah, Newsmax. Yeah. It's a conservative.
No, I know, but it's an IPO. I don't think they have options yet, do they?
They don't have options on it yet, and you can't short the stock or anything like that. Maybe we should have options in a few days, I would think. This, you've seen the stock, right? I mean, it's up.
I have not seen. I didn't even know the symbol. What's the symbol? N.
Max.
And what?
NMAX.
That's right. I didn't see it. Somebody mentioned it this morning. I think it was Josh or somebody talked about it. It came out at like 40. It was showing like 140. But I don't. Those are the IPOs.
237. It is now. It's up $150.
Yeah, that's just like, okay. I mean, I don't want to get political here. All right.
I don't want to get political either here. I'm the one that brought it up when you were talking about stocks that go up and stocks that go down. I said, this has one that has that.
That's a meme stock thing. It's probably worth, it came out at 40. It's probably worth 40. It's 200 and something. But here's the thing. Remember, the only people that are buying this thing right here now are the ones that weren't supposed to short it that did.
The IPO was at 10, Tom. IPO was not 40, it was 10. And it's 240 right now, 239.
I thought somebody said it was 40, but I could be wrong. Anyway, Oh, no, hold on. The IPO may have been 10, but then the price it opened at was 40, I think.
It opened at 14 and went as high as 80 something on that day.
Wow. I don't know. Anyway, that's the kind of stock where when you have an IPO, like we won't let you short it. And here's the reason why. Because people yell at
it's a 550% borrow rate.
Right. But people yell at us all the time. They're like, and they yell at every firm. They go, how come you guys won't let us short this stuff? Because there is no stock to borrow. So if you shorted it, you're going to be, 550%. So it's just, and people that shorted, not only did you lose 550%, you're paying 550% to lose 550%. I mean, they literally wipe people out with this. It's a wipeout.
Yeah. Yes, it is. Yes, it is.
Yeah. I mean, this is why, like, believe me, when they open options in here, the $40 puts will be $10.
Right. And it's not not us. It's the clearing firm too. I mean, they can't locate the shares. You have to locate the shares to short it.
Oh yeah. I'm looking at it right now. The market's $3 wide, 232 to 235, $3 wide. It's only traded 10 million shares.
It's only up 180% today.
No, it's up $150. That can't be. It's got to be more than that. I don't know. Whatever. Our risk team is going to have a nightmare with this stock when they come out, because this is the kind of stock where if there's more shorts out there than there are today, I mean, they obviously got a lot of people, but if you're wondering, we'll see what happens when they open options.
I mean, it could still be a hard to borrow stock even with the options open, and that's when you'll get.
It'll be hard to borrow, but you could do something like if you try to buy a put spread.
You can make synthetic short stock or something like that. Sure.
If you try to buy like the 195 put spread, it'll be $4.90.
195 put spread. That's going to trade at $4.96.
That's what I said. $4.90.
I said $4.96. $4.96.
You're gonna be like, it's $150 out of the money. Yes, it'll be $4.95.
I'm gonna be at $4.97 in a moment if you're not quick.
Yeah. I mean, and if you're wondering, like, those are market makers' nightmares, I think. I don't know. We'll see.
Oh my God, yes.
Yeah.
And risk portfolio managers too. Margin Island's gonna have some fun.
Yeah, that one's gonna be a tough one. All right. Other than that, looking around today, and just talking commodities first, because there's not that much to talk about. The biggest moves, again, all day were in S&Ps and NASDAQ. Mm-hmm. The bonds have been up. They haven't really moved much all day. They've been up a little over a point the entire day. Everything else has been really, really quiet, except for Bitcoin, which is up, and a little bit of gold, which turned around, and silver, which is even weaker. In the stock side, the strongest stock all day has been Tesla. It's been up around $10 or better most of the day. It's been strong all day. This is like a day where they came for the pigs. Tesla's up, Meta's up. Meta's been a real pig lately. Google's up, Microsoft's up. They just came for some of the stocks that have been, super.
And these stocks were weak this morning too. Remember, we were talking about the NASDAQ stocks. You just mentioned all the NASDAQ stocks.
Tesla wasn't weak, but some of the
Tesla wasn't weak. Tesla was the only one that was up on the day. Yes, I agree. But the Metas of the world.
That core weave that we were trading, that yesterday we were buying, it's up $12 today. It's up like 25%.
It's flirting with $50, right?
I know, it's 25%. So all of a sudden they, we might have been off on this sucker.
Right. You had it, Sadnoff. You wanted to load the Flotola too. You did some good size, but
had it and lost it. I know.
Guess you were happy with your $2 profit.
I was. I absolutely was at the time. Let's take a look here and see if there's anything kind of else, and I don't really see it. I mean, no earnings, right?
No earnings. Earnings aren't going to come until the middle of the month, another week or so, a couple of days.
Yeah, and you got your big boys coming out tomorrow. I mean, you got your big news tomorrow, your tariffs, all your whatever stuff. And don't forget, tomorrow is what's your assumption. So we will take your assumptions for what's your assumption tomorrow. tastylive.com/assumption. That's tastylive.com/assumption. Send us your kind of ideas. But don't send us an idea.
Or even send us your assumptions. Like, you think you think volatility is going to go lower. You think volatility is going to go higher. What would you do? That kind of thing.
There's a simple page to fill out, and it's pretty easy. But don't send us anything with stocks like Newsmax, because we're not going to do it. Okay.
Well, there's nothing Newsmax, you can't even do anything.
I know, but we're not. I mean, CoreWeave, for example, we're not going to trade that. I mean, if I feel like it's at a lower end extreme, like yesterday, maybe, but not. Definitely not here.
They got to add strikes in there already. It's only 25 to 50 right now.
Yep. Well, I don't think they were thinking this today. But anyway,
no, I don't think so.
Listen, welcome to this business. One of the things we love about this business is that every single freaking day we got stuff like this going on, which makes it, it makes it fun, keeps us alive.
Yeah.
Keeps us in the game every single day. Just looking for stuff to do. Anyway, taking a quick look at my watch list just to see, another stock. Well, I'm just going to take a quick look at AppLovin. That's a stock that I have a bunch of, not a bunch. I have some positions on. It moves all over the place. Nah, can't really trade it. Just wanted to see if there was something going on in there. A little bit. All right. Anything else that jumps off the screen at you? Nothing that really jumps off.
Tesla quarterly delivery numbers are out tomorrow. My Taiwanese sources tell me it's a little mini binary event. If you need ideas,
In Tesla right now, is that after the close? It's not before the opening, is it?
Quarterly delivery numbers out tomorrow. I don't know when tomorrow. I will do a little bit more searching for you.
Well, Tesla volatility is still high. And my position in there is fairly neutral. I mean, there's a lot of juice in Tesla. We're short the 220 puts, and it
says it comes out on Wednesday. It doesn't say what time.
We're short the 340 calls and the 220 puts.
Tesla volatility has creeped up a little bit. It was over 70 just a moment ago. It's come in just a little bit now at 66 and change.
I'm flat deltas in there. I don't know. I think I'm just going to leave.
I'm flat deltas in there too, and I'm down a little bit of money.
I'm down too today. But Tesla this morning was one of the worst stocks. Now it's just a small loser.
Sure.
But yeah, it was pretty bad this morning in there. I agree with you, and volatility will stay pumped in there until the numbers come out. I don't think there'll be anything much else. Well, what do you think of this market now? You had the huge rally turnaround yesterday, sell off on the close, sell off overnight, rally back this morning, sell off during the day, rally back this afternoon. I got a feeling more of the same right into the close tomorrow.
Right into the close tomorrow. Man.
I mean, isn't all the tariff stuff after the close tomorrow?
Yeah.
Yeah, I think it's.
I'm going to give you a little upward bias, Sadnov. I think they're going to squeeze the shorts a little bit here. Maybe just a little.
Here's what you have going for you if you think you're going to squeeze the shorts. You definitely have no pressure from the bond market because they rallied the bonds a huge amount. So you're going to have the bonds to support you because you got lower rates for sure.
Yeah.
You've got so many stocks that today they could have taken them down and they didn't because I think they were just too cheap. A lot of stocks, like for me, Meta, Apple, Coinbase, Google, Nvidia, they just got too cheap.
Agreed. I mean, Netflix is still down $8 or $9, but Qualcomm down $1, and then after that, when you look at the upside, completely different. Tesla up 10, Meta up 9.
Yeah.
Crowd, Costco, Microsoft, which was strong all day. That was helping the Dow, and the Dow is the weakest of the group here, up almost 7. Yeah, I'll give you that. The NASDAQ stock's totally turned around.
Yeah. So I think that I really think that this is just, the market could easily rally from here a little bit. Not something that's like insane, but easily rally. And I agree with you. Easily rally on a Wednesday. I think it's going to have a lot more trouble towards the end of the week when you've got, I think it's going to have trouble into the Fed, into unemployment and everything else. I think that's going to be a challenge for the market. But I think right here, you made a nice double bottom. Yeah, sure. I'll buy a rally.
Okay. I talked you into it. We're going to sell off for sure now.
Probably. I mean, this is the flattest I've been going into the close. So I'm not complaining.
Yeah, I'm pretty flat here too. I was able to take off a couple of trades today, Sadnov. I know you missed them, but my Costco trade from about 2 weeks ago, my AFRM trade from 2 weeks ago, which a lot of people really like, Sadnov, because I did a strategy you're not really that familiar with, which was pretty good.
It's always impressive when you can do strategies that I'm not familiar with.
Okay, thank you. It's my life's blessing. That's what I try to do.
I love it when you can do strategies that nobody else knows. They're like all only Batistas. It's like a secret old family recipe.
It is.
Yeah, it's like a meatball.
Yeah,
like a meatball.
Like do a 1x2 call spread and sell a put, Sadnov. Kind of maximize your buying power. Kind of go with your assumption a little bit. Hope the stock just kind of cooperates in a slow way, and then you get paid. You know how it works.
Amazing.
I mean, you used to know how it works.
Yeah, it's amazing. Well, I am just kind of like, I wouldn't say limping here into the close. I would say we did a lot of trading the last 2 days, and
you got a positive P&L all day. I mean,
yeah.
You haven't had to worry.
No, never in trouble today. Mm-hmm. Yesterday we were in a little trouble from here and there, but it worked out okay. Today, never in trouble. But I'm kind of setting my positions up. I mean, we have a decent theta number. Just trying to set myself up for the rest of the week, kind of thing.
Keeping it tight. I got you, my friend. I got you. You know who else likes to keep it tight? We got a couple of guys from the Overtime crew. You want to bring those gentlemen
in? Sure.
Let's do it. Who we got? I know we got Ilya. I know we got Chris. Yeah, there they are. What's up, gentlemen?
Hello, boys.
I'm tired, boss. Today, tired of being on the road, being a lonely sparrow in the rain.
What the hell?
3 Mile?
Yeah, I know. I didn't remember that.
Can you tell me when the Tesla numbers come out? Is it after the close tomorrow, during the day, before the opening? Do you know? Either one of you?
No, I don't.
Okay, no worries.
If he's smart, he'll release them around, say, 4 p.m. Eastern. I heard there's a big announcement then. Well,
yeah.
There's something else that's probably going to be in the news around then.
Oh, gotcha.
That wouldn't be a bad time.
I still don't understand how Netflix can push out their earnings on Friday of expiration in April. Like, I just don't get that. Like,
it's been bothering you all. It's been bothering you all morning.
Well, it really pisses me off because it's so unfair to retail investors. You know it is. You can't defend your position.
April 17th, after the close, Sadnov, after the close.
It's the most ridiculous thing I've ever seen. I can't believe the exchanges didn't go to them and say, "Hey guys, you can't do.
You got to change this, man."
Yeah, you got to change this. Like, it's so unfair. I mean, you can't do the 0 day. What do you do?
You can't have a position at the close anywhere near where.
Yeah, but what do you know? What's near? I mean, what if it moves 200 points?
Oh, you don't know. I mean, it's a $900 stock. With a $10 expected move per day. I mean, yeah, you're $20 out of the money. You're not in. You're still in harm's way. You're in the crosshairs.
$50 out of the money, you could be in crosshairs.
Sure.
You don't know.
Sure.
Yeah,
right.
It doesn't make. It's the dumbest thing I've ever seen.
Yep.
I think the exchanges should call them up and say, "Listen, move your date up a day or back a day, but you can't have it on a Friday of expiration. It's so unfair to customers."
Yep. Totally agree.
Anyway, boys. So, I mean, I guess
it seems to be going according to plan.
Well, yeah. I mean, I told Tony before we came on, I go, I'm not adjusting any positions today. Not adjusting a single position today because when they look really horrible, they're going to rally back. When they look really, really good, they're going to sell off.
Well, I mean the bottom line is the NASDAQ broke market's low. It held the break. Bonds are rallying because of the relief valve to whatever comes tomorrow is probably lower rates, whether the markets like it or don't like it. We'll see. Ostensibly, if they get certainty, they'll like it more than if they get uncertainty, no matter what the actual substance of it is. But the bottom line will be that probably lower rates are coming, no matter what it is. And sort of that's how it's all setting up today. I'm happily short the S&P, happily short the NASDAQ, and happily long bonds.
Okay. So what if you think bonds are going higher and rates are going lower? Wouldn't that be bullish for the market, or you just look at it as a hedge?
No, I think rates going down are different depending on the reason. If they're going down because we're cutting for maintenance because inflation has come down and we don't want real interest rates to spike, that's good. If we're cutting rates because there's a recession, that's obviously bad.
Okay, well, we don't know if we're in a recession until we're out of a recession.
No, but the growth scare is out there, and I think that's the most important thing. I mean, we just got more PMI surveys today where you ask S&P Global or ISM, business leaders are scared because they're uncertain. They don't know what's coming. They're not spending. So that would be
hold on a second. We have a business leader.
I hate to break the news to you, Ilya, but business leaders are always uncertain. They're always uncertain.
Well, of course they are, but they appear to be uncertain enough to stop spending money in the past several months. That's
you don't have a business leader, Tony. You have a business leader / best-selling author.
That's right.
Somebody said that now you've piqued my interest.
Amongst other things.
All right, Mr. Vatican.
So here's what I've learned. So listen, you guys don't seem to, you guys are a little slow on the uptake sometimes. It's okay. So Ilya is a very intelligent man from California. Mm-hmm. And if you listen clearly to what he says, you'll understand that the bond can rise for good reasons. The bond can rise for bad reasons. Either way, the bond rises. You can also understand that the dollar can be strong for good reasons or this dollar can be strong for bad reasons, but either way, the dollar can rise. But if it's rising for good reasons, then other bad reasons happen for other things that it's not good, you see. But if it's rising for good reasons, then it's got bad reasons. It's not good for the good things, and then it's not good.
Exactly.
It's very simple, actually.
That's exactly right.
I feel dirty. I'm not gonna lie. I feel dirty.
You just have to pay attention. It's no problem for me. I just do what he says.
Chris, you're the voice of reason here.
I just feel dirty. I feel like I did something I should have done.
Chris, you're the voice of reason.
TLDR buy bonds.
We can only control what risk we have on, right? I'm looking at a number of positions that were going into 21 DTE at the end of this week. They're sitting at 23 or 24. I'm kicking them out and rolling them today and tomorrow. I don't want to stand in front of whatever tariff announcement there is and watch gains with higher convexity get lost or losses get amplified. So more duration existing positions.
So your equity DT is already past 21 days, but your futures DT is going to hit 21 days this Friday. So you roll tomorrow if you want to.
I had short put spread in ZB. I rolled that out today to 80 days. I had the same in the Z, right? Like GC, just no reason to do it
fine.
In 2 days. Avoid the risk.
All right, boys.
I'm gonna leave for a good reason. The bell rang, so I'm gonna take a quick 90-second break.
Boys.
Come back. We got more with overtime next. Peace.
Tom versus Tony. Round one. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
T-1 until Liberation Day. It's Tuesday, April 1st, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan as we take you through the rest of the trading day. Futures market closes at 5 Eastern, 4 Central. If you're already on the platform, if you're already on tastylive.com, thanks for joining us. Hope you continue watching. Otherwise, head over to YouTube where we're also streaming. Join the chat there. Tell us what you think of these markets, what you think of this back and forth price action today. I'm not feeling too comfortable or cool under the collar here, guys. Feeling like there's not much edge heading into tomorrow's turn of events, but we'll see what you two think. Stocks ultimately do resolve themselves mostly higher. A day where we were dipping lower now. The S&P 500 closes up by 0.38%, 56.75. You have your NASDAQ up by about 0.86%, 19,605. The Russell's flat. The Dow Jones is down by 0.05%. Bond yields are lower across the board. Metals perk up and then come in. We see a dollar ultimately sells off by the end of the session. Energy rather uninteresting. Dylan, jokes aside about making sense of bonds doing well in any environment here at the end of last call, you were alluding to an environment where it seems like there's a lot of chaos and confusion underlying everything. I was just saying here to you guys in the green room that I feel like I have the least amount of edge I've ever had in my trading and professional career, perhaps, going into tomorrow. Talk me off the ledge, Mr. Radigan. Why is everything going to be fine for tomorrow?
Well, I mean, I think it's not about, I don't know that I can do that. I think that you have to come to terms with the fact that America's leadership is the most unreliable and adversarial in modern history. And as a result, all assets on Earth are 10 to 20% less valuable. And so I think the easiest way to make peace with the situation is not to try to pick this or this or this or this. It's to understand that the economic value of everything on Earth has been compressed because the most valuable and most important counterparty on Earth has become unpredictable and unstable. And so then if you understand that everything is, 10 to 20% less valuable on Earth, and then, and all the charts show this, you can keep flipping charts, you'll see the same reality. The question becomes, okay, well, I guess there's two questions. One, are the tariffs tomorrow an April Fool's joke, and will there be a last second delay? very easily could be. But at this point, even if there is a reprieve on the tariffs, it'll just validate that the American president is a psychopath nut job. So
This
even
is
if you really
the key, really.
Yeah. So even if you get
This is
relief
it.
in the and the point is,
If the show continues, the show doesn't continue, because a continuation of the show would be exactly what the problem is. The problem isn't the substance of the policy, which the markets could have generally known and did back to November. It's the implementation and the fog. Exactly.
And so the reason I say everything on earth is worth 10 to 20% less is not based on whether or not the tariffs are announced tomorrow or not. Rather, it's that the road to getting here and the temperament of the counterparty has proven to be an unstable lunatic. And as a result, everything is less valuable. It's like if you're driving in a car and if everybody in the world is riding a bus, and everybody on the bus knows that the driver of the bus is hammered on whiskey, then that bus is by definition more dangerous for everybody riding it. And as such, it has a higher aggregate risk profile, which is what the whole world has right now, more risk on earth. As a result, less economic value, diminished economic expectations, et cetera, et cetera, et cetera.
Ilya, heading into tomorrow's Liberation Day, we find a market that had a slight risk-off tone overnight and sentiment improved over the course of the session. Gold touched a new all-time high. Yields moved lower. ZB was only up close to 119 at one point. ZN is closing at we'll say what down here. I think this is a closing high for the year in the notes as it is. Closing high for the year in the notes as well. You seem convinced, as you were trying to explain at the end of last call, it almost feels like there's some narrative flexibility here for bonds right now. If the tariffs are high, the tariffs are low, growth is slowing either way in the short term.
That's it. At the end of the day, we're going to get a tariff announcement. It will be some kind of an announcement of something. I don't mean that facetiously. I mean that nobody actually knows. The president was asked whether he's finally settled on a plan. He said yes. That was it. Here's where the confusion is. If the tariffs are supposed to be reciprocal, how do you do that? Do you set up parallel regimes with different countries that mirror what they apply to us? And how absurd does that get? The Economist, for example, has an example of Colombia that puts a 70% tariff on coffee. We don't export coffee. Are we going to put a 70% tariff on coffee for U.S. exports to Colombia that are largely non-existent? Is this a rule that we need? Nobody knows. If we don't do specific one-for-one tariffs, are we going to do average tariffs? How do we calculate that? What about non-tariff barriers? The president said he wanted to mirror those back at the trading partners. How does that work? Nobody knows. So this is really confusing, and rightly so. And so business leaders have pulled back spending, and consumers aren't confident about what comes next. Understandably so. It's very difficult to make heads or tails on what any of this is. What we do know, though, is that some kind of tariffs are coming. Tariffs, we've heard from the Fed, are generally bad for growth and generally a boost to inflation, but the Fed is open-minded to the idea that the boost to inflation is a one-off adjustment, maybe. But whether it is or isn't, that's a question. We do know it's bad for growth. And so the one outlet here, no matter what the substance of this is and whether the stock market thinks it got its certainty or it didn't, is rate cuts. And that means higher bonds.
I mean, the other thing that's interesting, and I don't disagree, I think the higher bond play is the sort of the risk, the most conservative way to get a trading position on at this moment is that. But I'm sort of contemplating whether it's that there's a lot of headlines in Europe today about Brussels using a tariff sledgehammer against a large American technology companies and large American banks and restricting or eliminating their access to the 450 million consumers in Europe. You also have Japan, South Korea, and China talking about a coordinated attack on all U.S. So whether it's Apple, whether it's Google, whether it's Tesla, whether it's Disney, whether it's J.P. Morgan, now you're going to see at least, who knows how much of this ever happens, quite honestly. But rhetorically, in terms of the rhetoric in Brussels, the rhetoric in Beijing, the rhetoric in Tokyo, the rhetoric in Seoul is, well, listen, we represent 1 billion consumers of American technology, American banks, American cars, American product, and we'll use a sledgehammer on you. And so now you're sort of in this rhetorical race to the bottom, which I would say the obvious trade is to buy the bond, because no matter what happens, it's bad for growth and it's bad for confidence, which is a good for lower rates, I guess. And as a result, good for higher bonds. But also, I still think there's some room to be, the madman's delight, to use a term of our own invention from the three of us last year, would be to get short the tariffs. That ultimately these tariffs will, even if they're announced, will not be implemented by virtue of the sort of mutually assured economic destruction that's being brought to the table at this point, whether it's the aggressive rhetoric from Europe against all big American technology companies and all big American financial services firms, or the coordinated response that is being defined right now in Asia between China, South Korea, and Japan in direct attack on all American products. It's hard to see how this is good for any business on earth. Full stop.
All of which is to say there will be a negative economic response, and that negative economic response will require rate cuts. That's
and a higher bond.
As far as I'm concerned, that's the only sense you can make of this so far. And the question for stocks will be, do you get a durable thing that is announced tomorrow that you could extrapolate? And then stocks might say, okay, well, it's bad, but this is something businesses could benchmark against for the next year, 2 years, 3 years, maybe even. Maybe we're finally done with this back and forth, and we can move on to extending the tax cuts from the first administration, the other big objectives to get done for the second half of this year before midterms next year. So the calculus here politically is you got to get this stuff done. The rush to end the wars in Russia and Ukraine, as well as the Israel-Hamas theater, sort of part of that story. You have to get all this bull in a china shop stuff done so you can do the taxes, so you can run in the midterms next year, loosely speaking. And so when you get this announcement, maybe you finally get clarity. And then everybody goes, okay, fine. This is awful or not awful, but whatever it is, it is. And now we can map out what we're going to do next. And markets settle because they find their new baseline. Or, as recent history would suggest, you don't get clarity. You get what we've all surmised are tariffs as a negotiating tactic, which means it's an opening bid that can be negotiated down. The president can change its mind. The trading partners can come back and say, okay, opening bid received, now let's negotiate. And now everybody has to wait for the negotiation to continue. More uncertainty. So if you don't get that, well, then stocks probably react negatively because, again, they don't know what's going on in 3 to 6 months, and neither do businesses and neither do consumers, which is obviously a dampening effect on all manner of economic activity. Then stocks don't like it. But either way, you're going to need rate cuts.
I mean, how about this? globalism or globalization, I won't say globalism, I guess that's more political. Economically, globalization of economic activity is being reduced. I won't get
very,
hyperbolic.
very clearly so. Yes.
No question.
No question.
To the degree to which global economic activity, trade between China and America, America and Europe, Europe and America, Canada and America, America and South America, whatever it is all on the decline. Full stop.
And all of that on top of it is potentially inflationary depending on whether these barriers stick around. So there was an interesting timeline that came out that basically said either way the tariffs lead to disinflation, which is an interesting thing because on one hand that's true. If you crash the economy, inflation will go down. If you slow economic activity, inflation will be cooler. If you set up reciprocal tariffs and other countries say, you know what, rather than fight you, we're going to lower our tariffs, so you have to lower yours. And this is a kind of shadow WTO, a kind of way to say, instead of having the WTO, the U.S. will just create a parallel WTO, neuter the existing one, and say we're overtly in charge. There's no even pretense to this being a multilateral organization. This is a shadow WTO that we run. And everybody lowers their trade barriers in response. Maybe, fanciful, but maybe. And then there's disinflation then. But if tariffs remain, however benign or certain or whatever, that's inflationary for the longer haul, whether you have a recession near term or you don't.
I mean, I've seen a lot of people say, even economists who are partial to the Trump tariffs. Oren Cass, who runs American Compass and has been making the rounds in media to support Trump. He was on the Daily Show last night with Jon Stewart. He said today, quote that came out, if you want auto companies to build more domestic plants, if you want steel companies to expand domestic production, they need to have some understanding of what the long-term outlook is for tariff policy. He continues, you get the costs and disruptions with tariffs without the upside of the investment otherwise. And that's kind of where we are right now, right? We have the disruptions and the costs of the tariffs. Lumber prices have moved. Steel prices have moved. We've seen that companies are beginning to steel producer in Cleveland just cut 1,200 workers because of the uptick in costs and now lack of demand for their goods. They just can't afford it. Can't keep the doors open, right? So the tariffs aren't necessarily there yet, but we've had all the costs and disruptions start to be levied. But we don't officially know if they're going to be in here for a long time, if they're going to stick around or even be implemented. Now, tomorrow, the announcement is at 4 p.m. Eastern, purportedly. I say purportedly because last week we had the auto tariffs announcement at 4 p.m. Eastern, and we didn't get them in the middle of the show. We actually got them around 5:15, 5:20 p.m. Eastern. So there's a chance that the announcement comes when futures are closed or occurring at a point in the day where you can't execute any futures trading, right? Keeping that in mind, then it sets up for a very interesting open. Tomorrow night, 6 p.m. Eastern, 5 Central, you're going to probably have a gap in some form or fashion. What makes this so interesting to me is that when asked today by the press, the White House press secretary was, what plan is he effectively going with? And she said, my understanding is that the president will have a plan to announce tomorrow. Yeah. So it doesn't seem, I don't know why, I don't know what the incentive is to not announce the plan. Maybe, again, negotiating tactic, or all these other countries, they're afraid of what the announcement will actually say. So between now and 4 p.m. Eastern tomorrow, they fold, they do everything they can to, take down tariff rates. Israel did something similar today. They've been in a free trade agreement with the U.S. since the 1980s. And what have we seen? About 98% of their goods were tax tariff-free. The remaining 2% of the goods will now go into tariff-free as well. Perhaps that's the goal here. But there's the real politic of this all that is kind of scratching my brain. Dylan, I can't think of a time in my life when China, South Korea, and Japan agreed on a single thing. I think that's been a defining feature of global history for the past 80 years, that these three countries, generally speaking, do not get along. If only to that further underscore that point, Japan and South Korea were still having diplomatic rows a few years ago about how Japan treated South Korean women during
like
World War
England,
II.
Germany, and France. I mean, Donald Trump unifies regional adversaries like nothing before his occurrence, whether it's the British, the French, and the Germans, or the South Koreans, the Japanese, and the Chinese. Everybody's now in the same room together because maybe your enemy's enemy is your friend, kind of thing. You know, you're into a situation where why wouldn't China, South Korea, and Japan coordinate a unilateral retaliation against the United States? Why wouldn't Germany, Italy, France, and England all coordinate, and Spain coordinate a retaliation against the United States? Stop allowing the sale of any Apple products in Europe or Asia. Stop allowing the availability of any European or any American financial services companies in Europe or Asia. Stop allowing the distribution of any American entertainment products in Europe or Asia. You know, Hollywood, Silicon Valley, and Wall Street are the three major exports to the world. And the billion odd people in Asia and the 500 million in Europe are meaningful export markets. And so, if you know, it's like if the American government wants to get crazy, then crazy it will be.
Well, the problem, of course, is that if what these countries do is they unify to free up trade between themselves, they help to insulate and they help to keep the damage lower. If they unify to retaliate, everybody loses because everybody's costs go up. And so The Economist was actually making the argument that in this most recent issue, that the thing to do here would be to unify, to liberalize amongst yourselves, not to the exclusion of the U.S., because that would just saw down the branch upon which everybody sits altogether. But certainly that there is now this international reorientation to say, well, we need to figure out going to do all of this by ourselves, means that whatever new free arrangements they reach amongst themselves won't extend to the United States, and ultimately it's U.S. businesses that are going to lose out. They'll lose market share, they'll be less competitive, and all of the issues that we're supposed to be solving, the trade imbalance, assuming that's an issue, of course, but purportedly it is, and purportedly we're solving it with this, all of that gets worse.
Yes.
Yes.
Yeah, it does get worse.
All of it.
Yeah, that's like the word, you know, if we erect these trade barriers and you know, you think about the Trump tariffs in the first term, when we did the, you know, soft ag products, did China ever come back to the table, or did they just buy from Brazil? They ultimately just started buying from Brazil.
Yeah.
And Brazil's filled that gap permanently. So if China and Japan and South Korea work out a trade deal that reduces trade barriers among those three countries, right? Japan's turning around and saying, hey, we need buyers for our cars. South Korea says, hey, we need buyers from our cars. China could say, we can absorb that demand. Why not? We can structure a thing that allows you to sell your vehicles here. You need an export market? We can provide that to you, right? In exchange, you do XYZ for us. We don't want you to renew that American military base. We don't want it. We don't want, get rid of that THAAD. Outside of, get rid of that THAAD deployment situation in you know, Seoul, which is our terminal high altitude missile system to protect against, in theory, you know, potential missile attacks from North Korea. You know, take that off your soil. We'll protect you now. It's a slippery slope, guys.
all you need to know is like the front of the Italian newspapers today in Milan was that the president of the United States has decided that he wants to take Sardinia along with Greenland and Canada, and that all the Sardinians should just move to Gaza because Sardinia is a strategic location for the American security infrastructure. And it was the Italian April Fool's Day joke was a cover article about the American desire to take a piece of Italy for security purposes. But the reason it's a funny joke is because it is not that far from the truth.
I actually I googled it, not even connecting that it was April Fool's Day. I feel like such an idiot, but it's believable.
That's the thing. You're like, maybe.
I mean, stranger things we've heard.
Exactly. You're like, oh, maybe the American president does want to invade Sardinia. But the point of this gathering every afternoon, which I'm pleased to join in as you guys are, I know, is it's a trading discussion. And the one thing that chaos and uncertainty creates is opportunity. Mm-hmm. We've all kind of settled on long bonds as the sort of best probability situation. Gold has obviously been sort of a all-star risk-off positioning, as you call it up. And I guess it's to your point, Chris, it's like you have to be a fool. I want to say, listen, there's no way. I don't believe Donald Trump. I believe he's full of shit. And I believe you should be short the tariffs. But the truth is, I don't have enough confidence in that opinion to put my money where my mouth is, which is why I haven't prosecuted that here. However, Trump historically has been all talk when it comes to these things. And if that's the case, there's going to be a huge rally, particularly in the Mag 7 and the NASDAQ, which is sort of the leveraged growth scenario, if nothing happens. I'm not going to put it on because it just seems too crazy. But I'll probably kick myself when Trump doesn't put on the tariffs, honestly.
I mean, just being sincere about it, I feel like I can always talk myself into anything. Like, oh, I'm going to get long gold. Yeah, China's buying.
Yeah, you can find a way.
I can always find a way. It's one of the benefits of being raised by two attorneys. You learn how to make an argument. I can make an argument for
most anything.
Yeah, I can justify most about anything. And like Dylan, worst comes to worst, we can always use the timeless better men have done worse things excuse to justify our moral shortcomings, especially in markets. I don't find that power within me today, and it's been decreasing over the course of the session. I don't know why.
What would you be attempting to even explain?
I feel like
in other words, using your dual legal parentage, if you were trying to talk yourself into a position, what position would you even attempt to talk yourself into?
Good question. I feel like I keep getting asked the question, what's the trade for tomorrow? I have no clue what the trade for tomorrow is. I have no idea whatsoever. I have no idea if stocks are going to go up, bonds are going to go up. I'm not leaning strongly one way. Ilya, you say strong convictions loosely held. How about no convictions held whatsoever? It's a total crapshoot as far as I think it's a total crapshoot.
Will there be movement or no movement? How about that?
I think there will. I hope there will be movement. Okay. The worst possible outcome for me is if this market does not move and chops around for the next few days. That would be the most frustrating situation. At least if we got a break to the downside, okay, new lows, the growth is going to be, growth is coming in. We look at FactSet, we can see the tracking that they're doing for earnings from Q4 2024 to Q1 2025, and there is a drop off in the year-over-year growth rate. We're seeing more companies are guiding negatively for their earnings at a higher clip above the 5 and 10-year averages as we make our way into Q1 earnings season. Right? I could put together that narrative in my head. Yields down, stocks down, economy's shrinking, right? Corporate earnings are down. That's the bear Goldilocks scenario, right? If the bull Goldilocks is expanding corporate earnings, labor market at 4%, CPI coming closer to 2, real GDP between 2 and 3%, earnings growth year over year positive and expanding, then we are in that bizarro world where literally all of that is moving in the opposite direction and on its head. So it's very easy for me to say that, okay, we should be looking for lower yields, higher gold prices, yada, yada. But on the other end, if the market comes out tomorrow and rallies because of these 20% tariffs, doesn't that mean we should start immediately embrace the idea that perhaps we found a North Star? And that after dealing with all the costs and chaos of the implementation of the tariffs, we finally have that direction. And now we can do the business planning and we can do the supply chain reshuffling, this, that, the other thing. That's putting this completely in a vacuum and ignoring the fact that there's the possibility of retaliations by other countries who seem very willing right now to stick up to America and put us in our place. If you follow the international news, if you look at the polling abroad, America is at one of its lowest points of popularity in my lifetime in 35 years. Do I trust a market rally, Dylan, if I think that American exceptionalism is dissipating, that the TINA trade is dying because all of a sudden there are alternatives in the world with all this capital being deployed elsewhere?
Well, how about this? Let's try this a different way. Let's say you take the Trump administration at their word, which is they are dedicated to the end of globalization, the reestablishment of a domestic manufacturing economy, the reduction of income taxes, especially for the wealthy, and the replacement of the reduced income taxes by tariffs, which will, massively reduce imports.
We would need to.
That'll drive a U.S. manufacturing boom.
Well, hold on. Just for the tariff math there, we would need an effective tariff rate.
I get it. I understand.
Closer to 55%.
I got it. I understand all the sort of absurdity that's in here.
Okay, sure.
But does that mean we're buying AutoZone? Does that mean we're buying O'Reilly Auto Parts? Like I'm saying, let's say we set aside our own political preferences or ambitions for our children or the world or our hopes for whatever. And we're like, okay, there's an iron curtain around America. No one is allowed to leave the country a la the USSR. And the only thing you can do is buy and sell products inside the United States. Who benefits?
The essence of the problem is that there is no answer to that question. And if stocks and businesses and consumers had an answer to the question, they could discount it. The appropriate securities could go up and down. The appropriate interest rates could go up and down. The appropriate commodity prices and currencies could go up and down. They could find their new levels, maybe in a chaotic way. The detox that we've been talking about, that Scott Bessent, the Treasury Secretary, has been talking about, could occur. That is to say, we could transition into a different world order. Things could be extrapolated out, and then we can actually answer the question, and markets could know, and there could be certainty. The problem is there is absolutely no way to answer that question here. No way to answer it because we don't know what reciprocal tariff means. We don't know if, as we were saying before, it's tariff for tariff, average tariff rates, effective average tariff rates that include non-tariff barriers. Is this meant to restructure the system? Maybe. Is it meant as a negotiating tactic? Maybe. If it's a negotiating tactic, is all of it subject to change within a week to a month to a few quarters? Maybe. Nobody has any idea what we're dealing with. That's the issue. We don't need to, I think, go too far to look at markets and say what's driving them isn't the knowledge that this policy will do X or Y. What's driving them is the absence of that knowledge.
Yeah, I mean, we can look at AutoZone, we can look at O'Reilly, right? Those companies have certainly done well. They've been on lists for years of companies that would do well on tariffs. But there's also companies that make you can't import makeup from abroad. It's not like Elf Beauty's been doing well. What about JB Hunt? You're going to have to ship more things domestically within the economy, so a lot of trucking activity, right? What did we see immediately after the election? JB Hunt actually jumped to the upside. We go into the month of November. We opened up at 180.62. Shortly after the election, we were at 200.40, right? Tariff delay, tariff onset. Every time there's a weekend of tariff news, JB Hunt's been opening to the downside. So net, there are companies that will benefit. That's the nature of tariffs. It creates political artifice where protected industries and actors within those industries do well at the corporate level. We can make the argument about bringing manufacturing jobs back home. That is an argument that is made on paper. It is theoretical at best. We have recent history from the George W. Bush steel tariffs, from the tariffs in Trump's first term. Fewer jobs in those sectors. Fewer jobs in steel-consuming sectors in America. Steel-producing jobs went up marginally. Steel-consuming jobs went down bigger. We lost jobs as a result of those tariffs. Dylan, you say if we take the Trump administration at face value, what do we get out of this? If we take the Trump administration at face value, as we joked a few weeks ago, detox and transition, that's just fancy words for recession. We're getting a recession. We're going to get a recession. That's what's going to happen. It's also in the back of my head, why else would we trade anything other than long bonds and gold in 2025 if the administration is telling us that they want to do things that lead to recession? We're going to tear down the market to put in new policies to hopefully build it back up to where it was. I do see a headline here coming out about taxes, a few things about taxes from the administration. Yesterday, it was floated that they would potentially raise rates on high income earners to pay for no taxes on tips. Several House Ways and Means leadership members, Tom Emmers, Mike Johnson, came out today and were directly quoted to Punchbowl News and Politico as, quote, ha, 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 no. So I don't think we're going to get a hike in the tax rate on millionaires and billionaires to pay for no taxes on tips. I'm not sure where that goes. Another tax headline that comes out today, SALT tax cap extended up to $25K in the next House bill is currently being discussed. Again, we'll see what happens. But if we're taking everything at face value, Dylan, we still have soaring deficits. They're talking about bumping up the debt limit by $4 or $5 trillion. So you're going to still have soaring deficits. You're now going to have weaker growth, higher structural inflation, and a diminished U.S. role in the world. There's no other currency to step in and serve as a safe haven right now. We can talk about the yen all we want, but the yen's going to deal with its own problems if these tariffs come down the pipeline and they don't have an immediate outlet for their own exports themselves. It's not going to be fun. I like gold still. Gold had a decent day today. It closed up at a new, well, not quite at a new high, hit a new all-time high before pulling back in at the end of the session. We're at 31.52 right now.
So basically, whatever it is, we're saying we're long recession.
I've been long
the bond, long gold. Is there a
we're
short
long
position
recession firefighting. Whether we actually get a recession or not, I think that's history will tell us. We won't. I mean, to Tony's point on last call, we don't know that there's a recession or there's been a recession until after the recession. What we're looking for here isn't to confirm recession from an academic point of view, to pat ourselves on the shoulder and go, look at that, we called it, baby. No. The idea here is to trade expectations of recession firefighting. Not even the firefighting itself, whether it materializes or not, who knows? We'll hear from Powell on Friday. He'll tell us some stuff. The key here is that you're going to get some outcome, and the thought process as a trader is, will markets take this outcome to speculate on the firefighting more or less? And I think the answer is more.
And by the way, this isn't just like a thing that the three of us, Portola wine crowd, New Yorkers, blah, 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 East Coast liberals, elites, whatever you want to frame us as, are discussing. This is a consensus view that recession odds are rising. Polymarket, which, no one confuses with being a place for people
Lefty,
on the
yes.
I mean, like, I just fundamentally think that if you're going to be a trader and if you're going to be someone who operates in poly market, which is again adjacent crypto, you probably fit a profile of someone who's at least moderate to center right leaning. Okay, and having done the prediction trade with Jeff Joseph for so long, and having done the interviews and conversations with people in the industry, it's generally leaning a center right to the right group of men who are participating in these markets, particularly poly market. Right, Kalshi's a little bit more center, but poly market's a little bit more center right in terms of user base. That's not a good thing or a bad thing, but it speaks in terms of the bias. The bias here would perhaps be to undersell recession, right? But we're at a 41% chance. We go from at the start of the year, right, when this contract initiates, it's at 20 cents. It's now more than doubled to 41 cents. It's gone up over the course of the last few days as the stock market's gone back down. And maybe you'd argue that this is effectively an inverse indicator to the stock market right now. It certainly looks like an S&P chart upside down from the end of February onwards, right? You get that little bounce in the middle of the month, and now we've sold off again the last few days as recession odds rise. Nevertheless, right, it does appear that the market is thinking it's paving as if the possibility of recession has been elevated. And the writing was on the wall. The writing was on the wall a few weeks ago. You saw it in this February PMI report, Ilya. And that's effectively what we're writing here. We're not betting that it's definitely going to happen, but the accumulation of evidence is moving into that outcome right now. And so riding the waves of that trend would mean lower bond yields. As long as we don't go to a correlation one event where everyone sells off everything, gold probably stays elevated. And I would point that out too, because gold does really well if we think about stagflation, Ilya. And this ISM report today screamed stagflation impulses making their way through the economy.
Yes, it did. Yes, it did. Just by the numbers here, I'll read them off to you. The price component of this was the highest, the price growth component, measuring the speed at which prices are growing for the manufacturing sector, fastest since June of 2022. So right in the heat of the peak inflation scare. The sector itself contracting for the first time since December. New orders shrinking at the fastest rate since, give me a second here, May of 2023. Employment shrinking at the fastest rate since October of last year. And I'll read you a quote here from the report that I thought was telling. Demand and production retreated and de-staffing continued. This is a fun term because some of the respondents were saying, we're not laying people off, we're reducing redundancies and allowing people to come off the rolls with retirement without hiring them back. So we're not backfilling people. So ostensibly these aren't layoffs, but de-staffing. But anyway, these things continued as companies responded to demand confusion, and price growth accelerated due to tariffs. A parallel survey gets confirmed from S&P Global today. Their take is, and I quote again, U.S. manufacturing sector growth stalled in March because of uncertainty linked to concerns over tariff implementation and federal government policies.
I think the spread that we see between the prices and the new export orders here, the prices paid
says a lot.
Jumped to its highest level since 2022. New export orders are now contracting and declining. All of this is in the face of rising inventories. So we have rising inventories. We have orders falling. Okay, so stuff is starting to pile up on the shelves. There's not a lot of demand for it, and the cost of building the new things that fewer and fewer people want is going up. Is there any incentive for these firms to continue to grow right now? The answer is no. The ISM Manufacturing Index falls into contraction territory now. It's a really ugly mix. And you could say for 2023 and 2024, hey, we were in contraction territory for, a bunch of the time. That's fair. We were. But that bounce that we saw at the end of 2024 in the beginning of this year is now increasingly looking like the thesis that was laid out, which is, are we seeing imports and demand pulled forward ahead of the tariffs? Some more anecdata along those lines. We see that Hyundai and Nissan are reporting their best weekend of sales in the U.S. since pre-COVID, as they put out some deals for avoid the tariffs. Same thing for Ford. Same thing for Toyota. Car dealerships are seeing their numbers jump, which I guess means I have to get to a dealership before 4 p.m. Eastern tomorrow to get my new car. Crap. Damn it. This is just, like I said before, I'm tired, boss. It's just.
It's like he's targeting you personally.
Well, if I get the SALT deduction and, yeah. But then again, like, I'm also in that, like, Rick Sanchez. It's like, I've seen what you people cheer for. Like, your boos mean nothing to me. So it's just. When do the Mets play today? We got 2 hours until game time. That's just delightful. Oh, I'm going to be able to watch the Mets on my deck in the sun today. Ugh.
So what you're leaving us with long bond, long gold. I mean, it's come down to this. Well, we can't go near the Mag 7. We got nothing on oil. We got nothing on the banks. We can't do anything in retail. We got nothing in consumer discretionary. We got nothing. And I guess you got your electricity. You have your AI electricity long position. You got Duke Energy, Exelon, gold. What about maintaining the European long position, the euro rally, meaning the euro equity rally, not the currency rally, but the
if you look at
German,
if you look at European
French,
equities, they're sinking.
Well, hold on, Ilya.
I know.
Ilya, if we're talking about if people miss the breakout here, right, like risk to reward, the former highs that we have last May and September that we based around here as we turn through February, like this is.
But this is in dollar terms.
Okay, so we do HEZU, which is the hedged European equity index. I don't know, man. This looks like we're carving out a both
down.
Oh, see, this is how I can't. You're such a pessimist. My natural optimism is like, oh, that looks like a bull flag.
Yeah,
right.
That looks like it broke the preceding low and is now backfilling. Take a look at it on a 4 hour or an 8 hour. You can see it.
No, still looks like a bull flag to me. But Dylan, if you just said the value of everything on planet Earth is now 10 to 20% cheaper as a result of this global economic regime change we're embarking upon now, then wouldn't that also mean that European equities, despite their inflation, or
no, it would. I'm just saying, like, if you think about like what's been working, bonds have been working, European equities were working, your utilities were working. Natural gas was working for a minute. I'm just thinking about like where there's been some positive, where there's been price appreciation, and where does price appreciation live? And here the natural gas rolled over, Europe's rolling over, bonds not rolling over. I don't know if
European equities have been working. Being long the euro has been working, but since
European, look at the
peak in March. Index. Well, I mean, since the peak in March, the actual Euro stocks index, not the derivative ETF, which is constructed in U.S.-based terms, the actual Euro Stocks 50 index, since its peak on March the 3rd, is down 7.5%.
March the 3rd was 3 weeks ago.
Exactly. This is a pall upon everything because, to your point, this hurts economic activity for everyone.
Report out here from the Wall Street Journal that the U.S. Trade Rep's office has been asked to give Trump a third option for tomorrow's tariffs. Oh, there's no plan. There's no plan. There's no plan.
Either that or the show is this good and we are that dumb.
No, the only show
to fall
that's
for it
right
again
now,
and again and again, because the misinformation leaks aren't misinformation. They're leaks on purpose to keep the show on edge.
Okay, so I really think the whole talk of a Trump third term is just totally nonsense, right? It's constitutionally illegal. I've studied con law. This was one of the cases. Like, how come, why has this been a non-thing since FDR was president? And like, I specifically remember going through all this. It's a real non-issue to me, but it's the kind of thing that plays right into the, resistance liberal, emotional wheelhouse of Trump being a dictator and, a fascist and America's Hitler, yada, yada, yada.
And now let's talk about it for 90,000 hours.
So we're going to focus on this as we head into tariff implementation week. And oh my goodness, none of the other countries that we've been trying to shake down have responded in the form and fashion which we thought they would, which would ultimately be caving immediately to our demands. And so let's put a distraction out into the media ecosphere so we can try to figure out this tariff thing after declaring it Liberation Day. And then I just put that in the context of the headline I just saw now, where the Wall Street Journal reports the administration's asking the USTR for a third tariff option for tomorrow. Dylan, this feels like, asking your teacher for an extension the day before the essay's due. Don't really know how else to put it.
Or it feels like as predictable as a rallying oil price in the face of Iranian retaliation as an opportunity to short oil, that a global anxiety attack about Trump doing tariffs is as predictably false as a Gaza or as an Iranian retaliation.
I mean, that certainly could be, by the way. It certainly could be that what the markets walk away with tomorrow is, oh, now we have certainty. And the more you keep the situation uncertain now, the more like certainty it looks. And the more like certainty it looks, the more markets rally in relief, and you get to parade around and go, see, told you.
You know how I know tomorrow's going to be a disaster?
I love the premise.
In Paulina, the Republican congresswoman was trying to put up a rider to a vote today to allow new mothers and fathers to vote by proxy in Congress, which is something that they've allowed previously during emergencies. And the rider did not pass. And then Speaker Mike Johnson canceled all other floor activity for the rest of the week. It's Tuesday. They just cleared the congressional calendar until next Monday. Small things, small pieces of writing on the wall, right? Small pieces of writing on the wall. Reps are being sent home. They're leaving DC this week. Now, that sets up an interesting dynamic. Do you really want your reps back in district to deal with this? Now, I bring up Newsmax here, though, because it's Trump world adjacent, and it is the hottest IPO ever. What a chart. Opens up at 14 yesterday, listed at 10. Bankers really dropped the ball here. They really dropped the ball. Closes today at 242. Dylan, wow. This has a bigger market cap than Fox News now, even though Fox has about 1.2 million viewers on average in prime time per night. Newsmax has about 240,000 viewers on average in prime time. They also only had $80 million of revenue last year. Thank you, Nick Batista, for that info. Unfortunately, it is impossible to trade right now. The margin on shorting it is about 550%. There are no listed options yet. Dylan, is this the madman's delight moving forward? This share has gone, again, $10 up to $242 in 2 trading sessions. What are we doing here? What's the plan?
Do you want to get, I mean, that is an existential question that I shan't attempt to answer as it pertains to what are we doing here. Are you suggesting a put on Newsmax?
When the options are listed, right, we can't trade them yet, and it's impossible to short. It's just too expensive to do so. But I don't know. That seems like a lot in a little bit of time right now. I wonder what the window is that they can't sell their shares. Gosh, to be an insider right now and be sitting on a position where your equity is valued at $10 on paper and now it's trading $242 in the market. Nice problem to have. Either way, though,
shorting TMTG as a stand-in. Trump media.
Yeah, DJT. It's 5.1 IVR. I don't know if that's a good stand-in. Plus, if you're following what's happening with World Liberty Financial, and they're building more bona fide streams of business. One of the Trump boys, I forget which one, is on the board of Kalshi now. So like they're branching out. It wasn't worth $80 a share, of course, when it was up there. But is this company really at bankruptcy risk for the next 4 years, Dylan? I don't think so.
Obviously not.
Obviously not. All right, Dylan, I want to, you sort of talking about existential questions here, and I want to give you the floor here as we end the show. There's a special election tonight in Wisconsin. Elon Musk is calling it the most important judicial race in human history. It could very well determine whether or not humanity gets to Mars. You've covered a lot of politics and finance in your time. I don't know if I disagree with Musk. It feels like today is a really important vibe turning point because there's also special elections in Florida. Do you look at this first 72-hour window here at the start of April between Liberation Day and these special elections as a critical turning point for the market, perhaps not just for this week or next, but realistically for the next several months, maybe the rest of the year?
No, I don't. I think the market I think that the market will function based more on the degree to which the executive suite has to continue to pull their punches as it relates to investment in the future. And I don't know that that is entirely determined based on the next moment in time or the next 72 hours. However, I do believe that the next 72 hours are significant insofar as they represent the first referendum on the political power of Elon Musk, because Elon Musk has been deemed to be the ultimate kingmaker by virtue of the Trump election in November. And there hasn't been an electoral event that's been a referendum on Musk's power to control as a political kingmaker. So I believe that really with the next 72 hours is much more of a referendum on Musk as a relevant political factor. I say that because there's been actually a decent amount of polling anyway, and who knows from the polling, honestly, but that suggests the more Musk jams his beak into the Wisconsin election, the better the Democrat does. That Musk is actually a negative electoral force at this point. And that would be a meaningful turning of the worm, more so than anything as it relates to the market. So I think that this is as more than a referendum on economic or prosperity or growth. This is a referendum at this moment on the continued influence and relevance of Musk himself in the American electoral process. And it will either empower him further if the outcome is to his preference, or it will alienate him in some way and sort of cause a bit of a pause, surely not an exit, but a pause, if in fact the outcome is opposed to his preferences. But I think it's more of a Musk referendum than it is a market referendum.
Well said. And with that, overtime is now out of time for this Tuesday, April 1st, 2025. No April Fool's jokes here. We'll be back tomorrow for Liberation Day. Same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So we very well may be covering the tariff announcement live. Be sure to tune in. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Good luck trading. Stick around, though. After a brief break, there's more Tasty Live. Ilya Spivak, of course, is back with Macro Money.
See you there, everybody.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Oh, yeah. Tasty Nation, good morning.
On today's Trader Taste Test, we are going to the first Chicago location of Voodoo Donuts. Let's go. Okay, you guys.
Voodoo.
So we got a dozen of the classic Voodoo and then a dozen of the green doesn't. So.
These are basic. Basic? This one.
Okay, that's gonna be your taste test.
Good.
How many stars do you give it?
3 1/4.
Yeah, see, this doesn't work for me. This is for children. That's why there's cereal on top of it. This is my jam. Nice old school donut.
Old school buttermilk.
All right.
It's not a crow.
Okay, what do you rate it?
3.25.
That's sweet.
3 point. I know, because I've trained him how to be a market maker.
Now we load up the flotilla.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Well, the markets look uneasy as we await quote-unquote Liberation Day, the day where we're going to get an expansive announcement of what could be a vast remaking of U.S. trade policy, what could be a centerpiece of the economic pivot that we see with the new Trump administration, what could be a negotiating tactic, what could be something that ends up lifting the markets or sinking them. And the operative term there is could be, because the lay of the land here seems to be that we really don't know what it is shaping up to be. And this is what we're going to talk about here today on Macro Money. I'm Ilias Pivac, head of Global Macro here at Tasty Live. The question before us, of course, because as ever, as traders, we cannot tell the future and have to try to figure out how to handicap a range of outcomes, is whether stocks, which have been aggressively beaten down in anticipation perhaps of what we have coming tomorrow, we'll see, whether that beating can now cease. Because, of course, as we know, when markets see speculation be met with reality, they discount that reality. Whatever adjustments take place we move on. So are we getting to a place where these markets are ready to bottom, or are we getting to a place where the pain is likely to multiply? This is at core the question as we head into this announcement, and of course have to trade around it with lingering uncertainty. And of course, uncertainty is forever the feature of trying to trade a future one does not know. And so even in this very tenuous situation, there is perhaps a trade to be had. And so let's break this down piece by piece. So, of course, looking at stocks here as a starting point, this is how the S&P 500 has responded as a kind of catch-all for market-wide risk sentiment and certainly Wall Street risk appetite. We can see that since the second half of March, we've had this precipitous decline. There was a little bit of a corrective rebound, obviously, here at the start of March to retest the underside of the range that we ultimately broke through along the way of these shattering 4 weeks. and we are now back to pretty much where we started. Those lows from earlier in the month is where we're once again kind of huddling around over the past day or two. Moreover, as we try to retest back through what was former resistance turned support, a kind of inflection zone right here, that's holding up as an upside barrier after we broke through it to the downside. So it's as if we got to a point of maximum concern here, and having had a little bit of relief, we've now returned to the decision point, the place where the initial sell-off stopped and where we have to make a decision now about whether the problem has been duly priced into the markets and we can move on, or if it has not. It's a parallel story for the bonds. We can see here that as stocks have been going down, so too bonds have been going up since the beginning of the year. And here also, since the beginning of March, the move ran aground, pulled back, and has now returned to that early March starting line. We're back to the early March starting line on the stock sell-off. We're back to this early March starting line on the bond market rally. Now, what is all of this about? Well, needless to say, the operative conversation is about uncertainty vis-a-vis tariff policy and fiscal policy more generally. Just today, we got the updated ISM Business Confidence Survey, a PMI survey. This is giving us the latest on where U.S. Purchasing managers who are at companies with the task of looking forward, anticipating economic activity, and thereby figuring out inventories, figuring out staffing levels, figuring out how much capacity is needed. And so in that this is their vantage point, they are useful to poll about where the economy appears to be heading. This was where they were in March, according to this particular survey, this Institute of Supply Management survey. And we can see there was a contraction in the manufacturing sector here as expected, and a faster one. This index operates around a center line at 50, where that's neutral. Above 50 is growth. Below 50 is contraction. And here we are below 50. The further you go below 50, the faster the contraction. The further you go above 50, the faster the growth. So here at 49, we have contraction, and it's faster contraction than what the markets anticipated at 49.5. We're going to get the service sector update later this week, but for now, here are the internals of the manufacturing side. They are, in plain English, scary looking. This surge in the prices component, suggesting what the input costs are and what the pricing structure is in manufacturing, point to the fastest inflation since the middle of 2022, which of course was near the peak where the Fed's firefighting finally started to have an effect in the second half of that year and inflation started to come down. So a blistering rise in prices, even as we get contraction in both employment and new orders, and indeed the fastest contraction in some months. So what does the report make of all this? Reading directly from the ISM report, quote, demand and production retreated and destaffing continued as companies responded to demand confusion and price growth accelerated due to tariffs. In parallel, we got a revision of a similar PMI report, this one from S&P Global, same type of data, again, centered around 50, all the same rules apply. But this one from S&P Global, in fact, this was the survey that really kicked off these concerns for the markets when it started to report this slide in not just manufacturing, but the service sector, and with it, the overall economy. So these numbers it very interestingly show a front running of the tariffs and manufacturing improving against that back story, and now turning down to basically standstill. These numbers initially had a slight contraction when they were preliminarily reported, and these are the preliminary numbers for services and the composite that will be revised later this week. This is the final number that was reported today. It's a little bit better than the ISM one in that the ISM one is contracting, and this one is basically flat, showing manufacturing is essentially stalling. But it was this survey that showed us that what we've been seeing is a sharp decline in service sector activity, and the service sector is a much bigger part of the overall economy. As we can see, the composite that includes both manufacturing and services basically follows services because it is close to 70-80% of the economy, depending on when you look. And so when we look at this, then this was where the markets really started to get concerned. They said, uh-oh, it isn't that we didn't know that there were tariffs coming. It isn't that we didn't know that a retrenchment on government spending is coming. We knew all these things back in November. What we didn't know, and what we continue to not know, is implementation, to the extent that tariffs come on and they come off, plans change frequently, the nature of the expansive, broader plan continues to be clouded. And so what that's doing is it's telling businesses, don't spend money, wait for the environment to become clear so you can make your 6-month, 12-month, 24-month inventory, staffing, investment decisions. And what that's obviously done is it's ground activity to a slower level. The same thing, of course, showing up on the consumer side of the ledger. Here, consumer confidence has fallen off and inflation has surged, again around the same story. The respondents to this survey from the University of Michigan are universally citing that, or at least in mass numbers, universally is probably too strong a word, but in mass numbers citing the issue around tariffs uncertainty as part of these decisions, and suggesting that what the tariffs will do is they will boost prices for things, and so much as a tariff is basically a consumption tax on imports. And so we have seen a surge in inflation expectations back to 5%, again, near the peak from mid-2022. Notice the extent to which this lines up exactly with what's going on in this ISM manufacturing survey. And confidence has, of course, fallen off back toward the lows of this inflationary cycle. It was once inflation started to come down, the expectations started to come down, and once those started coming down, sentiment started to improve. Well, we're back toward the starting line here, both on current conditions and on expectations. And of course, with current conditions, it's a little bit better. With expectations, it's a lot worse. And overall sentiment subsuming both indexes lies somewhere in between. In response to all of this, the markets have of course, concluded, especially after the administration has dismissed their concerns, that the relief is going to have to come from the Fed. And so what we've seen is a significant dovish shift in policy expectations, again, since mid-February, as all of this started to hit the fan. You'll notice this looks quite a bit like what the S&P looks like here, a sharp down move and then consolidation after a little bounce, then back toward the low. Consider how much that looks like this, a sharp down move, a quick bounce of relief and consolidation back until you come back to the low. So what you're seeing here now is 73 basis points in rate cuts for this year. That's 3 cuts effectively baked in. 31 basis points for next year, at least 1 cut, and some chance of a second, about 6 basis points in the direction of a second next year. In all, 104 basis points in easing being priced in, whereas at the beginning of this move, we were looking at maybe about 50. And at the start of the year, maybe somewhere between 50 and 75. And so with that is how we look at what comes next and the market reaction. So we can see here that initially all of this looked like a growth scare. That, of course, comports with falling inflation expectations, falling yields, and a falling dollar anticipating Fed rate cuts. But what we see now is more ominous still. Inflation expectations have started to come back up. Meanwhile, yields remain depressed, and the US dollar is hovering near its lows. So we appear to be looking at the very issue that the Fed was highlighting in its most recent update of economic forecast. This is the latest set of numbers, and the Fed was very clear, saying, we don't know what this is going to look like, much as nobody else appears to, but we do know that historically tariffs are bad for growth and tend to boost inflation. So what we're going to do is we're going to increase our inflation expectations for this year at the headline, 2.5 to 2.7, 2.8 at the core. Next year, an increase as well. And we're also going to lower our growth expectations from 2.1 to 1.7, from 2 to 1.8 next year, and even a little bit out to 2027, although by that stage, it's really very difficult to forecast. So those are very loose numbers, as it were. And so the expectation for the markets, ostensibly then, is the relief valve to all of this, at least that's what the markets seem to be saying, is more easing. Because to the extent that tariffs hurt growth, they are going to lead interest rates lower, because that lower growth will pull down on inflation and give central banks more room to cut. In fact, if we look at the policy expectations for a whole range of central banks for this year, we can see that for all of them through this period, the outlook has become various versions of slightly more dovish, be it the Bank of Canada or the US or the European Central Bank, even with its recent rethink of what may happen next year around the inflationary impact of defense spending, and of course the euro's rally around that. Nevertheless, all of the expectations for this year, against the backdrop of all of this tariff uncertainty, all of them have moved toward more dovish settings, with the exception of the Bank of Japan, where rates are moving at such a snail's pace and are so low relative to everybody else that we've gone from a slight bias to hikes to basically standstill on expectations through all of this. So modestly dovish in that we have stopped the incline here and shifted to neutral, but considering how low rates are here, that's enough of a shift to give you symmetry with the tone that's going on here. And therein, then, is the trading essence of what comes next. Now, the problem for the markets with these tariffs, as we've alluded, isn't that they are coming. It is that nobody seems to understand what exactly is it that is coming. The president has talked about reciprocal tariffs. And the idea isn't so much that it's just tariffs, but reciprocal trade barriers, meaning that he would like to mirror U.S. trading partners' policies back at them. That is to say, if a country is applying a certain tariff on the U.S., we want to do exactly the same thing in reverse, which sounds sensible in theory, perhaps, but what that actually means is a complete black box. For example, The Economist anticipates that if we actually went tariff for tariff with each trading partner, we'd have 2.3 million new taxes. Just new tax rates, new tax numbers to keep score of. If instead of targeting individual policies, we said, okay, we're going to normalize average tariff rates. So if a certain country has, on average, XYZ tariff rate, we're going to try to do the same. But how does that account for non-trade barriers like quotas and punitive regulatory barriers that some countries have? All countries have against one other trading partner or another. And how does that factor into this? Because the president has said he wants to have reciprocity there as well. How do you calculate an effective tariff rate? Do you just put a blanket one on everyone? That's kind of what we have now. We have a single external facing tariff for everyone, irrespective of the trading partner. And maybe what all of this means is just an increase in that. Nobody really knows. Moreover, it's unclear if these tariffs are a negotiating tactic, that is to say, they might get negotiated down, and so whatever is announced isn't the final answer, or if they're an attempt to, in a long-term way, remake the system all in one shot, and this is that announcement. If you look at the conversations that have been had between the U.S. and Mexico and Canada in recent weeks, then you know that renegotiation can happen with a phone call and changes can be swift. So is there really more uncertainty here even after this announcement, or isn't, seems to be the crux of the matter. All of this consternation in business and consumer confidence surveys is, again, rooted primarily in uncertainty, not in tariffs as such. Them we've known about for a long time. And so the key here then is, does this Liberation Day announcement give the markets and consumers and everybody else looking something solid to extrapolate over time? And on that basis, to take action. If the answer is yes, then perhaps stock markets can find a way to like it, at least in the diminishing uncertainty of the environment. But that there is tariffs is itself a growth scare. And that might beckon more easing. And in that sense, bonds may keep going higher all the same, because of the expectation that whether the environment is certain or it's uncertain, the Fed will have to do more heavy lifting on the growth side. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. As ever, today, in just 30 minutes' time, as it is every Tuesday, I'll be on with Victor Jones for The Price of Truth. I am on with Chris for Futures Power Hour this Friday, back with Victor and Tom for First Call this coming Sunday, writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money's back tomorrow.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. We got some things to share with you today. We'll do a little tour to market. Before we get into that, and our slides for today, Gus, my brother, how we doing?
Oh man, doing great. Happy with the rebrand. Happy with the new show. That lovely intro that just played for the first time is awesome. Our GFX team and our production team does such a wonderful job, and yeah, excited to be here and get into some things.
No, 100%. They kill it every time. I liked it. I love the colors. I love everything about this. I'm excited. Risk reward. I know we're going to get into risk of the week today. It's going to be something new, something different. We'll explain the rules here in a little bit, but we're going to start putting on some risk, and we'll break that down. Before we do get into that, April Fools, Gus. I didn't have any tricks up my sleeve today that I would have wanted, but popping up on here like a couple minutes late would have been funny too, but it's past that now.
Yeah, I didn't really pull any pranks or do anything nefarious myself. Got to upload a funny video of Tom trying on some suits that Todd bought for him. So nice. That was a fun one. But yeah, no antics around the office, nothing to that end. And I'll tell you what, I'm an easy person to get on April Fools 'cause I don't know what day it is ever. Sometimes I wake up on my birthday and forget what day it is. And so, yeah, if people pull things on me on April Fools, I'm buying it. I'm buying it pretty much until you do the big reveal that today is April Fools. It will never click with me. And I've always been one, like sports pages I follow will post like crazy, ridiculous fake trades or whatever. So, yeah, and I'll fall for those too. My Texas A&M Aggies basketball coach actually announced he's leaving the program for Maryland today, and I hoped that was April Fools.
No way.
It was not. So
okay.
there's a sick prank that my university pulled on me there, I guess.
Yeah, I'm kind of on the same boat with you right there, because that is a pretty crazy move, though, in terms of the coach. But I was on Twitter today. A couple things. There were some things within the trading community that I had seen, and I was going through the threads. I was like, no way, this is real. And I had to keep going. It was like fooling everybody. And then I was like, oh, right. Today's April 1st. So I know tomorrow is my baby sister's birthday. So she was barely born on April 2nd. I remember when she was born like 7 years ago. I was like, man, you were so close to the April Fool's baby. I would have been the best big brother if you had a birthday on April Fool's every year. You would have loved me. But anyways, before we get into it for today, Gus, anything else in the market? I know it's the second day of the market. We have a resolution on tariffs coming this week too, which is going to be April 2nd, which is tomorrow.
Liberation Day, a national holiday. I've marked my calendar.
Oh, there we go. You're ahead of the curve on that one.
That's what he's calling it. But yeah, a lot of uncertainty in the market surrounding that right now. I am kind of leaning into that uncertainty a little bit as we'll get into when we get into the slides here in a bit. But no new positions on for me today. I'm still I'm still long Delta. I've just been long Delta for weeks now, it feels like. But yeah, just staying the course. Every single thing in my portfolio closed green today, which is always a good feeling. I can never complain.
Nice.
Oh, holy cow, we're looking at my platform. Wow, we never have my platform. But anyway, yeah, everything closing green on the day. Ultimately a good day in the market for me. And yeah, I'm just kind of sitting on my hands and trying to decide if I actually think that this is the bottom or not. And especially with tariff news coming tomorrow, I was surprised to see the green day today. You know, generally the market doesn't care much for uncertainty, and today is one that's riddled with uncertainty. I thought about trying to get cute and maybe just getting short on some automakers right into the close or something like that, because I think that they'll probably wind up getting hit the hardest tomorrow. That's what the trickle-down effect has seemed to be consistently throughout all this tariff uncertainty. But yeah, just sitting on my hands and waiting for the chop. Tomorrow should be a good, volatile, tradable day, primed for some day trades or maybe some fun things, get some positions opened. But we'll see. But I will say that a lot of what has been driving this downturn this entire time has been tariff uncertainty. It's been that these tariffs keep getting mentioned and the amounts keep getting changed, and the market has never had any certainty on what was going to happen. And so I hope that at least tomorrow, once we finally get all of the final tariff announcements, that we can begin to heal a little bit and move forward with certainty, whatever the certainty may be, but we will at least know what's coming. And I think that should help overall market health. So yeah, with my portfolio delta, as long as it is, you guys are not looking at one short position here. I could go through all of them. With my delta, as long as it is, I'm just hoping that we can survive the bleeding tomorrow and that things can recover quickly enough. The position that I'm concerned about the most is this QQQ, even though I'm still 90 DTE. 485 is my tolerable bottom there. And there was a moment yesterday, today's Tuesday, so yesterday, where we were at 460, and I was like, man, if this gets down a little bit further, I'm really going to start to be worried about my 90-day time frame. Fortunately, things turned around, but yeah, no new additions.
No, I hear you. Long Delta, I mean, I hope we start seeing a little bit of a rally from here for the sake of some of my positions and for the sake of the position that we're going to pitch today. I know we can get into these slides too, and then we can head back to the platform if need be, but risk of the week, Gus. I know we were chopping it up a little bit about this. I'm excited. So we'll go ahead and break down these rules. If anybody wants to play along with us, feel free to do so. But we're going to start doing something called risk of the week, where Gus and I are going to put on a position. We're going to choose a ticker, give our case for it, and then move forward with that, come back and reevaluate those positions and so on and so forth. But I know the first one is you, Gus. Record 00. We got Gus at 00, Errol at 00. Let's get into our first one, Gus. If you want to break down some of these some of these rules to start off.
Yeah, we can jump into a little rules here. So this is a little game we're going to play. Show's called Risk and Reward. The idea here is to try to acknowledge the fact that you can take some risk in the micro as long as it's a tolerable amount of risk within the size of your portfolio, and have a little fun. And it can be a very lucrative endeavor too. You know, sometimes it's fun to try to play the tails, and so we're going to be doing a lot of that here. So rules are pretty simple. We both must take one trade each week. And we'll do that on Tuesdays, I suppose, moving forward. Maybe that'll change. Maybe the day itself will change sometime. But we'll take one trade each week on Tuesdays. We're allowed to exit them at any time. That can be before expiration. We can let it expire at max profit should that opportunity present itself, however we choose to do that. The stipulations for keeping these trades risky is that nothing can be longer than 30 DTE, and risk must be objectively high or undefined. I'm not really going to put any constraints on that. You know if you're taking a weenie trade, you know. We're gonna keep records, and then at the end of each quarter, we will note the winner and loser. And there's going to be some kind of stakes to be determined. Maybe a friendly wager. Maybe the audience can decide on a punishment for the loser. Maybe just bragging rights. Not all too sure. But we are picking up at a very wonderful time right on the first day of Q2. So nice, easy transition into the quarterly contest. And yeah, that's what we got. So we can.
No, I'm looking forward to it. Yeah, punishment from the audience. This, as long as none of my boys from college are giving any advice on what the stakes should be, I think I'm good to go.
Yeah, but I felt that the punishment was going to resonate with the audience. I see that it is. We can talk about how exactly we want to do that later. But yeah, it'll be I don't know, no fantasy football style punishments, but we'll find something fun.
Have you seen those? Have you seen those? The what is it? I don't know why I'm blanking. The football fantasy. What is it called? Fantasy football,
Yeah.
the football fantasy. Fantasy football. Have you seen the punishment that kids have had to do on things like TikTok or IG Reels to where they had lost in fantasy football and they had to do something crazy in front of the camera, in front of people or whatever it is? But people have been posting their punishments online, which I thought that was hilarious. It turned into a trend.
No, yeah, it is. It is crazy. And people will get crazy with them 24-hour
Yeah.
challenges and Walmarts. Or the one that I like is you
Yeah.
got to spend 24 hours in an IHOP and you get an hour off for every pancake that you eat. That's a fun one.
I love the stipulations.
Yeah, I think
first
I could
pick
get
though.
10 pancakes. I think that's about, I don't know. That's 14
10
hours.
an hour? What is that?
I think I could do
20?
one pancake an hour for 12 hours. I think I could do that.
And you get an hour break.
You get an hour reduced off the total time every time you eat one. So if you ate
I could
12
do that.
pancakes in 12 hours, yeah, I think that's doable.
I could definitely.
That's
do
only
that.
4 short stacks, you know. Anyway,
Only.
all right. My pick for our opening session of risk of the week here is BitB, Bitcoin ETF. There's a few Bitcoin ETFs to choose from. Crypto is really beat down right now, so I'm hoping to. And you can see the specifics in my position here at the top. I just have one naked call expiring on April 17th, pretty short term, 16 DTE. I bought it at 46.35 spot price, and it was 5.10 a contract. I only have one contract because it's high risk. That's the whole freaking point. But anyway, crypto is really beat down, hoping for some breakout from this bearish channel. You guys can see my faint trend lines that I drew on there, and also my Ichimoku Cloud, the greatest technical analysis tool anyone's ever devised. Tariffs create uncertainty. We have tariff announcements coming up tomorrow, and so I'm hoping that there will maybe be some money flushed into Bitcoin. I've talked on this show before about how Bitcoin has started to behave like metals a little bit in times of uncertainty, where if people are uncertain about the US dollar, sometimes we find people turning to Bitcoin. It's happened progressively more and more each time that we have a little bit of uncertainty about the dollar, and so I'm hoping we may see some trickle-down effect from that. But ultimately, I think that crypto has just found a local bottom, at least for the time being. And that hopefully over the course of the next 2 weeks, this should be a nice little appreciator for me. But the final straw was Congress, which leads me into my next slide here. I keep up with Congress trading. I think I've mentioned tailing Nancy Pelosi on a few trades before. There was major action in Congress, well, at least in the reporting cycle over the course of the last week. Could I get a next slide? This man right here, Senator David McCormick. He's a Republican from Pennsylvania. He, I will say, ran this past election cycle like on crypto. It was one of his main issues. So he is just partial to crypto in general. But these are the sweeps of this ETF that he has been buying over the course of the last month, beginning on February 27th with a 50K to 100K sweep. That's as specific as I can see because I don't pay the money. I don't pay the monthly subscription for the service that I use for this. So this is as specific as I can be. But 50K to 100K on February 27th. You can see everything that progressed there all the way through to 50K to 100K sweep on March 20th, just under 2 weeks ago. So that's 260,000 to 650,000 in this ETF in total in a month, bought in all these separate sweeps. And the man's net worth is $6.6 million. So we are talking 3 to 10% of this guy's net worth, which again is not liquid money. That's everything that you're worth. His house and cars and everything are included in that. So a considerable portion more of his liquid money he's been pouring into this. And I'm going to trust the efficient market hypothesis will say that perhaps he knows about something that's going to happen in the world of crypto that could really send Bitcoin through the roof here. So that's my angle.
I like it. I like this first pick. I got to say, I'm pretty surprised by the crypto exposure off the first one, but I like it. I do like it.
I'm not
this is going to be an interesting.
Not one to really ever trade crypto. I have my long-term holdings. It's not even a world that I keep up with a whole lot, but I know how to do technical analysis and I know how to look at what Congress is doing. So that's my entire basis here.
I had seen some posts earlier today. Did you see anything about BlackRock? And they were just making more statements about how they believe everything's going to be eventually, or is going to have the ability to be tokenized. I know we've talked a lot about tokenization across the network, and I know Ryan Grace, with the crypto segment's probably been doing a great job at explaining some of those fundamentals in terms of the tokenization of other asset classes too. But the CEO of BlackRock was talking all about that earlier today. I don't know if you picked up on that, Gus, but I know they're. Yeah. No, I was just wondering if this was another reason why crypto was the decision for today, but I love it. And I also just love whenever I see, right, I'm not a big fan of BlackRock. I'm not a fan of BlackRock at all, if I'm being honest. But I do like when I see some of the bigger players in a specific space start heading more into a space that I'm interested or I would like to see a little bit more developed, like crypto and the tokenization of other assets. But just a little fact for the day.
Well, yeah, and in terms of tokenizing other assets, I do see that as being a very realistic thing in the future. I think NFTs were like way too quick to the market, and that was sort of a dot-com bubble situation, a mini little bubble we had with the NFTs. But like NFTs make sense for something like a concert ticket or a house deed or a car title. Things that you need to be non-fungible, one of a kind, and on the blockchain. That's a good application for it, but perhaps not buying a picture of an ape wearing a hat. I don't know that that's the best use of your money.
No, maybe not. And to the point you just made before we move on into the pick that I chose for today, I know with the NFTs, they were very early on, but we've seen a lot of, with the fact that most NFTs have gone down since the hype in 2020 and 2021, I still don't think that's a reason as to, NFTs were a scam. I think every single industry is going to have a level of bad players. And like you said, NFT was just ahead of its curve. But the idea of the NFT living on the blockchain and tokenizing an asset is very much so seems like what the future is going to seem like. I mean, whenever you're cutting out the middleman on big purchases, I think a long time ago, Kay and I did something on someone purchased or did some type of transaction with real estate through it. And you already know, especially the older individuals watching this, you probably dealt a lot with real estate, all the fees that go into closing costs, whatever it might be, and the middleman walks home with a bag. So I'm interested just to see how the tokenization works out in those asset classes too. But I love it. I love the crypto pick for the first one, guys. I love it.
Thank you. Yeah, we'll defer to you. I do want to give a shout out to Demi in chat who suggested spend an entire workday in Target wearing a red shirt. That sounds pretty.
Or a Walmart vest.
Yeah, you just gotta tell people you don't work there all day. That's funny. Yeah, khakis and a red shirt.
Oh yeah,
go on.
But for the sake of your position, I hope the market does turn around. It does seem like crypto and the overall markets have a little bit of a correlation to them. But I did go with Old Faithful today, guys. I went with Old Faithful, went with QQQ, but I'm going to be doing something different than I usually do on QQQ. I know if you guys tune in weekly, I'm typically selling out of the money put spreads or something directional on QQQ, or maybe a skewed iron condor sometimes. But today, what we're going to be going with, we're putting on a little bit more risk. We're going to be trading a zebra. I traded a zebra not too long ago. Again, this one was more pioneered by Liz and Jenny. If you want to check out more about the zebra strategy, it's all over YouTube where they do a great job of breaking that down as well. But we're going to be selling an out-of-the-money call. We're going to be selling an at-the-money call. And then we're going to be buying two 70 delta calls to get our delta near 100 delta. So this is going to be a synthetic stock position. So if QQQ moves up 1 point, I'll make $100. If it moves up 2 points, I'll make $200. It's a 1-to-1. If QQQ goes down 2 points, I'll be down $200. So that's the way we'll calculate the risk and reward on this trade. That's how I'll manage it. Very just like a stock position, but that's what I'm going to be going with. The IVR is 38.4 on QQQ right now. Not that it matters too much with the position that I have on because it is a zero extrinsic back ratio. So it's not going to play too much of a role in my position at least. And then you mentioned tariffs, right? I got tariffs. Got a lot of uncertainty. We're going to be putting this one on right in the morning, guys. I will put this one on right as the market opens up tomorrow. Wanted to wait a little bit to April 2nd before throwing on the zebra. It's going to be a little bit more buying power on this one. I believe it's going to be around 3,000 of buying power all in, but still very much so cheaper than buying 100 shares of QQQ at this price level, because then that would cost around 40 grand, a little bit more than that. So very cost efficient, very directional. I don't think I've traded a zebra on an indice before. So I hope that the market keeps rallying. I hope that crypto rallies as well, because I think it'll help this position too. But before we shift gears here, QQQ's historic performance, the 12-month return over the trailing 12 months ending March 31st, 2025, QQQ had a return of 6.2%, showing a lot of resilience on the longer time frame. So we know positive drift, one of Dr. Jim's favorite topics to talk about. So although I am long, putting on a zebra position can still be risky per se, which fits for the segment title. Can still be a little risky because it's a large position, and the market can go down another 5% before it wants to rebound. But another thing I did have on the last slide was the fact that we're down 12.5% from the all-time highs. So It seems like we're in correction territory. Another leg down seems like it would send the volatility index above 30, but another leg up would seem nothing less than a relief rally that we've all kind of been waiting for. So I went with QQQ, I went with the zebra, and then again, we've had a 5-day decline in the last 5 trading days of March. QQQ declined 4.68%, reflecting a very bearish, short-term sentiment, probably again having a lot to do with the tariffs that are floating above our heads right now. But we've been absolutely beaten down. So I had an assumption we were both probably going to come in long today, but again, had to go with QQQ. Gus, what are your thoughts on this?
Yeah, I like it. I think it's a great way to get some leverage, and I think it kind of exemplifies the whole point of what we're trying to illustrate here is that you have managed to take on all of the risk and all of the reward of 100 shares of QQQ for about 8% of the cost of 100 shares of QQQ. So yeah, I like it a lot. I'm a big fan of the zebra. I can't, like we said, go talk to Liz and Jenny. I don't know how to do a naked put dance. They're the pioneers. But yeah, I like this a lot. I think it's a fun one, and I totally agree with your sentiment. What time frame are you thinking again?
So this one, I'm going to do I recognize you did the April 17th as well, which I'm probably going to do too, because again of the buying power. The closer expiration date that I have, it'll be a little cheaper for me to put this one on too. So I'm going to be looking to manage this one fairly quickly. But this is what we were talking about earlier in the slides, selling that at the money. I like to go just one right outside of the money, technically at the money, but the one sitting right outside of the money, and then buying 2 of the 70 deltas. And then right here, that brings us to about 90 positive deltas. So it would be plus or minus $90 on a point move up or a point move down. So that's what we're going to be looking at tomorrow. Same cycle though. I wanted to keep it in the same time frame so that we can, manage those efficiently together.
Yeah. I think, and I think that's a fun way to do it. And I think that it's wise to, even though it's kind of cheating, I think that it's wise to wait until tomorrow because if we,
I know. When I saw your position, too, I was like, man. But okay, but I gotta say, if I was gonna put this on, I technically would be up probably a few $100 if I did put it on earlier today. We got some random rally towards the last hour of the day. So in hindsight, I do wish I would have put the position on because I would have had a better cost basis.
I would add too that the show is called Risk and Reward, not Take Idiotic Risks. And there is fairly, there is a sizable chance that we see a little bit of red off of open tomorrow morning. I'm really just hacking on you. I would have weighted it as well, but I'm actually trying to maybe farm some of the uncertainty that tomorrow morning could bring. So it's just two different angles.
Hey, how so? What do you mean by that? What do you mean by that when you say farm that a little bit?
I think that there is just this trickle-down sort of sentiment effect that happens even when these moves don't necessarily pertain to the U.S. dollar, and tariffs do have indirect correlation with the U.S. dollar as well. But I just think that we are going to see increasingly more, and I'm really talking in a very macro context here, and this is a very micro trade, but I think that we're going to see increasingly more in times of market downturn or general uncertainty. People are going to want to turn to cryptos, which are stable and have the same buying power across the world, to a relative extent, especially once you can directly spend them. That will be the case. And more so, I should say. I understand you can buy a pizza with Bitcoin if you want to now. But I'm just hoping that uncertainty will flush people to, I don't want to say non-financial, but more assets with backing, with tangible value. And I think that Bitcoin is going to start to emerge the same way that metals do in those sorts of situations. So, that's sort of my thought.
Are you the proponent that... Didn't mean to cut you off. Are you the proponent of that Bitcoin and crypto could kind of be the new gold standard? I say that lightly.
Yeah, I would say so to an extent. Because Bitcoin does check all the boxes of an actual asset in the same way that gold does, and it holds value simply because of scarcity and for being what it is in the same way that gold does. So I think that there is a lot of parallels to be had there. Like I said, obviously this is a very micro thing, but I think that 10, 15 years from now, Bitcoin will start moving closer in line with gold and silver and copper than it will with the rest of the market, which is unlike how it is now. Take Idiotic Risks is a great name for a new show. It could be the Jackass of trading shows. That wasn't even the host. Jackass. They weren't even taking risks. They were taking certain injury in most of those.
They knew the outcome. They knew the risks they was taking on. But no, I mean, I love that overall with Bitcoin and crypto. Again, with the uncertainty with the tariffs coming up, that's really just what my eyes been on for the rest of this week. So tomorrow's going to be an exciting day. April 2nd, it's going to be Wednesday, third day of the trading week this week, and we get a little bit of a resolution when it comes down to the tariffs and uncertainty.
Yes,
I don't know
finally.
anybody else, but I could tell. There's been a shift in just the overall sentiment whenever the conversations between Canada and Mexico in terms of tariffs were going on late January, early February. So until then, we'll see if we get some more closure tomorrow.
Yeah, I mean, politics aside, I just want the certainty. I just wish we would just do something. I don't really even care what it is, but I just want to be done with the market trading the way uncertain markets do and slowly making its way down because we don't have anything definite on this yet.
I hear you. And it really is bittersweet because if we do get that pop in both of the assets that we're in right now, if we get that pop, we're probably going to send it under 20 on the volatility index, and it's bittersweet. It's going to work out for those positions, but at the same time, I'm going to be like, man, we're falling below 20 on the volatility index again. But again, I'll take what I can get. Market's down 12.5 from the highs, even though I am still bearish right now, the way we've sold off and how far we've sold off, I'm a little bit bullish. So nonetheless, we'll see what we get.
Yeah, I'm bearish like just tomorrow. Like I think that my
Are you bearish tomorrow?
I think my bearish sentiment will begin to end tomorrow. Well, I mean, because after tomorrow, I think that there will be certainty, and then at least we have that box checked, and that things can start to work themselves out. But I just think that whoever is most affected by these tariffs is going to get torn down a considerable amount tomorrow, and that it'll probably be too much for the rest of the market to sustain. I mean, I expect bleed out of the open. I haven't traded on that sentiment, but I do expect it.
No, I hear you. Again, I was taking a look earlier at Meta and Apple and those kind of underlyings as well. But I'm still in a little bit of a pickle on these ones, Gus, right? We're down a little bit on DraftKings, Meta. That one had returned a little bit, and then we continued to sell off. But if we get a rally within the next week or two, those should be able to recover. Those are the April 17th expiration, the same expiration that Gus and I are putting on for these two positions. And then again, got Old Faithful in there, QQQ. Have another out of the money put spread that I sold on there. Those are all in the money. And we're at 485 put sold on QQQ. And let's just get a quick visual on where I at least need QQQ.
You also need 485? Shoot,
I do.
I need 485.
Is that 480? I do need 485. You have 90 days on that, though, right?
I do. Yeah. If we hit 485 by your expiration, I think we should.
Are you out with me?
Mine. What's up? Am I
out with me if we get 4?
No.
Yeah. If we hit 485.
Heavens no. I think I would. Well, I wouldn't be about break even. That would put me considerably up. But no, I'll let this one ride. I mean, QQQ, and I have an NVIDIA position that's the same expiration. I took those just kind of like when all this downturn, when we were about halfway through what this downturn has now become, just because it was just broader long-term rebound sentiment things. I mean, like you just said, drifting upwards. And yeah, I think that'll prevail. But NVIDIA, I only need above 100. I got plenty of room on NVIDIA.
No, I hear you. It's just all these underlyings look the same. I thought I just clicked on Meta. I thought I just clicked on Apple. I thought I just clicked on QQQ. All of these underlyings look like they've been moving very, very similarly. It looks like they're all correlated. So anything else to add before we wrap today, Gus? I'm excited about it. We'll get on that QQQ position. It'll be a zebra. I'm going to have to keep a close eye on that one again because it is like a synthetic stock position. But other than that, anything to add?
Yeah, kicking myself, feeling like I should have gotten long VIX before close. So that's how I'm feeling. We'll see if I FOMO chuck myself into that tomorrow morning, but I think it'll probably already be too late. And Mike,
you think we gap down tomorrow?
Mike made me laugh here with the. There still won't be any certainty. He'll announce the concept of a tariff plan to be disclosed in 2 weeks. Yeah, that is also a option that's on the table for sure. But yeah, I mean, I feel like even if I'm incorrect about my sentiment that we might move downward tomorrow, what will definitely happen is volatility. So that's I feel like long VIX is always a good way to if you know that the seas are about to get rough and you don't know how your boat's going to fare, VIX is an airplane over the ocean. You're good.
We'll see what we get tomorrow. We'll get these positions on, and then again on Thursday we'll wrap back around here and check those positions out. But other than that, we'll get these positions on. We have some resolution on the tariffs coming tomorrow, so be sure to look out for that. We'll keep an eye on VIX and the rest of our positions. But other than that, guys, thanks for taking the time to hang out with us. We'll give an update on these positions and how the risk and reward is going, and that's going to wrap it up for today's segment. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah. I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I had the what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense.
It does. Yeah. It really does.
That kind of tracks.
I don't even know what that means. Sure. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you got...
I'm thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh.
What is
I think you nailed it, Vanessa. I don't know.
No. Cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit. For lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Oh, yeah, it is Tuesday, April 1st, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. It is Tuesday, everybody. You know what that means. We got the big brain with us. I'm talking about the one, the only, the global head of macro here at Tasty Live, Mr. Ilya Spivak. Ilya, how you doing, my friend?
Good. Getting ready for what is sure to be an exciting week. It's been fun for those of us that like macro. It's a juicy week for all things macro. So I'm just reveling in all of it.
It is a juicy week for sure. You know, I'm 14 hours ahead over here. So you asked me, it's kind of a funny thing when we were in the green room. You said, you asked me, since it's already Liberation Day for me, how do I feel? Mm-hmm. And I must say, man, I've never felt more liberated. I feel very liberated. It's a great
Tremendous.
feeling.
I mean, a trade hub like Singapore is certainly on the front lines of what we could be seeing.
Yeah. Yes. More on that in just a bit. But before we get to all that, we should probably say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile apps. You know, if you don't already have them, go get them. But if you want to be part of this little chat in the middle of your screen, there's only one place to do it, and that's over on Tasty Live's YouTube channel. So head on over there, jump in the chat, start smashing your metacarpals, your phalanges, and even your skull into the keyboard. Type random ass characters if you have to. Just make sure you say something. That way we can spoof the Google algorithm into putting us in front of as many people as possible. Shout out to everybody in the chat. I would shout you out, but we got the big brain with us, so we're going to utilize it as much as possible. Ilya Spivak, a little bit of a bounce here today. Markets don't go in a straight line anywhere. And acting like it has nowhere to go in a hurry. The S&P up about 2/5%, the NASDAQ up 4/5%, the Dow Jones did nothing, which sort of makes sense. It's been sort of this low beta, low vol refuge. So in a world where there's a bit of risk taking, you might expect the NASDAQ to outperform, especially with the Mag 7 sitting at support, people starting to take some stabs at risk there. And the Russell was up 2 basis points, not much. Your take on a little bit of risk taking to start out a new month and a new quarter?
I don't think it's anything that one wouldn't expect. I also don't think it's anything to hang your hat on if you're of a bullish disposition, because I think the bottom line here is that when you look at what's happened in both the S&P and NASDAQ, you might be more so encouraged, let's say, by the S&P because it's come down to retest its low from middle of March, where it landed after those 4 weeks of brutal selling, and didn't break the low and has bounced a little bit. NASDAQ, on the other hand, did break the low. And what this bounce has done is marked a retest, not a taking back over of that breach. And so while you might have sort of Russell stalling at what looks like could be support, S&P stalling, the NASDAQ has actually broken down. And for it, the situation is doubly bad because, of course, the essence of all of this rally, really since it started in late 2022, has been tech and NASDAQ focused. So if the NASDAQ positioning-wise looks like the limpest of the bunch, that's probably not good news for overall market positioning. And you probably have more like the markets evening out and retracing on what was the sell-off last week into this big news that we have in the back half of this week, be it the big tariff announcement, such as it might be tomorrow. I'm sure we're going to get to the contours of uncertainty as to what actually will be announced and what won't be in a second, but there's some kind of announcement that's coming. And then, of course, at the end of the week, we have U.S. jobs data, and Powell is speaking. So this looks more like the markets got very defensive on Friday, the last kind of Friday before quarter end. And we have a little bit of kind of rebalancing of the books going into the event risk. But I don't think there's anything about any of this that seems constructive. And I think the NASDAQ might be the canary in the coal mine.
Maybe. Let me ask you this question. Why exactly should I be nervous about digital or social media companies in a world of tariffs on goods?
I think the greatest insight in this entire sell-off has been to understand why the markets have decided to become afraid of tariffs when they knew about them in November and before. And the reason is there is a fundamental difference between knowing that there is an idea of these tariffs and sort of saying, okay, well, this wasn't really a problem last time. There was tariffs last time. Biden didn't undo any of the tariffs. No one died. In fact, the Biden administration was even more tariff inclined than Trump administration version 1. So, okay, should we really be that afraid? And the markets rightly didn't panic. Nobody was surprised that this administration would pursue tariffs. Nobody was surprised that we were going to have a move to reduce the size of government and reduce fiscal outlays and somehow then try to balance that with tax cuts. There's no shock in any of that. This was well known. And again, November is the latest you should have known it because by then the election was done and now you really had confirmation that all these things that the president had been talking about endlessly on the campaign would now have some sort of a path forward. Now, the problem becomes when the survey data on business confidence starts to tell you, never mind the substance, that the uncertainty around what this stuff actually means in practice and the inability to then plan ahead is becoming a cooling force on economic activity. And the place where people really start to freak out is when that shows up in the service sector, not manufacturing. Tariffs target manufacturing. That is the goods side of the ledger. But when sentiment starts to erode in services, and you start to see it with S&P Global PMI data in January, and from there, it starts to show up in more areas. That was just the first one that really popped up. And S&P Global is often early on these things just by virtue of how their release cycle works and who they pull and when. But they were the first to really start to show this. And since then, it's shown up in consumer confidence data for several months, different publishers. It's shown up now in the ISM data as well, different business confidence publishers. Obviously, the Atlanta GDP Now numbers, forget what they're actually saying. The level is meaningless this early in the game. But it tells you the direction of travel in the data, and that's obviously down. So you're seeing it elsewhere. The problem isn't, again, the tariffs. The problem is that whatever atmospherics have been created are getting businesses to retrench on spending until greater certainty arrives. And you care much less about it if it's a part of the economy. And it's been anemic before this, all through the second half of last year. You care about it when that sentiment negativity infects services, because that becomes a much bigger issue. That's why software companies care about it. That's why all of this matters so much. Because if companies stop laying out capital because they can't make inventory decisions, and they, or at least they feel like they can't, and they can't make the decisions on staffing, on investment, capital outlays of every kind, and against that backdrop, economic activity slows significantly. That's more than just the one-time price adjustment for manufactured stuff that the tariffs could have been or maybe were intended to be. This becomes a very different thing.
I don't buy any of that. I don't buy.
I mean, you don't have to buy it. It's in.
Yeah, no, I just don't. I don't buy any of this stuff. And so some part of me just wants to. Some part of me just wants to start buying up NASDAQ, and I think you get on the other side of April. So some weird part of me thinks we rip like 2.5–3% on the other side of this.
What it is that you think that isn't credible, and I don't mean the end result. I mean the analysis of what's happening here. Do we agree that the surveys broadly
of course
say what they say, and that the market is responding to what they say in a negative fashion?
Yes. So I agree. So the most powerful part of what you said was at the very beginning when you said the markets, any savvy market participant,
of course,
had a baseline that everything that's unfolding right now is in the cards. I mean, you have to know that this is coming.
And not
November.
savvy also. I mean, you just have to watch the evening news, as it were. You know what's going on.
You knew tariffs were going to come. You knew a new trade war was going to come. You knew that was going to bring volatility. You knew that you knew a bunch of this stuff in November. I think that's the most powerful thing you said.
Of course. I think you had to know. Markets had to know.
I'm not denying what is in front of my face, which is volatility and uncertainty. I'm just not. There's some part of me that just doesn't see this as this big tariff scare. And if that's what it is, I'm telling you, if that honestly is what it is, you buy everything in front of you, I think.
I don't think it's a
you
tariff
buy every
scare.
cheap asset. I don't either.
I think
agree
the fact
with you.
that people knew in November that the tariffs were coming means it's not a tariff scare.
Correct. So then you and I are on the same page. I believe that the hard data is showing decelerating growth. But I also, again, I think you and I had conversations at the end of last year, and we would have been saying the same exact thing, that things are decelerating. And honestly, I think even you would have said things are slower than they appear in the data. And now the data is showing up. Yes. I think there's a big dumb impulse with managing a bunch of big dumb money that says number go down, me sell my stock. Like, I think that's happening a little bit. But I think I'm racking my brain going, I understand that these tech stocks are a bit too expensive. They were a bit too expensive. The valuations were insane. Price to sales on some of this stuff was dumb. I understand that the market has only corrected 5%, but a lot of those Mag 7s have gotten just obliterated in a pretty decent. They're either in correction territory and some bear market territory. And I'm going, all right, if we're taxing champagne or whatever, how does that actually impact?
Well, and so this
Facebook?
Is the thing. So this is exactly what I'm saying.
Plus,
it does
one more thing added on. I don't think it does to the extent. I think I don't think it does to the extent that it's being thrown into this narrative. And then the other thing is, I look at the curve now. I look at the implied odds of cuts, which have now moved to a solid 3 within the year. That we start cutting in June.
73 basis points. You might as well say 75.
We start cutting in June. We get another in July, and they've even moved up to third. It used to be flirting in December. Now it's like, no, you're going to get your third in October. In October. Yeah. And so I'm thinking, okay, so we're about to start another cutting cycle of 75 basis points of the coming months. These things have already haircut 15 to 20%, and the tariff war is on raw goods. Why should I be afraid to step in and start looking at risk in some of the technology companies?
This is the key. If you are looking at this and saying, why should you care about the tariffs won't impact Facebook's bottom line in terms of how Facebook operates and sort of what their cost structures are, what they pay for, what they don't pay for, what the knock-on effects are, your argument makes perfect sense. What I am trying to show here is the reason that the market sold off when they did and not in November is because the atmospherics of policy uncertainty have infected places not immediately impacted by the policy. And that's what the business confidence shows, that people are looking at the way the policy is rolling out, and they're saying, we are not going to deploy capital in this environment. Not because the tariffs impact them themselves. This is why this is not a tariff scare. People knew about the tariffs in November. What they didn't know was this. They didn't know the deployment. They didn't have a question about, do we have confidence in other policies or just general management of everything, be it the fiscal retrenchment piece with the tax cuts piece, be it whatever else. The markets are looking at how this rollout, these first few months are being internalized by business leaders and consumers. And it happens to be tariff policy first. It could have been something else, I think.
Yeah, I just think it's convenient. I think it's very convenient. I think the Fed is stuck in a box. I think it's easy for them to start, tariffs are creating uncertainty and all this other stuff. Are
you suggesting business leaders aren't saying what they're saying?
I think it becomes a convenient way for a bunch of business leaders to shed excess labor without being blamed for being greedy or whatever. I think this is a very convenient narrative for a bunch of operators. I think what happens likely is that people start shedding employment. I think they tank. I think they gave a really grim look of what the next 3 months look like when we get into earnings season. And I think ultimately what happens, man, is they set the bar so low on the floor that it's really easy to jump over a credit card. And I think the reality of the next quarter earnings, once we find out what the actual earnings are going to be much, much, much better than what the current low expectations are. So I'm not disagreeing necessarily with your framing of how to think about it. What I'm doing is trying to think through, how are people perceiving the future, and where do I think they are potentially wrong, and where do I think
I think there is something
risk?
Yes.
Yeah, go ahead.
Here I think there is something. You're right. So here I think there is something, and to sort of get to the crux of it, whether you want to, I don't question CEOs that say in their earnings calls and in the polling for these surveys, where, by the way, they're not named individually, so they can be honest. Nobody says, this company said this in the PMI survey or the ISM survey or anything like that. So they can be candid, because after all, they do want these surveys to go into the hands of policymakers and for those policymakers to then give them lower rates, because whether they give them lower rates for ultimately good reasons or bad reasons for everyone, companies want them. So there's benefit in saying you're having issues if you have issues. So that is just pure self-interest and commercial benefit. So I take them at face value, when I look at these business confidence surveys. I don't think anybody's shading anything. And I would say, whatever the reason, whether it's an excuse or it's not an excuse, whether you want to blame the tariffs or blame something else, the bottom line is people are going to see job losses, and inflation expectations are going to lead to higher prices, and that's going to squeeze people and squeeze the economy to some extent. And then we'll see if the Fed can counter that. And from a sentiment perspective, that doesn't mean the market can't go up, because the market can absolutely go up in bad economic times if people perceive value.
So to your point, likely the Fed has a couple of levers, right? They already decreased the size of QT. At some point, they can pull us out of it altogether. We've also priced in, nearly 75 basis points of cuts.
Yeah.
And that changes the value of money. That changes the net present value of future cash flows.
Yes.
And so I start to think about those things. Plus, if you're going to let people go in the short term, what that means is your margins are going to expand, right? Especially for like a technology company, right? There's less expenses going out of the door. And so some part of me goes, longer term, those people are not going to be spending money in the economy, and that will create some pressure. Shorter term, if people start shedding their employment base or their employees, and you're going to get a movement in rates, I'm just trying to understand why.
Well, so let's go even shorter term.
Go ahead. Why exactly shouldn't I be taking risk here, given the setup?
I think you're right. I think you're right to be sniffing around in this area, because this really is how tomorrow ends up going in everybody's face if this is what happens. And I want to underscore the if. I am not going to question CEOs, because, again, it is in their self-serving interest to be honest that there is uncertainty if there is uncertainty, and to be honest that they would like relief if they would like relief. They have no reason to cry wolf if there is no reason to cry wolf, because they actually do want the policy support. They're self-interested in it. And so, because they want lower rates, they have tons of debt to refinance this year, they want an excuse to lay off expensive workers and pad their margins. We know that all of the inflation has been stuck in core services, largely because of labor hired in the initial opening phases of COVID at very, very expensive salaries. We know that's the case not just in the US, but in Europe and everywhere else. So, sure, okay, let's say that all of this is sort of the blaming of the tariffs is window dressing for corporate retrenchment, but that doesn't matter because the corporate retrenchment is coming anyway. Okay, fine. So the essence of tomorrow's announcement then hinges on what it means for uncertainty. If what comes out tomorrow, branding, Liberation Day, blah, 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 is the grand plan, that then everybody can say, all right, here is something that gives us the architecture or the infrastructure of something that we can extrapolate forward. And on the basis of this, build expectations. Well, then I think the stock market actually likes it, even if it's ultimately a growth negative, inflationary maybe, economically spooky maybe kind of outcome. And you might have a situation where everybody in the kind of political media runs around ripping their hair out or cheering it, depending on which side. And all of that is noise, but the markets ultimately look and go, okay, so the problem wasn't the tariffs, it was uncertainty about implementation of fiscal policy. You've shown us that the uncertainty, at least in this thing that we've been using as an avatar for general uncertainty, the tariff thing, that you've addressed it, right? Because markets don't care good outcome, bad outcome. Markets care forecastable or not forecastable. And if it's forecastable, not predictable, nothing is predictable. Nobody can tell the future, but forecastable within some reasonable way to extrapolate so that businesses can say, here are my inventory expectations, here's my staffing expectations, here's my investment expectations. This gives me a framework to do all of those things. If that's what comes out tomorrow, stocks rally. But and bonds probably rally as well, because all of it probably still means more rate cuts. But if the clarity doesn't come, and by the way, if the tariffs are a negotiating tactic, there can be no clarity because no offer is the final offer.
Yes. What you just said, so you know what's interesting? I've had these two thoughts that like everyone keeps using, I think old mental models. I'm gonna give you two thoughts and then something to chew on, and I want to hear you kind of wrestle with in front of the public here. One is, I keep hearing this old trope, right? Markets don't like uncertainty. I can't tell you how many times I've heard this stupid fucking saying on everything I turn on. You watch Bloomberg, you watch CNBC, you read an article, it's like everybody's saying this stupid saying. It's like, thank you very much for your wisdom. Like,
well, nobody can tell the future, so define uncertainty. Like regular uncertainty or more uncertainty or less uncertainty. There's no crystal ball that exists in life.
It's like saying I'm cautiously optimistic. You know what I mean? It's like the stupidest saying. That's basically saying that there's positive drift in the world and in the market. Anyways, what is certain about this administration is there will be uncertainty. There will be greater levels of uncertainty, greater levels of potential distribution, is because I think they have a desired outcome, but I do not think they have they have not mapped out the path, because they know that in each of these negotiations it could go this way or that way. So they have an outcome, but not a desired path. And with that comes lots of uncertainty into how or where we get to their ultimate desired outcome. So I think,
I'm not even sure we have the desired outcome, because what does reciprocal tariffs mean?
I think. Hold on. This isn't even the one. Yeah. This isn't even the most interesting part. I don't think.
Sure.
And I also think in the first administration, this goes to the idea of reflexivity. In the first administration, what did we learn or teach each other? I don't say teach each other. What did we learn? We learned that he would say something crazy, but that actually was 2 times more than what he was actually aiming for. The markets would overreact.
Sure.
And by the end of the 4 years, what the markets stopped doing was overreacting to the literal interpretation of what he said. The most interesting thing about this second administration, the second run, I think the markets are doing the opposite. So what's happening is he's saying something and the markets are going, oh, he doesn't mean that. And so you're getting a muted response to, I think, some of his proclamations. Mm-hmm. And that ultimately means he's going further. You know what I mean? He's going further. Like at the beginning, it was tariffs are a negotiation tactic. And now we're like, all right, I think he means 20% tariffs across the board, or he's going to do only 9%. And he's like, oh, no, I'm doing blanket tariffs on 20% across with no exceptions. It's like, Jesus Christ, this guy was serious. And he's going further because the market is really not giving the literal interpretation enough credit. Do you get what I'm saying?
Well, and maybe, of course, and I mean, it's very insightful, and I think people should be paying attention to this, because I think it ultimately dovetails with where I'm going here. You don't need to have a good outcome. First of all, to say that markets hate uncertainty, you kind of have to thread this a little bit. Anytime somebody says that, you hope what they're saying is the markets hate more than the usual uncertainty or an absence of forecastability, because there's always uncertainty. Nobody knows the future at all times. Really, all you're dealing with is probability distributions and trying to guess in an educated way to where if you lose, you don't lose more than you gain if you gain. And to keep doing that over and over again. It's the same thing that we as investors do, as traders do. Nobody says you're never going to lose money. Everybody that is participating in markets should expect to lose money sometimes. And the goal isn't
No,
not
I
to
actually
do that.
think it's the wrong model. I think it's a stupid. I'm a market participant, Ilya. I love uncertainty. Uncertainty brings opportunity for me. I like vol because vol, the inverse of risk is reward. The higher the level of uncertainty, the more potential there is for higher returns within a smaller period of time. I'm actually telling you, I think it's a stupid thing to say, and it's said by people that don't truly understand market participation. I'm telling you, I think it's a bad mental model.
So this is why when I talk about it, first of all, I'm not talking about markets. I'm talking about business leaders whose thought process is different. If you're running a factory,
completely different. Sure.
If you're running a factory, it's a different conversation.
Agreed.
What I'm talking
100%.
about is the lack of forecastability. What the markets don't like is when they can't make heads or tails on something. If the markets can have a forecast, and then they can trade the forecast, and then data comes out and then creates volatility in the forecast. I mean, sure, yes. If you're a business leader, you at least want to be able to say the rules of the road for the next 12 months are going to be X. Within that, I need to do Y. And I think that's what people are talking about. But
I could still make the case. I know this is I get what you're trying to say. I could still make the case that a wise, a clever business leader likes uncertainty just as much because that gives them the opportunity to increase market share by buying a competitor or vertically integrate or horizontally integrate.
Not if you're a maker of washer machines and the uncertainty is the price of steel. So
yeah, I would say it depends on what where the vol is coming from. I would agree with you.
The question is, can you forecast your business so that you can make all these savvy decisions? And so again, you're not afraid of things looking adverse. You just want to know how to lean where the wind is blowing, to lean with it, and to extract what you can. And for that, you need some kind of reasonable window to look forward with some confidence as to where the wind would blow so that you could go there. And so I think that's the issue. And to the extent that this announcement tomorrow appears to create a sense that there is a sense of which way the wind is blowing, I think risk likes it. But the bottom line is you still need rate cuts. And the bottom line is you still need accommodation. So I think what you walk away with tomorrow is either stocks like it or don't like it. But bonds like it. Yeah, of
course.
And so from a trading perspective, I think that's ultimately where this goes. If the object of the game, as you're saying, is precisely on the part of the administration to create more uncertainty and to use the falling stock market as the inducement for people to come and do deals with you, then it's the strategy. It's not a bug, it's a feature. You come out and you scare everybody half to death, and then they have to come and do deals with you. Or, for example, you deliver a reciprocal tariff scare so that countries go, you know what I'm going to do? I'm going to lower tariffs on the U.S. That way, there is no reciprocal tariff increase coming my way. And the result is to create a kind of shadow WTO, where instead of everybody coming into a WTO and saying, we're going to give everybody our best tariff deal that's in the WTO, you say, the U.S. is the WTO. No more artifice of multilateral agreement. We run this. And what ultimately happens is actually a broader decline in tariff barriers, because everybody says, I don't want reciprocal tariffs, so I'm going to lower tariffs. Then the reciprocal tariffs go down. Then everybody's tariffs go down. You end up with less trade barrier, not more. Possible. Markets could certainly appreciate that and could certainly be confounded by the strategy now, and on purpose, because it doesn't work if they're not. You have to first scare everybody half to death to achieve this, and basically to say what the end goal is more free trade, not less, which would jive with what seems to be occurring with the USMCA and the Canada and Mexico kerfuffle, and that what really is occurring is a shifting of international trade policy power from WTO, the U.S. but obstructed, to just the U.S. openly. And saying the U.S. just runs this now. The WTO is an afterthought. This is the new regime. Good night. That doesn't necessarily mean less free trade. It could mean more. So, and to achieve it, you would need to scare everyone into compliance. So maybe that's the plan all along. Fine, whatever, sure. But in either case, whether this is coherent or incoherent, whether the goals are known or not known, whether this is a brilliant tactician playing 4D chess, or this is erratic malpractice of fiscal policy, doesn't really matter. Either way, you need lower rates and higher bonds.
I don't know. I agree. Put it this way. I agree with everything you said. I think there are a bunch of other factors that we could now throw in as to what would be the offsetting. Like why do you think bonds have not moved from basically 117 plus or minus a point?
I think they've been up all year. They've been rallying all year.
I guess what I'm saying is, given the recent equity volatility, bonds have
shot up back to the highs. Stocks are basically back to where they were in early March, and so are bonds. Stocks have reversed their bounce. Bonds have reversed their pullback. We're basically back to the early March starting line.
Right. Okay. I guess, I trade bonds a lot, and I guess a couple of points in one direction in ZB isn't like a really
but I mean,
really gone anywhere.
It's a slower
opinion.
market than stocks, of course. But the architecture
but
of what's going
the
on
through
is the
line,
same.
The through line in bonds has been basically 117 throughout all of this volatility, plus or minus a point. And plus or minus a point is not really going very far in the bond world. So I guess my question is, what do you as gold is making new all-time highs each and every day, bonds effectively, given this volatility, have stayed relatively muted. In my personal opinion, you seem to disagree with that characterization. That's fine. But let's just both agree that bonds aren't exactly doing what gold has been doing for the month of March. I think that's a fair assessment.
I don't think anything is doing what gold is doing.
That's very true. Why do you think that there is such a demand for gold as a risk-off asset in the month of March versus bonds? Why do you think that is?
I don't think that it is demand for gold as a risk-off asset.
Okay.
I don't think gold is a risk-off asset. I think what we're seeing is building speculation that rates are going to come down. And when you look at what that looks like in the bond market and in the dollar, you see it play out directionally in the same way. So since the beginning of the year, you see all of this occurring in tandem. Now, where does gold begin its most recent rally? It begins it in the second half of February into the beginning of March, where at that stage, you've already seen the move in stocks. You've already seen the move in bonds. And gold is kind of, it moved earlier before, then paused earlier, then everything else moved. Now gold moved again. gold is not really moving in a way that's directly connected with what's going on in stocks and bonds. Stocks and bonds are kind of, and to some extent the dollar, are kind of mirroring each other's dynamics. Obviously, there's different liquidity. Whether you look at the front end of the curve or the back end of the curve impacts how much impact all of this is having. So, of course, you look out to ZB, it's not exactly showing you what, let's say, Fed funds futures or SOFR rates are showing you. Fed funds futures look exactly like the S&P. I mean, you look at the Z5 contract December, where Fed funds futures price in Fed rates by the end of the year, and you can look it up on the platform. SR3Z5 is the 3-month SOFR, which is basically the same thing, and you can see that it looks pretty much exactly like the S&P, and gives you the same dynamic. So look at that pull up, then slight correction, now back to the place where the pull up ended. Does that not look exactly like the S&P upside down? So it's you're seeing it. What gold is doing seems to be this kind of, it's difficult to say that it's even a haven per se, because you're not seeing the same thing in other kind of anti-fiat, anti-rate proxies. For example, Bitcoin.
I'd argue the fact that it's hanging around in a tight range, 80 to 90, it's showing relative strength for an asset that typically is highly correlated to the NASDAQ. So I'd argue that, yes, it's not showing the same upside, but for a highly correlated NASDAQ instrument that has just stuck at 84 or 85, given everything else taking a haircut, I'd argue that's pretty decent performance, all things considered.
I mean, maybe. I think we have to. I mean, you're saying it's hanging out, but I would say that there was a peak in Bitcoin at the end of January 21st specifically. And since then, you've gone down 30%. So I don't know. I mean, for Bitcoin, obviously 30% is not the same thing as it is for other assets. It's very volatile. But the bottom line is it's gone down since then. So there's that. I'm not sure if I'd say it's hanging out, but I would say that whatever is happening in Bitcoin is not what's happening in gold, and that's the important thing. There is not consistency. And so to me, what gold is maybe a kind of, there's almost a response that's almost geopolitical risk-like, in the sense that when markets are faced with things they have a hard time forecasting, they reflexively go to gold. Bombs start going off in Russia, Ukraine in 2022 when the conflict initially starts. One of the first things that happens? Gold surges. Why? What is it about gold that somehow is reactive to Russia trying to invade Ukraine? Nothing necessarily. It's not like the price of oil. It's not the price of wheat, things that might actually be disrupted by the fighting. It's not nat gas. Why gold? What is it about gold? There seems to be a kind of reflexive thing where if you don't know what to do, you go to gold. If you have no other ideas, if you look at the landscape and you go, I don't know what's going to happen here or what this means. And to the extent that even the dollar is a creature of yields, unless it's utter panic. We saw this obviously at the onset of COVID. We saw this in the 2008 crisis, where when people are selling things that just to go to cash, gold gets sold also. That's how you know it's not a haven. When people want to go to cash and just back up from markets completely, and it's correlation one liquidation, dollars and yen go up, bonds go up, everything else gets smashed. That's it. This is not where we are here, clearly. So my sense is that the reason gold is going up is just on general lack of forecastability grounds, or like a sense that forecastability is compromised the way it would be at the outbreak of a war. And so, for lack of anything else to do, people are reflexively doing that.
In a weird way, I have a very similar model. Like when some uncertain thing happens, you see it in vol first, because that's just the pure measure of uncertainty. But because vol is sort of this mean reverting thing, uncertainty goes up. The market figures out what should I do with this uncertainty? Where should it be reflected in either a higher price of this asset or a lower price of that asset? Once that then gets priced out, vol comes back down. And so in a way, gold is a recipient sometimes of that level of uncertainty on those vol spikes, and that gets dampened out into gold. So I see it in a really similar way as you. Let me ask you this question. You've said so many things that have sort of spurred on, I think, interesting lines of thought and discussion here. Somebody in the chat talked about 1930s, and you've been talking about the uncertainty that comes with tariffs. I've sort of argued that I think the Smoot-Hawley, everyone going back to the 1930s as a one-to-one model with what will happen if you apply tariffs and protectionist policies. I'm not arguing that it's going to be more beneficial to a free market than free trade. That's not what I'm saying. What I am saying, though, is people are talking about you have basically a data set of one, right? You don't have a data set of 15 times in the past.
People love these stupid one-for-one comparisons. They're not representative of anything.
Correct. So what I think is in my personal opinion, it's very dangerous to go back and look at the Smoot-Hawley Tariff Act and look at what happened in the 1929, 1930, and how it exacerbated the Great Depression. I don't think.
You should go back and look, but that doesn't mean anything necessarily.
I don't think it's good for global trade, but I think people should be really careful about creating an entire mental model that says this is what will happen if we move forward with this in the future. I think that's a big mental trap out there for market participants. What do you think about that?
I don't know how much of a mental trap it is for market participants, just because I couldn't possibly presume to poll everyone or have a sense of even what this looks like. I do know that obviously, so clearly we do not live in the 1930s for so many reasons. The fiat-based monetary system, the nature of global trade interdependence, deglobalization or not, the nature of global markets, the U.S. place in the world, the situation happening in Europe. We'll be here until next week if I list everything. So, and then we'll do the show again. There's absolutely no logical reason to say this is the 1930s. None. What you do derive from an analysis of the 1930s are the mechanisms by which tariffs can be very damaging and what the vectors of transmission are. To then look at the current environment and say, okay, if this is how the machine works, or at least these are the knock-on relationships that we've seen, how would that scenario map onto the current environment? And what would that mean? You're not looking for parallels. You're looking to learn about how these forces have manifested before so that you can construct a probabilistic scenario analysis and say, well, this part is logical, this part isn't. Retaliation against the tariffs is logical. China, Japan, and Korea are talking about deepening trade relationships. When have these economies agreed on anything ever? So you look at what Canada is saying, and Canada is saying we will retaliate. You're looking at Europe. Europe is saying we will retaliate. Is it wise to retaliate? Maybe not. Does the retaliation mark something that the administration expects and is factored into their plans, or it isn't? Do they know it's coming? because they too are students of history, or do they expect that they'll be able to negotiate these things down? If everything is negotiable, are you ever going to get something that businesses like manufacturers that use the inputs that are going to be impacted by all of this are able to take and forecast forward? Or is this just going to be a perpetual moving target? And what does that do for confidence? I think really all you're doing in looking at the night, hopefully what you're doing in looking at the 1930s is you're not looking for direct parallels, or God forbid saying this is the 1930s, because that's just intellectually insane. But what you're doing is you're looking at the forces and saying, well, here's one way that this has gone before. What can I learn here?
What is everyone thinking? Where is a trade where everyone's leaning in one direction, either with their mental models or with their consensus positioning, that you think could go the other direction? My biggest thing is I actually think I'm very curious if slowdown in growth is going to be the boom for the long end of the curve in the way that people expect. I think this is, to me, it may turn out to be true, but I think there's enough risk and reward there that I think it's probably worth betting on, that as we get closer to June, and people want to buy the long end of the curve given the slowing growth in the marketplace, I think that's worth betting against. That I think the worse growth gets, people are going to recognize that, okay, we're laying people off, growth is slowing, uncertainty is high, and we're already running 6% deficits to GDP, which means you need to respond with services, with help, which means increase government spending, not the opposite. And I think if that is ultimately the realization of both the fiscal authorities and then ultimately the market, I don't think the long end is going to cooperate and there's going to be this recession bid in the long end as people expect. So that's what I think the consensus narrative is. I think that's the mental model, and I think there's a risk to reward favoring betting against that as we get to June. I might totally be wrong, and that's why that's why it's out of consensus, but I think it's worth betting against. Is there anything like that in the market that you see? What is it?
Gold. And I think it's actually
Walk me through it.
It's actually for the same, there's sort of parallel reasons to what you're describing. I just think there's 1,000,001 ways that bonds could rally before all of the realizations that you're talking about are actually had. And so bonds have lots of runway to keep doing what they're doing before any of what you're describing actually enters the calculus. And then if it does, we'll see. But I'm perfectly happy to still be long in a market that is very clearly stair-stepping higher. Gold, on the other hand, as we've just said, seems not to be an animal of yields necessarily, seems not to be an animal of the dollar necessarily, as it typically is. This has been different. Gold has more so taken on this kind of when in doubt and the bombs are falling and the fog of war has settled, well, at least you can still buy gold. That seems to be the sort of operating logic. And if everybody is afraid of uncertainty, and gold is the ultimate manifestation, that basically the distribution is widening to an uncomfortable place, the most contrarian thing would be if the distribution were actually to narrow. And let's say you have a Liberation Day announcement tomorrow, and what it amounts to is a tariff policy bookend. Because if you look at the sort of political timeline here, You figure next year is all about running for the midterms and securing majorities in the houses to make sure the agenda keeps going forward. Obviously, we've already seen some concerns around making sure that goes right with the pulling of Elise Stefanik from the UN role, with all this money getting funneled into this judgeship race in Wisconsin. There's clearly now suddenly a sense like, look, we need to make sure that we maintain hold on the legislature. Otherwise, all of this is just smoke. So next year probably is spent running for the midterms. And like making sure that nobody is yelling at GOP congressmen at town halls and things like this, because that's not the recipe for success in the midterms, clearly. So if that's what it is, then you need to do the tax cuts in the second half of this year. Then you need to be done with esoteric bull in China shop policies basically by mid-year. So things like twisting the arm of Russia and Ukraine, twisting the arm of Israel and Hamas, and getting the trade policy architecture in place. Doing all of the let me scare you with how crazy I am. I'm a crazy guy. All of that is running out of time. And so maybe you call it Liberation Day, 72-point font, big L, and you go, boom, this is what it is. And then you stop picking at the scab. Well, then the markets get the thing that they wanted, which is a forecastable thing to price into markets. And they stopped to linger on every single headline in this conversation. Oh, Mexico called Trump. Trump called Canada. Canada called Mexico. Oh, all of that goes away. Stocks probably like that until they have to think about the growth implications of trade barriers more generally. And that ultimately catches up, and you ultimately get more stimulus and all of this. Stocks probably like it in the near term. Gold absolutely hates it.
I really like that concept. I really like that concept, even as just a short term, like the straddle on gold till the end of the week is $50.
Yeah.
And to me,
if what happens tomorrow is
5%
nobody
down move
pukes their lunch,
$150. That's a 3-to-1 potential.
If stocks don't puke going into the announcement tomorrow, and then they don't puke again the day after, because they decide they have certainty and that's what they were after all along, or at least enough certainty all along, the thing that bonds still go higher because you still need lower rates, but gold gets shellacked. And by the way, does so in a disconnected way, as it's been behaving.
Man, I really like that trade. Let me ask you this question. Fed cuts once, inflation expectations rip. What happens then? Like, so right now the market has three
they're already
priced in.
Rising.
I know. So we got 3 cuts priced in, inflation expectations rising, the data was ugly. Yeah. Let's say they cut once, inflation expectations absolutely rip, gold goes vertical. What does the Fed do? Basically what I'm asking is, could we be in a position where you can price in 3 cuts for the year if you want to, but get one cut and see what the market does, especially if the long end lifts, inflation expectations rip, they're not going to be able to do anything for the rest of the year. Do you think that's a possibility? And what would the market, how would you express that view then?
So I think this is really where what Powell said after the meeting this month, I think this is what he's getting at. And God help him, he better get a thesaurus ahead of this speech on Friday so that he doesn't say words that he's not supposed to say. Get you a thesaurus, man. Seriously.
You don't think he should say transitory again?
Of all the 90 euphemisms you could have used for the concept you're trying to get across, which is actually a sensible thing and matches what the administration is saying, which is the tariffs are a one-time price adjustment.
Yep. I think that's what he was trying to communicate to everybody.
Of course. What he was trying to say is, look, we don't know. Maybe it's a one-time price adjustment, or maybe it isn't. We're guessing just as you're guessing.
Yes, but our base case is that this is going to be a one-time price adjustment.
Is that it is.
Yes, I 100% agree that that's what he was trying to say.
Right? He wasn't saying any. He was not making any reference to 2021 at all. But he had to use the word and get everybody in a kerfuffle and turn the conversation into something that it isn't. So man better get himself a thesaurus, is what I'm saying. So if he's right, if they're right, then it sort of goes like this. We don't know what the tariffs are going to do because nobody knows what the tariffs are going to do. In fact, the reasons markets are selling off is because they don't know what the plan is. And if they knew the plan, the markets wouldn't be selling off. They would just discount the plan into asset values and move on. But they don't feel like they have a thing to discount. They feel like it changes too frequently, and they want to discount something. Because let's face it, stock markets don't want to go down. Stock markets never want to go down. Stock markets are biased to going higher. They're one of the few markets with a tilt in the distribution. They're not a true two-way market. And so when you look at then what stocks want to do, they don't want to go down. But they are. So they're not getting what they want to get and begrudgingly are going down. They want to believe that everything is going to be okay. So what Powell is saying is, look, we don't know. You don't know. Our base case is this. We'll see what it is. And we already had 2 cuts on the menu before any of this because inflation expectations need to be paced by adjusting to nominal rates or real rates surge, and then you crush the economy. So we were going to cut rates anyway because obviously the pace of inflation is down from 7 or 9, depending on whether you look at the peak in CPI or PCE. It's not down to 2, but it's obviously not 7 or 9. So clearly we need to adjust. That was coming anyway. And that's why what he's saying is, let us see all this survey data consternation in hard data. And then we will make the determination. If the cuts that we're making are still maintenance cuts, because inflation has come down, or if the cuts are counter-cyclical cuts, because the economy is falling off a cliff and we need to fire a fight. And the response ultimately becomes very different. So if the cuts are coming for bad reasons, if it's an anti-growth thing, then bonds go up across the board. The entire sort of structure of the curve is going to move as the markets speculate that that's what the Fed will do. And once they start to do it, the markets will go, speculation has become reality now. Buy the rumor, sell the fact. We can go the other way as long as it's within consensus forecasts. And then you sort of get that dance. Markets expect this many cuts. The Fed expects that many. Where do they meet? And what's the speculative juice in that delta? Okay, fine. But if it's a different kind of cuts, then it's a different kind of story.
Yeah, I think you definitely answered my question. And because, so my question is, if they cut in June and inflation expectations are rising, how is it possible that they could continue? What you're saying is it's going to depend on growth, and they can hide behind the growth story.
Inflation
but I actually think
expectations are only rising if growth is positive as they cut, which means they're maintenance cuts.
No, I think what will happen is they're going to yes, but I think what's more likely is I do think inflation expectations are going to rise on that cut. But I think they're going to hide behind the tariffs, and they're going to say, because we think this is a one-time thing, like they that will give them license to stay with the same, they were going
to cut in June before the tariffs, before we even started.
I know, but it would be very difficult to do that if inflation expectations were rising in their face. So this gives them sort of the cover. The tariffs are going to give them the cover to keep going.
You're saying this gives them the cover to cut even if inflation expectations are rising.
Because the whole transitory thing, you can tell that narrative again if you blame the inflation expectation, if you blame that on tariffs and you say
we have to look through the inflation.
Exactly. And that's what he's giving everybody. Yeah. He's giving everybody that model to start looking through inflation data as it starts to rip when they start these cuts, and it already is. Arguably, that's why gold is where it is.
I mean, you can certainly make. So again, yes, in a roundabout way, it depends why they're cutting. If they're cutting because they're saying one or two hot CPI numbers don't bother us,
correct. And we need to respond to growth conditions, yada yada yada.
That's one thing.
Yes.
Yes. If we see it in the and I think I think the counter argument to that thesis is they haven't cut yet, because they could have done this already. They could have laid the groundwork for this already. Powell is pointedly saying, until I see it in the hard data, I'm not doing it. And maybe that's coverage for the Fed, in the sense that nobody's going to come back and say, oh, well, the president yelled at Powell, I want lower rates. Powell found a way. You see it in the hard data, and then if you do, then who is to argue to? Okay, fine. Maybe that's what's going on. And maybe ultimately they think, okay, this is something to look through, and they're going to do their cuts and use the tariffs as cover, maybe. It's unclear why they would need to do that. They were going to cut anyway before the tariffs. They don't need cover. Do they? They had 50 basis points in the forecast in December.
Yeah.
So they were going to cut anyway. They don't need cover. So do they need cover for more? Okay, maybe. If they need cover for more, why? What has happened that they feel like they need more? Is it growth, or is it just they want to smooth over this bump here in sentiment and make sure sentiment doesn't careen and sort of negativity starts to beget negativity? Because so much of this is sentiment. Companies get freaked out. They stop spending. They stop spending. People don't get jobs. People don't get jobs. They stop spending. And it becomes a self-fulfilling kind of vicious cycle. Let's say the Fed is saying, you know what? The most important thing for us here, though we think the tariffs are not something that's going to be a lasting influence, is to keep sentiment underpinned so no one freaks out. So let's give everybody the sound bites that they need. And with the FOMC announcement, they kind of did that. Powell kind of commiserated with the markets, sort of took the markets by the shoulder and said, it's okay, man. You'll be all right. If things really hit the fan, I'm here for you. And it kind of worked. But it didn't last.
Markets can be this really sick mechanism to go find somebody's pain point. So if you remember when FTX was going through their whole deal, and Carolyn, I think her name is Carolyn, comes out and says, we'll buy all of the whatever bullshit token at whatever price she said, like 23 or whatever, 22 and a half.
Give us Tether and give us Solana. We have no bottom.
The markets go, why'd she say that number? Let's see what happens if we push this button. So they take the collateral on that token to below the price, and turns out That's what happens if we push this button. So markets have this really interesting way of finding, if we're playing chicken with the Fed, they're going to go find, okay, where's their line? Where's their limit? If we're playing chicken with the fiscal authorities, we're going to go find the limit. Where do you think, I'm going to ask you too, where do you think Donald Trump and the Trump administration's pain point for equities volatility, where do you think that is if you had to take a guess? And I'm going to ask you the same thing, maybe not equities for Powell, but tell me where you think his pain point is that the market could go scratch around. So two-part question.
I think one of the things that bulls have gotten wrong about this Trump administration versus the previous is that they've assumed that the administration has a pain point. And I don't think it does.
I think it's his approval rating. As long as his approval rating is high, I don't think it matters what ball does.
I don't even think it's the approval rating.
All right, talk to me.
I think it's bond yields. Because I think if you look at who the president's constituency is, it is people that are lower on the income scale on average. It is people who own less stock on average than the other side. Again, these are all relative things. But these are people who are much more sensitive to the cost of borrowing than they are to what the S&P 500 does. And so I think what this administration's sensitivity is inflation and the cost of money. And if it's able to bring down inflation, and if it's able to bring down the cost of money, if the stock market has to die, figuratively speaking, of course. Nobody's saying it's going to zero. Nobody's saying we're going to have a 2008 type crisis. You can't know that here. I certainly can't. There's no evidence of it. And of course, if it does happen, all the kind of a broken clock is right twice a day types are going to come out and say, see, I told you. It's sort of like when Schiff tells you that gold is going to soar, and then he tells it to you for enough decades, and then for some of the time gold soars, and Peter Schiff goes, see? Yeah, okay. But when you look at the evidence, there's no evidence of an imminent collapse. What there is, perhaps, is evidence of the early stages of a recession of a classic kind of business cycle variety. Maybe. We'll see. To Powell's point, we'll see if it shows up in the hard data. I think it's already showing up there if you look at CPI internals, but we'll see. So I think this administration's pain point is not in the stock market, because they care much more about delivering for their core voters, and their core voters care much more about inflation and borrowing costs.
I get what you're saying theoretically, but I don't think it's literally true. Because
unless there's a panic. If there's a panic,
if the stock market was down
story.
30%, you have to understand.
No, if there's
what
a
would
panic
be happening that would create that. So
if
I get what you're saying.
If there's a panic, that would be
for
everybody's pain point, and that's my point. There is no panic here.
And
so
if you gave, and then conversely, if we had super low yields, like if, let's say, borrowing costs cut in half, again, the way you would get there is through either super dumb, super crazy economic pain, which means there aren't a lot of people to enjoy. There aren't a lot of people employed to enjoy those low yields because we've just slashed all government spending and likely went through a deep recession. Or we did some financial wizardry in QE, which is somehow, holding down longer end yields a lot lower, which is probably bad for inflation. So I hear what you're saying in theory. I do think, though, there are limits to both of those. There's probably a limit to how low they want yields, and there's probably a limit to how low they want stocks. And so question was like, if the market as a sick pain-finding mechanism, the market believes, or I think there's a narrative that, okay, Bessent and that crew, they want to maintain lower borrowing costs for the U.S., and to your point, they want to do it through some sort of fiscal discipline so that inflation doesn't, for the working class.
I can tell you how
crazy.
you can find out you're at the pain point, though.
Wow, how?
I'm going to borrow a Powell-ism, right? We don't know where the neutral rate is. We know it by his works. So you'll know.
Such a good line. It's such a good line. It's such a nonsense thing too. It's such a smart way to say I don't know. I don't know what's going on.
And no one knows, right? Like it's such a smart way to say like dumb journalist, your question is stupid. And if you knew anything about how monetary policy works, you wouldn't ask it.
Look, if you're going to pretend to be, one of the people on this committee, I think in the eyes of the public, that's what it is. So you get a journalist there asking the question, how does this work? And
that's not what they ask.
Everyone's talking about the neutral rate.
Where's the neutral rate?
Well, yeah, I mean,
nobody can know that.
I understand it, but I think from the general public's point of view. Okay, go ahead.
Yeah. No, but this is the point. No, so yes, from the general public's point of view, I'll spend like one more second on this, and then I promise I'll stop picking on reporters. But if you're trying to inform the general public, one way you would do that is by asking meaningful questions so that the public doesn't get misled down some sort of ridiculous rabbit hole, but that they actually understand. If you're
here's the recursive problem you get yourself into with their Looney Tunes world that they want us to live in, is that they'll say we believe we're in restrictive territory. Okay, what's restrictive? It means that we have a Fed funds rate that's above the neutral rate. Okay, what's the neutral rate? Well, we don't know.
We know it by its works.
There's this
But this is the whole.
It is so fair for anybody to be rightly confused by how confident you are that you believe you're at some restrictive territory, but then in the same breath say, no one can know this number.
But it's a completely accurate way of describing things, because again, how do you know that you've reached market extreme, right? That the panic is here, that the pain point for everybody has arrived. If you are in an environment where stocks and gold are falling together, bonds are rising, and the dollar and yen are rising at the same time, so dollar up, yields down, stocks down, gold down. In other words, what's up is cash and near cash, and it's the dollar outperforming and the yen. You've reached a panic. And if you've reached a panic, nobody wants a panic. It's sort of like if you are if you are a Middle Ages witch doctor and you're trying to use bloodletting to improve your patient's well-being, and then you accidentally can't stop the bleeding. And you go, oh, I was in for a little bloodletting. I wasn't in for death. That would be the point where everybody would go, whoa, 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 whoa. This isn't bloodletting. This is bleeding out. That's different.
I would agree with that. I would agree when those conditions arrive, wherever that is, whether that's 5% lower, 10% lower, 30%
whatever it
lower.
is.
Yeah, I would agree. That's probably a good way to describe it.
If people are selling stocks and gold and every currency and buying bonds and yen and dollar cash, and that's it, and everything else is getting shellacked, just look at a chart of the second half of 2008. You'll see it. Look at the first couple months of COVID. You'll see it. Clear as day. Move to cash. Move to say, I'm not participating in these markets. I will see you later. I am not going to look for relative risk opportunities. I'm not going to look for relative anything or risk anything. I'm going to put this money in the mattress. Have a nice day. When you see that,
the older I get, the
That's
more
the
I
bet.
realize. Don't you think that's net? Like that's always the sucker's bet.
no, because if you thought that was the sucker's bet when Lehman collapsed, you're the sucker. If you thought that was the sucker's bet when COVID initially appeared in late 2019, you're the sucker. The question is, do you think that's going to lead to the end of human civilization? That's a sucker's bet.
No, what I'm saying is, when that deflationary impulse comes, you know you're at the bottom. You don't know how far.
You don't know where that is, though.
But you do know. I know. I'm saying that you're really close to the fiscal